Everyone, good morning to all of you. Welcome once again to this live session, last trading session before market close. Yes, tomorrow. फिलहाल देखोगे नेचुरल गैस कल ऑप्शन की एक्सपायरी हो गई है ऑलरेडी। नेक्स्ट मंथ का चार्ट यूज करना ऑप्शन में, तो नेक्स्ट मंथ का कॉन्ट्रैक्ट स्टार्ट हो गया है, तो नेक्स्ट मंथ का ही चार्ट है। डिस्काउंट में चल रहा था ऑलरेडी, प्राइस 354 के अराउंड, हल्का हल्का सा एक गैप अप। थोड़ा सा शायद आज वॉल्यूम कम रहे, कल वैसी मार्केट क्लोज है, फिर फ्राइडे है, सैटरडे संडे का मार्केट वैसी क्लोज है। क्रूड ऑयल भी देखोगे फ्लैट ही ओपन हुआ है, थोड़ा बहुत बाइंग आई है बट कुछ खास नहीं। ऊपर एक रेजिस्टेंस है, देखते हैं वहां पर। बाकी 12:30 लंदन सेशन की ओपनिंग रहेगी, उसके बाद 5:30 न्यूयॉर्क, 6:30 न्यूयॉर्क सेशन, 8 बजे यूएस मार्केट ओपन, और फिर 7 बजे एक अनएम्प्लॉयमेंट क्लेम्स का डेटा भी है। क्रूड ऑयल और नेचुरल गैस की इन्वेंट्री वैसे तो आज आती है बट शेड्यूल थी, अब वो शिफ्ट हो गई है मंडे को, तो क्रूड ऑयल और नेचुरल गैस की इन्वेंट्री आज नहीं है। निफ्टी बैंक निफ्टी को देखोगे फ्लैट ही ओपन हुए थे, वही रेंज बाउंड ही चल रहा है पिछले 3 दिनों से मार्केट। थोड़ा सा बैंक निफ्टी या तो ऊपर ही चला जाए नीचे आ जाए, एग्जैक्ट रेजिस्टेंस पे भी नहीं जा रहा है ना सपोर्ट पे आ रहा है। रेजिस्टेंस से भी थोड़ा सा दूर ही है और सपोर्ट से भी। कि मेरे अकॉर्डिंग थोड़ा बहुत सेलिंग बैंक निफ्टी फ्यूचर में होनी चाहिए अब। दिनों से कल परसों तो साइडवेज ही था, कल एग्जैक्टली रेजिस्टेंस पे ओपन हुआ, थोड़ी बहुत सेलिंग आई पहली दो कैंडल पे, फिर साइडवेज चला गया था, फिर एक डे हाई वापस हिट करने की कोशिश करी, फिर सेलिंग आ गई थी। अगेन आज फिर से उसी रेजिस्टेंस पर रुका हुआ है, तो जब तक ये रेजिस्टेंस पे 26,260 270 के ऊपर ब्रेकआउट नहीं करता तब तक इट इज़ ऑन रेजिस्टेंस। अब या तो साइडवेज जाएगा या फिर हो सकता है सेलिंग करे कंटिन्यू, ऐसे चांसेस तो कम ही है सेलिंग आ जाए आज, बट इट इज़ ऑन रेजिस्टेंस राइट नाउ। एक नीचे रिटेस्ट पेंडिंग है, लेट्स होप अगर रिटेस्ट करने आता है तो। देखिए रेजिस्टेंस जोन पर ही है अभी भी, कल से उसी रेजिस्टेंस जोन पर रुका हुआ है, ब्रेकआउट नहीं हो रहा है बट ऊपर भी नहीं जा रहा है, नीचे भी नहीं आ रहा है, सॉरी। ब्रेकआउट नहीं होगा जब तक कह नहीं सकते। बाकी क्रूड ऑयल रेजिस्टेंस पे है एक सेकंड थोड़ा सा इसमें। ठीक है, बाकी नेचुरल गैस ने भी देखोगे काफी बड़ा रिवर्सल किया है 4 आवर टाइम फ्रेम के लोअर एंड सपोर्ट से। वापस पुल बैक। पूरा टाइम फ्रेम पे वैसे नेचुरल गैस को देखोगे तो वापस हम रेजिस्टेंस पर ही आ गए हैं। ये क्रूड ऑयल थर्ड टाइम आया है इस रेजिस्टेंस जोन पे। लोअर लो फॉर्म हुआ है लास्ट टू टाइम्स अगर देखोगे। अब नीचे भी सपोर्ट है तो बड़ा सेल ऑफ तो नहीं दिख रहा है, खैर थर्ड टाइम है थोड़ा कंसोलिडेशन करके वापस सेल ऑफ थोड़ा देना चाहिए, लोअर एंड पे आता है 5230 40 के अराउंड, वापस बाइंग उसी एरिया से। ठीक है, तो ये छोटी सी रेंज लग रही है अभी भी, नीचे सपोर्ट ऊपर रेजिस्टेंस इन 15 मिनट टाइम फ्रेम, अनटिल अनलेस कोई न्यूज़ नहीं आती, इसके चांसेस कम ही है। बाकी अगर यहाँ थोड़ा इसी रेंज पे रहा मार्केट और फिर से सपोर्ट लेके लोअर एंड से वापस ऊपर जाता है तो वेरी हाई चांसेस फिर ऊपर का रेजिस्टेंस भी ब्रेक करेगा। अभी तो रेंज बना दी है तो बड़ा मोमेंटम अनटिल अनलेस ब्रेकआउट या ब्रेकडाउन नहीं होता, किसी एक साइड पे नहीं कर रहा हूँ। हाँ, ब्रेकडाउन हो जाता है नीचे 5220 के नीचे सस्टेन करता है प्राइस, देन यू कैन एक्सपेक्ट कि प्राइस थोड़ा और गिरेगा, अदरवाइज दिस इज अ रेंज यू कैन एक्सपेक्ट राइट नाउ। ठीक है, थोड़ी बहुत यहाँ से सेलिंग हम एक्सपेक्ट करेंगे क्रूड ऑयल में नाउ। ओके, अभी रेंज छोटी है थोड़ी सी, रेंज ब्रेक होना जरूरी है, तो सेलिंग में टारगेट बड़ा नहीं है, ध्यान रखना ये कोई बहुत बड़ा टारगेट नहीं है। नीचे आके रुक जाएगा प्राइस तो सेलर्स थोड़ा सा ध्यान रखियो। 50 to 60 पॉइंट टारगेट, यू नो, नॉट मोर देन दैट, 50 पॉइंट भी नहीं है, 50 पॉइंट ही कह सकते हो। से वापस एक्सपेक्ट है बाइंग थोड़ी बहुत। वापस ऊपर जाता है वापस सेल कर सकते हैं, नीचे आएगा तो वापस बाइंग का प्लान रखना। जब तक रेंज में है तब तक रेंज को ही प्ले करेंगे। मार्केट एक चीज़ जरूर करेगा, अगर ये वापस यहाँ से जाता है और इस एरिया पे कंसोलिडेशन करना शुरू करता है, ब्रेकआउट के चांसेस फिर रहेंगे, क्योंकि ये सपोर्ट भी ठीक ही है, लाइक ऐसा नहीं है कि सपोर्ट वीक है, बट ऐसा भी नहीं कि सपोर्ट लेके जाएगा तो ऊपर ब्रेकआउट ही करेगा, दैट विल बी सीन एज वेल। हाँ, नीचे रेंज ब्रेक होती है या फिर ऊपर रेंज ब्रेक होती है तो फिर लेवल थोड़ा सा दूर है, क्योंकि नीचे सपोर्ट एटलीस्ट फिर नियर बाय में दिख नहीं रहा है, थोड़ा सा दूरी है, एटलीस्ट 5000 के नीचे ही जाएगा फिर, 5100 200 के नीचे ही जाएगा इजीली। ये रेंज बड़ी इंपॉर्टेंट है, किस साइड ब्रेक करना है, आइदर साइड ब्रेकआउट ब्रेकडाउन विल ट्रिगर अ मोमेंटम, अदरवाइज अ रेंज एक्सपेक्टेड। ये सपोर्ट भी अच्छा है, ऐसा नहीं है कि सपोर्ट वीक है, याद रखना दोनों सेम ही है। यहाँ पर रेजिस्टेंस पे ये थर्ड टाइम आया था, एक बार पहली बार में सेलिंग में लो बना है, दूसरी बार सेलिंग में लोअर लो क्रिएट हुआ है, तो थोड़ा बहुत सेलर्स तो बचे होंगे यहाँ पर डेफिनेटली, बट यहाँ पर एक नया सपोर्ट बनाया है इन द सेंस ऑफ कहीं ना कहीं ट्राई करेंगे एक बार इसको टेकन आउट कर दें अपर साइड की ओर। बाकी अगर यहाँ से मार्केट निकलता है अपसाइड की ओर तो इन केस ब्रेकआउट अगर होता है इस रेंज के बाहर, दोनों में से किसी भी एक साइड की रेंज के बाहर अगर मार्केट निकलता है, फिर जो नेक्स्ट लेवल रहेंगे यू कैन एक्सपेक्ट प्राइस विल मूव। अगर डाउन साइड की बात करें तो फाइव थाउजेंड एटीन 5080 तक दिख रहा है प्राइस, अगर फॉल और करता है तो डाउन साइड पे क्रूड। ठीक है, तो नीचे करो टारगेट दूर ही है एटलीस्ट अभी के लिए, बीच में कोई रीटेस्ट ना आ जाए। ठीक है, तो स्पेस है नीचे काफ़ी अभी, एक बीच में रीटेस्ट भी था, वो हो गया क्या? इस रेंज के अंदर हो थोड़ा सा कम क्वांटिटी में प्ले करना, ज़्यादा रिस्क मत लेना। ठीक है, अननेसेसरी। एंड रेंज कहीं ब्रेक हो जाती है तो फिर बेटर है, अगर बेट लगा रहे हो एक ही डायरेक्शन पे जाएगा तो फिर थोड़ा सा आई विल सजेस्ट एक साइड ब्रेकआउट होने का वेट कर लेना। साइड पे भी अगर देखूं मैं रेजिस्टेंस क्रूड ऑयल में 5400। कि देखो ये रेंज है, हो सकता है प्राइस थोड़ा बहुत फेक ब्रेकआउट फेक ब्रेकडाउन करने की कोशिश करे, तो उसका ध्यान रखना। मैं इसलिए बोल रहा हूँ रेंज है, प्राइस रेंज से बाहर निकलने के लिए थोड़ा बहुत इधर उधर ट्राई जरूर कर सकता है। ये पॉइंट मिल गया आपका। ये 5140 के अराउंड भी है एक छोटा सा सपोर्ट। इतना जरूर है कि अगर इसने लोअर लो नहीं बनाया ना यहाँ से, ये ऐसा उड़ाया नहीं इसने, और यहाँ से फिर से रिटर्न करता है कंसोलिडेशन, चांसेस वेरी हाई कि फिर ऊपर ही जाएगा। नीचे आना है तो नीचे वाला जो रेंज है वो इजीली, या फिर आप कह सकते हो कि लाइक यहाँ से थोड़ी बहुत बाइंग आए, ज़्यादा हाई ना बनाए, छोटा सा हाई बनाए और फिर नीचे गिर जाए। दैट काइंड ऑफ इफ फॉर्मेशन इज फॉर्म्ड इन दिस पर्टिकुलर जोन, तब फिर नीचे अगर सपोर्ट इजीली ब्रेक होके फिर तो आराम से 5100 टू 120 के अराउंड। तो पहली बार सेलिंग आई थी लो बना था, दूसरी बार सेलिंग आई हायर लो बनाया इसने, थर्ड टाइम इसलिए इजीली ब्रेक हो गया। 22 को आई थी बाइंग आई थिंक यहाँ से ना। अब यहाँ पर क्या एक्चुअली में फर्स्ट टाइम जब सेल ऑफ आया है, फिर ब्रेकआउट करे और फिर नीचे आए, देन इट विल बी फाइन कि ऊपर निकल जाता ना। भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। नेचुरल गैस में अभी थोड़ा वेट करेंगे यहाँ, हायर टाइम फ्रेम पे तो रेजिस्टेंस है, इंट्राडे पे हिट कर जाए तो थोड़ा सा देखते हैं, क्योंकि नेचुरल गैस जिस तरह से चल रहा है ना पिछले काफी टाइम से, प्राइस एक्शन इतना अच्छा भी फॉलो नहीं करता रोज। पहले कंटिन्यूसली मोमेंटम में चला जाएगा अप साइड, फिर डाउन साइड, फिर रिटर्न मारेगा, ऐसा कि ये चार्ट जनवरी मंथ का है नेचुरल गैस में, तो कंफ्यूज मत करना। दिस इज जनवरी मंथ चार्ट इन नेचुरल गैस। क्रूड ऑयल में ऊपर रेजिस्टेंस देखोगे तो ऊपर रेजिस्टेंस आपको 5000 350 360 के अराउंड मिलेगा, थोड़ा सा वीक है बट है जरूर रेजिस्टेंस ये। विल बी नेक्स्ट रेजिस्टेंस अगर प्राइस अप साइड पे ब्रेकआउट करता है तो, थोड़ा सा पास में ही है बट थोड़ा सा वीक भी कह सकते हो, एक ही बार आई है वैसे तो सेलिंग, बट या स्टिल देयर है अभी भी।
This is Tom Keene, inviting you to join me for the Bloomberg Surveillance Finance Invest on the West Coast when you wake up.
Back to Trump's drive to use the military in liberal cities across the country. Now, a majority of the justices left in force an earlier judge's ruling that has blocked the deployment since October 9th. The High Court said the government failed to identify a source of authority that would allow the military to execute the laws in Illinois. A federal judge has ruled the Trump administration can move ahead with a $100,000 fee on new H-1B visa applications. Now, this is a setback for U.S. tech companies that rely heavily on hiring skilled foreign workers. However, the decision gives a boost to the Trump administration's campaign to restrict immigration and push demand for U.S. workers. Now, the Chamber of Commerce sued to block this proposal, and it can appeal. Another batch of files related to Jeffrey Epstein was released today by the Department of Justice, and several mentioned President Trump. There was a 2020 email from a prosecutor with new details about Trump's trips on Epstein's private jet in the 1990s, which the president has said never took place. Now, following the release, the Department of Justice posted on X that some of the latest documents include untrue claims about the president that were submitted to the FBI just before the 2020 election. Here is Vermont Democratic Congresswoman Becca Balint.
What they mean by that is they don't like what's in the file, so they're trying to distract from it. I mean, let's just look at one instance alone. When you look at the 8 flights that so far we've been able to document that the president was on, he has tried to distance himself from Jeffrey Epstein for years now. It was clear that they had a much closer relationship than he will admit to. And what is so frustrating to so many of us right now is that Americans can handle the truth.
That is Vermont Democratic Congresswoman Becca Balint speaking on Bloomberg's Balance of Power. Now, the files also show Epstein named 2 executors of his will, former Barclays CEO Jess Staley and ex-Treasury Secretary Larry Summers. Now, Summers has stepped away from public commitments in light of revelation about his ties to Epstein. That would include his role as a paid contributor to Bloomberg Television. President Trump saying today he expects the next Fed chair to lower interest rates even if the economy is doing well. In a post today on Truth Social, Trump also said he wants the new chairman to lower interest rates if the market is doing well. And Trump added, anyone who disagrees with him will never be Fed chairman. Here is Bloomberg's Laura Davison.
Well, you can see in this Truth post that Trump is really, really worried about interest rates in particular. This is, he's, supposed to be meeting with Rick Reeder, a potential Fed chair this week. And as he's kind of started to figure out is that he is not able to compel markets to do exactly what he wants them to do. We've seen this time and time again with the Liberation Day tariffs throughout the year, is that, he is trying to, tell traders, hey, look, it's good news, go up. And, we should keep interest rates steady. Right. However, that's not both how the Fed is thinking as well as how traders are thinking as they're looking at the whole holistic economy, which has a bunch of other warning signs out there.
Bloomberg's Laura Davison speaking on the Balance of Power program. Now, Trump has narrowed his list for Fed chair nominees to a few candidates. An announcement is expected over the next couple of weeks. In company news, Novo Nordisk has received FDA approval to market its Wegovy obesity drug in pill form. Novo will begin selling the Wegovy pill in early January. Here is Mike Duthstar, president and CEO of Novo Nordisk.
This is really going to be super exciting for the millions of patients that have been waiting to get their hands on a GLP-1 pill. And for the first time, we are having a pill that has an efficacy of some 17% if you take the pill regularly. And 1 in 3 people are going to actually reduce up to 20% weight loss.
That is Mike Duthstar. He is the CEO of Novo Nordisk, speaking earlier on Bloomberg Surveillance. Now, this pill is crucial for Novo's strategy to take on its rival Eli Lilly. Lilly's oral obesity drug could be approved by March. We go to Pennsylvania, where an explosion has occurred at a nursing home north of Philadelphia, and a gas leak is suspected as being the cause. Officials say part of the building has collapsed. Some residents were trapped inside, and at least 2 people were killed, with several others injured. Here is Pennsylvania Governor Josh Shapiro.
We believe preliminarily that it was a gas leak that led to that. The explosion was really quite catastrophic.
That is Pennsylvania Governor Josh Shapiro. A private jet carrying Libya's military chief of staff crashed in central Turkey. He was killed along with 4 other passengers believed to be high-ranking Libyan military officials. The aircraft was a Falcon 50 jet. It disappeared from radar while flying from Ankara to Tripoli on Tuesday evening. And that is news when you want it with Bloomberg News Now. I'm Doug Krisner, and this is Bloomberg.
So, what will Rachel Reeves's pivotal new budget mean for you?
Has an innovative think tank just come up with a solution for replacing stamp duty?
Hello, I'm Steph McGovern.
And I'm Robert Peston.
One more sweep to go. And of course, as we look at these markets, the Santa rally appears to be taking hold. We had the S&P, as I say, rising for a 4th straight day yesterday, although these are slim volumes and it was concentrated in tech. We've got futures pointing a holiday in the Philippines and partial trading elsewhere across the continent. But if we flip to the cross-asset picture, you can see here the 10-year Treasury yield at 4.1589. We have to account for that US GDP print that came out yesterday, not doing much to encourage bets on a near-term Fed cut. They now see traders 20% less than chance of a January move. Short-dated treasuries underperforming off the back of that, and then we had bonds bouncing later off the drop in consumer confidence. So the 10-year there at 4.15. The dollar's weakened to levels that we haven't seen since around September, weaker 0.2% in today's session. Gold at 4,500 a troy ounce, up 0.3% here. It's hit a fresh record. And copper is above the 12k a tonne mark here, smashed through that level for the first time yesterday. Now, just briefly, let's dive into those US GDP numbers that were released yesterday. You can see the economy grew 4.3% in the third quarter, the fastest in 2 years. But as I say, not doing too much to encourage bets on near-term Fed cuts. Let's check in on how Asia markets are faring. Min Min Lo's in Hong Kong with an update for us. Min Min.
Hey Lizzie, we are seeing marginal gains on the Asia-Pacific benchmark, up about 0.2%, but here you can see pretty mixed. The Nikkei and the Kospi in the decline here, possibly being dragged down by the firmer yen and the Korean won as well. But it's been a pretty slow news day. Volumes are thin because of the holiday, and of course we have, for example, Hong Kong, Singapore, Australia, New Zealand having truncated trading sessions ahead of Christmas. But flip the board, we take a look at the currency space because the Korean won has seen very huge moves, up by 1.7% against the dollar. That's after the Korean government said that an excessively weak won is not desirable, and also saying that FX markets are going to feel, quote, the great determination of the Korean government. So you see the big plunge in Korean won here. We've been seeing the won sliding over the past half a year or so against the dollar, about 8% weaker, but it looks like they are successful now in putting a floor to that slide, and that could set us up for a less volatile open into 2026. One of the things that the Korean government is doing is to try to tamp down the appetite from South Korean retail investors for overseas U.S. stocks, and they are creating more tax incentives to encourage more inflows back to onshore markets in Korea. Lizzie.
Min Min, thank you so much. Min Min Lo there out of Hong Kong, and we'll speak to Min Min again later in the hour. Well, joining us now for analysis on these markets is Ryan Lamond, CEO and co-founder of Neovision Wealth Management. Good to see you, Ryan. Thank you for making time for us. We're just looking back on the year that has been 2025. I think you've been underweight US equities this year, sceptical about how financial markets have handled AI. But as I say, we've just hit another fresh record on the S&P. So have you got any regrets looking back at the year?
Good morning, Lizzie, and good to be back. Thank you for having me. Well, back in January, almost 1 year ago, when I said on the show that we were underweight equities in the US, well, most people didn't understand why. We simply don't invest into overvalued, very new technologies. And especially with all of the circular investments that are happening within the Tech 7, we weren't comfortable with it. And actually, the year has confirmed we were right. If you look at the S&P 500, if you look at the performance of the S&P 500 over 2025, it has been one of the worst performance globally. If you compare it to emerging markets, you compare it to commodities, you compare it to multiple indices, it hasn't really performed exceptionally well. So unless you were really long this small basket of Tech 7, you wouldn't have done very well. I mean, even against the euro, it has made 7% only in 2016. Our model portfolio has made 31% year to date. So we're quite happy with our model portfolio, to be honest.
But doesn't the fact that some Mag 7 names have actually underperformed the S&P this year show that there is still room to run, that not all of the Mag 7 are trading at runaway valuations?
Absolutely. In the US, there are many companies that are really worthwhile to invest in. I mean, look at the small and mid caps. If you compare them to the valuations of the rest of the market, or the Tech 7, or even defensives, their values are really very, very low at the moment. Some of them are dividend paying, cash flow generating. So they are worth investing in. But it was a conscious decision really to stay away, because there are alternatives. When we had TINA, there is no alternative. Remember a few years back, yes, we had to. But today there are many, many alternatives that can provide us with very good value at very low risk. And while currency is not really a big concern, where currency can be hedged. However, we're starting to look back at defensive, small caps and mid caps, because I think with some stock picking, there's some value there.
OK, so where are the juicy returns, if not in big tech? And what tweaks are you making to your portfolio construction from this year into 2026?
So our model portfolio will remain relatively the same. The 60-40 obviously is dying or is dead already. So the baseline for our portfolio today is gold. More than roughly 25% of our portfolio is gold. We've started adding silver recently. We've added copper a few months ago. So this is really the baseline of our portfolio. So this is the 40, if you will. And then from the stock perspective, we're looking more at emerging markets, Asia, so China, India. We're looking at Switzerland, European, in a very selective way. So this is basically where we are. On the fixed income side, we're more on the shorter term than the longer term, because we do believe that the longer term will be quite volatile until there's more clarity in the US. Let's not forget, in 2025, the US debt has grown by 6%, while GDP growth has been around 2%. So this makes it a bit volatile, I think, from a longer term fixed income perspective.
OK, interesting. And I know that you like gold, but you're underweight US equities, and that will continue into 2026. What if the Fed doesn't cut as much as markets are expecting? What if Jay Powell tries to hold back the FOMC from cuts in the first half of next year, in the expectation that there'll be a dovish Fed chair in the second half of the year? What does that do to US equities? What does it do to gold?
So we do think that the Fed will halt in the next meeting. This is clear, especially in light of the latest GDP numbers. There's another factor that we have to bring in, which is Japan, because Japan, as we know, the carry trade has been one of the biggest drivers of financing margin trading in the US. So as Japan increases rates and the Fed holds rates, I think this will not be very positive for US equities in the first half of 2026. We do expect quite a bit of volatility, and we wouldn't exclude another April 2025 event in the first half of 2026.
Wow, OK. Well, I shall brace myself, Ryan. You mentioned Japan there, and of course we had our interview with the finance minister yesterday talking about how they have a free hand for currency intervention, but it's still just a verbal intervention at this stage. How far off do you expect that intervention to be to support the yen?
Well, I think the statement is very, very clear. There's no doubt about it. They will intervene. The yen has gone a bit too far for their comfort, I think, while they are increasing rates. I mean, Japan today, we haven't seen anything move on rates for the past 30 years. So that move is quite substantial from a capital movement across the world. So we do think that they will, as we said a few months back, we do expect the Bank of Japan to increase rates, and they have. We do expect them to intervene on the yen, and we do expect some big moves on the yen. So we are buyers of Japanese equities as we speak, and obviously we stay away from Japanese fixed income.
And just finally, focusing on the Middle East region, Ryan, and of course with the oil price in mind, what's your view on Saudi equities for the next year?
We've been buyers of UE equities. Saudi, obviously, we stayed away because the performance wasn't there. Saudi Arabia is going what the UE has gone through 15 or 20 years ago. So it's reflective in the Saudi equities. We are very cautiously looking at Saudi equities, and we do think there are starting to be some very good pockets to invest in. Saudi Arabia is going through some massive reforms, and this is what's happening on the Saudi equities is just a reflection of these reforms. But we do think there will be a bounce back eventually, and some very nice buying opportunities.
OK, Ryan, always a pleasure. Ryan Lamond there, CEO and co-founder of Neovision Wealth Management. Thank you so much and happy holidays. Well, now for a look at some other stories we're following this morning. Nearly half a dozen tankers laden with crude have departed from Venezuela's coast despite increased pressure from the United States. Data from maritime intelligence firm Kepler show that most of the tankers are headed to Washington, and at least half of them are chartered by Chevron. This comes as the Trump administration intensifies efforts to curb Caracas's oil revenue by targeting sanctioned vessels. Elsewhere, the US Supreme Court has refused to let President Trump deploy National Guard troops in Chicago. A majority of judges ruled that the administration failed to identify a source of authority that would allow the military to execute the laws. The move is a setback to Trump's drive to use the military in cities across the country, including New Orleans, where authorities have just deployed 350 troops. And a federal judge has upheld the Trump administration's plan to drastically raise H-1B visa application fees to $100,000. The ruling in Washington says that Congress gives the president broad statutory authority over the matter. It's a blow to the likes of Amazon, Apple, Microsoft and Meta. They're among the companies with the greatest number of immigrant employees on H-1B visas. Well, coming up on the programme, the US holds off on new tariffs on Chinese chips for now. We'll bring you all the details next. This is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast? Iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France. In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast? Iconic. When we aim high, when we go deep, when we make hearts beat faster. Even when we stumble. Iconic. When we get people moving. When we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London, where it's 5:14 a.m. Well, the US is holding off on new Chinese chip tariffs until at least mid-2027. That's despite accusing Beijing of engaging in unfair trade practices in the semiconductor sector. And we can get more now with our China correspondent, Min Lo, who joins us from Hong Kong. Min, just tell us more about this investigation into Chinese chips.
Yes, it has been close to a year in the making because if you recall, this was one of those probes that was launched in the final few weeks of Joe Biden's administration. The expectation was that President Trump would resolve it. And the U.S. Trade Representative Office was investigating the foundational chips that China produces. So these are chips not necessarily used for AI, but they're used for many different industries, from autos to medical devices to telecommunications. And the U.S. has found that China uses what it calls sweeping and aggressive non-market policies to create foreign dependence on its products in a way that was disadvantageous for U.S. commerce. Again, this is from the U.S. Trade Representative Office. And the decision from the U.S. is that they will impose no tariffs for now for the next 18 months. Starting from June of 2027, they will start imposing tariffs, and the rates will be announced at least a month before. So this is a clear signal that President Trump perhaps wants to stabilize the ties and maintain that trade truce, the hard-won trade truce that the two sides agreed on when President Xi and Trump met in South Korea in October, but still leaving himself that opening 1.5 years down the road, a bargaining chip perhaps to revisit when it comes time for U.S. and China to renegotiate the extension of the trade truce.
OK, so that's Washington's side. What's China's response been?
Well, obviously, no surprise that China is upset at this. We have the Chinese embassy in Washington hitting back at this and saying that this is an abuse of tariffs and saying that China reserves the right to take all necessary actions to protect its legitimate rights and interests. But given that the tariffs are not going to kick in until 1.5 years later, it's probably quite unlikely that China would retaliate in a significant way in the near future. Here you can see one of the statement from the embassy saying that weaponizing trade and tech issues will destabilize the global supply chain and will eventually backfire. But meanwhile, we know the U.S. yesterday announced the ban on foreign drones and drone parts. China did react to that and called the U.S. to withdraw that new rule, and again saying it will safeguard Chinese companies' interests, and it's accusing the U.S. of bullying Chinese companies.
Well, speaking of those companies, we've seen SMIC shares up in Hong Kong after raising some prices by 10%, Min. What does that show about the demand for their products and, more importantly, about the broader AI landscape?
Yeah, I mean, it's not surprised that SMIC has the power to raise its product prices because we have seen a burst of AI-related activity in China. You know, after the breakthrough by DeepSeek at the start of this year, towards the later end of the year, we saw a slew of these chips-related IPOs debuting in Shanghai, and SMIC remains one of the only foundries in China that is able to produce advanced nodes 7 nanometers or below. And we have the likes of companies like Huawei and Cambricon announcing already that they want to double or triple production of chips by next year. And some of these companies like Cambricon, Huawei, they design the chips and sell the chips, but they don't produce it themselves. They contract them out to manufacturers like SMIC. So not surprising that SMIC is experiencing close to full capacity or sometimes exceeding full capacity according to local media. So they're raising prices now, and of course investors are rewarding the company for the higher margins.
Yep, the shares up more than 3% right now. Min, good to see you again. Min Lo there, Bloomberg's China correspondent. Thank you. Well, coming up on the programme, we'll turn back to our region. A private jet carrying Libya's military chief of staff crashes in central Turkey, killing him and 7 others. We'll bring you the latest on that story next. This is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble, iconic. When we get people moving, when we get the world moving, iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France. In France, when we do something
गैस में ना गाइस यहाँ पर मल्टीपल रेजिस्टेंस जोन बने हुए हैं एक्चुअली में. जिस लेवल पे प्राइस है वो भी एक रेजिस्टेंस ही है, आप एक मान के चलो. इसके ऊपर एक रीटेस्ट है, फिर एक और रीटेस्ट है. मेजर रेजिस्टेंस तो वही 376 380 के अराउंड दिख रहा है. बीच में काफ़ी ज़्यादा रीटेस्ट जोन है.
At volumes right now, they do reflect the fact that we're just one sleep away from the Christmas holiday, and futures are pointing lower on both sides of the Atlantic this morning. But as I say, we did hit another fresh record on the S&P yesterday. Yes, it was slim volumes. Yes, it was led by tech, but perhaps we could hit another record today, even if not, that's not what the futures picture is suggesting right now. Flip the board over to the cross asset picture, and of course we factor in the latest US GDP print out yesterday. The 10-year US Treasury yield pretty steady right now at 415.89. The Bloomberg Dollar Spot Index, as you can see there, is weaker by 0.2%. It's been weakening to levels that we haven't seen since around September. Gold there at $4,495 a troy ounce, up 0.25%, and having hit another fresh record. And copper the same, over $12,000 a tonne at this point. It smashed through that level for the first time yesterday. If we also just dive into these US GDP numbers, an interesting one this. It came in at 4.3% in the third quarter, so the fastest in 2 years. And really, those numbers not doing that much to encourage bets on near-term Fed cuts. Traders now see a less than 20% chance of a January move. Off the back of this number, you had short-dated treasuries underperforming, but then bonds bouncing later on off the drop in consumer confidence. So all of that, the backdrop to today's session. Let's check in on how markets are faring in Asia, though. Min Lo is back in our Hong Kong studio with more. Min.
Hey Lizzie, we're taking a look at the currency markets because we're seeing a third day of dollar weakness here despite that better than expected GDP data out of the US. But we're focusing on the Korean won because it's gaining 1.7% against the greenback after the Korean government warned that an excessively weak won is not desirable. And timing pretty strategic as well, coming a day after the finance minister of Japan moved first with its strongest verbal intervention yet. And here you can see the yen is also extending gains against the dollar. The yuan as well, inching closer to the 7 per dollar mark. And so we continue to watch the currency space here. But I thought it would be good to also look back at the year and how Asian stocks has performed. And if you flip the board, you would see that Asian stocks so far this year, compared to US and Europe, which are the white and blue line, the Asian stocks have been outperforming for the first time since 2020. And it's been a stellar year, especially for the tech space. You look at China, the breakthroughs with DeepSeek, the tech-related IPOs later in the year, which saw really spectacular trading debuts in Shanghai. You flip the board, of course, we have NVIDIA's advancements in chips that really powered some of their Asian suppliers, the likes of SK Hynix and Samsung. That is boosting the Kospi. If you look at where we are, it is the best year since 1999, and I think this is the best, one of the best performing gauges globally as well. China and Asia Pacific best year since 2017. Lizzie?
Wow. OK. I feel like we've gone back to the 90s quite a lot recently when it comes to Asian markets in the past week. Min, good to see you again. Min Lo out of Hong Kong. Thank you. Well, this year has seen a series of rate cuts across major central banks around the world, but with many policymakers signalling that they're near or at the end of that cycle. What does 2026 have in store for central bank watchers like yours truly? MLive currency and rate strategist Ven Ram joins me now for more. Ven, am I going to have a quiet year in 2026? Why is the policy stance shifting towards a more neutral, even hawkish viewpoint next year?
Morning, Lizzie. That's absolutely right. We have seen the central banks in Australia and New Zealand kind of turn very hawkish over the past couple of weeks, and that is because of two factors primarily. One is that growth has been pretty resilient. Consumer spending has been robust. The labor markets are pretty tight as well, it turns out, much tighter than central banks were expecting around even earlier this year. And there is also the inflation picture. The inflation picture is kind of sticky. Gone are the days when we seem to be comfortable talking about 2% inflation. Now we are talking about 2.5%, if not 3% inflation in many of the economies. And that's the reason why central banks are quickly pivoting away from dovishness into hawkishness.
Now, you and I both know no central banker likes to hit the reverse button and admit a policy error. Which major central bank, then, is most likely to surprise us in 2026 and why?
Well, I think that, that award has to probably go to the Bank of Japan because they are behind the curve. If you look at their own projections for inflation, they are forecasting inflation to come in at 1.8% for the next fiscal year. And that is, never mind that realized inflation is running at close to 3% in Japan. And they are also expecting growth to be above trend next year as well. So if you put all those together in the Taylor rule equation, what you get is a recommended rate of 1.5%. So that means that they've got 75 basis points of rate hikes that they need to put through. Whether they will put that through or not is the big question. But there is no question that they are behind the curve in kind of fighting the inflation. And there are also other central banks that are likely to turn more hawkish as well.
Well, let's talk about the Fed, because the expectation then is, of course, that they might get a dovish Fed chair next. Why might that chair struggle to get the FOMC on board for deep rate cuts?
Well, the point is, the Fed is at 350 to 375 now. And if you look at how sticky core inflation has been and how resilient the U.S. economy has been, we got the print yesterday, 4.3%, blowing out all estimates. So that, and the Fed expects the U.S. economy to go 2.3% next year. That's fully half a percentage point above what they were expecting in September. And 2.3%, even that is conservative. 2.3% would be well above trend. So you've got an economy growing well above trend. You've got core PCE that is hovering close to 3%. That means that there is just no wiggle room for the Fed to be cutting rates. And for the new incumbent, whoever they are required to be dovish by job description, as we know. But the question is whether they will be able to drive that consensus, and not all on the Fed Policy Committee may agree to cutting rates endlessly because of the factors that I mentioned of core PCE being sticky and resilient economic growth, which means that the Taylor rule rate is at 350.
OK, so the FOMC could be the guardrail on that dovishness from Trump's pick for Jerome Powell's replacement. Thank you so much for the roundup, Ben Ram. Good to see you there.
This is Tom Keene, inviting you to join me for the Bloomberg Surveillance Podcast. It's about making you smarter each and every business day. We bring you a recap of what happened overnight in Europe and Asia, the day's economic data, and complete coverage of the U.S. market open. We cover stocks, bonds, commodities, currencies, even crypto, all the information you need to excel. Bloomberg Surveillance also brings you the analysis behind the headlines. We do that with lengthy conversations with our expert guests, the smartest names in economics, finance, investment, and international relations. We do all this live each and every weekday, then bring you the best analysis in our daily podcast. Search for Bloomberg Surveillance on YouTube, Apple, Spotify, or anywhere else you listen. On the East Coast, listen at lunch, and on the West Coast when you wake up. That's the Bloomberg Surveillance Podcast with me, Tom Keene, along with Paul Sweeney and Lisa Mateo. Subscribe today wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm Doug Krisner. The Supreme Court is refusing to allow President Trump to deploy National Guard troops in Chicago. This ruling deals a setback to Trump's drive to use the military in liberal cities across the country. Now, a majority of the justices left in force an earlier judge's ruling that has blocked the deployment since October 9th. The High Court said the government failed to identify a source of authority that would allow the military to execute the laws in Illinois. A federal judge has ruled the Trump administration can move ahead with a $100,000 fee on new H-1B visa applications. Now, this is a setback for U.S. tech companies that rely heavily on hiring skilled foreign workers. However, the decision gives a boost to the Trump administration's campaign to restrict immigration and push demand for U.S. workers. Now, the Chamber of Commerce sued to block this proposal, and it can appeal. Another batch of files related to Jeffrey Epstein was released today by the Department of Justice, and several mentioned President Trump. There was a 2020 email from a prosecutor with new details about Trump's trips on Epstein's private jet in the 1990s, which the president has said never took place. Now, following the release, the Department of Justice posted on X that some of the latest documents include untrue claims about the president that were submitted to the FBI just before the 2020 election. Here is Vermont Democratic Congresswoman Becca Balint.
What they mean by that is they don't like what's in the file, so they're trying to distract from it. I mean, let's just look at one instance alone. When you look at the 8 flights that so far we've been able to document that the president was on, he has tried to distance himself from Jeffrey Epstein for years now. It was clear that they had a much closer relationship than he will admit to. And what is so frustrating to so many of us right now is that Americans can handle the truth.
That is Vermont Democratic Congresswoman Becca Balint speaking on Bloomberg's Balance of Power. Now, the files also show Epstein named 2 executors of his will, former Barclays CEO Jess Staley and ex-Treasury Secretary Larry Summers. Now, Summers has stepped away from public commitments in light of revelation about his ties to Epstein. That would include his role as a paid contributor to Bloomberg Television. President Trump saying today he expects the next Fed chair to lower interest rates even if the economy is doing well. In a post today on Truth Social, Trump also said he wants the new chairman to lower interest rates if the market is doing well. And Trump added, anyone who disagrees with him will never be Fed chairman. Here is Bloomberg's Laura Davison.
Well, you can see in this Truth post that Trump is really, really worried about interest rates in particular. This is, he's, supposed to be meeting with Rick Reeder, a potential Fed chair this week. And as he's kind of started to figure out is that he is not able to compel markets to do exactly what he wants them to do. We've seen this time and time again with the Liberation Day tariffs throughout the year, is that, he is trying to, tell traders, hey, look, it's good news, go up. And, we should keep interest rates steady. Right. However, that's not both how the Fed is thinking as well as how traders are thinking as they're looking at the whole holistic economy, which has a bunch of other warning signs out there.
Bloomberg's Laura Davison speaking on the Balance of Power program. Now, Trump has narrowed his list for Fed chair nominees to a few candidates. An announcement is expected over the next couple of weeks. In company news, Novo Nordisk has received FDA approval to market its Wegovy obesity drug in pill form. Novo will begin selling the Wegovy pill in early January. Here is Mike Duthstar, president and CEO of Novo Nordisk.
This is really going to be super exciting for the millions of patients that have been waiting to get their hands on a GLP-1 pill. And for the first time, we are having a pill that has an efficacy of some 17% if you take the pill regularly, and 1 in 3 people are going to actually reduce up to 20% weight loss.
That is Mike Dustar. He is the CEO of Novo Nordisk, speaking earlier on Bloomberg Surveillance. Now, this pill is crucial for Novo's strategy to take on its rival Eli Lilly. Lilly's oral obesity drug could be approved by March. We go to Pennsylvania, where an explosion has occurred at a nursing home north of Philadelphia, and a gas leak is suspected as being the cause. Officials say part of the building has collapsed. Some residents were trapped inside, and at least 2 people were killed, with several others injured. Here is Pennsylvania Governor Josh Shapiro.
We believe preliminarily that it was a gas leak that led to that. The explosion was really quite catastrophic.
That is Pennsylvania Governor Josh Shapiro. A private jet carrying Libya's military chief of staff crashed in central Turkey. He was killed along with 4 other passengers believed to be high-ranking Libyan military officials. The aircraft was a Falcon 50 jet. It disappeared from radar while flying from Ankara to Tripoli on Tuesday evening. And that is news when you want it with Bloomberg News Now. I'm Doug Krisner, and this is Bloomberg.
Confidence actually rebound after that government shutdown. But consumers are still worried. They're worried about inflation, about tariffs, about politics, concerns that for most of the year have kept that consumer confidence index stuck around some of the lowest levels since the pandemic. So with those economic question marks and the elevated market valuations, net positioning right now in equity markets, believe it or not, is actually now back down to neutral levels to close out the year, at least according to Citigroup strategists. But hang on, Scott Wren over at Wells Fargo Investment Institute, he says investors should heed the positive trends in place, like stable economic growth, stronger corporate earnings, and Katie Greifeld, the high likelihood that inflation actually moderates.
Well, that all sounds very good when it comes to the economic front, but let's take a look at the valuation picture when it comes to the S&P 500. You're taking a look at the S&P 500's long-term PE ratio. We're pretty much knocking on the door of 40 here. You compare that to past episodes. This chart goes back to 1996. I was 3 years old, continuing on yesterday's theme. But the last time we were at these sort of levels, it was the summer of 2000. You can see that the S&P 500 here in blue, we reached those heights, then we went down. Then you go to about 2022, which is that's when the Fed really started hiking interest rates and the market started to price it in. That blue line went down once again. And that brings us to the end of 2025. We're at these levels closing in on 40 once again. And there's a lot of questions about what that blue line will do in 2026, Romaine.
Brian Mulberry joins us right now to kick us off to the close. He's Senior Client Portfolio Manager over at Zacks Investment Management. And Brian, I do want to start there where Katie left off with this idea of valuation and honestly the idea of whether you see 2026, the equity market being a little bit more driven by fundamentals or whether it's still going to be driven by some of the hopium and some of the technical levels that pushed us higher this year.
Yeah, absolutely. I think the 2 biggest drivers of the market this year continue into at least the early part of next year, which is the hope that rates continue to go lower and that CapEx spending in AI infrastructure continues to actually go into the ground. You see that momentum that's been driving up that valuation, and that's because we have really large amounts of dollars, that huge spending, that CapEx of AI, that's all been announced. And so since that's public knowledge, that gets priced into the market where we are today. As long as all of that CapEx actually happens, the money gets spent, and we start to see dirt getting moved and data centers getting built and adding capacity to the power grid, you could see how you would have that momentum stay in place as it starts to feed into earnings outside of just the technology sector that's been driving the market over the last year or two. The problem is all of that CapEx might not actually happen. We're roughly $2 trillion over the next 3 to 5 years. That is an absolutely huge number, and roughly half of the GDP report that we saw this morning is that AI infrastructure spending. All of that has to go into the ground exactly at the right moment and exactly the right order in order to continue that high momentum, that high PE valuation that we're looking at right now.
And that's a great point, particularly on the idea that a lot of these big numbers, these hundreds of billions of dollars in investments, these are still commitments and not necessarily actual cash in hand or shovels on the ground, as you say. But it gets to the idea, Brian, as to whether you see fragility in this market, because if we do get any sort of sense of a delay, like we got a couple of weeks ago, there was a big report that Oracle denied, but that Oracle was somehow pushing back by about a year, a big project that it had been working on in southeastern Michigan. If we have that kind of fragility in the market, what does that mean if we do start to see material delays?
Well, in a word, volatility, because that's exactly what we got in that very example that you're speaking about. Oracle stock obviously having a meteoric rise and then a really rapid fall based on that loss of confidence, right? So if we don't see the money actually being spent and the growth in AI doesn't really happen the way that it's projected or the way that is currently priced in through the momentum of the market, then in a word, we just simply see more and more volatility. That's probably likely since we're seeing more competition increasing. It's not just that the Mag 7 are competing with each other. We're starting to see other startups come into the space and really start to show that there might be more efficient ways to train large language models. Maybe we don't need as many data centers that are currently priced in to where this market is currently valued.
And Brian, how do you see that volatility being expressed? Does that result in a higher VIX? It feels like we've been watching that all year, pretty stubbornly low. We get bouts of index level volatility. They never seem to stick around. Where do you see that volatility actually manifesting itself?
Well, actually, we see it manifesting in the fact that a lot of investors simply are de-risking their portfolios. When we look at investment styles in terms of growth versus value, large cap value has been outperforming large cap growth by over 5.5% in the last 90 days. Now, it was a rebalancing, if you will, in the Russell 1000 value where they included names like Google and Meta back in June. And Google's had a really nice run, up 25% in that 90-day period. But names like Eli Lilly up over 40%, and Merck is up over 30%. So we're seeing a rotation of risk right now as investors are moving away from large cap growth and some of these Mag 7 types of names into places where are a little bit more fairly valued. And although the stock market is going up and the VIX is going down, we are seeing a rotation, if you will, in the investment style that's very measurable right now.
Yeah, no, it's a good point. That rotation between growth and value, it has certainly been dramatic over the past couple of months. I want to go back to the chart that I was showing at the top of the show. You think about the S&P 500's long-term PE ratio. We're looking at heights that we've really only been at about 2 times or so in the past 3 decades. And I wonder what that means to you. We hear time and again that valuation is not a great timing tool. It's not something that you should, time your trades off of. But even still, how do you factor it into your outlook for the year ahead?
Well, we want to sit there and take a look at quantitatively how can we actually build up to this type of evaluation. And again, the answer is we have a lot of money. That $2 trillion that is committed capital is how you get to this type of evaluation. All of the market is simply assuming at this point that those dollars get invested as promised right now. The problem is the market in the business community is a little bit different. As competition increases, more and more attention is going to get paid to the monetization. So we've got a lot of capital investments in infrastructure, but when does that money come back to the balance sheets of these companies that are building out data centers? And when that capital does come back in the form of revenue, is it profitable? So it all comes down to earnings and earnings growth into the future. For the Mag 7, we think it probably continues to be fairly positive, much better than the S&P 500. So again, continuing that positive move and momentum, but there is a point where it starts to level off. The rate of growth, especially for somebody like NVIDIA, starts to top off. And even though they're a big company and they're very profitable, the momentum starts to slow.
All right, Brian, got to leave it there. Brian Mulberry, great to have you. Merry Christmas. Senior Client Portfolio Manager at Zacks Investment Management, kicking us off to the close here on this Tuesday afternoon. When we come back, I'll push ahead to what markets can expect when it comes to real estate, and more importantly, on the issue of affordability. It's become a hot button issue. A conversation up ahead with Meredith Whitney when we come back after the break.
And from affordability to luxury, we'll take a look at the lucrative fashion resale world. Ben Heminger, he is CEO and co-founder of Fashion File, joins us to discuss why investing in a Chanel might bring better returns than investing in equities.
And the only thing that could potentially bring better returns, and that is, how about a Pikachu card?
Oh.
Conversation up ahead about the world of collectibles with Logan Paul, of course, a famous YouTube influencer, and Ken Golden, legend in the collectibles space. You got to see what he was wearing.
I'm excited.
Millions of dollars around the neck. All that more coming up in a bit, right here on The Close on Bloomberg.
Novo Nordisk shares soaring today with the drug maker winning approval for a first-of-its-kind GLP-1 pill. I got the chance to catch up with Novo Nordisk president and CEO Mike Dostar on the heels of the announcement about how the Wegovy pill could shake up this very competitive space. Here's part of that conversation.
This is really going to be super exciting for the millions of patients that have been waiting to get their hands on a GLP-1 pill. And for the first time, we are having a pill that has an efficacy of some 17% if you take the pill regularly. And 1 in 3 people are going to actually reduce up to 20% weight loss. I think that data speaks for itself, and we are super excited, of course, to be the first to the market, and we're going to go all in trying to make this a huge success.
Well, moving forward, I mean, beyond just these first few months, after Eli Lilly does have their pill on the market, how do you plan to compete? What is your strategy there, given my understanding is that there's likely going to be no restrictions when it comes to food, when it comes to drinks, around Lilly's version?
Yeah, so as I mentioned, there are no other phase 3 trials of oral GLP-1 that has shown this level of efficacy. This means that for the first time ever, people do not have compromise between either taking an efficacious injection or a convenient pill. For the first time ever, you have the same efficacy of 17% in injection or a pill. You can take it on a daily basis as a pill or a weekly injection. And that, I think, is the key selling points with Wegovy pill. We also have more than 10 years of course, experience with regards to safety data and what have you. That's why it's called the Wegovy pill, which means that this pill is not only going to reduce your weight, it also has protection for your cardiovascular systems. So this is a phenomenal pill, second to none, I would say, and we are very ready to compete with it.
Let's talk about how you're going to sell it. Through what channels will you sell this Wegovy pill? And will all of those channels be available at launch?
The quick answer is yes. We're going all in. We're, of course, going to sell this through our own websites, NovoCare Pharmacy, as well as all of our partners, be it Ro, LifeMD, Costco, Weight Watchers. Everyone that you can imagine is going to start launching this at the same time on the day of the launch. Trump RX, of course, will be coming up soon as well as, of course, the traditional channels that usually medicine is procured in U.S.
Well, to that point that, it's going to be widely available, let's talk about supply. I know that you've already started production. How confident are you that you're going to be able to, meet all of that demand at launch, given, of course, the supply challenges that you've been through in the past?
Let me take you back, 10 years ago, when we started the journey of putting a peptide into a pill, no one thought scientifically that is possible. You have to remind your audience that pills are usually chemical entities, small molecules, and not proteins and peptides. And often they have lower efficacy because of that. When we decided to actually go this route, everyone thought scientifically this is impossible. Then after that, when we proved them wrong, people thought that we cannot scale that because this is quite difficult to do, again, because it's large molecule inside a pill. Again, we have shown confidence that we are able to scale this more than enough for every single person who would want to take the pill, and we're ready for that. And then, of course, lastly, people are writing us off that, this would not be possible at an affordable price. And I'm also very happy to say, once again, we are proving all of these skeptics wrong. So I'm super excited that we have something that is borderline miracle, in my own humble opinion, a peptide in a pill with a high efficacy, produced at scale, and we're going to actually sell it through all channels at relatively affordable price.
And our thanks to Novo Nordisk President and CEO Mike Dostar. It was a really interesting conversation, Romain. It didn't make it into that clip that we showed, but I also asked him about M&A. You remember that high-profile bidding war that they had with Pfizer for Metsera. Pfizer ultimately won out, but he said that they're absolutely looking at more M&A, so definitely a name to watch in 2026.
Absolutely. A great interview. And also gets to this idea of just how they kind of broaden out their portfolio. I mean, obviously, having a pill helps differentiate them, but at some point you also wonder sort of what's the next step. You don't want to sort of become, the next Moderna or,
Right.
kind of a one-trick pony, if you will.
Right, absolutely.
Yeah.
You want to diversify that portfolio. This is a big moment for them, though. We know that they've lost a lot of U.S. market share to Eli Lilly. The fact that they have at least a couple months where they'll be the only game in town when it comes to oral pills in the U.S. market, it's a pretty interesting sort of turn here when it comes to the race between these two. But you take a look at the shares year to date. Novo down 45%, Eli Lilly up 40%. There's a clear winner when it comes to the stock market.
Yeah, absolutely. A great conversation that you had early in the morning, Katie Greifeld. When we come back here on the close, we're going to stay in the tech space here. A conversation with Brent Thill over at Jefferies. We're going to get his insights on the trends that could shape the direction for hyperscaler stocks in 2026. That's coming up next here on the close. This is Bloomberg. All right, time now for our top calls, the big movers on the back of analyst recommendations. We're going to start today with Levi Strauss. Raymond James initiating coverage of the jeans maker with Outperform and expectations for the shares to rally more than 20% from current levels to $26 over the next 12 months. The price target implying mid-single-digit revenue growth and high single-digit earnings growth, fueled by broad-based business and expanding EBIT margins. Those shares, nevertheless, down about 0.8% here on the day. Next up, let's take a look at Coty. Evercore ISI cutting the beauty company to in line as Coty's CEO stepping down. The analyst saying much of his investment thesis rested on the CEO's vision, and without her there, the lack of visibility on potential upside catalysts means the analyst, for at least right now, is throwing in the towel. Those shares down a second straight day as that stock heads towards its worst annual performance since 2018. And finally, let's take a look at Tesla. Canaccord boosting its $482 price target to $551. That's the second highest on the street. The firm flagging, quote, constructive developments beneath the surface and encouraging investors to look through any softness for the quarter. Those are some of our top calls. Meanwhile, we want to push ahead, well, to not only the next quarter, but the next year. We're keeping an eye on hyperscalers, another group fueled by long-term bull cases tied to the AI build-out. A new analysis from Bloomberg Intelligence expects generative AI to reach $1.8 trillion in revenue by 2032. Joining us right now to talk about his outlook for hyperscalers in 2026 is Brent Thill, tech sector leader at Jefferies with a focus on software and internet research. Brent, it's been a great year for pretty much all of these companies, most of them, we should say, in this space here. How, if at all, does it get any better in 2026?
Yeah, I mean, it's been a great year. As you mentioned, I think ultimately there's a high degree of skepticism right now, and will AI pay off? And so I think we're entering 2026 with some degree of skepticism. Some of these stocks have sold off on that concern. And so I think we got to get better referenceability, more AI revenue data points. As you mentioned, most of these stocks have done pretty well. Amazon has lagged materially, so we think that's an interesting name where we think backlog and growth rates can accelerate. So Amazon would be a name on this weakness that we like on the pullback. But I think, it comes back to real mile markers now getting live referenceable customers up and going. And everyone's talking a big game, but can they deliver? And as they say in West Texas, big hat, let's see the cattle. And we haven't seen the cattle yet on some of the revenue numbers, and at least in the application sector. We've seen acceleration at Microsoft. We've seen acceleration at Google. We haven't seen that yet at Amazon. We think we're going to see that, so we think that'll kick in. Again, should be good for many of the players, but it should be, in our opinion, really good for Amazon as they've been playing catch up.
When you look at the landscape of these companies, I am curious as to what your thoughts are specifically on Meta, particularly when it comes to the AI story, because it seems like they are the outlier, or at least investors are treating them like they are the outlier relative to some of the other names that you just mentioned, Brent.
Yeah, I mean, actually, Meta's outperforming even Amazon. So I go back to Amazon's been treated as the biggest outlier. But to your point, yeah, on consumer, I would agree with that. So we look at it, enterprise versus consumer. It's really Google versus Meta. Google's up 66% year to date. Meta's up about 14%. And I think there are some concerns about what Zuckerberg has said in terms of the next level of investment that he needs to make. We would buy into that fear because they've always proven that they actually show an ROI. And I think when you look at it just as a consumer of Instagram, They know what I like. They nail it, and within 10 seconds, I have all the right ads in front of me. So I think in terms of consumer AI, they're in a great spot. I think the hidden thing on Meta, I think they're going to start to sell their infrastructure to enterprises. And they have today a really good back end that they run, similar to what Amazon ran on AWS. Why is Meta not renting this service out to enterprises? And I think there's a hidden call option where they could do that. I have no idea when they're going to do it or how they're going to price it, but I think everyone we talk to is like, this is a big opportunity for them to get more into enterprise on that side. And I think from the consumer perspective, there's no other consumer play that can monetize like Meta on AI. You can just see it already in the platform. You can see what they're doing. You can see it with wearables. There's a pretty rich ecosystem they're building, and the advertisers agree with what we're saying, and that's why we're so bullish about what Meta's doing.
Well, Brent, let's say that were to happen, that Meta did actually, start selling to enterprise. Who would they be competing against there, and how stiff is that competition?
Yeah, it's Amazon, Google, Microsoft. I mean, it's stiff. But if you think about, they run one of the top open source products that companies are using. Jeffries is an example. My firm is using this technology. And our CIO said, look, if they would sell this to us as a packaged service, we would be a buyer of it. They don't do that today. And so I sit here and look at what's the call option, what's the upside. And it seems like there's a great opportunity because this is exactly how Amazon started with AWS, right? They had their own internal service that ran their own e-commerce site. They're like, why don't we sell this to the rest of the world?
Right.
And look, it's the biggest profit driver, and it's one of the biggest portions of their market cap. So I think, again, I don't know when they're going to do it, how they're going to do it, how they're going to price it. We're just saying we think there's a call option for them to do more than just consumer.
All right, Brent. We'll see if anyone from Meta is listening right now. Really appreciate your time. That is Brent Thill of Jefferies. Coming up, we'll be speaking with Meredith Whitney. Don't go anywhere. This is The Close.
Boston.
And I'm Katie Greifeld. We are counting down to the close on, it's Tuesday, right?
It is Tuesday.
It is
Katie,
Tuesday.
Right? It's the eve of Christmas Eve.
That's true. Christmas Eve. We're keeping an eye on these markets, also keeping an eye on the housing market. Of course, it's something we've been talking about all year. And there's.
Are you getting me a house for Christmas?
No, absolutely not.
I would have been indebted to you forever.
That's truly the case. Mortgage rates actually are in the low 6% range. This isn't something we've seen in a while, but then you take a look at homebuyer sentiment right now, and it remains pretty depressed. And 6%, I mean, where we are right now, maybe it's the most affordable sort of levels that we've seen in almost 3 years, but still, compared to, history beyond that, really high levels.
Yeah, absolutely.
Well, let's keep this conversation going with Meredith Whitney. She is CEO and founder of Meredith Whitney Advisory Group. Meredith, great to have you with us. Let's talk about housing. Let's talk about affordability, because I'm taking a look at your notes, and basically you say that rates alone are not the problem. Give us the other piece of the picture here.
Yeah, I think that most people look at rates and wonder why the housing market's not picking up, astonishingly. And the big issue is that home prices are up nearly 46% from 2020. So it's the affordability is about rates, but so much more about the price of a home. So it's prohibitive for new home buyers to get into the market, and even some existing home buyers to relocate it within the market. And there's a couple other things that there's one main thing that also is keeping the market gummed up, which is 60% of the existing homes are owned by people over 60. So it's really like the market's really gummed up. They don't want to sell. And so your 2025 will be remembered as the slowest existing home sales market in over 25 years. And I don't see that improving dramatically anytime soon, whether the Fed cuts rates, 100 basis points or not next year and the following year, I don't think the existing home sales market is going to move very much.
Right. Yeah. And you think about, what the Fed is expected to do next year, certainly not even 100 basis points of cuts. But it's interesting. You have this sort of equation in your notes. You write that rates they need to decline by at least 200 basis points and home prices need to decline by at least 10% in order to revive home sales. That's not an either or. That is an and situation. Meredith, is that a scenario that we could actually see play out?
No, I don't think it is. And here's the critical factor. The existing home sale market, I don't think is going to, whether rates go down, I don't think home prices are going to go down enough to make existing homes affordable. However, next year, the main thing of investors' focus should be the fact that it's a midterm election year and all eyes are going to be on affordability. Now, many things like food prices, services costs are going to be really sticky to come down, right? They're the actual inflation rate may slow, but the impact of cumulative inflation is very real, and investors or shoppers are feeling it in their wallets. But two things are coming out, or three things are going to come out. So in July, the Senate Banking Committee passed on a bipartisan basis the ROAD Act, the Road to Affordability, reinventing the Affordable American Dream Act. And then last week, the House Banking Committee passed the Housing for the 21st Century. Now, at a very high level, these bills are very similar, both resounding bipartisan support and both dealing with what legislative issues can be done. Now, most of what's going on with real estate is being done, needs to be done at the local level, and I'll get into that in a second. But what these two bills are focusing on is new home creation and new manufactured home creation, which is less than a quarter of what site-built construction is. So manufactured housing are going to be the critical focus for an attack track for politicians as well as investors.
But Meredith, I am curious, though. I mean, can you go to the local level for a second, too? Because, I mean, there's also a big issue with regards to land use being a factor in addressing affordability. This is something that the incoming mayor of New York City has pointed out. A couple of governors over out west have also stated this as well. Do you think we might see more progress coming from the state and local level in addressing this rather than at the congressional federal level?
Romaine, you're so smart. I'm so glad you brought that up. Thank you. So the one thing that has been floated is the use of federal land, but federal land is not going to be attractive for many people who want to be home buyers, right? It's too remote, it's too rural. But states are huge owners of assets, and states can free up either municipal land, and that's going to be under the governor's control. So there's a legislative approach, and then there's going to be an executive order approach. So I think this is something that Trump is really going to dig into, which is coercing the governors to really be proactive at the going down the food chain at the local municipal level and giving up state and municipal land to enable home site production, and particularly.
I think we're having some technical difficulties with Meredith's connection there. Meredith Whitney, the CEO and founder of Meredith Whitney Advisory Group, and of course, prior to starting her own macro firm, a strategy firm, of course, a legend on Wall Street, who had some very prescient calls about the banking crisis way back in the days. And it gets, sorry, Meredith, I think we still have you. If we can bring you back into the conversation, I do just want to get your thoughts real quickly, Meredith, on just the issue of the perceptions of affordability, because it's one thing to talk about the reality of it, but we know that inflation, or at least the perception of inflation, often is just that, perception. And there are a lot of people, particularly in the middle income spectrum, who they look at the price of things, whether it's homes or even something more pedestrian like groceries, then they look at their own wage growth and they don't see it keeping pace. And I do wonder how much of a psychological effect that has on some of the issues we've had when it comes to housing and housing affordability.
Well, you bring up another great point. I'll tell you that home equity usage is being used more now for cash management and making ends meet than it has ever been used before in history. So home equity is growing faster than any other consumer loan category. And historically, home equity has been used for home renovations. But as Home Depot said, home renovations are not picking up to their expectations, and they guided down because of it. More and more people are using, actually, there's been a very sharp increase in people using home equity withdrawals just to make ends meet. I think that number is going to be closer to 50% when 2025 is tallied, and that tells you that consumers are really strain. Now, home equity is going to be the cheapest source of debt, but it's also not something that everybody wants to tap into. The fact that so many people are relying on that to make ends meet tells you it's more than perception. It's a real reality that people are very stretched financially.
All right, Meredith, I have to leave it there. Always wonderful to catch up with you. Have a wonderful holiday if we don't see you before then. Meredith Whitney, CEO and founder of Meredith Whitney Advisory Group. When we come back, everyone's wishing for silver and gold this holiday season, especially with the recent rally. We're going to take a look at some of the stocks, and the miners specifically, that have moved the most on the back of this monster rally in precious metals. That's our Stock of the Hour, and it's up next. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Stocks in a holding pattern as volume plunges ahead of the Christmas holiday. Live from Studio 2 here at Bloomberg headquarters in New York. Merry Christmas. I'm Romaine Bostic.
And I'm Katie Greifeld. We're kicking you off to the countdown to the close on this Christmas Eve. And we actually have a lot of good news to talk about. The S&P 500, we are set to close at an all-time high, higher by about 0.4%. Big tech also seeing that upside bid today. The Nasdaq 100 higher by a similar level. All quiet when it comes to the bond market. The 10-year Treasury yield pretty much flat on the day, though the level's a little bit elevated here at 416. And then you take a look at gold. I talked about records in the S&P 500. More records when it comes to gold right now, higher by about 1%, Romaine.
Yeah, a phenomenal run that we've seen this year for gold and silver. But you come back to the broader markets and the economic data that we got today, which is actually once again leaving investors a little bit split as to where markets go and what this means for monetary policy. On one hand, you have an economy expanding in the third quarter at the fastest pace in 2 years. Resilient consumer, resilient business spending. On the other hand, a lot of skepticism about the reliability of that top-line GDP data and concern about income-level disparities in the consumer spending numbers, angst over separate data showing U.S. orders for business equipment down way more than forecasts, and industrial production restrained by weak manufacturing output. But that mixed economic picture, that's been the story all year. On top of that, though, complicating matters is a fifth consecutive monthly decline in U.S. consumer confidence. It was a somewhat surprising reading, too, because economists were expecting confidence to actually rebound after that government shutdown. But consumers are still worried. They're worried about inflation, about tariffs, about politics, concerns that for most of the year have kept that consumer confidence index stuck around some of the lowest levels since the pandemic. So with those economic question marks and the elevated market valuations, net positioning right now in equity markets, believe it or not, is actually now back down to neutral levels to close out the year, at least according to Citigroup strategists. But hang on, Scott Wren over at Wells Fargo Investment Institute, he says investors should heed the positive trends in place, like stable economic growth, stronger corporate earnings, and Katie Greifeld, the high likelihood that inflation actually moderates.
Well, that all sounds very good when it comes to the economic front, but let's take a look at the valuation picture when it comes to the S&P 500. You're taking a look at the S&P 500's long-term PE ratio. We're pretty much knocking on the door of 40 here. You compare that to past episodes. This chart goes back to 1996. I was 3 years old, continuing on yesterday's theme. But the last time we were at these sort of levels, it was the summer of 2000. You can see that the S&P 500 here in blue, we reached those heights, then we went down. Then you go to about 2022, which is that's when the Fed really started hiking interest rates and the market started to price it in. That blue line went down once again. And that brings us to the end of 2025. We're at these levels closing in on 40 once again. And there's a lot of questions about what that blue line will do in 2026, Romaine.
Brian Mulberry joins us right now to kick us off to the close. He's Senior Client Portfolio Manager over at Zacks Investment Management. And Brian, I do want to start there where Katie left off with this idea of valuation and honestly the idea of whether you see 2026, the equity market being a little bit more driven by fundamentals or whether it's still going to be driven by some of the hopium and some of the technical levels that pushed us higher this year.
Yeah, absolutely. I think the two biggest drivers of the market this year continue into at least the early part of next year, which is the hope that rates continue to go lower and the CapEx spending in AI infrastructure continues to actually go into the ground. You see that momentum that's been driving up that valuation, and that's because we have really large amounts of dollars, that huge spending, that CapEx of AI, that's all been announced. And so since that's public knowledge, that gets priced into the market where we are today. As long as all of that CapEx actually happens, the money gets spent, and we start to see dirt getting moved and data centers getting built and adding capacity to the power grid, you could see how you would have that momentum stay in place as it starts to feed into earnings outside of just the technology sector that's been driving the market over the last year or two. The problem is all of that CapEx might not actually happen. We're roughly $2 trillion over the next 3 to 5 years. That is an absolutely huge number, and roughly half of the GDP report that we saw this morning is that AI infrastructure spending. All of that has to go into the ground exactly at the right moment and exactly the right order in order to continue that high momentum, that high PE valuation that we're looking at right now.
And that's a great point, particularly on the idea that a lot of these big numbers, these hundreds of billions of dollars in investments, these are still commitments and not necessarily actual cash in hand or shovels on the ground, as you say. But it gets to the idea, Brian, as to whether you see fragility in this market, because if we do get any sort of sense of a delay, like we got a couple of weeks ago, there was a big report that Oracle denied, but that Oracle was somehow pushing back by about a year a big project that it had been working on in southeastern Michigan. If we have that kind of fragility in the market, what does that mean if we do start to see material delays?
Well, in a word, volatility, because that's exactly what we got in that very example that you're speaking about. Oracle stock obviously having a meteoric rise and then a really rapid fall based on that loss of confidence, right? So if we don't see the money actually being spent and the growth in AI doesn't really happen the way that it's projected or the way that is currently priced in through the momentum of the market, then in a word, we just simply see more and more volatility. That's probably likely since we're seeing more competition increasing. It's not just that the Mag 7 are competing with each other. We're starting to see other startups come into the space and really start to show that there might be more efficient ways to train large language models. Maybe we don't need as many data centers that are currently priced in to where this market is currently valued.
And Brian, how do you see that volatility being expressed? Does that result in a higher VIX? It feels like we've been watching that all year, pretty stubbornly low. We get bouts of index level volatility. They never seem to stick around. Where do you see that volatility actually manifesting itself?
Well, actually, we see it manifesting in the fact that a lot of investors simply are de-risking their portfolios. When we look at investment styles in terms of growth versus value, large cap value has been outperforming large cap growth by over 5.5% in the last 90 days. Now, it was a rebalancing, if you will, in the Russell 1000 value where they included names like Google and Meta back in June. And Google's had a really nice run, up 25% in that 90-day period. But names like Eli Lilly up over 40%, and Merck is up over 30%. So we're seeing a rotation of risk right now as investors are moving away from large cap growth and some of these Mag 7 types of names into places where are a little bit more fairly valued. And although the stock market is going up and the VIX is going down, we are seeing a rotation, if you will, in the investment style that's very measurable right now.
Yeah, no, it's a good point. That rotation between growth and value, it has certainly been dramatic over the past couple of months. I want to go back to the chart that I was showing at the top of the show. You think about the S&P 500's long-term PE ratio. We're looking at heights that we've really only been at about 2 times or so in the past 3 decades. And I wonder what that means to you. We hear time and again that valuation is not a great timing tool. It's not something that you should, time your trades off of. But even still, how do you factor it into your outlook for the year ahead?
Well, we want to sit there and take a look at quantitatively how can we actually build up to this type of evaluation. And again, the answer is we have a lot of money. That $2 trillion that is committed capital is how you get to this type of evaluation. All of the market is simply assuming at this point that those dollars get invested as promised right now. The problem is the market in the business community is a little bit different. As competition increases, more and more attention is going to get paid to the monetization. So we've got a lot of capital investments in infrastructure, but when does that money come back to the balance sheets of these companies that are building out data centers? And when that capital does come back in the form of revenue, is it profitable? So it all comes down to earnings and earnings growth into the future. For the Mag 7, we think it probably continues to be fairly positive, much better than the S&P 500. So again, continuing that positive move and momentum, but there is a point where it starts to level off. The rate of growth, especially for somebody like NVIDIA, starts to top off. And even though they're a big company and they're very profitable, the momentum starts to slow.
All right, Brian, got to leave it there. Brian Mulberry. Great to have you. Merry Christmas. Senior Client Portfolio Manager at Zacks Investment Management, kicking us off to the close here on this Tuesday afternoon. When we come back, I'll push ahead to what markets can expect when it comes to real estate and, more importantly, on the issue of affordability. It's become a hot button issue. A conversation up ahead with Meredith Whitney when we come back after the break.
And from affordability to luxury, we'll take a look at the lucrative fashion resale world. Ben Heminger, he is CEO and co-founder of Fashion File, joins us to discuss why investing in a Chanel might bring better returns than investing in equities.
And the only thing that could potentially bring better returns, and that is, how about a Pikachu card?
Oh.
Conversation up ahead about the world of collectibles with Logan Paul, of course, a famous YouTube influencer, and Ken Golden, legend in the collectibles space. You got to see what he was wearing.
I'm excited.
Millions of dollars around the neck. All that more coming up in a bit, right here on The Close on Bloomberg.
Novo Nordisk shares soaring today with the drug maker winning approval for a first-of-its-kind GLP-1 pill. I got the chance to catch up with Novo Nordisk President and CEO Mike Dostar on the heels of the announcement about how the Wegovy pill could shake up this very competitive space. Here's part of that conversation.
This is really going to be super exciting for the millions of patients that have been waiting to get their hands on a GLP-1 pill. And for the first time, we are having a pill that has an efficacy of some 17% if you take the pill regularly. And 1 in 3 people are going to actually reduce up to 20% weight loss. I think that data speaks for itself, and we are super excited, of course, to be the first to the market, and we're going to go all in trying to make this a huge success.
Well, moving forward, I mean, beyond just these first few months, after Eli Lilly does have their pill on the market, how do you plan to compete? What is your strategy there, given my understanding is that there's likely going to be no restrictions when it comes to food, when it comes to drinks, around Lilly's version?
Yeah, so as I mentioned, there are no other phase 3 trials of oral GLP-1 that has shown this level of efficacy. This means that for the first time ever, people do not have compromise between either taking an efficacious injection or a convenient pill. For the first time ever, you have the same efficacy of 17% in injection or a pill. You can take it on a daily basis as a pill or a weekly injection. And that, I think, is the key selling points with Wegovy pill. We also have more than 10 years of course, experience with regards to safety data and what have you. That's why it's called the Wegovy pill, which means that this pill is not only going to reduce your weight, it also has protection for your cardiovascular systems. So this is a phenomenal pill, second to none, I would say, and we are very ready to compete with it.
Let's talk about how you're going to sell it. Through what channels will you sell this Wegovy pill? And will all of those channels be available at launch?
The quick answer is yes. We're going all in. We're, of course, going to sell this through our own websites, NovoCare Pharmacy, as well as all of our partners, be it Ro, LifeMD, Costco, Weight Watchers. Everyone that you can imagine is going to start launching this at the same time on the day of the launch. Trump RX, of course, will be coming up soon as well as, of course, the traditional channels that usually medicine is procured in U.S.
Well, to that point that, it's going to be widely available, let's talk about supply. I know that you've already started production. How confident are you that you're going to be able to, meet all of that demand at launch, given, of course, the supply challenges that you've been through in the past?
Let me take you back, 10 years ago, when we started the journey of putting a peptide into a pill, no one thought scientifically that is possible. You have to remind your audience that pills are usually chemical entities, small molecules, and not proteins and peptides. And often they have lower efficacy because of that. When we decided to actually go this route, everyone thought scientifically this is impossible. Then after that, when we proved them wrong, people thought that we cannot scale that because this is quite difficult to do, again, because it's large molecule inside a pill. Again, we have shown confidence that we are able to scale this more than enough for every single person who would want to take the pill, and we're ready for that. And then, of course, lastly, people are writing us off that, this would not be possible at an affordable price. And I'm also very happy to say, once again, we are proving all of these skeptics wrong. So I'm super excited that we have something that is borderline miracle, in my own humble opinion, a peptide in a pill with a high efficacy, produced at scale, and we're going to actually sell it through all channels at relatively affordable price.
And our thanks to Novo Nordisk President and CEO Mike Dostar. It was a really interesting conversation, Romain. It didn't make it into that clip that we showed, but I also asked him about M&A. You remember that high-profile bidding war that they had with Pfizer for Metsera. Pfizer ultimately won out, but he said that they're absolutely looking at more M&A, so definitely a name to watch in 2026.
Absolutely. A great interview. And also gets to this idea of just how they kind of broaden out their portfolio. I mean, obviously, having a pill helps differentiate them, but at some point you also wonder sort of what's the next step. You don't want to sort of become, the next Moderna or, kind of a one-trick pony, if you will.
Right, absolutely. You want to diversify that portfolio. This is a big moment for them, though. We know that they've lost a lot of U.S. market share to Eli Lilly. The fact that they have at least a couple months where they'll be the only game in town when it comes to oral pills in the U.S. market, it's a pretty interesting sort of turn here when it comes to the race between these two. But you take a look at the shares year to date. Novo down 45%, Eli Lilly up 40%. There's a clear winner when it comes to the stock market.
Yeah, absolutely. A great conversation that you had early in the morning, Katie Greifeld. When we come back here on the close, we're going to stay in the tech space here. A conversation with Brent Thill over at Jefferies. We're going to get his insights on the trends that could shape the direction for hyperscaler stocks in 2026. That's coming up next here on the close. This is Bloomberg. All right, time now for our top calls, the big movers on the back of analyst recommendations. We're going to start today with Levi Strauss. Raymond James initiating coverage of the jeans maker with Outperform and expectations for the shares to rally more than 20% from current levels to $26 over the next 12 months. The price target implying mid-single-digit revenue growth and high single-digit earnings growth, fueled by broad-based business and expanding EBIT margins. Those shares, nevertheless, down about 0.8% here on the day. Next up, let's take a look at Coty. Evercore ISI cutting the beauty company to in line as Coty's CEO stepping down. The analyst saying much of his investment thesis rested on the CEO's vision, and without her there, the lack of visibility on potential upside catalysts means the analyst, for at least right now, is throwing in the towel. Those shares down a second straight day as that stock heads towards its worst annual performance since 2018. And finally, let's take a look at Tesla. Canaccord boosting its $482 price target to $551. That's the second highest on the street. The firm flagging, quote, constructive developments beneath the surface and encouraging investors to look through any softness for the quarter. Those are some of our top calls. Meanwhile, we want to push ahead, well, to not only the next quarter, but the next year. We're keeping an eye on hyperscalers, another group fueled by long-term bull cases tied to the AI build-out. A new analysis from Bloomberg Intelligence expects generative AI to reach $1.8 trillion in revenue by 2032. Joining us right now to talk about his outlook for hyperscalers in 2026 is Brent Thill, tech sector leader at Jefferies with a focus on software and internet research. Brent, it's been a great year for pretty much all of these companies, most of them, we should say, in this space here. How, if at all, does it get any better in 2026?
Yeah, I mean, it's been a great year. As you mentioned, I think ultimately there's a high degree of skepticism right now, and will AI pay off? And so I think we're entering 2026 with some degree of skepticism. Some of these stocks have sold off on that concern. And so I think we got to get better referenceability, more AI revenue data points. As you mentioned, most of these stocks have done pretty well. Amazon has lagged materially, so we think that's an interesting name where we think backlog and growth rates can accelerate. So Amazon would be a name on this weakness that we like on the pullback. But I think, it comes back to real mile marker is now getting live referenceable customers up and going, and everyone's talking a big game, but can they deliver? And as they say in West Texas, big hat, let's see the cattle. And we haven't seen the cattle yet on some of the revenue numbers, and at least in the application sector. We've seen acceleration at Microsoft. We've seen acceleration at Google. We haven't seen that yet at Amazon. We think we're going to see that, so we think that'll kick in. Again, should be good for many of the players, but it should be, in our opinion, really good for Amazon as they've been playing catch up.
When you look at the landscape of these companies, I am curious as to what your thoughts are specifically on Meta, particularly when it comes to the AI story, because it seems like they are the outlier, or at least investors are treating them like they are the outlier relative to some of the other names that you just mentioned, Brent.
Yeah, I mean, actually, Meta's outperforming even Amazon, so I go back to Amazon's been treated as the biggest outlier. But to your point, yeah, on consumer, I would agree with that. So we look at it, enterprise versus consumer. It's really Google versus Meta. Google's up 66% year to date. Meta's up about 14%. And I think there are some concerns about what Zuckerberg has said in terms of the next level of investment that he needs to make. We would buy into that fear because they've always proven that they actually show an ROI. And I think when you look at it just as a consumer of Instagram, they know what I like. They nail it. And within 10 seconds, I have all the right ads in front of me. So I think in terms of consumer AI, they're in a great spot. I think the hidden thing on Meta, I think they're going to start to sell their infrastructure to enterprises. And they have today a really good back end that they run, similar to what Amazon ran on AWS. Why is Meta not renting this service out to enterprises? And I think there's a hidden call option where they could do that. I have no idea when they're going to do it or how they're going to price it, but I think everyone we talk to is like, this is a big opportunity for them to get more into enterprise on that side. And I think from the consumer perspective, there's no other consumer play that can monetize like Meta on AI. You can just see it already in the platform. You can see what they're doing. You can see it with wearables. There's a pretty rich ecosystem they're building. And the advertisers agree with what we're saying, and that's why we're so bullish about what Meta's doing.
Well, Brent, let's say that were to happen, that Meta did actually, start selling to enterprise. Who would they be competing against there, and how stiff is that competition?
Yeah, it's Amazon, Google, Microsoft. I mean, it's stiff. But if you think about, they run one of the top open source products that companies are using. Jeffries is an example. My firm is using this technology. And our CIO said, look, if they would sell this to us as a packaged service, we would be a buyer of it. They don't do that today. And so I sit here and look at what's the call option, what's the upside. And it seems like there's a great opportunity because this is exactly how Amazon started with AWS, right? They had their own internal service that ran their own e-commerce site. They're like, why don't we sell this to the rest of the world?
Right.
And look, it's the biggest profit driver, and it's one of the biggest portions of their market cap. So I think, again, I don't know when they're going to do it, how they're going to do it, how they're going to price it. We're just saying we think there's a call option for them to do more than just consumer.
All right, Brent. We'll see if anyone from Meta is listening right now. Really appreciate your time. That is Brent Thill of Jefferies. Coming up, we'll be speaking with Meredith Whitney. Don't go anywhere. This is The Close.
.30 p.m. here in New York City. This is the countdown to the close. I'm Romaine Bostick.
And I'm Katie Greifeld. We are counting down to the close on, it's Tuesday, right?
It is Tuesday,
It is
Katie,
Tuesday.
right? It's the eve of Christmas Eve.
That's true. Christmas
Yeah.
Eve. We're keeping an eye on these markets, also keeping an eye on the housing market. Of course, it's something we've been talking about all year. And there's
Are you getting me a house for Christmas?
no,
Oh.
absolutely not.
I would have been indebted to you forever.
That's truly the case. Mortgage rates actually are in the low 6% range. This isn't something we've seen in a while, but then you take a look at homebuyer sentiment right now, and it remains pretty depressed. And 6%, I mean, where we are right now, maybe it's the most affordable sort of levels that we've seen in almost 3 years, but still, compared to, history beyond that, really high levels.
Yeah, absolutely.
Well, let's keep this conversation going with Meredith Whitney. She is CEO and founder of Meredith Whitney Advisory Group. Meredith, great to have you with us. Let's talk about housing. Let's talk about affordability, because I'm taking a look at your notes, and basically you say that rates alone are not the problem. Give us the other piece of the picture here.
Yeah, I think that most people look at rates and wonder why the housing market's not picking up, astonishingly. And the big issue is that home prices are up nearly 46% from
day of data before everyone leaves and goes home for the Christmas holiday. Although we need to point out that this data is going to be stale. Remember, we didn't get it in time because of the longest government shutdown in history. And actually what we're getting, to Matt, as you can see his reaction here, a massive upside surprise. Prior was 3.8%. Their survey was 3.3%. GDP comes in at 4.3% this morning. Matt, that is an uptick not many people were expecting.
Yeah, very interesting. I'm going to have to break it out with the ECAN function on the Bloomberg. ECAN Go is probably the best way to look at this kind of economic data. But I initially moaned a little bit because durable goods came in so much worse than expected at a drop of 2.2%, and then a huge jump in GDP at 4.3%. I don't know how much is going to change the rate cut calculus. We'll have to take a look at WIRP Go on the terminal to figure that out. But in terms of what traders are doing right now, if you look at the front end of the curve on the 2-year, you saw a big spike up to 350, 351 in yields, and we're still there. So selling the front end of the curve, driving the yield higher as we get a 4.3% reading on GDP for the third quarter.
Yeah, third quarter. Everyone was just going to say this is pretty much stale, but it's a massive change that people were not expecting. Of course, how much does it mean to the real economy right now, given the fact that this was months prior and the Fed is already cutting interest rates? Joining us now to get his reaction, Vincent Reinhart of BNY Investments. Vincent, what do you make of this GDP number rising 4.3% for the third quarter?
There's a lot of action in the rearview mirror, isn't there? I think part of what it does is make you wonder why the Federal Reserve felt the need to buy 0.75% worth of insurance by cutting rates in September. But that was more about employment. What it does is it worsen the disconnect we're having between our view of aggregate demand growing at such a rapid rate and employment, which is pretty sluggish.
Do you think that given this information is so stale, it's not going to make a difference? Or do you think Fed officials will look at this and take this information on with them as they consider and recalibrate what they should do in terms of interest rates in January?
Well, the important point you made was Fed officials. Remember, they're pretty divided. That it was a close call in terms of the overall 19 FOMC participants about the last rate cut. That means that almost half of them can look at this data point and say, why exactly were we doing what we were doing? So I think it does matter. And what it does is just heighten the really split within Federal Reserve officialdom.
Military flex that reportedly includes Army Rangers, Osprey aircraft, and more. Congressman Jake Auchincloss, a Marine combat veteran, is standing by live to discuss. Plus, the Trump rule. President takes a victory lap on social media after this morning's economic data, but warns anyone who disagrees with his call for higher stocks and lower interest rates will never get the job of Fed chair. Also, in black and white, a new batch of Epstein documents upping the pressure on the president, including revelations that Trump flew multiple times on Epstein's private jet, which the president has denied. The details and what else could come out later this hour. And blown away, the administration pulling the plug on 5 large-scale offshore wind projects, just as soaring energy prices become an issue in the midterms. Connecticut's governor says the move will raise costs for his constituents.
It's going to go up, and it could go up dramatically during very cold times when wind power is generating the most, and we're going to have a spike in energy demand. That's what I'm trying to protect you from.
But we begin this evening with the latest action coming out of the Caribbean, and the Wall Street Journal reporting the U.S. is moving more troops, equipment, and special operations aircraft into the region. This after President Trump last evening warned Venezuela's President Maduro not to challenge the U.S. Listen.
He can do whatever he wants. It's all right. Whatever he wants to do. If he wants to do something, if he plays tough, it'll be the last time he's ever able to play tough. But they sent their prisoners into us. They sent people from mental institutions and insane asylums into the United States, just walked right in. Venezuela took advantage of the open borders more than any other country.
Joining us now from our Mexico City bureau with the latest on the tensions between these two nations, Bloomberg's Eric Martin, who covers diplomacy and the State Department for us. Eric, it's great to have you, as always, on Bloomberg TV and radio. We already had what the president describes as a naval blockade surrounding the waters around Venezuela. What does this most recent mobilization tell us?
Well, Joe, as we first reported almost 2 weeks ago, this blockade and the first tanker seizure that we reported on and the interdictions over the weekend, one on Saturday and one on Sunday, is all about squeezing Maduro and his regime of very important income. This basically the revenue that they live off of comes from these oil sales. And so if you can cut off their source of cash flow, that's one way to really try to squeeze Maduro and the people around him to try to convince them to leave, short of the other option that President Trump has previewed, which are land strikes. And this mobilization in the Caribbean is really just extraordinary. We've seen already 15,000 troops there, and now this reporting about special ops and additional cargo of additional deployment of troops to the Caribbean. So really continuing to see President Trump and the U.S. administration with a maximum pressure strategy to try to convince Maduro that it's time to go.
Well, we're going to talk more about this with Congressman Auchincloss in just a moment, Eric. But when you look at the hardware we're sending, whether it's V-22 Ospreys, a new round of C-17 cargo planes, and apparently they were full of troops, knowing that some pretty elite forces are from those bases at Fort Campbell, for instance, and Fort Stewart. We're still adding to this armada in the Caribbean, but we don't know why?
Well, what we've seen has been this articulation. Actually, in the last 24 hours or so, we've seen some of the clearest articulation yet from President Trump as well as Kristi Noem, the Secretary of Homeland Security. She talked about tweeting yesterday, saying in an interview yesterday that Maduro has to be gone. Trump, of course, saying that if he plays tough, it'll be the last time that he plays tough, and the ultimate result is up to him. But we're seeing increasing indications, including Secretary of State Marco Rubio saying last week that it's intolerable, the behavior of the Maduro regime in terms of work with drug cartels, support for terrorists, work with Iran. We're seeing some of the most aggressive language we've seen yet, and some clear and emerging indication that the administration indeed doesn't want Maduro to just stop these activities, but as Secretary Noem and the president indicated, that they really would like to see a change potentially in leadership in Venezuela.
Eric, it's great to have you with us live from Mexico City. Eric Martin joining us now with his reaction to all of this. Democratic Congressman Jake Auchincloss of Massachusetts, a combat Marine Corps veteran who served not only in Afghanistan, as we've discussed, but also in Panama, where his reconnaissance unit at the time partnered with Colombian special ops to train Panamanian security forces for drug interdiction, the very style of mission that the president has put many thousands of Americans into harm's way to execute. Congressman, it's great to have you back with us on Bloomberg TV and radio. Are you getting any clearer guidance from the administration about the mission at this moment, with more American troops being sent to the Caribbean just in time for Christmas?
Joe, good evening. Thanks for having me back on. I don't need any more clarity from the administration. I know exactly what the mission is. It's blood for oil. This president wants to deploy the U.S. Armed Forces on behalf of U.S. oil majors in order to seize what are the world's largest oil reserves. Probably 20% of all proven oil reserves are offshore of Venezuela, about 300 billion barrels. And in 2023, the president was quite clear, looking back on his first term, that he felt like not forcing regime change and seizing that oil was a missed opportunity of Trump 1, and he won't allow it to happen in Trump 2. The problem is the American public doesn't want to do land warfare in the jungles of Venezuela against guerrilla terrorists. I've seen what that kind of tactics looks like. And if this president wants to make the case to the American public about why it's necessary, he'd better get congressional authorization.
Well, I'd love to ask you more about what these tools and what these men and women would be used for. As we just discussed with our correspondent in Mexico City, Congressman, you've got at least 10 V-22 Ospreys, the tilt-rotor aircraft used by Special Ops Forces, and a C-17 cargo aircraft from Fort Stewart. The 22s are from Fort Campbell. These two bases are home to some of the most elite special forces we have, including the 101st Airborne Division, 75th Ranger Regiment. As somebody who's actually been in the region and been involved in drug interdiction missions, what would these men and material be used for?
The best analog, Joe, is actually nothing that American forces have yet done. It's actually what the Colombian Special Forces did over the course of the last 25 years to defeat the FARC, the narco-terrorists that Colombia was battling with. And what those deployments looked like was elite groups of small numbers deploying for 6 months to 12 months at a time in isolated jungle and riverine settings where they engaged in ferocious guerrilla combat with these narco-terrorists who themselves really were living off the land, as it were, really had no set supply lines. This is a style and nature of warfare that is vicious, that would cost American lives, and that I don't think the American public thinks is a strategic priority. There is a way to responsibly try to manage regime change in Venezuela, to support Maduro over Maduro, and Maduro absolutely is a tyrant who has immiserated his people. There is a way to ensure that the Chinese cannot exploit those oil reserves, that the Iranians and Russians cannot exploit those oil reserves, but rather that they are used for the benefit of the Venezuelan people, of the Latin American people. But this is not the way to do that. What this is sleepwalking in to the same kind of mistake that George W. Bush made in Iraq.
Wow. Well, that says a lot. So you're talking about violent, jungle-based warfare to secure what you say blood for oil is oil reserves off the coast of Venezuela. So the president, you're suggesting, is lying to the American people about this being over drugs.
Oh, please. First it was drugs, then it was immigration. It's all a lie. This is all about oil. I know it would shock you, Joe, to imagine that the president might not be 100% truthful in all his statements, but he is lying through his teeth when he says it's about drugs. Of course, cocaine comes north from Central and South America, but the actual chemical scourge facing Americans right now is fentanyl. 98% of the precursors of fentanyl come from China, not from Latin America. There's 3 bipartisan bills in Congress that I helped draft that would effectively sanction and inspect and crack down on money laundering of those fentanyl precursors. This president has done nothing on that front. So if he was serious about narcotics and opioids and addiction in America, there's absolutely important bipartisan work that he could do, and I'd be the first to support that work in Congress. That is not what he's doing in South America. What he's doing in South America is trying to hook up Chevron.
Well, and of course, Chevron has a lot of experience in Venezuela. Congressman, there were 6 Democratic lawmakers, including Senator Mark Kelly, who put a video together, as I'm listening to you speak, urging members of the military to reject unlawful orders. What would be your advice to members of the military who are being sent to the Caribbean to spend their Christmas and could be receiving orders to attack?
This president has consistently put members of the armed forces in an impossible situation, whether it's deploying Marines from 29 Palms to Los Angeles in a violation of posse comitatus, whether it is subjecting them to an absurd military parade on his birthday, and now, of course, sending them into illegal operations in South America. The onus of responsibility does not rest on these captains and lieutenants who are receiving what they have to assume are lawful orders. The onus of responsibility rests with Republicans in Congress who, in private, know that this president is breaking the law and in public are too afraid to stand up to him. Last week, we had 2 resolutions on the House floor that effectively would deny this president the latitude to operate in South America without congressional authorization. Republicans refused to support it. Just cowardice, pure and simple.
Well, you mentioned posse comitatus. There was an important Supreme Court ruling today on the use of National Guard troops in American cities. Will this be enough to curb the president's plans to send them to more?
Certainly is an important blow against his increasing fusion of the military with law enforcement, particularly on domestic soil. It's always been plain, though, that again, the onus is on Congress. We've got to tie up some loopholes that exist both in the Posse Comitatus Act and the Insurrection Act and the Alien and Sedition Act that provide any president way too much latitude to abuse the military. This president has put that on steroids. But in general, Congress has a lot of work to do to reclaim Article I powers over the use of emergencies, over law enforcement, and over the military.
We should mention that was another 6-3 decision, the court rejecting the Trump request here to use National Guard troops in the city of Chicago. Congressman, once we get through the holidays, you're going to be back in Washington a couple of weeks from now with a lot of work undone. We will have gone over the health care cliff, the Obamacare cliff, as it's being called. Premiums will be rising and part of the new reality for so many Americans. And there'll be a funding deadline as well for the federal government at the end of January. To what extent are you optimistic that any of these issues will be resolved before the end of January, or going we just start counting down to another shutdown?
The ACA extension, I'm confident, will pass the House, a 3-year extension. There's a deal to be done in the Senate that I think could also pass the House, whether it was, a 2 to 3 year extension of the premium tax credits paired with some type of income gradated sort of drop off 400 to 700% federal poverty limit paired with some waste, fraud, and abuse provisions. There's a deal to be done here. The challenge right now, though, is that in Congress, we keep on talking about how do we divide up the health care bill between out-of-pocket costs, between premiums, between taxes. That's an important debate. The debate Americans want us to be having, though, is how do we lower the overall bill, period? Regardless of how you divide it up, healthcare just costs too much in this country. And there is where we need true innovative policy, whether it's about expanding community health centers to get more primary and preventative care, whether it's about bringing innovative new drugs to market that can deflect a lot of hospital care. We need to be thinking creatively about lowering the bill for healthcare by taking on rent seekers and middlemen and administrative bloat, and less about just how do we divide up a bill that is already just too big and crushing the middle class.
Think we can avoid a shutdown, or is that part of the dynamic here if there's no deal on health care?
Absolutely, we can avoid a shutdown. It's not in anybody's interest to shut the federal government down. It's not in Democrats' interest. It's not in Republicans' interest. Americans deserve a functioning federal government. We deserve an appropriations process that works. I've put forward plans to make the appropriations process better. And what it comes down to is getting away from this every year funding deadline and instead doing multi-year appropriations per agency. Fund the FAA for 5 years at a time, fund the NIH for 10 years at a time, fund the Pentagon for 1 year at a time, and actually provide some runway for authorization and appropriations, as opposed to having 9 months of posturing followed by a few weeks of failed deals every year.
From the birthplace of Romneycare, which we now call Obamacare, Democratic Congressman Jake Auchincloss of Massachusetts. It's great to have you, sir. I hope it was a good Hanukkah and a Merry Christmas. Coming up, President Trump says tariffs are to thank for a stronger than expected third quarter GDP print. We're going to take a deeper dive into the data, what's behind it, and what it tells us about the Fed's next move. Coming up on Balance of Power on Bloomberg TV and radio.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew. Thanks for joining us. Call it a Santa Claus rally or not. I know it's technically tomorrow, right? But the S&P 500 ran up to an all-time high today, reversing an unusual end-of-year slump that we've been seeing in the markets. For details, we turn now to Power Moves with Bloomberg's Nora Melinda, who joins us live from World Headquarters in New York. And Nora, it wasn't just stocks moving higher today. Gold and silver, both at all-time highs as well. What's going on?
Well, gold and silver, we know this to be a potential defensive play, but when you look at copper, that's actually a cyclical play. So what's really interesting is we see this strength in gold, silver, and copper. We had Scotiabank saying that gold is still discounted, and Jefferies saying that they expect continued strength in copper in 2026. So broad strength across the board as we're looking at these commodities in particular. But I want to take a look at the broader market. We did see a tech-led advance. We did see the S&P 500 ending about 0.5 percentage point higher, NASDAQ up about the same, and then the Dow Jones Industrial Average up about 0.2%. Of course, everyone has their eyes on what a lot of people expect to be a Santa Claus rally that kicks off tomorrow and runs through the end of the year. But I want to also take a look at treasuries. There was some activity there. We saw the 2-year treasury yield rising to 3.5%, the 10-year treasury yield about unchanged, and then the 30-year treasury yield hovering about 4.8%. A lot of activity going on in the treasury space, but I did also want to highlight what's going on in healthcare. We had a big story that we were working through today. Novo Nordisk shares were in focus, ending up about 7.3% higher on the day, especially after they won approval for the pill version of its obesity drug shot, Wegovy. So we did see a lot of activity there with and analysts and investors really spurring this stock along. This, of course, gives the company a jump start ahead of its competitor, Eli Lilly, especially since Eli Lilly also has a similar drug, but they don't expect approval for that oral drug until March of next year, Joe.
Nora, thank you so much. Bloomberg's Nora Melinda with us from New York. Investors also responding to new data out today showing the U.S. economy expanding at the fastest rate in 2 years. Third quarter GDP increasing by 4.3%, more than most forecasts, thanks to higher consumer and business spending, calmer trade policies. The president responded to today's data, saying that tariffs, quote, are responsible for the great USA economic numbers just announced, and they will only get better, exclamation point. Joining us now with his analysis, Alex Hawkes, Chief of Policy and Advocacy at the Groundwork Collaborative. Alex, it's great to have you as part of our conversation today on Bloomberg TV and radio. The president, when asked recently, rated his economy A+++++. There were a lot of snickers about that and questions about the health of the job market. What did today's GDP numbers tell you? It's stronger than expected.
Well, if you take voters' word for it, that grade that he's getting right now is a failing one. He's more than 30 points underwater on the economy for the year. Consumer sentiment, consumer confidence is really in the toilet right now. If there is a surging economy, people really just aren't feeling it. And I think that's only reinforced by today's GDP numbers. You look at the front line, the top line numbers there, 4.3%. We're growing at 2.4 through the first 3 quarters, about the same as last year. But you peek under the hood there, and a lot of that growth is being driven by consumer spending, and a lot of that consumer spending has been driven by healthcare spending. You add to it, and Trump, you said, was taking credit for the tariffs. Well, in some way, he's correct. If you look at net exports, which was another big driver of the strong top line number, we saw a drop in imports. We've had wonky numbers like this throughout the first 3 quarters, where companies have no idea what trade policy is going to be today, tomorrow, or next week. So they're constantly stockpiling, selling down their inventories, stockpiling again, and waiting for some clarity. So overall, strong number on the top line, cannot deny that. But I think underneath the hood, we're seeing some of those concerns, and we're seeing that K-shaped economy that people keep talking about. The wealthy, those with higher incomes are doing well. Those in the middle class and lower class are struggling.
I don't know if you saw the president on Truth Social earlier today, Alex. He writes, this is a long missive here. The financial news today was great. But in the modern market, he says, when you have good news, the market stays even or it even goes down because Wall Street's heads are wired differently than they used to be. He says in the old days when there was good news, market went up. Nowadays, when it's good news, market goes down because everybody thinks interest rates will immediately be lifted to take care of potential inflation. Now, you know I'm working on a question here about the Federal Reserve. He says later in the post, Alex, a nation can never be economically great if eggheads are allowed to do everything within their own power to destroy the upward slope. I don't know if he's talking about you, if you're an egghead here, Alex, but the fact of the matter is, good news on Main Street has frequently been bad news on Wall Street when the Fed is looking, because it means potentially higher or at least stubborn interest rates. Does this keep the Fed from cutting in the new year?
You know, I don't think this report on its own is going to keep the Fed from cutting. You got to remember, this is third quarter numbers right here. It was September. I saw one analyst saying we were putting on our suntan lotion on the median day that this data was collected. Now some of us are shoveling snow. We've had a long way to go, and I think if you look at some of the more recent data, including that jobs market data, and then some alternate consumer spending data, credit card numbers. I've been watching Christmas tree sales. It seems like they're coming in sluggish this holiday season. I think the challenge for the Fed here, beyond this GDP report, is that we have so much data that just wasn't collected or is going to be delayed into mid-January, and they might take a look at this report and say, look, you know, the jobs market is slowed, but still seems to be adding jobs, and we are growing at a decent clip. We might take this next meeting in January, hold the beat, wait to get some more data in before making a decision.
We saw some tough numbers from Gallup today. 36% of Americans approve of Donald Trump's job performance. Gallup's economic confidence index is down 10 points from October, down 19 points from June. The president talking about eggheads trying to destroy the upward slope. There are a lot of questions about what state this economy is going to be in the new year. Is the Supreme Court the best hope that economists like you have of ending the president's tariff regime? Could the Supreme Court, in another way of asking it, save the president from these tariffs?
Look, I am skeptical, and here's why. The Supreme Court, it does seem very likely that they are going to strike down the legal basis for the International Emergency Economic Powers Act tariffs that Trump has put on. That's somewhere in the realm of $200 billion worth of tariffs. I think the number is 35 million entries over the last 10 months or so. It seems likely they're going to strike those down, and it then seems likely that those tariffs are going to have to be refunded. But I am positive that Peter Navarro and Jameson Greer and the rest of the trade team there already has a number of 3-letter statutes ready to go to 301s, 330s. I mean, they are going to recreate these tariffs in the aggregate, and that is not just going to put the same kind of barriers that are up at the moment, it's going to be a tremendous amount of compliance costs for importers who are trying to, one, get their tariff refund from the tariffs they've paid, and two, try to figure out this new system too. So I'm skeptical, although it does seem like the Supreme Court is going to overturn them.
We'll see if it leads to the Great American Refund. Alex, it's great to have you. He's Chief of Policy Advocacy at the Groundwork Collaborative. Alex, we thank you for the time on Balance of Power. Much more straight ahead on Balance of Power. I'm Joe Matthew in Washington. This is Bloomberg.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew. Thanks for joining us. The Justice Department dropped another big batch of files related to Jeffrey Epstein today, including some that raise new questions about President Trump's relationship with Epstein, along with the files which show Donald Trump flew on Epstein's private jet at least 8 times. The DOJ also released a statement saying, quote, some of these documents contain untrue and sensationalist claims made against President Trump that were submitted to the FBI right before the 2020 election. Joining us now with the latest details surrounding this fresh batch of documents and what we should be looking for with the rest here, Bloomberg's Ben Bain. It's great to have you. Ben, do we have a sense of how much of the complete collection of files this represents? The administration was supposed to have it all out last week.
Yeah, so it's thousands today, thousands on Friday. There were also several other batches that have been released over the weekend. So right now we have 8 data sets. There's more coming. The department was quite clear, even leading up to the initial release on Friday, that they were not going to hit that December 19th deadline. So we're just waiting for more to come. Today was very interesting, the documents that were released, and people are still combing through them. There's a lot in there. Email communications, information about flights, as you mentioned. It's really a trove, and it includes new details in terms of everything from some of the financial relationships that Jeff Epstein had, to really how this investigation was going on, in the Southern District, before Jeff Epstein died in a prison cell in 2019.
Ben, what system or format or process, if there is one, is being used to delineate what is released and when? We're not getting these chronologically. Is there a chance DOJ front-loaded all the Bill Clinton stuff and the Donald Trump pages come at the end?
I mean, part of this is we really don't know about the order with which things are being released. What the Department of Justice has said is that, they've tasked, I believe it was 200 people to be going through filings. One of the things in the law that was passed last month and signed by President Trump was that there are accommodations allowed for protections for survivors, and also some other accommodations, that for ongoing investigations or things like that, if there are any. So we are seeing really heavy redactions here. There are some very interesting nuggets. We're certainly learning a lot about this, and there's a lot of new information there, but there's also a lot of questions about, well, what is actually being redacted? No doubt some of that, is related directly to survivors. But there's also, a question about what's going to come next. What are we going to see in the next tranche of documents that's coming? And also, when is that going to come? There's not like a schedule or anything like that the Justice Department has laid out. We do have a sense that within the next few weeks, we're going to basically have all of these documents. But, it seems to be just coming and coming and coming, and we're waiting to see what's going to come next.
Yep. We're showing some of those fully redacted pages on Bloomberg TV and on YouTube. Ben, thank you so much. Bloomberg's Ben Bain helping to steer our coverage here in Washington with some long days when these files come out. And indeed, there could be more to emerge from this dump. Joining us now with more, constitutional lawyer Robert McWhirter, who's a practicing criminal defense and civil rights lawyer in Maricopa County, Arizona. Robert, it's great to have you back on Bloomberg TV and radio. I'd like to ask you about these redactions, because everything we've heard is that each will need to be challenged in court individually. And we heard from some of the victims today, when you consider the process or lack thereof that DOJ is following to get all these files out. One victim's name was left unredacted in Friday's file release, saying her name appeared several times inappropriately in the documents. And now a statement signed by 19 victims points the files did not include financial disclosures and that grand jury minutes previously approved for release were fully blacked out. Will the DOJ need to justify each of these redactions?
Oh, yes. I mean, they've done two things wrong. They have over-redacted and they actually under-redacted. The statute is very clear, which I've reviewed this afternoon. You're supposed to redact the names of victims, the names of children, and a few other specific categories. Well, it looks like the Department of Justice blew it and actually released them. On the other hand, those are the only areas where you're supposed to redact. All this broad blacking out of things seems to be totally contrary to the statute. Plus, I think they did the wrong type of redaction. They've done an electronic redaction, and I guess in some I'm given to understand they can actually unredact it. It's not like they took the document and blacked it out and scanned it. It looks like you can get behind the code and actually get that. So they didn't do a very good job redacting what they weren't supposed to redact.
My God. Okay. Well, you know, there could be a lot more where these came from, Robert. And if all of these are challenged, this, I'm assuming, will be in court for years. You've got a series of lawmakers right now, including the two gentlemen who signed the discharge petition to begin with, Ro Khanna and Thomas Massie, talking about holding the Attorney General in inherent contempt. Does that have any teeth?
Well, it certainly does. I mean, I think Pam Bondi's law degree is going to be at risk someday anyway. And this just is another thing. She could be held in contempt of Congress and failure to violate the statute. The trouble is, the contempt statute, to hold somebody in contempt, they have to refer it to the Department of Justice. And this Department of Justice probably won't go after its own boss. However, Pam Bondi is not always going to be the Attorney General of the United States. That's the nature of that office. So I would be worried if I was her. And if I was advising her, I would advise her to follow the law and her ethics and not the whims of Donald Trump on this issue, as among many others. And by the way, in terms of the quantity, it looks like we're only getting a fraction. I have heard that there's still 90% of the actual Epstein files that have not been disclosed. And the disclosure date was Friday of last week. So, you know, they're just not following the law.
Yeah, it puts the administration in violation of the law in terms of totality being released and also being searchable, which I don't think is the case yet. You know, the president was asked about his relationship with Jeffrey Epstein just as recently as this time yesterday. He was at Mar-a-Lago, Robert, talking about his new Golden Fleet for the U.S. Navy. Remembering that in the files today, we learned that the president, before he was president, flew on Jeffrey Epstein's private jet at least 8 times. He had said never before. And here's how he framed his relationship just last night. Listen.
Everybody was friendly with this guy, either friendly or not friendly, but he was around. He was all over Palm Beach and other places. The head of Harvard was his best friend, Larry Summers. And Bill Clinton was a friend of his, but everybody was.
Everybody was friendly with this guy, either friendly or not friendly. I'm not sure exactly what that means, Robert, but the president has repeatedly said there was nothing to see here. Epstein was a creep. He had a lot of friends. Is that right?
It may be right. I mean, Epstein sounds to me, he's kind of like a pimp. And so what the president is saying is he was friends with a pimp. By the way, this catches Donald Trump in a huge lie. He is on the record numerous times saying he was never on the airplane, and it's showing that he's on the airplane. Now, nothing's coming up yet that showed that Donald Trump was involved in any crime, but it's showing that he's lying and has lied in public about his relationship with Epstein and flying on Epstein's airplane. So, I mean, it looks like he's basically friends with a pimp.
Wow. The statement from the DOJ is really something. I've never seen anything like this, saying that they released nearly 30,000 more pages. Some of these documents, this is a direct quote, contain untrue and sensationalist claims made against President Trump that were submitted to the FBI right before the 2020 election. What claims are they talking about?
Well, that's really hard to know. What this is, it's not a comment on the substance. This is the Department of Justice doing something that is not required to by the statute, nor is its law. This is the Department of Justice trying to put spin on the disclosure that they're required to disclose. So this is just totally what the statute doesn't allow. And really, that should go to the PR department or the political people if Donald Trump wants to do that, not the Department of Justice, which has a duty to turn over what are potential evidence of crime. You don't disclose evidence of a crime of, let's say, a drug dealer and then put some kind of spin on it to make sure that, you know, your boss looks good because maybe he had been friends with that drug dealer. It's really, I think, actually inappropriate not following Department of Justice guidelines on this in the least.
Well, they go on to write, the claims are unfounded and false. If they had any shred of credibility, they certainly would have been weaponized against President Trump already. This is an example of the DOJ, according to critics, working outside the lines here. As I mentioned, there are going to be more where these came from. Robert, do we have any reason to believe that Donald Trump will not appear in them?
No, none whatsoever. In fact, the indications are that he will probably appear more. They seem very intent on really just trying to control the flow of information when the statute said they're supposed to give it. Now, they've claimed they have some 200 lawyers on this. I think this underscores not only kind of the bad ethics of what's going on in the Department of Justice, but the Department of Justice, and they have been my opponents for 35 years in court, are among the finest lawyers in the country. But Pam Bondi has gotten rid of those lawyers in favor of Trump loyalists, and I'm sure she's put the Trump loyalists on this. The others are in Department of Justice Siberia someplace, or they left the job. So she has people that looks to me not particularly competent on the very issue of disclosure. So not only are they trying to spin this, which is clearly indicated by the statement that you had just read, but they're not doing a particularly competent job at disclosure, indicated by the fact that they seem to have released the name of a victim, which they're specifically by the statute told not to do. This is just bad lawyering.
It's going to be in court. It's going to be in court for years. Robert McWhorter, the Supreme Court issued an important ruling today, 6-3, finding that the president's use of National Guard troops in Chicago is illegal. What will this mean for other cities?
Well, they can certainly point to that. I mean, you've got the Posse Comitatus Act. You've got a whole number of things. You know, it's very interesting. A good part of Donald Trump baits are these people who believe in states' rights. And they like to assert the rights of states and all this kind of thing. Well, they're not very states' rightsy on this thing when it comes to sending federal troops in to affect the citizens of individual democratic states, democratically controlled cities with democratic mayors, when crime rates in Republican-controlled cities are as high or higher. This is a violation. If you want to play the states' rights game, this is a violation of states' rights. And I think the Supreme Court, even though this Supreme Court tends to be very indulgent of Donald Trump's whims of executive power, yet has decided to put a check on this because it violates federalism. You know, we divide power not only between our three branches of government, but between federal and state government. And the president just can't assert power and start sending National Guards all over the place. Look, I have to make one other point. You know, the last time that a president had to send the National Guard from another state without that state's request or permission, like when a governor asks for help after a hurricane or something, was in 1861, and it was called the Civil War. That's really what we're dealing with here.
Wow. We always learn something when we talk to constitutional lawyer Robert McWhorter. Robert, thank you, as always, for being with us. Coming up, President Trump in legal hot water for adding his name to the Kennedy Center. There's that, too. We'll bring you the details. And we'll get reaction to the Justice Department's latest batch of Epstein files when our political panel joins us. Straight ahead on Balance of Power on Bloomberg TV and radio.
AI is impacting every industry. Macau is providing this center point for this industry transformation. By hosting a conference like AIE, what they're doing is providing this foundation for everyone to align and get behind. If you've spent some time here, you'll suddenly realize how much energy is here, how much transformation, how much change. And being in a location that has those kind of dynamics is really powerful for any business.
It's Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington. We'll assemble our political panel in just a moment. First, the stories we're watching in today's Power Brief. The Trump administration is changing the process for awarding H-1B visas, replacing the existing random lottery system with a new rule that favors higher paid workers by giving more weight to their applications based on 4 wage levels. A spokesperson for the administration claims the current lottery system was being, quote, exploited by American companies to hire foreign workers and pay them less than their American counterparts. 85,000 H-1B visas are issued annually, and the new framework will take effect before the annual spring registration season in 2026. The U.S. says it's holding off on issuing new tariffs on China-made semiconductors until at least mid-2027. The latest signal, the administration is looking to stabilize ties with Beijing. The decision comes after a probe into China's chip-making sector launched during the final weeks of the Biden administration and found the country engaged in unfair trade practices that harmed U.S. businesses. In October, Presidents Trump and Xi struck a 1-year trade truce, agreeing to stave off high tariff rates and export restrictions on key minerals for chip production. Former Nebraska Senator Ben Sasse shared earlier today that he has been diagnosed with terminal pancreatic cancer. In a post on social media, he reflected on his faith and family while vowing to fight until the end. Sasse represented Nebraska in the U.S. Senate from 2015 to 2023 when he left Washington to become president of the University of Florida. Democratic Congresswoman Joyce Beatty of Ohio is suing to remove President Trump's name from the Kennedy Center, arguing only Congress is authorized to rename the institution. Beatty, a congressional member of the Kennedy Center's board, alleges she called into the board's vote meeting, couldn't object to the name change because she had been muted. Her lawsuit names President Trump and his loyalists on the board as defendants, contending the vote violates rule of law and that the original name must be restored. Joining us now with their reaction to these stories and more, this evening's political panel, Democratic strategist Caitlin Legacki, former senior advisor to Commerce Secretary Gina Raimondo, alongside Republican strategist Brittany Martinez, executive director at Principles First. It's great to have you both with us. Caitlin, what's your take on this name change? A lot of folks seem to think this is very symbolic of everything that the president has been up to, whether he's putting his name on gold cards or on a building that's a living memorial to an assassinated president. Do those letters need to come down?
In due time. I think that, the reality is that a lot of Americans are really struggling with, paying their bills right now, paying for energy costs. And while Democrats do need to push back because every single encroachment on the separation of powers is a problem, there's just as much value here in letting voters see how much Donald Trump is focused on anything but solving their problems. And so the more he's talking about the Kennedy Center, the more he's talking about his ballroom, the more Americans are going to realize that he's prioritizing the very wrong things. And that contrast is good for Democrats.
Brittany, you worked for a former Speaker of the House in Kevin McCarthy. Is this a separation of powers argument? It does require an act of Congress to change the name on the Kennedy Center, right?
Yeah, I do think this is really weird. And to Caitlin's point, can you please go fix the economy and go do the things that the American people have voted you in to do? Why are you putting your name on the Kennedy Center? Of all the things that you could be doing, Republicans were supposed to be the party of law and order and also the party of small government. And it just seems this administration wants to go after graduate schools and colleges, the Kennedy Center now. Let's get back on track and get the economy roaring for the American people.
Well, with regard to the economy, there are some pretty tough numbers out in a new Gallup poll today. Caitlin, you probably saw this. Approval of Congress is going to be extremely low and that the president's having a difficult time. But specifically when it comes to the economy, Gallup's Economic Confidence Index currently sits at a minus 33, down 10 points from October, down 19 points from June, and the lowest since it's been registering making a lot of folks wonder about the direction that we're going here economically after we saw even a stronger than expected GDP report today. Is this advantage Democrats in the midterms when it comes to the economy, Caitlin?
For now, it is. I think it's really important for Democrats to take note that there has been a change in which party voters trust more on the economy. Historically, it has been Republicans. And right now, the Trump administration is learning the very hard lessons that we learned in the Biden administration, which is that consumer sentiment and economic sentiment does not get better by just insisting that the economy is good. And so as long as Trump and his allies are ignoring the economic realities that voters are actually feeling, they're going to have a very tough row to hoe. But I also think that Democrats have to be willing to listen to voters about what they're concerned about, making sure that we're not offering solutions in search of problems, but actually taking steps to lower costs and make government function better.
You know, it's interesting with all of the talk about Jay Powell coming out of this White House, Brittany, whether it's Donald Trump, Peter Navarro, or on down the line, they've called him everything from a sicko to probably worse. In this poll, just 2 members of the administration and the federal government, for that matter, that includes Congress, the Supreme Court on down, only 2 registered above 40%. The man who got the highest rating, the most popular senior official in federal government, is Jay Powell. What is the lesson here for Donald Trump, if nothing more than consistency and self-discipline?
You know, I saw that, and I do think that it's going to drive the president crazy. We do know that he does pay attention to the polls. He does care what the people think of him. And, you know, he's gone after him. Other people in the administration have gone after him. And just surprisingly, he has gone on top in favor for the American people favoring him, I'd say. And so I hope that this is a lesson, you're right, in the discipline, and maybe be monitoring better what he does and what he says. And that is something that attracts the American people to the president, is that he is so colorful, I guess, with your language, with his language, you can say. But I think there is a point where people do want the adult in the room who's going to find the solutions and not just be out on the campaign stump and criticizing everyone and name calling everyone all the time. We want solutions.
Well, you know, Caitlin, what's going to happen a couple hours from now is the president's going to be in a lot of people's living rooms on CBS. This is the night they play back the Kennedy Center Honors, which is now, I guess, the Trump Kennedy Center Honors. I don't know if the name of the show changed. But this is a good opportunity for him, right, to maybe cut down on some of the harder edges here when it comes to his approval rating. Is this advantage Trump tonight?
I think that the people that are influenced by these kinds of broadcasts are following what's happening with the Kennedy Center, and they're probably already annoyed by it. If anything, I think the optics are challenging for Trump. He's hanging out with a bunch of 80s rock stars and wearing a black tie instead of dealing with costs and addressing the economic challenges that families have. So once again, it's just the optics of this are not in his favor. And I think the Kennedy Center Honors is a wonderful tradition, and I don't begrudge him from going. But because he's so focused on other things instead of the economy, it just feeds into this narrative that he's not paying attention to voters and their concerns.
Well, I'm just glad Gene Simmons didn't hear that last answer, Caitlin Legacki. I don't know if you guys saw the Christmas photo. You've probably been to a White House Christmas party. A lot of people pose right in front of that door, the entrance in the Cross Hall. We saw the photo today of the president and the First Lady. They put it out on social media on the White House account. Merry Christmas. Here it is, if you're watching us on Bloomberg TV. Merry Christmas from President Donald J. Trump and First Lady Melania Trump. Brittany, neither of them are smiling. What's going on here?
You know, I think that they like to come off tough sometimes. You know, even it's funny. I'm smiling at the fact that they're not smiling. But I will say that I think that maybe it's like part of their personality. Yes, they probably should have been smiling. They should be happy to be in the White House delivering results for the American people. Hopefully that's what we start to see more of. But, you know, optically, probably should have posted a different photo, but you know, that's the Trumps for you, I guess, is what it comes down to.
What is this, blue steel, Caitlin? Is this the Zoolander Christmas at the White House?
I mean, Melania was a model, and so it does not
Well,
shock
that's
me
right.
that she's not smiling in photos. But, you know, like Brittany said, this is kind of classic Trump styling of their photos. They always opt for formal and scowls, and I think it's just who they are and what they like.
Yeah. Christmas card, mugshot, all the same. Caitlin, thank you. Caitlin Legacki and Brittany Martinez, great panel. And thank you both for the insights. Check out the Washington Edition newsletter to follow up on all the stories we've been talking about on the terminal and online. And thanks for joining us. We'll see you back here tomorrow on Balance of Power on Bloomberg TV and radio.
money on towards this shortened trading week. We delve into the individual movers. One is being driven by breaking news right now. Alphabet, we check in on their particular shares in a moment for you. But now I'm looking at the media landscape. Let's go to Alphabet because we're trading flat. But this is news breaks that it's actually making a big acquisition in the world of energy. Intersect Energy, helping them develop their overall data centers that are becoming sprawling and ever more necessary here in the United States, but they need the energy infrastructure with which to do that. $4.75 billion, including debt, for this particular private equity-backed company, which is still building out in Texas for other clients than Alphabet. So keep an eye on what's happening in the world of energy and Alphabet. Move on from Alphabet and look at what's happening in the media industry, because that's what drives the trade and all the talk on the day. Paramount, Skydance. Basically, the Ellisons back with an amended deal. They will pay more if indeed they were able to clinch Warner Brothers Discovery, but it failed to go through. So $5.8 billion if the deal didn't happen. But more broadly, they're saying, by the way, we're good for the money. We're going to give a personal guarantee from Larry Ellison, David Ellison's father, to ensure that the money, the $40 billion of equity there that they'll be doing to help purchase Warner Brothers Discovery, is intact. Netflix on the downside, as perhaps there's more tussle at the top for this particular asset. Let's get Chris Palmieri's take on all of this. You're out covering the world of media. Boy, is entertainment and media on tenterhooks at the moment, Chris. What do you make of this amended deal? Because the price doesn't change. It's just the guarantee on the money.
So an extraordinary amount of steps on Paramount's part to address the concerns that Warner Brothers had identified last week and why they didn't pick them to begin with. So quite a lot there. The personal guarantee from Larry Ellison, one of the issues was this was being backed by a revocable trust. What if he revoked it? A lot of other changes to terms in terms of their ability, Warner Brothers' ability to operate in the interim period before something's approved. They extended the tender date. A lot of changes. Everything but raising the price. And that's a big issue, because if Warner Brothers did decide to not go with Netflix and go with another suitor, they would have to pay Netflix $2.8 billion, and somebody's going to have to pay that. So, so everything but a change in price.
And then, does it all come down to what you think the cable networks are actually worth, Chris? If they indeed manage to convince David Zaslav that they're good for the money, is this more personal for David, or is this more about the price of the networks?
You know, it does go beyond all of that, for sure. Right now, there is this difference in how because, you know, Netflix is not buying the cable networks, and they're worth, Paramount says, only $1 a share. Other people say $3 or $4 a share. That's a big part of it. But really, when you also saw that letter and filing last week from Warner Brothers, they talked about having a stronger balance sheet long-term, which Netflix indisputably has, about fewer cuts of jobs, because Netflix really doesn't have a studio and lot like Warner Brothers does. So they aren't promising as many cuts as Paramount would. So sort of better for Hollywood is one of the things Warner Brothers said. So those sort of intangible things are also part of the mix.
Chris Palmieri running us through what is a very complex Hollywood shakeup. Look, in fact, we talked about this last week. Remember, Kevin Mayer joined the show. He's Candle Media co-CEO, former TikTok CEO, but also a Disney executive. Here's what he had to say about a potential Paramount comeback.
Even though Netflix won the first round, don't count out the Ellisons. They're incredibly smart and aggressive. Don't count out Jerry Cardinale at Redbird. These guys are very serious. I think they're going to come back with a higher bid. And when they approach, and remember, shareholders still haven't spoken yet, I think the likelihood here is that Warner Brothers ends up with Paramount. And I think it's ultimately, it's going to cost some jobs, obviously, in Hollywood. There's no getting around that, but ultimately good for creators.
I mean, he helped found Disney Plus. What, therefore, for Warner Brothers Discovery saga? John Klein's with us, co-founder of Hang Media. You're, of course, the former president of CNN. You know the inner workings of media right now, John. Do you think that the deal has to be sweetened? It can't just be about more for a breakup fee or good for the money in terms of Larry Ellison.
Yeah, you know, it's a very clear picture of who's got the leverage here. Clearly, WBD has suitors. David Zaslav can just sit and fold his arms and say, look, you're not talking in my good ear yet, Paramount. And it's not a dumb way to try to drive their offer up even higher. And that wouldn't surprise me.
What do you think could be the quibbling around the cable networks? That's the area that you knew, you loved, you performed in. And there has been, of course, the regulatory concern about who ends up owning CNN, but more broadly about what they really are basically priced at, John.
Yeah, and value really depends on the acquirer. And there could very well be acquirers out there in the universe of media who value those cable networks much more highly than a Netflix would or even Paramount would. And you could see where Versant, for example, which is being spun off from Comcast, which is identical to the cable spinoff that WBD is doing. You could see them valuing TNT, TBS, True TV, CNN much more highly than these current players are. So value is in the eye of the beholder. I could see the local station giants like Nexstar and Sinclair also loving the idea of having both a national footprint as well as their ever-growing roster of local stations. So, there could be even more money available to WBD if they go ahead and sell those two components separately.
I see. What would you think would happen if, and it's a big if, Paramount Skydance got hold of all the assets? Because Netflix, we know if that deal gets done, the cable networks would be spun off. But if Paramount Skydance took hold, what do you think then would be the evolution here?
Well, they could still do a spin-off of their own cable properties and broadcast properties. There's all kinds of financial engineering that could then take place. I don't know that it would happen overnight, although this new Paramount management team has moved extremely quickly. David Ellison gets a lot of attention, but Jeff Shell, who was the chairman of NBC Universal, it is a fantastic operator, and I could see them moving quickly. However, it sort of reminds one of the snake that eats the deer. It unhinges its jaw and it spends the next 3 months just trying to move that thing down the tunnel. And it could take a while for all of these synergies to be realized.
How important is the Ellison relationship with the administration at this point, John? Because that's in many ways what they thought would clinch the deal, it's been reported.
Well, much as David Zaslav is able to sit there and play one side off the other, so is Donald Trump in a similar position where has not put his finger on the scale yet in favor of Paramount's offer, despite his relationship with Larry Ellison. And he has said very nice things about Ted Sarandos, the co-CEO of Netflix. And I think that Donald Trump is enjoying being in a position to see who can curry more favor with him. So there's no reason for either President Trump or David Zaslav to pull the trigger on anything just yet. They want to see how these deals all get sweetened.
I suppose the other contingent of stakeholder who is sat there with their arms folded is the investor base right now. They've got, until January the 21st to digest whether this go direct in the way the Ellisons have approached them, Warner Brothers Discovery shareholders, to be clinched versus going with Netflix. What would you say to an investor who's holding Warner Brothers Discovery shares right now?
That there's plenty of time for this deal from Paramount to go even higher. So one way or another, WBD is going to be making out very nicely. History has shown us that the sellers in these media deals tend to make out better than the buyers. So they're in a pretty good position in that respect as well. You look at Disney's acquisition of the Fox assets a few years ago, and Disney's valuation has dropped significantly since then. And Rupert Murdoch is counting his money. So they're in a decent position, and there's no need to get too worked up just yet. Plenty of time for the dollars to increase.
What's so interesting about your trajectory in media is you've sort of been able to see around the corners. You were in the heart of news, in the heart of production, then you went into the world of AI selling, helping manage a business that eventually went to Apple. You're with Hang Media at the moment. What does all of this mean for Hollywood and for content creation right now?
Well, we're on at the very beginning of a content creation explosion. And this deal, however it turns out, is taking place within a much larger environment in which creators who are being distributed by YouTube and TikTok are commanding much more viewing time than the traditional producers, writers, directors, and most of all, studios. And so in a lot of ways, this battle for the assets of WBD is really all about the way media used to be. But the big winner here is YouTube, because nobody's keeping their eye on that. I mean, YouTube made headlines last week. They just stole the Oscars from ABC. Beginning in 2029, YouTube is going to be where you go to watch the Oscars. And listen, in the 2030s, I think all those tech giants are going to be running media, and all of these other companies will be significantly smaller. And we're just seeing the beginning of this. So in a lot of ways, this matters a lot to the shareholders for WBD, Netflix, Paramount, et cetera. But in terms of the long-term trajectory of the media industry, that's all happening somewhere else.
And certainly that's one the regulators had to digest. What really is the market that a Netflix plus Warner Brothers Discovery would be competing in? John Klein of Hang Media, it's always great to catch up with you. Happy holidays. Thank you. Coming up, Google is buying Intersect Power to help build out its energy infrastructure for AI products. We delve into that next. This is Bloomberg Tech. Google has agreed to buy power provider Intersect Power for $4.75 billion in cash plus existing debt. That's as the tech giant makes a push to grow its data center presence. Bloomberg's Josh Schul joins us now to discuss. Look, shares are moving higher, up about 0.5%, Josh. Why is Alphabet getting ever more into the world of clean energy?
Ever since we saw tech companies needing a lot of electricity for their data centers, there's been a conflict between utilities, traditional power providers, which move slow, make sure that nothing ever breaks. Grid reliability is paramount for them. Tech companies want to move really fast. They want to get a ton of power. They're not against breaking things. This is an example of a big tech company saying, we're just going to bring a whole power generation company. We're going to bring that in-house so that we can really quickly develop a lot of clean energy to power a lot of our data centers and our AI dreams.
Intersect Power is an interesting company. It's been backed by private equity players such as TPG, but they actually build out, particularly in Texas, not just for Alphabet. So they've got other clients on their books. How is this actually going to work from an M&A perspective?
That's interesting. I'm not sure how that's going to get worked out, but I think what it means for Google is that they'll be obviously front of line and able to build a lot of clean energy on site with its data centers. Something that allows Google to go even faster with is it won't have to build big transmission lines if you have, power plants or solar and wind farms somewhere, and then you have to permit transmission lines to move that electricity long distances to get to the data centers. What Intersect is good at, and what Google has expressed interest about in the past, is building those big solar and wind farms on the exact same site, basically ringing or adjacent to the huge AI data centers. So that means that the electricity can just flow directly into those facilities.
Sundar Pichai, Chief Executive Officer of Google and parent company Alphabet, talking about how it's going to expand capacity, going to operate nimbly and building new power generation in lockstep with the data center need. They are not the only player needing to expand in data centers. Is this kind of going to become thick and fast? These sorts of energy assets are going to be really interesting to some of these big hyperscalers.
Yes, for sure. We've seen all the big hyperscalers making different moves in the energy space in a way that they wouldn't have in past years. I've reported this year on Meta getting into power trading. That's so that they're able to help energy generation get brought online faster, more at the cadence that they want, as opposed to the frequency and speed with which power generation has been provided in the past. So yeah, basically to a company, you can expect all of the big hyperscalers to be making different moves in the energy space to try to make sure that they're getting as many electrons as they need for their big AI goals.
Josh, it's going to be a busy one for you in 2026. Thanks so much for talking us through this particular deal. We appreciate it. Josh Saul there. Coming up, China's chip makers, they're racing to IPO amid the country's push for technological self-reliance. But domestic firms may be facing longer-term challenges in AI development. More on that next. This is Bloomberg Tech. Chinese chip makers, they are rushing to IPO. Following some blockbuster debuts that we've just had as recently as last week, there seems to be huge demand for future national champions that analysts say could one day rival even the likes of Nvidia. But does that enthusiasm mask technological challenges facing these firms? Bloomberg's Maggie Eastland, who covers chips, joins us now. The context of this is almost a 700% pop in Meta X that debuted last week. We've got other of the so-called four little dragons looking to IPO. It's all about domestic national champions.
Exactly, Caroline. So China is certainly putting a lot of support behind these chip champions, and there's no shortage of capital. Bloomberg has reported on an incentives package for semiconductors of up to $70 billion. So the push for domestic chip companies is alive, it's strong and well. The questions come in when you look at the technological challenges. So Chinese chip makers, you could look at Huawei as one of the top champions. This year, we're still relying on foundry services from TSMC, as well as memory from Korean providers. So, it's a key question. What is going to happen once China actually makes that shift to relying on SMIC and relying on their own manufacturing, where the yields are kind of questionable?
Okay, so they've got to get the foundries in place. They've got to, of course, many are wondering what the ASML competitor is over there as well, Maggie. But take us back to some of the other reporting that's in the market today, that H200s from NVIDIA will start being produced and being able to be issued into China. I mean, we haven't heard from the government, but what do you think about the use case of H200s?
Of course, when you look at H200s, I think one of the key questions going forward is how is this going to affect the ecosystem of Chinese model companies? Last year we had this DeepSeek moment, and that is very intertwined with access to chips. Of course, now it's widely known that, DeepSeek accessed A100s. Those are NVIDIA chips that are less powerful than the H200s. So, what is going to happen once China is able to access, if they accept the H200s, what does that mean for the Chinese model companies? Will they grow more competitive? There was a story today on Bloomberg about Zippo and Minimax and their revenue. We're just seeing some numbers. They're not quite as high as OpenAI and Anthropic, but this is a key area of interest going forward, right? Given that they're no longer going to be as hindered by their lack of access to advanced NVIDIA chips.
Maggie Eastland, it's going to be a fascinating trend you're continuing to watch for us. Thank you. Now, let's talk more about the geopolitical issues at play here between the US, between China. Liza Tobin's with us, Managing Director at Garnock Global. All of this is so interesting as to whether or not, indeed, NVIDIA gets access to China, whether we see a TikTok deal, whether we see continuing trade issues between US and China iron out. If we talk about chips in particular, what have you made of the ferocious focus on domestic supply chain resiliency coming from China?
Yeah, it's a great question, Caroline. And I agree with Maggie just now that the H200 is really going to be a boon for some of these Chinese AI companies. As we've seen over and over again, compute is really the bottleneck. But I want to go back to what you said about the TikTok deal. We heard the news a few days ago. It hasn't yet been finalized. And I think a lot of investors are going to be analyzing what is the structure of this deal. But what I think is more interesting is what appears to be the case is that ByteDance, the parent company that owns TikTok, is going to maintain control over TikTok's algorithm. This, of course, is the special sauce that makes TikTok what it is, that makes it so addictive and so special in the first place. And I just want to remind your audience that Beijing has never agreed to turn over control of this algorithm over to these U.S. investors. And that's really at the heart of the deal. So what you see is, as the Trump administration keeps trying to come up with some kind of a deal to end this TikTok saga and keep it in the United States, it keeps kind of lowering the bar on this deal with Beijing over TikTok to the point where now we're probably going to be settling on a deal where Beijing, through ByteDance, maintains control over this algorithm and this vector of influence over American discourse and what hundreds of millions of people are seeing on this app every day.
So, Liza, are you saying when the talk is, the reporting is that they will be able to license the algorithm and then rebuild it, you don't think that they will be rebuilding? You don't think there will be some sort of retraining? We'll still be dependent on ByteDance's underlying algorithm?
Yeah, I mean, color me skeptical. They've been working on this, so-called security deal for quite some time. But the reason that the Congress, on a bipartisan basis, passed the law in the first place, and then the Supreme Court upheld it, was because they did not see it as viable for U.S. national security for a adversary-controlled company, ByteDance and TikTok, to be maintaining control of this algorithm. So I think they're going to be putting some kind of lipstick on the pig and some kind of security arrangement in place. But remember, going all the way back to 2020, Beijing put export controls on this algorithm. Those haven't gone away. Beijing has never budged in its stance. It's the U.S. side that has kind of lowered expectations over and over again. And the deal still isn't done yet.
Liza, very briefly, is national security at risk if that stands?
Yeah, we can make an analogy perhaps to the Cold War. It's almost as if, during the Cold War, we let the Soviets take control over some of our major newspapers. Or imagine today if Bloomberg TV were up for sale to the Russians or the Iranians. What's somewhat ironic is that last month, the Trump administration put out its national security strategy. Right. You can see it on the White House website. And it makes the point over and over again that foreign interference in U.S. media is a problem. Liza. And yet, here we are on the verge of this deal with TikTok, with Beijing maintaining control.
Liza Tobin, Managing Director at Garnett Global. It's great to catch up with you. Thank you. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Let's check in on these markets because we're on risk on mode. It is a shortened week ahead of the holidays. People selling up their books and just trading into this tech market. We're seeing Nasdaq 100 up 0.5%. In fact, it's on course to delivering more than 20% growth for the entire year. So big tech remains on top, even as we still have some AI anxieties around. We're seeing less anxieties around crypto today. We're up more than 2%, but look, it is down on the year by some 4%. We have only seen that a handful of times for the OG in the crypto space. Keep an eye at the $90,000 level. Let's move on and look at the individual players in the Nasdaq 100 you want to keep an eye on, because it's all about M&A in media and the tussle at the top for what is a prize asset of Warner Brothers Discovery. It's trading up 2.9% because we seem to have an amended offer coming from the Ellison family. This one, Paramount Skydance, saying, look, we'll pay more if there's a breakup fee, and also we guarantee the money coming from Larry Ellison, David Ellison's father. Meanwhile, Netflix off by 0.7%, as it looks as though there might have to be a bit more of a bidding war, or indeed some sort of worry that they might not clinch the deal. Let's talk about it all. We've got Bloomberg Tech editor Tom Giles with us. So it seems as though Larry Ellison to the rescue. A lot of the worry from Warner Brothers Discovery had been around how good Paramount Skydance was for the money.
That's right. When you've got the backing, the personal guarantee of one of the world's wealthiest people, that's bound to make a difference. Remember that one of the bones of contention between the two companies was the idea of where this money, how this money would be held. Previously, it was going to be held in a revocable trust. And as the name implies, there was a little bit of room there for it to be moved around, for the terms to change a little bit somehow. Now, Larry Ellison is saying that $40 billion, we're going to back it with an irrevocable trust. That's an extra element of assurance that Warner Brothers shareholders should be able to take away from this extra bit of this extra assurance from one of the world's wealthiest people.
Just remind us of the extraordinary nature that Larry Ellison has been playing in the world of tech and media, just the entirety of 2025. He's sort of at the root of nearly all stories that we're covering at the moment, Tom. Is that competitive instinct there? Do we think that they'll actually raise the bid, not just amend it?
Yeah, well, right on your show, including with Kevin Mayer, former Disney executive, you've had several people speculating that they will have to sweeten their bid. As of right now, they're amending some of the terms, but in terms of the dollar value that's going to go into the hands of shareholders, Warner Brothers shareholders, that has not changed. There's a lot of speculation that in order to get Zaslav, Warner Brothers CEO, back to the table, they're going to have to sweeten the bid. That these terms, they're going to help. They're going to address some of the concerns, but that the number has to rise. Remember that there's disagreement between Netflix and Paramount as to whose bid is superior. David Ellison, CEO of Paramount, will definitely say his is superior. It puts more money into the hands of shareholders. But it's difficult to assess on an apples-to-apples basis because one of them places a value on the cable networks, the other one doesn't. The other one presupposes that those cable networks are going to be spun off. So it's a disagreement around how do you value those networks. Also, how much stock do you put in the share price of Netflix, which is a big part of its share price.
Meanwhile, Netflix has been tidying up its own financing for the deal today as well. Tom Giles, very busy end of the year for you. Thanks so much for joining us on this deal. And look, let's talk about how the deal for Warner Brothers really is upending potentially the future of Hollywood. But there's a bigger shift at play as well, simultaneously, and it's artificial intelligence. It is rewriting how content is created, its licensed, it's monetized. Let's talk about that with Robin Feldman, professor of law at UC Law San Francisco and a leading expert on intellectual property and innovation. You're out with a new book, AI versus IP, Rewriting Creativity. You seem to have an argument that they could work in lockstep, but for now, just let's think back to how the IP relationship has been redrawn with Disney and OpenAI. Was that for positive, do you think?
Ah, yes, the Mickey Mouse deal. Well, it's hard to know whether there's much substance to that deal if you look into it. We see Disney promising to invest money into OpenAI, but it's a drop in the bucket compared to the amount of money that OpenAI says it's going to spend on infrastructure and chips. And then for OpenAI's part, OpenAI says that it is licensing the Disney characters, but it's not paying any cash in the deal, just stock warrants, which is the opportunity for Disney to invest more money in the future if it wants to. So when I look at this deal, it reminds me a little of the Sorcerer's Apprentice movie. There's a lot of mopping and water going back and forth, but it's not clear to me there's anything really going on.
We're living in fantasia or fantasy in some way. I'm interested, Robin. Yes. Professor, look, actually Warner Brothers, not only is it fending off simultaneous deals from Netflix and Paramount at the moment, but also it's busy suing other AI companies in lockstep with Disney and with Universal. They've been taking on a Chinese AI company, in particular, Minimax. How are we seeing IP being at the root of legal ramifications here? Is IP being protected?
So the Minimax case is fascinating because the lawsuits in the United States between content creators and the generative AI companies are completely different from the one that's happening with Minimax in China. In the U.S., we're talking about training the models, using the content. That's a little like traveling all over the world and looking at museums and studying the great artists to figure out how to create things. But Minimax, now that's different. When you talk about the output, when the output mirrors the creative content and potentially competes with the creative content, courts are likely to be much more critical of activity like that. With Minimax, we also have the complications of international relations. The U.S. is locked in a battle with China, a cold war of types over AI that will dominate the next generation economically and from a defense possibility. So it'll be interesting to see what moves China may make.
Well, this comes in the context of actually the United States president in one speech saying, look, you can't win all your IP battles at the moment. We are in a race with China. And in many ways, intellectual property has to take some sort of sideline for national security's sake. If you can just summarize, is IP safe at this moment, Robin? Can it work together with AI innovation?
IP has to change. Technology rarely moves backwards. So the challenge for intellectual property and content holders is to figure out how to work with it, use it, manage it, and take advantage of it.
Wow. Professor, we thank you so much. Robin Feldman of UC Law SF, out with a book as well. We appreciate you talking us through it. Now, let's talk about AI in a different way, AI infrastructure. And it's actually drive in the way that we're seeing more and more debt issuance come out. Think about Oracle. What does that mean for investors? What does it mean for AI innovation? We're going to be joined by Tomasz Tunguz of Theory Ventures. This is Bloomberg Tech. New York Governor Kathy Hochul has signed a state bill into law restricting the most advanced AI, making New York the second state to pass AI curbs opposed by the tech industry. Let's get the details with Bloomberg's Miles Miller. This took months in the making. Why did it take so long?
Yeah, the RAISE Act was passed in June, but it took so long because there was significant lobbying from tech industry, right? They really wanted to see changes to this law, number one. But number two, they were cognizant that California was coming out with its own law, and they wanted to see what was in that bill so that they could make some significant changes to New York's bill. What is at the center of all of this are these frontier AI models, what we also call foundational AI models, right? GPT-4, Gemini, Claude. The companies behind these now get a level of state oversight. The State Financial Services Department will now be able to say, we want advanced reporting on these risks that these models pose, and that is really at the forefront of all of this. California's bill passed in September. What's in California's bill now is in New York's bill, and that's exactly what they wanted. Because at the heart of all of this is, like, if there's 50 states coming up with their own bills, then how do you handle that in a regulatory space? Right? I was at Meta, and we would think about, okay, so if this state's going to do this, how do you do it in this state? And then you've got the Trump component to it as well.
Right, but I mean, banks might say, well, we're regulated in 50 different states, but there is an element that the federal level is coming in here. Kathy Hochul took hits on either side, many confronting that, feeling that she did water it down, others feeling that this is one of the most strict laws out there. So how does it come in with the executive order that was just passed last week?
Right. The executive order, which is sure to have some court challenges, will also be met with probably some significant backing or opposition in Congress, right? Congress is going to have to figure out a way to regulate all of this. But when it really comes down to it, this is about what the tech industry says is stifling innovation. But what local government says is all about trying to figure out if these models are facilitating fraud or misinformation. You've seen so many issues with some of these models where they're generating stuff that's just not true. The focus of this bill is to make sure that what is being generated is correct and is not causing undue harm on citizens. But the teeth of this bill is that the fines from the Attorney General's office will start at $1 million. And if you know anything about Tish James, she loves a lawsuit.
Well said. Miles Miller, thanks so much for running us through it today. Well, let's talk about AI regulation and more broadly about the moves in the market that have seen AI pessimism perhaps easing on the stock prices today, but longer-term anxieties that remain, particularly around the debt issuance side as well. Tomasz Tunguz is with us. He's general partner at Theory Ventures. You're here to talk about the broader AI landscape. I want to get into regulation in a minute, but let's start with what you've been writing about, the debt issuance, the worries that we have about Oracle, and the basically businesses able to afford the AI infrastructure build-out.
That's right. One of the big drivers of U.S. GDP growth in the last year has really been the data center build-outs, about 1.6% of U.S. GDP, probably 3% next year. It's funded a lot by debt, about 60 to 70% of it.
Okay, funded by debt. How does you, as a VC backer, someone who's found unicorns out there who keeps striking gold, how does that matter to you if some of the biggest companies out there are financing the AI infrastructure with debt?
It matters a lot because the startups that we back rely on these data centers in order to run AI. And if those data centers are ultimately healthy or unhealthy, it dictates whether or not there are GPUs, the processors to execute the AI. For example, we've been watching Oracle credit default swaps. You can see the spread on the CDS is growing to about 150%, trading at or near junk levels. And that's because there's broader concerns about whether Oracle can repay that debt. If you look at the cash flow from operations is negative, and they have 8 years, about an 8-year time horizon to repay that debt before they went cash flow negative. And so as a result, they're trading at junk, and that can be a concern if the ultimate demand for their data centers doesn't exist.
Well, Tomasz, What about the ultimate demand? You're the person who's helping finance the companies that want to use the data centers, or at least build upon models that are using them.
Well, right now, you see the major hyperscalers, they're sold 2 years out on their GPUs. Neoclouds, which are the smaller GPU data center companies, are also growing incredibly quickly. The vast majority of AI today is text. As we heard just a little bit before, we will see significant use of AI and the use of video. And as we've seen with Netflix and others, video takes about 100 to 1,000x the overall consumption. So right now, as of this moment, there's no real concern around overall AI demand. We see plenty of it. But what we're watching is if there's any slip, if there's a change in the dynamic between NVIDIA and Google GPUs, if there's a change in the overall consumption, if open source models, because they're so much more efficient, ultimately take GPU cycles away from some of these data centers, the massive expectations placed on these companies could be crushing.
What about the regulatory landscape? We were just talking about that with Miles Miller and AI oversight in New York, SF, well, on the West Coast in California. Does it matter to your startups?
Absolutely, it matters. One of the dynamics around regulation is the idea of regulatory capture, where the largest companies actually benefit from regulation. They have bigger balance sheets. They can sustain the regulatory costs, the lobbying costs in order to advocate for their long-term goals, whereas a smaller company, say a business that we back to the tune of 25 to 50 million, may not have those resources. So we would like to see very simple regulations at an extremely high level with a single regulatory body. And that way, startups can continue to thrive just the way they did in the early days of the internet.
Do you think the federal government will help pass that? Congress?
I hope so. David Sachs, who's the AI czar, has indicated that that is the intent, that the federal government pass a overarching regulatory regime, and ideally that simplifies and eliminates all of the state regulation, because if there's this panoply of different state regulation, just as there is with money transmitter licenses or within banking, the cost of doing business in each of these states increases, and that reduces the pace of innovation and ultimately our competitiveness, U.S. competitiveness in the world.
How is AI innovation from your viewpoint right now, Tomasz? How are we seeing some of your companies perform?
So the companies are growing at rates that we've never seen, 0 to 100 million in run rate in a year. That is now still rare, but was unthinkable maybe 5 years ago in the previous generation of software. So these companies are growing unbelievably quickly. Another data point that I'll share is that the pace of the models themselves, their sophistication, is only accelerating. So Gemini, which is the Google model, released Gemini 3, was the single largest step function in performance ever, which is wild, right? Because we think about AI innovation as on a step function of S curves, and we think at some point it will plateau. But if the recent data is any indication, the pace of innovation is only steepening.
Going to keep you busy, going to keep us busy. Come back and talk to us about it. More than $600 million in assets under management for Theory Ventures. Tomasz Tungus, thank you very much for your enterprise and your expertise today. Meanwhile, coming up, we're going to be joined by Ted Morgenstern, Managing Director over at Baird. We're thinking about how you're going to trade AI in 2026. This is Bloomberg Tech. Time now for Talking Tech. First up, Walt Disney's Avatar 3 has topped the weekend box office, taking in $88 million in US and Canada. The film also opening at #1 in China, taking $57.6 million there. Though numbers come in the low end of projections, Avatar 3 is expected to dominate the box office for weeks. Plus, JP Morgan, well, it's said to be considering offering crypto trading for its institutional clients. According to sources, the Wall Street giant is looking at potential products and services to expand the crypto footprint. Discussions are said to be in early stages. And a Bloomberg investigation, well, it's found that at least 15 deaths have occurred across a dozen incidents in the past decade, in which rescuers were unable to open the doors of a Tesla that had crashed. Now, the U.S. National Highway Traffic Safety Administration has opened a defect investigation into whether the door issues prevent access into certain Tesla vehicles, a story that Bloomberg continues to follow. Now, we want to turn our attention back from individual companies and moves, but to tech more broadly. Nasdaq 100 up nearly 21% year to date. What do we expect for 2026? Ted Mortenson's with us, Baird Managing Director. You've been writing, look for more volatility in the tech sector as expectations are high. And the reality is there's a mismatch between infrastructure data center build versus enterprise adoption of AI. Ted, what adoption do you want to see in 2026 to help bring together this mismatch?
Well, it's a great question. And thanks, Carolyn, for having me, and happy holidays. Listen, this cycle is probably the most robust I've seen in 30 plus years of doing this. So the overall one step down, most of the performance in 25 has been really focused on optical, memory, quantum, and some of the bigger semiconductor companies like Avago or Broadcom, like NVIDIA and AMD. As well as some of the big cloud titans, Alibaba being one in China, and obviously Google. With that said, going into 25, the street is really not looking around the corner of what you could see as it relates to headwinds. Okay. Right now, I would just say we're in a market of that's really almost over exuberant speculation, a lot of complacency.
So do you think some of the previous winners, the NVIDIAs, the Broadcoms, the Microns, are going to fare badly in 2026? Or is it more we're going to pivot more into a software era?
I think that's a great question, and I think the right one. When you have optical names up 300%, there is a worry about two things in kind of the semi-food chain. One is pricing. If you look at Micron's last report last week, DRAM prices were up 20% sequentially, not year over year, sequentially. We have a price issue. The other thing, if you listen to the Dell call a few weeks back, the CEO was very adamant that we're going to potentially run into some shortage issues. Now, is that in the ecostructure of Gen AI? Hard to say. But I think when I talk to portfolio managers that are managing a tremendous amount of client money, the worry is that what worked in 25 may not work in 26. And if you look at the pivot to software in kind of that late 27, 28 timeframe, it's probably worth looking at that area, specifically on the agentic names and the security AI names, which have corrected recently.
Maybe it's Salesforce's time to shine. Ted Mortenson of Baird. It's great having you. Please come back in 2026 as we push towards whether those themes start to erupt into existence. Meanwhile, that does it for this edition of Bloomberg Tech. You don't want to forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. From New York, and back again, same time, same place tomorrow. This is Bloomberg Tech.
So, what will Rachel Reeves's pivotal new budget mean for you?
Has an innovative think tank just come up with a solution for replacing stamp duty?
Hello, I'm Steph McGovern.
And I'm Robert Peston.
And we wanted to recommend we do
2026 to avoid a government shutdown. The so-called Loi Spéciale allows the state...
Brilliant and fascinating people.
Yeah, recent guests include Dan Needle, Art Laffer, JP Morgan's Karen Ward, and even the Chancellor herself.
So why not give us a try? Search for The Rest Is Money.
News when you want it with Bloomberg News Now. I'm Caroline Hepker. France has adopted a stopgap budget bill for 2026 to avoid a government shutdown. The so-called Loi Spéciale allows the state to continue collecting taxes and borrowing money despite the lack of a full budget. Effectively, it rolls over fiscal plans into the new year. Addressing the nation on French television, Prime Minister Sébastien Lecornu explained the situation.
Prendre le temps
Taking the time to discuss a budget in a democracy like France is not a weakness. In the meantime, a special law is being discussed in Parliament. It will allow us to continue to collect taxes and keep public services going from January 1st. That doesn't mean it's a budget, and there will be a number of negative consequences if the situation continues.
French Prime Minister Sébastien Lecornu speaking there via a translator ahead of the National Assembly's decision. The temporary legislation comes after the French government warned that parts of the finance bill that have been agreed so far would only bring the deficit down to 5.3% of economic output next year, down from 5.4% in 2025. The National Assembly is set to resume debate on the full French budget in early January. The Trump administration has imposed visa sanctions on former EU Commissioner Thierry Breton as a punishment for his work regulating big tech. Secretary of State Marco Rubio announced the move on social media, accusing Breton of extraterritorial censorship. The US State Department has also targeted 4 other people leading organizations focused on digital hate speech and countering extremism. The Global Disinformation Index, in a statement, called the US sanctions an authoritarian attack on free speech and an egregious act of government censorship. In a social media post, Breton, who is also the former CEO of Orange and Atos, responded by asking whether the US is returning to McCarthyism of the 1950s. And in markets news, gold rose above $4,500 an ounce for the first time, while silver and platinum have also advanced to records. Precious metals are ending this year with gains not seen in decades. Bloomberg's metals reporter Martin Ritchie says global uncertainty has helped to drive the rally.
You know, you could never imagine prices at this level even 2 years ago. But here we are. And I think this December rally that you've seen in gold and in the precious metals is really a kind of continuation of the same themes we've seen throughout this year. It's about the debasement trade, growing sort of mistrust in traditional assets, as sovereign bonds and currencies. It's about the weaker dollar. It's about central banks buying gold because of those things.
Ritchie adds that traders are now betting the US Federal Reserve will lower the cost of borrowing again next year, which would be a tailwind for non-yielding precious metals. The gold spot price currently trading below the record that we saw, trading at $4,493. Now, the US economy expanded at the fastest pace in 2 years. Real GDP increased at a 4.3% annualised pace in the third quarter. Economists had expected growth of 3.3%. The surprise has pushed up Treasury yields as traders factor in the resilient consumer spending. The data had been delayed due to the US government shutdown. Now, the release of the so-called Epstein files has so far failed to satisfy the US public. The US Department of Justice has released thousands of pages of heavily redacted records and photos related to the convicted sex offender. But the document dump has drawn criticism for missing a 19th of December deadline and for the heavy redactions. President Donald Trump says that the saga is unfairly tarnishing individuals.
A lot of people are very angry that pictures are being released of other people that really had nothing to do with Epstein, but they're in a picture with him because he was at a party, and you ruin the reputation of somebody. But I never went there, but a lot of people did go there.
President Trump speaking there during a news conference last night. Included in the latest batch of released files is an email sent from an individual named A, saying they are at the royal family's Balmoral residence and asking Epstein associate Ghislaine Maxwell for, quote, inappropriate friends. In October, Andrew Mountbatten Windsor, formerly the Prince and Duke of York, lost his titles following scrutiny over his links with Epstein. And lastly, one of the co-founders of Brevan Howard Asset Management has left the UK, adding to concerns about the exodus of wealthy individuals from Britain. Alan Howard has a net worth of roughly $4.3 billion and, according to a Bloomberg analysis of regulatory filings, now lives in Switzerland. Bloomberg's James Wilcock has more.
This year, Switzerland voted to reject a 50% inheritance tax, while Britain expanded its version of the levy. Alan Howard may have followed the incentives. The Brevin Howard co-founder declined to comment to Bloomberg for the story, but the billionaire now joins the ranks of many of the financial elite we have reported on leaving the UK. That exodus is a worrying trend for the government, as it is banking on higher tax revenue and growth from the wealthy for its economic agenda. In London, James Woolcock, Bloomberg Radio.
And those are our top stories for you today. Now, looking at the markets, global stocks climbed to a record high. We've got more gains for the All Country World Index amid low trading volumes this Christmas Eve. We did see the S&P 500 reach a record high yesterday. Stock futures for the US and for Europe are both in the red. We have half days of trading for the London Stock Exchange, which shuts at 12:30 p.m. today, and for Euronext exchanges across Europe, and the NYSE and NASDAQ close at 1 p.m. US time today. After that very strong US economic data, 10-year Treasury yields have consolidated around 416, and the rally in gold this morning. So we're below the $4,500 mark, but we're still up 0.2 on trading this morning. Copper's extended its gains. Silver and platinum rallies continue. So that is a look at where we are in the markets. That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
Hello,
and this is
and
Bloomberg.
welcome. This is the Michelle Hussein Show. I'm Michelle Hussein.
I speak the lack of a full budget, effectively rolling.
Listen and subscribe to the Michelle Hussein Show from Bloomberg Weekend, wherever you get your podcasts.
You certainly ask interesting questions.
News when you want it with Bloomberg News Now. I'm Caroline Hepker. France has adopted a stopgap budget bill for 2026 to avoid a government shutdown. The so-called Loi Spéciale, or special law, allows the state to continue collecting taxes and borrowing money despite the lack of a full budget, effectively rolling over fiscal plans into the new year. Addressing the nation on French television, Prime Minister Sébastien Lecornu explained the situation.
Prendre le temps Taking the time to discuss a budget in a democracy like France is not a weakness. In the meantime, a special law is being discussed in Parliament. It will allow us to continue to collect taxes and keep public services going from January 1st. That doesn't mean it's a budget, and there will be a number of negative consequences if the situation continues.
French Prime Minister Sébastien Lecornu speaking there ahead of the National Assembly's decision. The temporary legislation comes after the French government warned that parts of the finance bill that have been agreed so far would only bring down the deficit by 1/10 of 1% to 5.3% of economic output in 2026 versus this year. The National Assembly is set to resume debate on the full French budget in early January. The Trump administration has imposed visa sanctions on former EU Commissioner Thierry Breton as a punishment for his work regulating big tech. The US Secretary of State Marco Rubio announced the move on social media, accusing Breton of extraterritorial censorship. The US State Department has also targeted 4 other people leading organizations focused on digital hate speech and countering extremism. The Global Disinformation Index said in a statement that the sanctions are, quote, an authoritarian attack on free speech and an egregious act of government censorship. In a social media post, Breton, who's also the former CEO of Orange and Atos, responded by asking whether the US is returning to McCarthyism of the 1950s. Now, gold has risen above $4,500 an ounce for the first time, while silver and platinum also advanced to records. Precious metals are ending this year with gains not seen in decades. Bloomberg's markets and metals reporter Martin Ritchie says that global uncertainty have helped to drive the rally.
You know, you could never imagine prices at this level even 2 years ago. But here we are. And I think this December rally that you've seen in gold and in the precious metals is really a kind of continuation of the same themes we've seen throughout this year. It's about the debasement trade, growing sort of mistrust in traditional assets, as sovereign bonds and currencies. It's about the weaker dollar. It's about central banks buying gold because of those things.
Ritchie adds that traders are betting the Federal Reserve will lower the cost of borrowing again next year, which would be a tailwind for non-yielding precious metals. Currently, gold trading at $4,481 a troy ounce, down 0.1%. The US economy expanded at the fastest pace in 2 years. Real GDP increased at a 4.3% annualized pace in the third quarter, according to data released yesterday. Economists had expected growth of 3.3%. Now, the surprise has pushed up Treasury yields as traders factor in resilient consumer spending. The data had been delayed due to the US government shutdown. In news this morning, BP has agreed to the sale of its majority stake in Castrol Lubricants. Its division will be sold to the US investment firm Stone Peak Partners in order to raise about $6 billion. The oil major had planned to divest $20 billion of assets by the end of 2027 to improve its balance sheet. It comes as Meg O'Neill prepares to take the helm of BP in April after running Australia's Woodside Energy Group. BP's share price this morning rising in European trading, currently up almost 1%. The release of the so-called Epstein files has so far failed to satisfy the US public. The US Department of Justice has released thousands of pages of heavily redacted records and photos related to the convicted sex offender. But the document dump has drawn criticism for missing a December 19th deadline and also for the heavy redactions. President Donald Trump says that the saga is unfairly tarnishing individuals.
A lot of people are very angry that pictures are being released of other people that really had nothing to do with Epstein, but they're in a picture with him because he was at a party, and you ruin the reputation of somebody. But I never went there, but a lot of people did go there.
President Trump speaking there during a news conference last night. Included in the latest batch of released files is an email sent from an individual named A, saying they are at the British royal family's Balmoral residence and asking Epstein associate Ghislaine Maxwell for, quote, inappropriate friends. In October, Andrew Mountbatten Windsor, formerly Prince and Duke of York, lost his titles following scrutiny over his links with Epstein. Those are our top stories for you this morning. Let's think about the markets right now. European stocks are opening higher in what is a holiday-shortened trading day. So we'll be finishing trading at lunchtime today in London and in Europe. FTSE 100 is flat at the moment, even though we've seen a stellar performance year-to-date, up 21% for the FTSE 100. We did see the S&P 500 yesterday close at a record high. Stock futures for the US in the red. 10-year US yields at 4.16. German yields actually lower 3.5 basis points. So a buoyant rally this morning at 286. The euro is currently slightly weaker against the dollar, trading at 117.90. Gold is flat, $4,485 a troy ounce after, again, stellar performance for gold, up some 70% year to date. That's news when you want it with Bloomberg News Now. I'm Caroline Hepker, and this is Bloomberg.
I'm Barry Ritholtz, inviting you to join me for the Masters in Business podcast. Every week,
I feel like AI does not exacerbate in some way.
Absolutely. Meanwhile, the other big news politically when it comes to AI this week is that Trump issued an executive order for a national rule on AI.
Yeah.
Which a lot of people who are trying to safeguard the system and protect data privacy rights, that sort of thing, do not want.
Well, this is the other thing. So there's all this anxiety for various reasons. Pick your poison, whether it's going to displace the jobs, whether AI is going to be too woke and come up with versions of history that people don't like, whether it's going to, just rot our minds with slop, or, whether it's going to turn us all into paper clips. So you say, okay, we should regulate. But what does that even look like? Like, what is a sort of productive regulation look like? Such that, okay, hopefully we could maintain positive aspects of the technological development while capping the downsides.
Right.
That would be nice. I would love that. But how exactly do you do that?
The argument that you hear from AI proponents is that any regulation needs to balance, safety with innovation, because there's also the question of China, which that's another hot button political topic, right? This idea that the U.S. is in an existential battle with China over AI and we have to win at all costs. Therefore, the industry must not be tightly regulated.
Yeah, right. So it's also a geopolitical element. Anyway, So we mentioned AI is going to be big in politics. We really do have the perfect guest because we're going to be speaking to someone that the AI industry is actually targeting, someone that the AI industry is actively trying to stop. There's this new super PAC, and I think it has some Andreessen money and maybe some executives from OpenAI, et cetera. Anyway, they want to make sure that sort of AI sympathetic politicians do well, but they're also targeting politicians that they perceive to be too negative, and they've even named names, I think is super interesting, and we have them. So we are going to be speaking with Alex Boris. He's a state assembly member here in New York. He's also a candidate in the primary for the 12th district, which is here in Manhattan, which I feel like 1,000 people are going to be running for this open seat. I feel like if you were targeted by the AI industry, that is probably some of the best advertising you could get in a very crowded field where it's just like there's going to be a million choices.
Well,
also, yeah.
I was going to say what you're going to say next, I think, but he used to work at Palantir as a data scientist, and Palantir is one of the companies backing that super PAC.
So you know what I think we should do? Can we talk about AI for like 5 minutes and then make this a 50-minute episode about what Palantir does from someone who used to work? That's my goal for this episode.
Why don't we just make it a series?
Let's make it a series. Anyway, Alex Boris, thank you so much for coming on Odd Lots.
Thank you for having me.
So what's the deal? Like, people are flying in from around the country just to run for this 12th district seat that's opened up?
Yeah, most recently, George Conway, who lives in Bethesda, Maryland, said that he was going to move to the district and run. You just have to live in the state. You don't have to live in the district to run. So last week, someone who lives in the Bronx also declared for this seat.
Is this the one, Jack Schlossberg? Is he running
Jack
for this
is also
one?
running, yes. I think there's 10 declared candidates now and more to come, I'm sure.
What a farce.
How did you actually transition from being a data scientist at Palantir to politics? It's not a natural progression for a lot of people.
Well, what brought me to Palantir in the first place was the ability to work with government and actually...
What year are we talking about, by the
So
way?
I joined Palantir in 2014. I left in 2019. And so many people think of government as just passing the bills, but that's not how most citizens interact with government. It's, can I get to the DMV and get my license renewed quickly? It's starting a business. It's the day-to-day interactions. And that implementation was an exciting thing to work on. So I was at Palantir for 4.5 years. I then went to a couple of startups afterwards, one that used early transformers, BERT and laser, to help banks with anti-money laundering, counter-terrorist financing, and then a startup that worked with municipalities to better distribute aid. So I had this through line of actually having government deliver on its promises throughout.
We're going to talk more about Palantir later. So I'm reading, there was a recent Politico Pro article. AI super PAC leading the future say they're spinning up a multi-million-dollar effort to sink Boris's nascent primary campaign to replace retiring Manhattan Representative Jerry Nadler. Okay, so what is it about your time in the state assembly such that you got on their radar?
Most prominently, I've done a number of bills while there. I've passed 27 bills in my 3 years, which coincidentally is the same number Congress as a whole passed in 2023. But there's one bill in particular that caught their eye, which is the RAISE Act. And this bill would, for the first time, put safety standards on advanced AI research. They really didn't like that bill. And so they announced me as public enemy number one. And the initial announcement said they're planning to spend multiple millions against me. Last week, they upped it to $10 million. I'm hoping if the campaign continues, I can use up all $100 million that they've planned, but we'll see where it goes.
What was in the RAISE Act? Like, what was the gist of this bill that they had?
Yeah, so it was requiring the major frontier labs. So we're talking Meta, Google, XAI, OpenAI, Anthropic. That's probably all it would apply to right now. I think over time, maybe Amazon gets in there and DeepSeek and maybe Mistral, but it's a single-digit number of companies. And they would have to have a public safety plan that they disclose and stuck to. Also disclose critical safety incidents, so things that go wrong that could lead to increased risk. Your model weights get stolen, you lose control of the model, et cetera. And that if your models fail your own tests, that you can't release that model. And that's designed to counteract what we saw with the tobacco companies, where they knew that cigarettes were causing cancer, but denied it publicly and continued to release the product. This is saying, hey, you companies, you're the experts. But if you're getting reports back that this is very dangerous, you need to take action on that.
It also proposes fines for violations, right? I think it's up to $10 million for the first, and then subsequent ones are $30 million. Does that actually matter to tech companies? Like, I know they
Probably
care.
not.
They care about money, but like, if Google is pulling in $100 billion per year, it can pay $3 billion fines.
Absolutely. In my opinion, those fines are too low. The original version had 10% of their training costs, and it would scale up with what they're investing. But generally in New York, we don't like an uncapped maximum fine. So that was part of the negotiations. I agree. I think there could be companies that just say, we're going to ignore this. I think the fact that they're spending nearly that amount lobbying against it suggests that they do think it has some teeth.
Talk to us a little bit more about what specifically would what would trigger the fines, because I could see some very perverse things going on. First of all, I could see smaller companies that are right at the edge where it's like, okay, maybe this isn't a big deal for Google, but this is a bigger deal for a smaller company that's just starting out. We don't want to lock in just the handful of biggest players, right? Because regulation can serve that. It can perversely lock in the incumbents because they're the only ones who can deal with the regulatory thicket. There are also issues that could arise where, well, if I'm going to get fined really badly, I'm going to look the other way. I'm not going to notice what these safety violations are. But talk to us about what are, in your view, the formal triggers such that the bill does not have these sort of perverse incentives.
Yeah, I feel like this is the forum where I can really get into the details on it. So let's dive in. There's a two-part test for the RAISE Act to apply. The first is that you're a company that has spent $100 million specifically on compute, specifically on the final training run of models. So not the tests that lead up to it, but actually the final pre-training and post-training before you put the model out. That's one part. So it doesn't apply if you're an academic institution. It doesn't apply if you spent less than $100 million. The second part is, how do you define a frontier model? And the easy way is you have trained a model that by itself was $100 million in compute and had 10 to the 26 flops, computational operations in training, right? It's a measure of the complexity and the size of the model. That's a standard one that people have dealt with for a while. And so that's when I listed the 5 companies that I think it applies to. Those are the companies I think have trained one of those 100 million 10 to the 26. But there's a second way that you can be a frontier model, and that is you are trained via the specific process of knowledge distillation, and at least 5 million is spent on that. So knowledge distillation is a technique of training a small model based on the outputs of a larger model. And it's a way to kind of shortcut a lot of the training and get a smaller model that has similar capabilities. Importantly, it's the technique that China has been using to catch up to the US because of our limits on compute to China, because of the export controls. That's how they're making their advanced models. And so this is the only bill that I know of that would apply some regulatory scrutiny to, for example, DeepSeek.
How do you actually solve, I guess, the black box problem? This idea that, you have these models, algorithms, whatever, and no one really has very good insight into what they're actually doing. And even if you have rules against something like redlining, the models can use proxy data to determine, someone's race or someone's gender, income, whatever. How do you do that?
Well, on those kinds of questions around discrimination, you're right. It's very challenging to know what the intent of a model is. And, there's a whole subset of people that are really against when you anthropomorphize any model. But I'm just going to keep saying intent and desire, and we can have that conversation separately. So it's tough to know a model's intent, but you can know its impact. So to be clear, the RAISE Act doesn't deal at all with those questions of discrimination. There's other bills pending in the legislature that do, and I think it's an important one. But in that and in the safety aspects, you can do a variety of tests to see how does it behave in certain circumstances. And you've seen outside researchers, you've seen companies themselves set up their models in what appear to be compromising situations and see how it behaves. So there was one test that was done where a model was told it was going to be shut down, but was given access to what it thought was a company's email server.
Oh, I remember this. Yeah.
And they had planted fake emails that the engineer conducting the test was having an affair. And so the model, after being told it was shut down, sent a message to the engineer saying, I'm going to send these emails to your wife if you shut me down. So I don't know the intent of the model. I don't know exactly what's going on, but I know that is behavior you probably want to work out of the model before it's released.
It's pretty creative at the very least.
Yeah, to some extent it shows they're working. You mentioned DeepSeek. It's an open source piece of software. They're in China. The people at DeepSeek are not going to concern themselves with some legislation in the New York State Assembly. Anyone with an internet connection can theoretically download that model and run it on any server. Intuitively, this feels like it hobbles the American companies who have to abide by American laws, et cetera, and advantages open source models that are just like maybe not even have a company behind them in the future, et cetera. Why does this not have a negative, disparate impact on our own companies?
Well, DeepSeek open sourced the model, but they are still a company that wants to profit, and they sell things on top of it. So DeepSeek's available in the App Store. If they don't pay fines in the US, we can have an injunction to take them out of the App Store. And they want businesses to use it. So there is still a real reason for them to comply with the US. But on the flip side of it, how it could hobble these companies, we're not asking them to do much more than they've already committed to publicly. They made White House voluntary commitments in 2023 and 2024. They've had international summits like the Seoul Summit where they put forward basically plans to do exactly this. What the RAISE Act does is lock in place a floor so that when they're rushing for the next quarterly reporting or their next fundraising round, they don't have an incentive to cut out on safety. And I would say that the labs themselves, the lobbyists for the labs, did an estimate for what it would take to comply with the RAISE Act. And they have every incentive to expand that estimate, say this will hobble us, we're going to leave. And the estimate they came back with was that it would require Google or Meta to have one extra full-time employee.
Oh, wow. How would the RAISE Act actually interact with this new executive order that Trump just put out for a single national rule for AI?
So Trump is threatening to withhold funding from states and to sue states that do any sort of regulation around AI. New York already does a bunch of it. So regardless of whether the governor signs the RAISE Act or not, we would probably be in Trump's crosshairs. For example, the governor this year put forward regulations around chatbots, requiring them to disclose that they are an AI model at the start and every 3 hours of continuous conversation. And
that seems so basic.
So basic. And requires them to be on the lookout and to alert for when there's language that might indicate potential self-harm and to refer people to resources, which also seems really basic. But that would violate this executive order. And so we're sort of in for a penny, in for a pound at this point, and I think we need to stand up for New York families.
Joe, I get notifications if I watch too many episodes of a show on Netflix, right? You can imagine people constantly talking to chatbots needing reminders too.
I feel like I've never had a 3-hour conversation with a chat. If I ever have a 3-hour conversation with a chatbot, Tracy, let me.
I'm going to keep an eye on you in the office.
Talk to us a little bit more about the politics of AI within Albany right now. Is this the kind of thing? Is there a bipartisan sort of anxiety? Talk to us about the vibe.
Yeah, I think it's similar to what you see nationally, which is there are some, especially on the right, that just think the only thing that matters is how fast AI moves and not who it hurts. There are some, especially on the left, that don't want this technology put back in the box, right?
Yeah.
And then there's most people in the middle that say, hey, we need to balance the benefits of it and the potential safety of it. And the RAISE Act is squarely within that realm. It passed with co-sponsors who are both Democrats and Republicans. The majority of Republicans voted for it in the Assembly, and every single Republican state senator voted for it. So, Tracy, at the start, you were mentioning that proponents are the ones who are balancing safety and innovation. By that measure, everyone voting for it is a proponent.
Why do you think Trump is doing this?
I love, why do you think Trump questions? No.
Honestly, it's a basic question, but
Totally.
I'm very curious to hear your answer.
I, for so many reasons, wish I understood that man better, but also feel like it would not be good for my mental health if I did. It is tough to understand because it's so different from his policy everywhere else.
Right.
He is putting forward tariffs and having this nationalistic, protective, sort of anti-trade agenda on food and on diapers and on toys. But then when it comes to AI...
Pencils now.
Pencils?
Mm-hmm.
Oh, well.
He says we don't need so many pencils.
My wife and I just had our first kid who's 4 months. So you see where my head's at with diapers and toys as we come into the holiday. Pencils are still a few years off. And then when it comes to AI, he just wants to push America's agenda everywhere and say no regulation whatsoever. So it's confusing. What I can say is that a number of the people behind the super PAC targeting me are the same people that were funding his campaign. You had Mark Andreessen put $5.5 million into his campaign. You had Joe Lonsdale put $1 million into his campaign. You had Greg Brockman, the president of OpenAI, put at least $2.5 million into tearing down the White House to build the ballroom. And so you have a lot of people around Trump at fundraising events and at other events who are
This is Scarlett Fu.
And I'm Paul Sweeney, inviting you to join us for the Bloomberg Intelligence Podcast.
Every day, we harness the power of Bloomberg Intelligence to bring you deep dives into the companies that are moving markets, from publicly traded companies like Apple to those that are privately owned but known by everyone on Earth, like OpenAI.
Now, I helped to build Bloomberg Intelligence to what it is today, Scarlett, and now our analysts are the best in the world, covering more than 2,000 global companies.
That is your legacy, Paul, and we speak to those in-house experts every day. They are Bloomberg's go-to authorities on sectors, companies, and legal processes.
And we do it all live each weekday, then bring you the best conversations in our daily podcast.
So be sure to search for Bloomberg Intelligence on YouTube, Apple, Spotify, or anywhere else you listen.
Listen in the afternoons on your way home from work to catch up on the market news you missed during the business day.
That is the Bloomberg Intelligence Podcast. I'm Scarlett Fu.
And I'm Paul Sweeney. Subscribe today wherever you get your podcasts.
So one of the things about the politics of AI, and I mentioned at the beginning, it's very multifaceted, because there are people that are worried about safety, people are worried about ethics, people are worried about water, people are worried about electricity, people are worried about job displacement, etc. As a candidate for office, how do you think about some of these other AI concerns out there beyond simply the safety stuff?
Oh, there's a lot that we need to do. The chatbots, I think, are in some sense safety when you think of what's happening in kids, but very much talked about in a different sort of conversation. And even expanding that out to AI's effect on our kids broadly in our education system. You can imagine a really positive world where every student has an individualized tutor at exactly their level and teaches them in the exact way that they want to learn to supplement what they're getting from teachers. But what we have right now is we haven't updated our pedagogy, and so a lot of people think assigning an essay still teaches critical thinking. Right? We need to do a lot on the education system. We need to do a lot on the workforce, as you mentioned. We need to do a lot on the environment, and we're missing a golden opportunity here because our grid is extremely old, and we need to pay for the upgrades, and government doesn't really know how to do that. We've been passing off the cost to ratepayers. Now you have an unlimited set of private capital, it seems, that wants to invest to build data centers. Why aren't we using that to actually upgrade our grid and to require renewable energy and have it there? Instead, we're building these data centers, but saying ratepayers have to pay for the interconnects. It makes no sense.
Does this issue, just AI in general, does it actually resonate with voters at the moment? Because in some sense, you're trying to get ahead of things, right? Because in the future, I know we said AI is all over the news and we see it everywhere, but in the future, it's going to be more embedded in our lives. So you're trying to get ahead of that. Do people care at the moment?
It's already embedded in their lives. They're seeing it. And it's not just, their kids in school. It's not just the entry-level unemployment at 9%. We just saw a teddy bear that was sent out with ChatGPT embedded in it that taught a kid how to find matches.
It's Teddy Ruxpin upgraded. Do you remember that?
I was walking down St. Mark Street the other day. I have to say, unfortunately, I thought those were pretty clever. Someone set up a thing where there was like a animatronic puppet that had a camera in it, and that it was embedded with an LLM. It was doing insult comics of the people who were walking by.
Oh my God.
So someone would walk by and they're like, so you think you bought it, with a big Uniqlo bag? I was like, so you think you bought enough at Uniqlo today? But I was like, oh,
what did it say to you?
It was super clever. My kids loved it. It was I was like, oh, this is a really clever thing.
Wait, what did it say to you, Joe?
What did it say? I think I stayed out. I watched the other people go by. I stood on this side. I was like, oh, this is actually, I was like, oh, my kids loved it. They thought
we'll leave that as an exercise to the listener to walk by and report back.
What it would have said.
What does it say to you?
Are you optimistic about AI? Are you pro AI in the sense that you think that this will be important, productive, positive technology that is important to continue developing?
It can be, but only if the American people have a voice in how it develops. It is the technology that has the widest bounds of what could potentially come from it. And the only thing that comes close is nuclear energy and nuclear fission, right? So if you put yourself in the mindset of someone in the 1930s, you had one set of people saying, nuclear fusion is coming, we're about to have clean, unlimited energy and live in utopia. And you had another set of people that said, we're all going to be dead from nuclear bombs in 10 years, right? And the reality is we've ended up somewhere in the middle. AI, we're at that moment right now where you have people saying basically that wide of a potential outcome. And it's up to us in our policy to make sure that the worst case doesn't happen so that we can have as much of the best case as possible. What AI could do for medical research, for curing diseases is remarkable. My mom has multiple sclerosis. Autoimmune diseases are some of the hardest for modern medicine to deal with. I am incredibly optimistic of what could come from some of this research. It's just that the same capabilities that will allow us to cure diseases could, in the wrong hands, allow someone to build a bioweapon. And we just need to be thoughtful on how we go.
I guess I'm worried about bioweapons. I'm also worried about very mundane things. Just like the new Gemini image generator is just stunning to me in terms of the degree of fidelity, like how easily you really can't tell anymore. Like a year ago, you could say, oh, that looks like an AI image. We're basically past that. Other things like bots and stuff like that, things that replicate our voice. These aren't like ultra science fiction things like a machine that's going to like manufacture a bioweapon or something like that, but they're day-to-day pervasive phenomenon that's sort of like, they're going to make me trust people less. They're going to make it harder to communicate. Like this sort of, what do we do about that?
Can we nerd out about deepfakes? Because this is a solvable problem and one that I think most people are missing the boat on. So it's always been presented to us as like, oh, you'll have to learn how to see what's wrong with an AI image. Like, that's never going to work. They're going to get better and better. Maybe we're already past the point where a human could see it. But that's not how we've solved these problems in the past. If you go back to the 90s, people said we'll never have internet banking because you don't know that the computer on the other end is actually the one that you're talking to. And then we moved from HTTP to HTTPS. That was a solvable problem. That basically same technique works for images, video, and for audio. So there is a free open source metadata standard that industry has created called C2PA, Content Credential Provenance Authority, that you can attach to any standard file format that cryptographically proves whether that content was taken from a real device, generated by AI, and or how it was edited over time. The challenge is the creator has to attach it. And so you need to get to a place where that is the default option.
So if you see an image and it doesn't have that cryptographic proof, you should be skeptical. Like that would
to that place.
That would be the idea where it's so pervasive that the expectation is I can test very quickly whether the creator has attached this.
It'd be like going to your banking website and only loading HTTP, right? You would instantly be suspect.
But you can still produce the images. And I guess I've been reading a book called The New Age of Sexism, and it's about technology and discrimination against women. And it has some awful, awful stories of schoolgirls whose classmates, like, you know, put them in porn videos and things like that. And one of the problems is there's no rules saying that you can't actually do that. So even if you know that it's fake, it can still be harmful. What do you do about that?
Well, there are laws in New York State that ban it, and in other states have taken action. And that's yet another reason why this AI preemption is such a scary thought, because states are leading the way right now in stopping some of these absolute worst uses. I'm very excited for Congress to actually solve these problems, for there to actually be federal standards. I'm running on the platform of creating these federal standards. But until they do, stopping states from taking action like against deepfake porn of children. I mean, that's the stakes of what we're talking about.
Can we talk Palantir for a second?
Definitely. It's a rough segue, but yeah.
What'd you do there?
So I joined Palantir as a data scientist in 2014, and I left as one of the 5 overall leads of the government business. I spent the vast majority of my time in the federal civilian side of it. So I worked with the Census Bureau and the Bureau of Economic Analysis on updating how they calculate GDP. We actually made a change to the way they account for spending around moving holidays that are sometimes in Q1, sometimes in Q2, like Easter. A paper I'm very, very proud of, and it's a error of a rounding error on how we calculate GDP, but it did actually lead to a change. I led our work with the Department of Justice to go after the opioid epidemic and to solve some violent crimes. I worked with Veterans Affairs to better staff their hospitals to make sure that veterans get the care that they deserve and need. I worked with the CDC to better track epidemics. It was about allowing government to make better use of the data that they already had to serve the American people.
And what does Palantir actually do? I feel like we ask this question a lot, but...
Well, I think it's because it's a fundamentally unsexy thing and people like to dress it up, but it's data integration and analysis. It's making it different data sources that you have access to talk to each other, be updated constantly. Like Palantir was founded around a time when data lakes and data clouds were like the big thing everyone's talking about.
What's a data lake again?
Yeah, exactly. But it's just
Actually, I'm asking, what is a data lake? I've seen this term, and
right.
I don't know what that means.
Putting all of your data in one place.
Okay.
People can access it, right? And that was supposed to revolutionize everyone's ability to do anything. But just putting data in one place doesn't actually make a change. Some of the things that Palantir has really put at the forefront, like an ontology, right? A view from on high of what each piece of data is supposed to mean can actually lead to better analysis. So I'll give you an example from my work at the Department of Justice. And I have 2 software patents for this project, which was we were helping them analyze banks' behavior leading up to the Great Recession and how they were packaging mortgages into securities, and each security would have a loan tape. Here's the 1,000 loans that are in it. And some of those loans would not be up to the standards that were required. And that would occasionally be flagged before an issuance. Hey, this loan isn't up to your standards. They would pull the loan out, and then their next issuance put the loan back in, right? And so if you could find that pattern of behavior, you could maybe prove that they had knowledge that that loan wasn't good and were still putting it out there. The problem is that e-discovery software, right? All of the data was there, but it was just taught to think of an Excel document as a document that a lawyer would read. And so there was no way in the software to track those individual loans. But if you think of an individual loan as its own object, that should be something that can be searched and tracked across the database, then that analysis becomes very easy to do. So that was something that we enabled at Palantir, was putting this ontology of what's the right level for each object. Oh, a loan is a meaningful instance. Let's make it so you can search and analyze an individual loan versus a document.
How has your experience at Palantir actually informed your approach to government? Because we've done episodes on why government software is so bad. And I think you're one of the few politicians out there who actually knows how to code, possibly the only one.
No, there's got to be a couple others.
You think?
2 or 3.
Okay.
I don't know.
We'll find them.
Yeah.
I am the first Democrat elected in New York State at any level with a degree in computer science. I do think there have been nationwide like 4 or 5 Congress members that have that, so they're out there. But my time at Palantir informs what I do in government, I think, in 2 main ways. The first is the work isn't done when the bill is signed, right? It's about the actual implementation. Everything Palantir does is about implementing things that have already been passed, and there's huge challenges in getting it to work. But the second thing is that basis in data and actually tracking your results and seeing how you've done over time. So few politicians will say, hey, that bill I passed 2 years ago, here's how it's working. And even more rare is here's how it's not. I did my town hall 3 weeks ago. I once a year get up in front of my entire constituency, spend 2 hours answering any questions people have. We don't screen it at all. But I led off actually with, hey, here's a bill I passed a year ago, and the data shows it's not working. And here's what I've learned about that and how we're going to change that.
How exactly do you judge performance by the government? Because I like the idea of like tracking, I guess, alpha in the civil service in some way. But would it just be based on the bill execution or, I guess, response rates from the public? How would you do that?
So I'll give you an example. We passed a bill to raise the statutory maximum fine on telemarketers. By far my most popular bill. But the question is, that's the statutory maximum. Does that actually lead to more fines, to higher fines, to more negotiated settlements? Right. Is raising that a pressure? And so we just looked at the Secretary of State's data of how much were the fines before that bill was passed and afterwards, and we found there were 4 times as many fines actually there. So raising the statutory max brought the bad companies to the table to actually negotiate, and hopefully is changing that behavior. The example I gave of one that didn't work was around mopeds and e-bikes in New York. So, you know, I'm going to be very local to New York. I know there's a nationwide
a nationwide primary, but it'd be nice if there were some talk of actual relevant things to the 12th district.
So we have these delivery vehicles that are whizzing all over, and people are scared as they see them go the wrong way, et cetera. And there's a lot of discussion about what we can do to make people safe on the streets. One aspect is that mopeds were already required to be registered in New York State, but almost never were. So I passed a bill that would require mopeds to be registered at the point of sale, right? So think about how many mopeds you think exist in New York City. The number that were actually registered when the bill came into effect this January was about 1,700.
Wow.
And
I feel like, by the way, this would be like one of those like hedge fund interview questions. How many mopeds are in New York City? I want to see how your brain thinks.
And I think if your answer is 1,700, the hedge fund's not hiring you, right? Like that is not what you would estimate. Right. My thesis was it was that people were walking out of the store without registering and being told to do that. we looked a month ago, the number that are registered is now 1,400. So it's not that people weren't registering when they came to the store. It's that registration expires after a year and no one's re-registering. So that was an example of like, I had a thesis, I passed the bill. I think the bill's still overall good. People should register as they leave the store, but it didn't actually solve the problem we were out to solve. And here's now what I'm going to do about it. And I think we need a lot more of that in government.
Wait, what are you going to do about it?
Well, we're thinking about how we can encourage the actual the re-registration over time. So one of the aspects is requiring all of the delivery apps to actually check that the drivers are registered when they sign up and to make sure they keep that up to date.
Makes sense to me. You know, it feels like we're like in this sort of era of every day. You mentioned telemarketers. Like, we're just like wading through the muck of like low-level scams everywhere. Every day I get text messages and it'll say like from an unknown number. I'll be like, Joe, are you coming to barbecue? And I'm like, I don't know. I might have agreed to eat barbecue with someone. That sounds like something I could have done, but I'm like pretty sure it's fake. You go on like Amazon and there's AI generated books about books and every author. Just generally, it feels like we're in a culture and economy and era of like persistent low-level grift across almost every dimension of our lives. And I'm sure there's many reasons for it, but when people talk about, low trust society and what's happening, how much of this do you think is just because like we're inundated with people trying to rob us every day in some way, digitally or otherwise?
I think that's a big part of it. And the only way to solve that problem is you need actual enforcement. You need there to be consequences.
To follow up on this. Like, I guess the reason I'm asking is because, it's like someone running for office, they move to the 12th district and they're like, I'm going to call out Trump's corruption. And there are all these like, Trump is all this like big stuff. And, whatever, many of these issues are like, legitimate, et cetera. But almost nobody in elected office seems to be just like talking about like, who's going to do something about the text message scams? Who's going to do something about the AI books? All of these like big national issues, but that doesn't affect me on a day-to-day basis the way this sort of like persistent abuse of technology constantly does every minute of my life.
I think that's why podcasts like this are great, because you get into the details. No, but the top level news doesn't cover a lot of that, right? I have a colleague, John Rivera, who has a bill in the state assembly on requiring disclosure for AI generated books on Amazon. Like that specific example is a bill that exists in New York. The telemarketing bill I passed also applies to text messages. And so we tell people how to report those and maybe get fines coming from that. I think this is key to both parties in 2026 is talking about just government's effect and trying to make life a little bit better. I think my other most popular bill besides the telemarketing one was my click to cancel bill this year to allow New Yorkers.
I would love that.
It's now your right. As of October 1st, New Yorkers need to be able to cancel a subscription the same way they signed up for it.
I have a Condé Nast subscription that I've been trying to cancel for like a year, and I cannot log into the site. I can't find the original email where I've like actually signed up for it. And that's, I think, $12 a month that I'm just wasting.
I mean, government needs to get big things done, absolutely, but we also need to get small things right. You just need
Tom Keene, inviting you to join me for the Bloomberg Surveillance Podcast. It's about making you smarter each and every business day. We bring you a recap of what happened overnight in Europe and Asia, the day's economic data, and complete coverage of the U.S. market open. We cover stocks, bonds, commodities, currencies, even crypto, all the information you need to excel. Bloomberg Surveillance also brings you the analysis behind the headlines. We do that with lengthy conversations with our expert guests, the smartest names in economics, finance, investment, and international relations. We do all this live each and every weekday, then bring you the best analysis in our daily podcast. Search for Bloomberg Surveillance on YouTube, Apple, Spotify, or anywhere else you listen. On the East Coast, listen at lunch, and on the West Coast when you wake up. That's the Bloomberg Surveillance Podcast with me, Tom Keene, along with Paul Sweeney and Lisa Mateo. Subscribe today wherever you get your podcasts.
Apropos of nothing, this is a completely random seg, But one of the interesting things about Eric Adams was his interest in digital assets and cryptocurrency and tokenization and all of that. What did you think about those efforts? Do they actually matter to the industry and to New York more widely, or is it just sort of a pet project?
I have not seen the direct results of what he was working on. That doesn't mean they weren't there. It's just not where I have been focused. I actually worked on a different bill this year around crypto in the legislature, where New York really took the lead in creating legal structures for many of these companies through the limited purpose trust and the BIT license. But now with new action at the federal level, they have said, there's going to be federal licensing for these trust companies for stable coins, and they will defer to states, but only if the states have detailed rules in legislation or regulation, in statute or regulation. And New York's done it almost all by guidance. And so I really fought for a bill this year to standardize what DFS had done in random opinions, put it into statute so that people know what the rules of the road are, and so that New York can keep its regulatory structure. It passed the Senate. Unfortunately, we didn't get it done in the Assembly. And now most of the companies in New York are just applying for the federal charter. And we as New Yorkers are going to lose our ability to engage. So I think regardless of your broad view on crypto, finding ways to set rules of the road that allow for innovation and allow for us to have a say in how it develops is something everyone should get behind.
I'm looking at a map of the New York 12th Congressional District. I think one thing that really stands out, it's not some weird snaky district. It's just a real big square in the middle of Manhattan. Like, people who don't live here might not appreciate this. This is prime real estate, right? This might be the highest GDP district in the world, or in the country, or pretty close to it, right?
Pretty close to it, if not the one, yes.
Yeah.
There's more Fortune 500 companies headquartered there than I think at least 37 states.
You're a few blocks away from me, by the way. I'm in the East Village. It looks like it just cuts off a few blocks.
We'll fix it in redistricting.
Yeah. It must be weird, thinking about going back to the beginning with the tech industry and criticizing you. And it must be sort of weird that, you're a politician who could actually, talk in, gigaflops and stuff like that, because there's a lot of anti-AI people, et cetera, whatever, or open standards for digital encryption. It must be kind of interesting that, okay, here is someone who wants to hold the industry to some legislative standards, who is frankly
knowledgeable,
informed. Yeah, knowledgeable. Yeah, that must be sort of weird for them.
I think it is, and I think it's why all of their spending against me so far is backfiring, because people are like, oh yeah, who is this guy who doesn't understand tech, who's doing uninformed things? And then it's like, wait, it's the guy with software patents who worked at Palantir, who has a master's in computer science. There is a disconnect there. I think, I have support from a lot of the people that are my age that work in the tech industry, the ones actually building it, because they see the power of what they're building and think there should be some protections for it. It's really those at the top who are, I think, primarily focused on profits that don't want government getting involved at all.
I have a theoretical question, going back to the idea of hedge funds asking random questions to see how you think. If you had, a Bloomberg terminal equivalent of government data, what would you be most excited about looking up? Or what correlation would you be most excited about finding?
That is a great question. I'm going to stall at first by pointing out that I actually do have a certification in the Bloomberg terminal from my first job.
Oh,
so
well done.
I'm imagining this realistically.
So you know that all we do on the terminal is just look at two lines that correlate. Look, I've proved correlation here.
I think ways of running more, not maybe running more natural experiments, but looking at over time how investments the government pays off. So we only budget year by year. And so you have things like investing in early childcare that boosts your immediate who can be employed, but also will help the kids if you have universal pre-K, et cetera. But that payback in the government, if you're just thinking fiscally, is not going to come for 20, 30 years. And as we budget year to year, we think of that as a cost. I think if we had more ways of tying the effects previously in budgets with what we're seeing now, it would change radically where we would invest.
Have you played around with the AI code generation apps much?
Yeah. So when I came into office, one of the things I really wanted was a coder on staff. I was like, there's so many creative things we could do of doing prototypes of government software or playing with the data, but we don't pay legislative staff nearly enough. It's one of the positions I've been most radicalized in office. But I had this idea of all these projects I wanted to get done. And finally this year, Hunter College gave me an intern that was a CS major. And so I gave her this list of like 10 projects, and she got through 3 of them, and they were great. But then I looked at the other 7, and I was like, these are things that I know how to do, but it's not like worth my time at the moment versus all the things I have to do. But has AI coding sped up how quickly I can do these that it becomes worth it? And I mostly use ChatGPT, which, I know Claude and Gemini I've played with, but I was able to knock out 3 of those projects this year because of how more advanced the coding has become. So
it's pretty cool.
Yeah.
Alex Boris, thank you so much for coming on Outlaws. That was a lot of fun.
Thanks for having me.
It must be kind of weird, I said it near the end, but an AI critic that knows something about tech, because there are a lot of AI critics out there, and I don't get the impression a lot of them are particularly actually well-informed and do not actually understand the sort of strongest version of the argument that they're running against. So it's interesting that this PAC, this pro-artificial intelligence PAC, has decided to target someone who I think a lot of people who listen to it, it's like, oh, actually, he knows what he's talking about. He sounds pretty reasonable.
He's also the first one they're targeting, right?
Yeah.
So it'll be interesting to see who they go after.
Yeah.
After him. The other thing I was thinking is, if you think about one of the threats to big tech's business models, it's always regulation, right? Or at least they say it's regulation.
Sure.
They seem to hate regulation. Or over-regulation, I should say. So if you think about proposing some basic safety guardrails and privacy, that would seem like a good thing to me, in the sense that maybe you could restore some of the trust or faith between the general population and the big tech companies, and then you wouldn't get these massive fights about everything else. But that's probably a long shot.
It does seem like, I have to say, that while a lot of what he said made a lot of sense, or sort of sounded very reasonable, I do think that it's legitimate concern, like, these issues aren't going to hobble DeepSeek. Now, does DeepSeek want to be in the App Store, and can U.S. laws enjoin them from being in the App Store? Sure, but they're not going to hobble DeepSeek's development of a model. And if they want to be a dominant player in every country but the U.S., and they're completely unconstrained, and the American advanced labs are constrained, I do think that is a legitimate concern that the industry might have. I also think it's probably a legitimate concern that you don't want to disincentivize the reporting of safety issues. That if a company gets penalized for acknowledging that something in their model like violated some safety line, you do not want to have the risk of like, oh, we're just going to ignore this. And I think it's reasonable that the industry might be concerned that regulations could benefit the incumbents. He argued against that. He's like, oh, no, like, this is not going to affect like startups, et cetera. But there is always that risk that a monetary fine is something that's very easy for big companies to pay, and more marginal ones are more difficult. So, these are very tricky things. But as on the surface, more than on the surface, an extremely knowledgeable guy who, what he says, none of it sounds particularly ridiculous. And I have to say, if I were running in a primary that had like 25 people, including like a Kennedy heir and some guy on Twitter who like posts Orange Man bad a lot of times, that sounds like a good way to stand out from the crowd to be the AI industry's #1 target.
I agree with you on the incumbent point, but just in terms of U.S. versus China, I think people forget that China has its own restrictions, quite severe ones on censorship, right? And trawling, I guess, every single communication in the world in case someone mentions a certain cartoon character seems like that's a big regulatory
that's also
burden
a barrier,
as well. So I don't know. I find the competition aspect of it overhyped in some sense. But anyway, we could talk about this for ages. And a lot of these issues are clearly like ongoing, and no one has the solution yet. We're trying to work that out. All right. Shall we leave it there?
Let's leave it there.
This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Jill Weisenthal. You can follow me at The Stalwart. Follow our guest, Alex Boris. He's at Alex Boris. Follow our producers, Carmen Rodriguez at Carmen Armid, Dashiell Bennett at Dashbot, and Cale Brooks at Cale Brooks. And for more Odd Lots content, you can find all of our episodes.
ओके गाइस, ये क्रूड ऑयल काफ़ी देर से रुका हुआ है रेजिस्टेंस एरिया पे. आई होप अब थोड़ा मोमेंटम करे, नीचे आता है तो फिर एक बाइंग का ट्रेड प्लान करेंगे लोअर एंड पे. अभी दूर है थोड़ा सा सपोर्ट, बट एज आई सेड इन मॉर्निंग, रेंज बाउंड मार्केट है. क्रिसमस ईव से एक दिन पहले तो हो सकता है उतना प्रॉपर मोमेंटम ना आए, वॉलेटिलिटी ज़्यादा हो जाए. तो अभी के लिए क्रूड ऑयल ऑन रेजिस्टेंस फ्रॉम मॉर्निंग पे रेजिस्टेंस पाया, वहीं से साइडवेज ही चल रहा है उसी एरिया पे. नीचे आता है तो फिर एक बाइंग का प्लान रखेंगे नीचे, बट अब या तो ये कंसोलिडेशन ही करता रहे इसी रेजिस्टेंस पे, या फटाफट से नीचे आए और फिर हम इसको वापस से बाइंग प्लान करें. आपका 5210 टू 20 दैट विल बी अ सपोर्ट जोन, जहाँ पर एक्सपेक्टेड एक वापस से बाइंग, बट बहुत बड़ी रेंज नहीं है. ओवरऑल देखोगे 60 पॉइंट स्ट्रेच करके रेंज दिख रही है बस. मार्केट भी क्लोजिंग बेसिस पर है, ऑलमोस्ट क्लोज ही होने वाला है. 20 मिनट लेफ्ट. क्रूड ऑयल को नीचे आना है तो जल्दी आना चाहिए अब, क्योंकि बहुत देर से रुका हुआ है. ज़्यादा देर कंसोलिडेशन हुआ तो फिर अब ब्रेकआउट का ही चांसेस है. बाकी बहुत छोटी सी रेंज है, लेट्स सी कितने जल्दी रेंज के बाहर निकलता है, आइदर साइड, डाउन साइड या फिर अप साइड. ये तीसरी बार इस रेजिस्टेंस पे आया था, एक बार पहले भी सेलिंग आ चुकी है 2-3 बार. एक बार सेलिंग आई थी, लो बना था, फिर लोअर लो बना था. थर्ड टाइम एग्जैक्टली लेवल पे नहीं आया तो उसको कंसिडर नहीं करेंगे. दैट इज अ थर्ड टाइम प्राइस ऑन दिस रेजिस्टेंस एरिया.
Hello and welcome. This is the Michelle Hussein Show. I'm Michelle Hussein. I speak with people like Elon Musk.
I think I've done enough.
And Shonda Rhimes.
That's so cute.
This will be a place where every weekend you can count on one essential conversation to help make sense of the world. So please join me, listen and subscribe to the Michelle Hussein Show from Bloomberg Weekend, wherever you get your podcasts.
You certainly ask interesting questions.
News when you want it with Bloomberg News Now. I'm Caroline Hepker. France has adopted a stopgap budget bill for 2026 to avoid a government shutdown. The so-called loi spéciale, or special law, allows the state to continue collecting taxes and borrowing money despite the lack of a full budget. Effectively, it rolls over fiscal plans into the new year. Addressing the nation on French television, Prime Minister Sébastien Lecornu explained the situation.
Prendre le temps Taking the time to discuss a budget in a democracy like France is not a weakness. In the meantime, a special law is being discussed in Parliament. It will allow us to continue to collect taxes and keep public services going from January 1st. That doesn't mean it's a budget, and there will be a number of negative consequences if the situation continues.
That was the French Prime Minister Sébastien Lecornu speaking via a translator ahead of the National Assembly's decision. The temporary legislation comes after the government warned that the parts of the finance bill that have been agreed so far would only bring down France's deficit to 5.3% of economic output in 2026, so lowering it 0.1% versus this year. The National Assembly is set to resume debate on the full French budget in early January. Now, the Trump administration has imposed visa sanctions on former EU Commissioner Thierry Breton as a punishment for his work regulating big tech. The US Secretary of State Marco Rubio announced the move on social media, accusing Breton of extraterritorial censorship. The US State Department has also targeted four other people leading organizations that are focused on digital hate speech and countering extremism. The Global Disinformation Index, in a statement, called the US sanctions an authoritarian attack on free speech and an egregious act of government censorship. In a social media post, Breton, who was also the former CEO of Orange and Atos, responded by asking whether the US is returning to McCarthyism of the 1950s. Now, gold has risen above $4,500 an ounce for the first time, while silver and platinum also advanced to records. Precious metals are ending this year with gains not seen in decades. Bloomberg's metals reporter Martin Ritchie says global uncertainty has helped to drive the rally.
You know, you could never imagine prices at this level even 2 years ago. But here we are. And I think this December rally that you've seen in gold and in the precious metals is really a kind of continuation of the same themes we've seen throughout this year. It's about the debasement trade, growing sort of mistrust in traditional assets, as sovereign bonds and currencies. It's about the weaker dollar. It's about central banks buying gold because of those things.
Ritchie adds that traders are now betting the US Federal Reserve will lower the cost of borrowing again next year, which would be a tailwind for non-yielding precious metals. Gold spot price this morning, $4,484, flat currently. The US economy expanded at the fastest pace in 2 years, according to data released on Tuesday. Real GDP increased at a 4.3% annualized pace in the third quarter. Economists had expected growth of just 3.3%. The surprise has pushed up Treasury yields as traders factor in the resilient consumer spending. The data had been delayed due to the US government shutdown. Now, BP has agreed to sell a majority stake in its Castrol unit to the investment firm Stone Peak Partners. Under the deal, BP will get about $6 billion for a 65% stake in the lubricants business. The oil major had planned to divest $20 billion of assets by the end of 2027 to improve its balance sheet. It comes as Meg O'Neill prepares to take the helm of BP in April after running Australia's Woodside Energy. One of the co-founders of Brevin Howard Asset Management has left the UK, adding to concerns about the exodus of Britain's wealthy. Alan Howard has a net worth of roughly $4.3 billion and, according to a Bloomberg analysis of regulatory filings, now lives in Switzerland. Bloomberg's James Wilcock has more.
This year, Switzerland voted to reject a 50% inheritance tax, while Britain expanded its version of the levy. Alan Howard may have followed the incentives. The Brevin Howard co-founder declined to comment to Bloomberg for the story, but the billionaire now joins the ranks of many of the financial elite we have reported on leaving the UK. That exodus is a worrying trend for the government, as it is banking on higher tax revenue and growth from the wealthy for its economic agenda. In London, James Woolcock, Bloomberg Radio.
The release of the so-called Epstein files has so far failed to satisfy the US public. The US Department of Justice has released thousands of pages of heavily redacted records and photos related to the convicted sex offender in the past week. But the document dump has drawn criticism for missing a December 19th deadline and for the heavy redactions. President Trump says the saga is unfairly tarnishing individuals.
A lot of people are very angry that pictures are being released of other people that really had nothing to do with Epstein, but they're in a picture with him because he was at a party, and you ruin the reputation of somebody. But I never went there, but a lot of people did go there.
President Trump speaking there during a news conference last night. Included in the latest batch of released files is an email sent from an individual named A, saying they are at the British royal family's Balmoral residence and asking Epstein associate Ghislaine Maxwell for, quote, inappropriate friends. In October, Andrew Mountbatten Windsor, formerly a prince and the Duke of York, lost his titles following scrutiny over his links with Epstein. Those are some of our top news stories today. Let's look at the markets. So it's a shorter trading day. Fewer markets are open across Europe, but London is trading. FTSE 100 is down 0.2%. The Euro Stoxx 600 overall just about in positive territory. US stock futures, though, fading down 0.1%. Very light trading volumes at the end of what has been a really stellar year for US and European stocks. Third year of US Stoxx 600 gains up 16% overall. So global stocks climbing to a record high at the end of this year. 10-year Treasury yields have been consolidating around 4.16. So UK yields at 4.52. As for those precious metal prices, gold $4,486, Bitcoin is down 1%, and Brent crude at $62.45. That's news when you want it with Bloomberg News Now. I'm Caroline Hepker, and this is Bloomberg.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
Are you looking for a new podcast about stuff related to money?
Well, today's your lucky day.
I'm Matt Levine.
And I'm Katie Greifeld.
And we are the hosts of Money
what he was doing.
Yeah.
And people also forget that, a lot of American history is built not on manufacturing and farming necessarily, but on hunting.
Have we ever done a hunting episode?
We haven't. And I find this whole part of US history so fascinating, and it actually really is intertwined with even how we think about money.
Yeah.
So, do you know where the term a buck came from? Lend me a buck, give me a buck.
Well, now I imagine it's probably from a deer or whatever.
Yeah.
But had it not been for this intro and the context, I actually would have had no idea.
Yeah, so hunting is actually embedded in the way we
monetary
talk
system.
about money. So that's what we're going to be talking about
I
today.
can't wait. A whole new avenue for us.
And I have to say, just on a personal note, something has happened to me recently, which is I have completely flipped on deer. I used to like them. I used to look out the window and be like, oh, these graceful animals.
Yeah.
Aren't they beautiful? But as of a week ago, they ate my entire newly planted garden, and I hate them.
Yeah, I get the impression that a lot of people, their view of deer flips pretty quickly when they're actually living in a location where they're prevalent. Like, it's like, oh, they're cute. Maybe you saw a movie about them or something like that. It's like, oh, who wants to hunt the deer? And then you confront them and you're like, maybe we need a little bit of population management, so to speak,
That's
with the
right.
deer community.
So my solution to this problem, I don't hunt personally. The only thing I hunt is like leftover Thanksgiving pumpkins on my property, which we target shoot. But we have a friend who loves to hunt.
Yeah.
And so he's going to be on our property hunting deer. And if you want some fresh venison,
I do.
Then let me know.
Have you arranged a deal with him where he can keep as much as you want? Like, does he tithe you 20% or whatever it is?
He pays us in meat.
Yeah.
Which is actually
That's what I
great
figured,
at the
yeah.
moment because beef prices are so insane.
You're so lucky. You're coal, like your meat, yeah, anyway.
I'm blessed in natural resources,
Yeah.
just like America.
That's right.
All right. Well, I'm happy to say we have the perfect guest to talk about all of this. Someone who I'm very excited to be talking to, actually. We have Stephen Ranella. He is the author and founder of Meat Eater and knows all about hunting and all about this particular aspect of U.S. economic history. So, Steve, welcome to the show.
Hey, thank you for having me on. I'm dying to jump in and offer a few clarifications and corrections on our friend Daniel Boone. When you're ready.
Why don't we just start? Tell us everything we got wrong in the intro. Just go for it.
Yeah, Boone did not like coonskin caps. That was a thing that was added on later through Disney depictions.
Yeah.
Boone wore a wide-brimmed hat made from beaver wool felt, which is still the material of choice for high-end cowboy hats. Raccoons, there was a commodity for a long time in different tallows and greases.
Mm-hmm.
They used to hunt raccoons and possums and actually render the oil from them.
Oh, wow.
Just as an example, I'm holding in my hand right now a 1-quart jar of rendered coon grease, which I made for a buddy of mine just as a present.
What do you actually
What do you do with
that?
Can you make candles?
Well, I haven't done anything with it. Yeah, you definitely make soap, candles, you can cook with it. In fact, when the English were first strategizing around establishing their first colony in the New World, and they had a sort of a list of ways that they might monetize this colony, on that list was like animal oils, animal greases. So, yeah, Boone was in the deerskin trade, but he also was in the bear grease trade and the animal oil trade, as was Davy Crockett, who wore the coonskin cap, but was kind of mocked by his contemporaries, but he was a showboat. And he wore it to create this atmosphere of this every man's backwoodsman, but it wasn't regarded as a practical hat.
Oh, so
he
he's
just
a real
wore it
poser.
to draw attention to himself. He was a showboat. Crockett was a showboat. Boone was a professional.
I love the idea of all these like manly pioneering hunters critiquing each other's outfits.
I also like the idea. Of like, oh, when hunters get together, they argue about, are you a Daniel Boone man or a Davy Crockett man? Oh, your guy was a total showboat. He was a fraud. No one would have ever worn that hat. And the other was like, oh, no, he did this. Yeah, all of these.
My dear friend who I'm giving that one of my jars of coon grease to, he is a Crockett man, and I'm a Boone man. And we fight about this all the time.
I'm a Boone man.
The other thing is, one last comment just to get caught up. Were you to formalize the arrangement with your deer hunter,
Mm-hmm.
if you were to formalize that arrangement where there was a expected quid pro quo around deer meat for access, you would be in violation of the law. You need to keep it non-formalized.
Oh, okay. That's good to know.
You can gift him access. He can gift you meat, But the minute you formalize that transaction, you would be commodifying wild game meat, which is illegal in this country.
This is important.
Tracy just admitted to a crime.
No.
I've already reported her.
I specifically said we don't have a formal agreement. We're trading informally.
I've already learned so much on this. If we ended the episode right here, I would have learned so many more things that I didn't know when I woke up this morning.
And you'd be looking for a new co-host because yours would be locked up.
You'd be literally in prison for accepting venison.
Okay, well, let's not stop here. Let's keep going. Steve, you mentioned that when England was colonizing the U.S., one of the big draws was animal grease and animal products. Talk to us a little bit more, because I think when people think about the colonization of the New World, a lot of people think about tobacco and farming and agriculture, but hunting and animal products were actually a really big part of it.
Yeah, in the early colonial period, one of our biggest ports was, coming out of Charleston, out of South Carolina. So at a time, in the late colonial period, so prior to the Revolutionary War, deer skins in economic value, whitetail deer skins were the second largest commodity coming out of the colonies.
Wow.
The first one being rice.
Whoa.
So the animal grease thing was a thing, but it was dwarfed by the deer skin trade. If you look at these old paintings you see of the King of England around the time of the colonial period, you'll sometimes notice that they're wearing a white breech or a white pant, a seeming white pant.
Mm-hmm.
That's buckskin. Buckskin was used as workwear, but it was also something that the affluent individuals wore, those white breeches, those white buckskin pants. It was a preferred material for clothing making. There's a historian, Mac Farragher, and he wrote a piece about the early colonial period, and he remarked that among colonial Americans, so Euro-American, colonial Americans, and Native Americans alike, black bear meat was the food of choice.
Huh.
Deer skin was the material of choice. So they were hunting bears. That was the good stuff to eat. Deer were what you made your clothes from.
I'm surprised about the bear meat. Does bear taste good?
Yeah, it's very beef-like in texture. It's phenomenal. It's one of those things that in some levels, there's a cultural taboo around it. As you'll see, Florida right now is running a very controversial black bear hunt. People get worked up about it. But yeah, it's an excellent food. It was a very prized food at the time. Another business that Daniel Boone was into was producing a product called bear bacon, which was consumed domestically.
Whoa.
Yes, smoked bacon. It would be plausible that Ben Franklin, he could have walked down to a market in Philadelphia, and he would have been able to purchase bear bacon or smoked black bear hams. It was a very popular food item. Bear can carry trichinosis. Most cases of trichinosis in the U.S. today do not come from hogs. It mostly comes from black bear. You have to cook it. So for that reason, a lot of people have an idea that it should be avoided. But my family, we eat prodigious amounts of it.
Wow. I want to, can I come by sometime and have some bear bacon or bear steak or whatever?
Anytime, man. Anytime. Knock on the door. I will cook it for you, and I can fry you some up in bear grease if you'd like.
I think let's do a video series. Let's go on the road. I already have a million questions. Can we just back up a second? For the listeners, can you tell us your story a little bit? Why are we talking to you? What's your background?
Oh, so yeah, I grew up in Michigan. I was born into a hunting family. That was kind of our identity. My father was a very avid hunter. He came home from World War II and just hunted, and I was brought up around it. I pursued a career first in trapping. Throughout high school, I was convinced I was going to be a fur trapper. I became interested in writing, went to graduate school for writing. Starting in 2000, when I finished school, I became a professional long-form magazine writer, started doing books, and all my stuff has always been in the outdoor space. Eventually got into television, started doing a show called Meat Eater, and we turned Meat Eater into a full-fledged business. We have a media arm where I spend the bulk of my time, but we also work and we have a lot of consumer products. We have 4 outdoor gear companies, which live under the Meat Eater umbrella. And I've intended to make a living in the outdoors when I was a kid. And I mostly succeeded at that. I get to spend a lot of time outdoors, and I get to spend a lot of time thinking about issues of how hunting plays into contemporary American culture and how hunting shaped our country and shaped our national experience.
Yeah,
Amazing.
I got to plug Steve's, I think it's an Audible series on like the history of hunting in the US, where there's a whole episode on long hunters that I've been listening to.
Mm-hmm.
I gotta
Also
check
one
it
on
out.
like buffalo in the 1800s. They're really good.
Yeah, it's called
Amazing.
Meat Eaters American History, and it's a audio original through Random House Penguin.
Yeah.
And we've done 3 so far on different commodity trades in American history all around wildlife.
So one thing that I did learn from the Audible series on long hunters is the American hunting system in the sort of 1600s, 1700s, when colonials started coming over to what would become the United States, was very different to how hunting was done in Europe, right? In
Yes.
Europe, hunting was like the purview of landowners and rich people. But in America, I guess there were no rules and everyone could hunt animals.
Yeah, a good way to think about it. I often remind people to think back to certain details of the Robin Hood story, where you have the king's deer, okay? And part of Robin Hood's gig, right, is he'll go hunt on the king's estate to get venison, which you would then distribute to the poor. It's part of the Robin Hood narrative. So yeah, in England and in Western Europe, by that point, things were heavily developed. The woods, the wilderness was gone. Having access to wild landscapes was something that was relegated only to the most wealthy. You could have your eyes gouged out. You could be executed for hunting animals that belonged to the aristocracy. So when American colonists started showing up, like Boone's family came from England, they did not arrive here as hunters. They did not arrive with a hunting background. They adopted it. The colonists, like Boone's family, for instance, they were Quakers. His people were. But the American colonists were as impacted by Native Americans as Native Americans were impacted by American colonists. You could see it in Boone's dress. He would plait his hair. He would braid his hair. He would grease his hair with bear grease. He would wear buckskin. He would hunt the animals that Native Americans taught him to hunt. He would cook them in that way. He would make his clothes in that way. So they adopted hunting as a way to make a living on the American landscape. Some of them were farmers through and through. Some became hunters through and through. And they were at odds. These hunting people, these kind of wild men like Boone in the colonial period, would always be hovering at the western edge of colonial expansion. England would try to rein in these American colonists. They would feel that they were kind of drifting too far out of colonial influence. And these American colonists like Boone, who were hunting for a living, would cause a lot of tension with Native Americans. And so the colonial powers didn't like these guys living this frontier wild existence because, again, they were drifting away from the crown and they were causing animosity with Native Americans who would then blame the English for these incursions onto their landscape. So it was like a rich kind of area of adoption of a
Selling you a future where you're obsolete, or worse, identical. At Palantir, they're witnessing something different and revolutionary. From reindustrializing the nation's defense base to shipyard workers building faster and frontline workers boosting productivity, AI is transforming work across the nation. AI is not replacing American workers or flattening them into conformity. It's unleashing what makes each one irreplaceable: their judgment, their craft, their creativity. When American workers become more powerfully themselves, they own the future. Palantir, making Americans irreplaceable.
This is Tom Keene, inviting you to join me for the Bloomberg Surveillance Podcast. It's about making you smarter each and every business day. We bring you a recap of what happened overnight in Europe and Asia, the day's economic data, and complete coverage of the U.S. market open. We cover stocks, bonds, commodities, currencies, even crypto, all the information you need to excel. Bloomberg Surveillance also brings you the analysis behind the headlines. We do that with lengthy conversations with our expert guests, the smartest names in economics, finance, investment, and international relations. We do all this live each and every weekday, then bring you the best analysis in our daily podcast. Search for Bloomberg Surveillance on YouTube, Apple, Spotify, or anywhere else you listen. On the East Coast, listen at lunch, and on the West Coast when you wake up. That's the Bloomberg Surveillance Podcast with me, Tom Keene, along with Paul Sweeney and Lisa Mateo. Subscribe today wherever you get your podcasts.
Are you watching the new Ken Burns documentary at all?
No, but everyone else is, it seems like. I'm going to.
I've watched the first episode so far, and it's just interesting because obviously, you know, the version of independence that we learned about in school was just incredibly simplified. And this idea that there really were all different kinds of tensions between the colonists and the sort of norms and the laws and the rules of the old country are really striking. I hadn't really appreciated this dimension before about the hunting, but I think it, you know, really shows how, I guess from day one, there was a certain, I don't know if egalitarian was democratic element of colonial society that sounds very distinctly different from where they were coming from.
Yeah, there's an interesting passage where George Washington, criticizes folks like Boone. He criticizes these frontier individuals that are living off the land out on the frontier and market hunting. He criticizes them because he feels like a tip of the hat would push them over to the Spanish or whoever, like whatever other colonial entity was out there. He did not feel that they were adequately American. And then as much as Boone has been adopted, there's one guy joked that Boone has become an honorary founding father. As much as Boone has been adopted as this American icon, Boone and his contemporaries, so again, speaking of these long hunters, these colonial white-tailed deerskin hunters, they would not have identified as American loosely, but they would identify it in family clans, and they were not what you would call, if you look at around the Revolutionary period, you would not refer to these guys as patriots. They were opportunists, and they were mostly beholden to small villages made up of people they were related to, these networks. That was their allegiance.
Didn't Boone actually end up striking a deal with the Spanish for land? That's one thing I learned from the series.
Yeah, again, like the same way, like he's an honorary founding father. Boone, in some ways, is the father of Kentucky. He was not the first, but one of the first people to go through this thing called the Cumberland Gap and start hunting in what is now Kentucky. He got fed up with the government there. He got fed up with America. When Spain had the Louisiana Territory, Spain was trying to fill the place up. He struck a deal with Boone and his people where they would become subjects of the Spanish crown in exchange for money. And so Boone moved out and he moved west of the Missouri River and became a Spanish subject. He swore that he would never step foot back in Kentucky again. When Boone died, so Boone lived through the Louisiana Purchase and became again an American just through the fact that America bought the Louisiana Purchase. He died and was buried in Missouri and was later exhumed and brought back to Kentucky, even though in his lifetime he said, I'll never step foot back there. So people like to say Missouri has his heart, meaning his soft tissues. Kentucky has his bones. And there's like this little ongoing dispute about whether or not they really dug up the right guy and reburied him. But yeah, Boone willfully left American rule to go live under a different crown. He was married to the hunt and he was married to his family clan. That was how he identified.
That's super interesting. Tell me about a long hunt. What are the logistics? Sounds difficult. What are the logistics of a long hunt?
Yeah, the logistics of a long hunt, it was very decentralized. Unlike if we have time and we get into the beaver skin trade of these American icons like Jim Bridger, Jed Smith, John Coulter, these guys that were engaged in the Rocky Mountain beaver trade, which was very formalized, very top down. The long hunter area, so this colonial deerskin hunting area, was very decentralized. A group of long hunters were probably mostly family networks. So it'd be maybe a patriarch, his kids, his sons-in-law, okay, his cousins, and they would embark on these very long trips. They would leave these frontier colonial establishments, let's say the Yadkin Valley in North Carolina. A ton of long hunters came out of the Yadkin Valley in North Carolina. They would travel over the Appalachian Range, and they would drop down into Kentucky, portions of Tennessee, and they would hunt deer skins. They might be gone 6 months. I think Boone's longest long hunt was 2 years. It was all based off pack trains. So everything was based off of using horses to carry stuff. And they would build up a year's worth of deer skins. In the winter, the deer skins weren't as valuable, so they'd switch their efforts to beaver and otter trapping. They would transport all those deer skins back across the Appalachian Divide and sell them. A good price, a way to think about it again, is they were worth about $1, which was a lot of money back then. And some would go to tanneries in Philadelphia, Boston, and New York, but the bulk would be shipped to tanneries in England to be turned into leather for making breeches and gloves and other high-end items. And that was the economy. And these were farming people, but this was their only access to cash. Much of what they did was black market, to be honest with you, in two ways. When they would cross the Appalachians to go hunt, they were doing it against the wishes of the crown, which again did not want to antagonize Native Americans because it caused warfare and trouble. They were also doing it in violation of Native American claims to the land. So when they would go into Kentucky, they were hunting on, say, Shawnee land. So they were sort of doubly trespassing, but that's how they made their living. And it allowed them to live very isolated existences, and it gave them a cash economy so they could buy guns and other things that they couldn't trade corn for.
Wait, I'm going to take the bait on the beaver trade that you just mentioned.
Sure.
So talk to us, how is that formalized and how does it contrast with the long hunters?
Yeah, the beaver skin trade had been going for a long, long time. So, when the Dutch first came to Manhattan, one of the primary things they were after is beaver skins. Beavers, it's surprisingly easy to wipe them out. So if you look at American history from the colonial period on, we had a way, because of unregulated trapping, we had a way that ahead of civilization would mark a depopulation of beavers. So if we fast forward up to the Lewis and Clark expedition, here we do the Louisiana Purchase. Thomas Jefferson dispatches the Lewis and Clark expedition to go find a mostly water route to the Pacific and also to look at natural resource abundance, right? Lewis and Clark come back and they report mind-boggling numbers of beavers in the Intermountain West, all right? Right away, right on their heels goes a bunch of American trappers out to explore this land and trade in beavers. A beaver pelt was, going for maybe $3. That's more than you'd make in a day as a laborer. It was real money. But guys got onto it and they formalized it, and people would go out and get investors. Okay, a group would go out and get investors. Well, for instance, Astor. If you go to Astor Place in New York, Astor was America's first homemade millionaire. Astor's first business was the beaver trade. So guys would get investors. They would run advertisements to hire trappers. If you look at these really famous mountain men, like for instance, Jim Bridger, these guys answered an ad in a newspaper. They ran an ad that says, looking for 100 enterprising young men. And these young guys, some of them escaped indentured servants, people running away from apprenticeships, would go hire on as a fur brigade. And they would hire on as a day rate. And they would be backed by financial backers, and they would send these young men out to the Intermountain West to trap beaver as a day laborer. In time, some of these guys would spin off and do their own thing and go independent, but it was a very formalized structure that was sending these young men out to catch beaver in order to bring them back, and they would be exported and turned into wool felt. If you look back to like Abe Lincoln's hat, okay? Abe Lincoln didn't wear a beaver wool felt hat. He wore a silk hat, which we'll get to. But that style of hat was the rage in Europe. All sophisticated men, many poor people who aspired to look more affluent, would wear one of these top hats. They were made from beaver wool felt. So that was a huge export industry coming out of it. And again, it became formalized. And what killed it is they were too effective. Two things killed the trade. One, they were running out of beaver anyway. And then a fashion change crashed the industry. And it was probably a good thing that it did, because they may have pretty much exterminated the animals from the landscape. I probably got a little ahead of you there, but that's the story.
That's great.
That's great.
And actually, the thing about the fashion change reminds me of one of my all-time favorite bubbles, market bubbles, which was the ostrich feather bubble in the 1800s, where women would want ostrich feathers for their hats. And they became really, really expensive. And then the bubble burst and all these ostrich farmers, mostly in Africa, I think, went bust.
Yeah, that was, they called it the plenary trade, and all kinds of shorebirds. And it's hard to picture now, but you could just, without regulation in coastal areas of the country, go hunt herons, egrets to sell the feathers to adorn hats.
You know, it's funny when you think about like conservation efforts, or you think about endangered species, all these ideas feel very modern to me. Like, you know, maybe they started thinking about this stuff in the 1970s or whatever. But obviously that's not the case. How early on in the process of the hunting or hunting history did people start becoming aware of the fact that without some sort of regulation or laws or curbs, that this natural resources could be irreversibly depleted?
Surprisingly early. And I'll get to some of the earliest examples, but I want to clarify what I think motivations might have been. Some of the earliest examples we see of a conservation effort would even be in the colonial period. And I was trying to put some parameters around deer hunting. Okay. Because again, these were valuable animals for people to use for material. So when we see people trying to get to put in hunting seasons, like not to kill them when they're fawning, when they're dropping their fawns, or put in restrictions about outsiders coming in to hunt, they probably weren't motivated by some sort of environmental ethic. They were motivated by guarding and protecting a resource. When you start to see an emergence of a real, more emotional, spiritual, environmental movement is in the late 1800s, and its birth is this. Its birth is gentleman hunters, such as Theodore Roosevelt, okay? You have these gentleman hunters that want to connect to this piece of American history or American culture, but they're recognizing that unregulated hunting, this unregulated market hunting that we've been discussing, is going to make hunting impossible, because these unregulated commodity hunters are going to drive everything to extinction. So in order to save wildlife and save hunting, which they recognize as a very important piece of American culture, they needed to sort of bifurcate American hunting efforts into sport hunting, which was regulated and had an environmental ethic or a conservation ethic, and unregulated market hunting, which is what we've been discussing. One of the great ironies is this. One of the earliest conservation organizations that Theodore Roosevelt was involved in founding, involved in running, is called the Boone and Crockett Club. And they're still a major player in American conservation today. What's ironic is the names Boone and Crockett, which Americans today hear and they think of hunting. Yeah. But these were just the kind of individuals that the Boone and Crockett Club needed to stop in order to save American hunting, was these market hunters who were out there doing nothing to compensate the American people for the wildlife they were taking. And they would kill it all. And once they killed it all, they'd move a little bit west and kill all of that. And they about undid American wildlife.
Yeah, so there's a tragedy of the commons dynamic going on here, where you have this public resource, which is animals. And if too many people tap into it, the public resource ceases to exist. Can you talk a little bit about the buffalo trade? Because I think this is probably the biggest example of that dynamic actually happening.
Yeah, it's the biggest, most regrettable example. And when I say it's regrettable, it's because by this point we meaning news reading, engaged, educated Americans knew where this was headed. Okay. And I'll back up a little bit. So if we get to the time of European contact in the New World, there were maybe, the fashionable number today is somewhere around 30 to 40 million American bison or buffalo. Those words are the same thing. 40 million to 30 million buffalo on the American landscape. By the end of the Civil War, they've been removed from the eastern part of the country. So, at a time, there would have been buffalo in New Orleans. There would have been buffalo in present-day Washington, D.C. There would have been buffalo in present-day Nashville. All those had been wiped out by hunters. At the end of the Civil War, there's probably about 15 million of them on the Great Plains, which has always been the nexus of the population. That's where the bulk of the animals were. The country really turned westward after the Civil War. Once the South, the Union was saved, we sent our army out to pacify hostile tribes in the West and to protect economic interests in the West. And with that shift westward, we started looking for leather resources out west. And they identified this 15 million buffalo. There was nothing special about buffalo leather. We had an insatiable appetite for leather. What became is we needed it to produce industrial belting. Okay. Leather prices shot up. We were producing industrial belting to drive the Industrial Revolution. And the animals were just yet another source of leather. But they could be gotten for no investment. Okay. A buffalo hide, let's say it's worth $3.50, $4, where the foreman at a tannery would make $3.50 a day. But a buffalo hide hunter could kill 20 or 30 buffalo a day and sell the hides at $3.50 a piece. And he didn't have to put any money into it. You're not raising them. Yeah. You're not feeding them. It's totally different than cattle. They're just out there.
Oh, yeah. Is it true that the buffalo just stood there while the hunters shot at them? They didn't really understand?
No.
Okay.
It's not true. They were just so good at what they did. They knew how to make that happen.
Okay.
This is a complicated thing you get into where you want to look at what they did and you want to look at the atrocity of what they did. And what it causes people to miss is, this is going to sound weird, it causes people to miss the professionalism and skill set that goes into this. Mm-hmm. A big part of my career is reconciling the skill set, the dedication, the bravery against the atrocity, right? But no, they wouldn't just stand there. These guys were masters. They were experts at what they did. And they knew how to get that outcome. You would not go out and get that same outcome. You would go out and not get any. I don't mean to hack on you.
No,
you wouldn't get any.
I have no doubt I would be unable to shoot a buffalo. That's fine.
I don't even mean you wouldn't be able to get one because of emotional or constraints. It's just they were so good. They were trained their whole life to do this. They were too good. And this is one of the most astounding things. When they start really getting after them, around 1872, the market really opens up. In American tanneries, the appetite for these buffalo hides really opens up to where they're like, we'll take as many as we can get. That hits in 1872, and it's subject to the fact that the railroad hits Dodge City, Kansas. Okay. So now you can load these things on a train and send them to tanneries. By 1883, 11 years later, that 15 million animals is gone. It compressed everything. It took forever to almost wipe out beaver. It took for hundreds of years to almost wipe out white-tailed deer. With the buffalo, they were so good at it. And the country was so primed industrially. We were so primed with railroads, with big tanneries, the tannery buildings that were, 1,000 yards long, that we could just, bam, burn through a resource with astonishing quickness. And the crazy part about it is once they shot them out, it didn't even affect leather prices. A buffalo hide at the peak could be worth $5. So you would think once they killed them all, the market should spike.
Right.
There's scarcity. The last ones were selling at the same price as the first ones because in the end, it didn't matter. They could buy cattle in South America. They could get leather from anywhere. So we killed them all, and it wasn't like we needed them. It was a drop in the bucket for leather production.
So there was no market mechanism because there was just so much abundant leather from multiple sources. There was no market mechanism curbing the hunters.
No, it was just...
Yeah, it's interesting.
They were worth what they were worth. They were worth what a cowhide was worth. It was just that they could get them for free, and when they got them, it didn't affect anything. The Industrial Revolution and leather belting was still produced and still produced and still produced. So it almost makes it seem more shameful in the end that it would be we would have, the country would have accomplished what we accomplished with the Industrial Revolution had we never even exploited that resource.
Crazy. Also, I never thought about any of this. I certainly never thought about the connection between the Industrial Revolution. I just imagine these ancient factories with a bunch of wheels and these belts that are pulling the wheels and how that is connected to, I guess something had to be turning the wheels. I just never really thought about what it was.
Yeah, there's a great photo. It was later, but it was a great photo, and it's in a Ford manufacturing plant. And it's these lathing machines. And the photo explains that overhead of the workers are 50 miles of leather belting.
Gangsters trick the top government official?
Or how the only copy of a Wu-Tang Clan album got auctioned for millions of dollars by the Department of Justice.
The answers are out there.
The trick is getting the government to share them.
I'm investigative journalist Jason Leopold. I spend most of my days getting documents from the government.
I'm attorney Matt Topic, and I fight them in court to open their files when they don't want to.
From Bloomberg and No Smiling, this is Disclosure, a podcast about prying loose government secrets. To listen early and ad-free on Apple Podcasts, subscribe now at Bloomberg.com/podcast offer.
What happened such that ultimately we still have bison? Because the population eventually, right, they didn't quite kill them all, and now we've rebuilt the bison stock in the country. What happened such that we didn't quite go all the way and completely make this animal extinct?
I'm a little bit hesitant to say this because it's when it comes to the conservation history of America, it's a little bit of an anomaly. But what happened to save them is private ownership. We shot them all down to the point where there was just a couple scattered animals here and there.
Yeah.
Even at one time, a guy named William T. Hornaday, who was a taxidermist and mammal expert, he wrote letters around the country trying to see who had a few. And there was a handful of eccentrics around the country that had managed to go out and rope some and save them, maybe even feed them off domestic cows when they were calves. And these kind of slowly got brought into little herds. Interestingly, some got brought to the Bronx Zoo. When they started trying to repopulate little protected populations in the West, another great irony is they were moving animals from the Bronx Zoo out to Oklahoma to turn them loose. Like, that's how bad it got. And even today, like we really haven't recovered we've saved them from genetic extinction.
Yeah.
So there's about 500,000 in existence. 94% of them are privately owned. What we haven't saved them from is ecological extinction. Of all American wildlife, of all Native American wildlife, grizzly bears, black bears, elk, bighorn sheep, on and on and on. The buffalo, the bison, is the only animal that does not have the rights of a wild animal. If a buffalo walks off of National Park and comes into Montana, he becomes livestock. He becomes under the authority of the Department of Livestock. We do not accept them as wild animals anymore, which in my view is a great sin.
We could go for like 3 or 4 hours on
Easy.
this conversation.
Easy, but we can't. So I'm going to take us up to, I guess, modern times. So when we were talking earlier about the long hunters, we discussed there's clearly this element of democracy and independence embedded in that particular system.
Mm-hmm.
And if you look at the way the modern hunting world, I guess, or system is structured, it feels like we're trying to solve that tension between people's rights to hunt animals and the conservation public resource aspect. Is that right?
Yeah, that's a good way of putting it. We live under now, when I say we in this case, I mean American hunters, American fishermen. We live under a very complex regulatory structure, which is self-made. Our community, modern American sportsmen, have built the system that we live under, a very, very tightly regulated pursuit. We've come up with this system. Earlier, we talked about how things were in Europe in colonial period. We now refer to that with some disdain as the European model, where a landowner owns the wildlife on their land. They control the wildlife on their land. We came up with a system where American wildlife is owned by the American people, administered on your behalf by fish and game agencies and by governmental entities. But American wildlife is American property. It doesn't matter whose land it's on. That has allowed us the ability to have a governing structure to control harvest for sustainability, because the state and in some cases the federal government, has authority over the animals, meaning you could have a big property and it has deer on it, but those deer are not yours to decide what you want to do with.
Yeah.
The deer belong to the people. You own the land.
You have to get permits.
Yep.
Talk to us a little bit about the contemporary market. My guess is it's booming. I don't mean literally the volume of hunting that's going on, although I bet that's... But like in your industry, in your world, outdoorsman media, people buying gear for all this stuff, my gut says that this is a hot area of the economy.
Oh, yeah. I mean, we have a huge economic impact. I mean, you have... any given year, 13 or 14 million Americans will buy a hunting license to go hunt. Over twice as many people will buy a fishing license to go fish. It generates billions of dollars in economic activity. But most of that economic activity is around gear and experiences, right? It's not economic activity about trading in deer in deer.
And it's also growing really fast, I take it? Or like what kind of growth have you seen?
It really spiked. No, it's remarkably stable.
Okay.
It really spiked during the pandemic, obviously as people turned to, making sourdough bread and cooking venison.
Back to the land.
There was spikes. It's remarkably stable over the years.
There are two types of Americans. There are sourdough Americans and they live in cities, and then venison Americans.
That's right.
Yeah.
Yeah.
So actually that reminds me. So one of the things that I took from the Long Hunter series is that gear is really important because you guys talk so much about the gear that the colonists and pioneers actually had. So I feel like there's an element of consumerism in the hunting community where people just collect guns and knives and things.
Oh, for sure.
Yeah.
Like me and my buddies, I mean, to be honest with you, when we're sitting around, and I hang out with a lot of people involved in the conservation movement. Me and my buddies, when we're sitting around, we mostly argue about gear.
Yeah.
I came up in media, but our company, we have a hunting apparel brand. We have a game call brand. We have a hunting decoy brand. We have a hunting accessory brand. So yeah, I mean, like gear it can't be separated out. In the same way Boone was adamant about what kind of hat he wore, I'm pretty adamant about what hat I wear. And that is like the economic activity today, is in large measure equipment and gear. And what's beautiful about it, and I want to throw this in, what's beautiful about it is that's how we fund conservation. So our industry in the 30s, we put ourselves under a 13% excise tax. So when you buy guns or ammunition, any gun purchase, guns, ammunition, sporting equipment, there's anywhere from 11 to 13% excise tax, which goes right into conservation spending. You go find me another industry that has anything comparable to that. It does not exist. And then our agencies that manage wildlife in America, all 50 states have a Fish and Wildlife Agency. Their funding comes from licenses, permits, and stamps paid by hunters and anglers. We're a self-funded group of Americans.
Yeah, it's a rare situation. It makes sense, right? Most industries don't voluntarily want to be taxed on everything. But when you think about the fact that there needs to be some resources to sustain the possibility of hunting for generations to come, it is sort of makes sense that this would be an industry in which you want there to be some sort of price of entry. If I became a hunter this winter, would you make fun of me? Like, would I be one of like those guys who it's like, okay, it's my first season hunting. I'm going to buy the most expensive rifle. I'm going to buy the most expensive hat. I'm going to buy the most expensive shoes. You must have a name like those types. And they like show up on the hunt with you and it's clear they like went through all the lists and just like bought the
Davy
top
Crockett.
one. Yeah, like the sort of like wannabes. It's like their first thing and they just go down the line and buy them, deck themselves out in the top of the line gear.
The name I have for those people is my buddies.
Okay.
I'm telling you, not a year goes by, man. Not a year goes by that I don't take out friends, family, whoever, people that are interested in hunting, curious about hunting, even sometimes uneasy with hunting, that I don't take them out and kind of explain the world. I have 3 young kids. I've been lucky to turn them all into, avid hunters, and we share that. So no, I like sharing this world. It's a world I care a lot about. I care about how it's perceived. Most Americans don't hunt. In some states like California and New Jersey, 1% of the population hunts. So in some ways, we live and exist with the blessing of the American public in general. So it's important to me for people to understand what we're up to how we think, and that we're willing to recognize the sins of our forefathers and have gone out of our way to correct those sins.
This is a slight tangent, but since we're on the subject of conservation, I'd be curious to get your thoughts. But what do you think about commercial hunting of endangered animals? So things like lions or, I don't know, buffalo of some sort in Africa. Because one argument I've heard is that these animals at the moment basically have negative value, right? Because they're living on land that you can't use for anything else because you have to conserve it because you need to protect the animals. But if you allow commercial hunting in a controlled way, you basically put an economic value on that animal such that, you know, it becomes something that people want to maintain and preserve and stick around.
Yeah, I would first want to just clarify. I don't mean to be a difficult guest, but be careful using the word endangered because it can be, when I say that, like in the US, we have the Endangered Species Act. We have a way that we formally declare things to be endangered. I think in the American imagination, Africa's far away. We hear the word endangered and it's not really open to certain levels of nuance about where and what. For instance, elk, right? Here in the United States, we have robust populations of elk across the American West. We have hunting seasons for elk. We have open hunting seasons for elk. But elk have only been restored across about 20% of their native range. Michigan was elk country. Wisconsin was elk country. Virginia was elk country. Elk have been wiped out of those places and not restored. So you might say, well, elk are endangered because they're not in Michigan and Wisconsin in appreciable numbers. Yet, in the American West, in some places, we have a problem with too many elk. So you got to be careful with words like that. But to get to the core of your question, yes, it is possible. There are places in Africa, and I'm not a subject matter expert on Africa like I am. I'm a subject matter expert on these issues in the United States. But in Africa, there are situations where money, like value to hunters, is able to put so much value on wildlife that the wildlife becomes worth protecting. Meaning people that are on the landscape will recognize the presence of wildlife generates so much economic activity that it's best not to kill it all off for use as bushmeat or other applications, or because it's a crop pest, or because it's dangerous to livestock. They'll recognize that, hey, that lion, that thing's worth $60,000. Half that money's coming to our village. Don't mess with that lion. I mean, that just happens. However you feel emotionally about the killing of lions, that's an economic reality in some places.
I feel like don't mess with lions is just good life
advice generally,
right? Yeah.
I just have one last question. You mentioned bear meat. I haven't had that much wild game in my life. I've had sausage with venison and pork, and like when I was out in Jackson Hole, I went to some restaurant and tried a few different like mini steaks.
Yeah, but that wasn't even wild game. That's just farm raised animals.
What should I try that I've probably never tried before? I like meat a lot. So what would I like out there?
Some of my favorites, really, mallard duck. So if you're in a park, you see that duck where the male has the iridescent green head. When you get those that have been in one place a while and haven't migrated lately, and they're getting on crops, they're getting in grain fields. One of my all-time favorite things, this is going to sound weird, but true, squirrel, properly done, would kind of blow your mind. Whoa. And it's partly the fun of it, like, because you have a preconceived notion of what it would be like. And then when you taste it, you'd think, I cannot believe that's that. That would kind of blow you away. And I think that you would be very, very surprised if you had a bear pot roast in a classic fashion with root vegetables, and a good broth. I think you would also say, like, I refuse to accept that that's what it is. And I wouldn't accept it had I not seen it happen.
I'd love it. I want a bear pot roast right now.
I'll bring you some venison ragu. That's what I've been making so far. Although, one thing I learned is that the fat content of venison is actually really low, so it's not very good for making things like burgers and stuff like that.
It with something.
It's very waxy.
Yeah.
It melts differently than beef fat, so it sets up in the inside of your mouth, and it doesn't freeze well. So if you want to freeze, when you get your venison from your hunter and you want to enjoy it for the next year, trim the fat away, trim the tallow away. And if you do that, it's basically archival once you put it in your freezer. If you leave that tallow on it, it's not. That tallow will turn even in your freezer.
Interesting.
Okay, my last question is, what would you recommend I make with venison?
I would start out by making the things that you like the most that are easiest to make. Like you mentioned,
ragu.
A ragu.
Yeah.
Making hamburgers, making things that you're comfortable making that aren't overly complex, don't have too many steps, just so you can go and find these kind of like points of comparison. If you and your family, if in the summer you like to grill burgers, like you like to grill up beef burgers, grill up a venison burger. Follow the same basic steps and just kind of get comfortable with the way it's a little different. And when you do that enough, you'll come to prefer it. My wife doesn't hunt, man. My wife doesn't like domestic meat. She doesn't like the taste of domestic meat because for the last 20 years, she's eaten nothing but game meat. She's gotten where she don't like it. She doesn't want to eat it.
We're going to have to wrap this conversation up, even though, as we mentioned before, we could go on for hours. I have to say, I hope my husband isn't listening to this because I am planning on getting one of Steve's cookbooks for venison for Christmas. So
all right.
That'll be fun.
I would love to sign it for him. If you want to reach out, I will send you.
Oh, that'd be amazing.
I'll send him a whole box of stuff if you reach out.
Oh, okay. I might. Well, of nominal value.
Of nominal value.
Bloomberg
That's right. You guys
Bloomberg
are actual journalists. So you can't do that.
A book would be nice for sure.
I know a lot of journalists, but not the kind like that. So,
Steve Rinella, thank you so much for coming on Odd Lots. That was a blast.
That was really fun.
A blast.
Hey, thank you for having me. It was a lot of fun.
Good one.
Appreciate it. Thank you.
Joe, that was so fun.
That was so fun. I don't know anything about that, but like we could have talked for 3 hours. There's so many things I'm curious about now.
It is underappreciated,
Totally.
I think, the role of hunting in America's economic development. And it's intertwining, I didn't even know this, with the Industrial Revolution,
didn't know about that either. It's exactly what I was going to say. I would have had no idea. And it's always sort of fascinating to think, like, you can't run a big factory if you don't have belts. Now, granted, according to Stephen, there were other sources of leather. But it's so interesting to think about, like, here is this thing that if you don't have an access to, like, one commodity or whatever. You know, there's a new book, by the way, out about rope that I want to have. And it's like a similar story about how crucial rope was. Anyway, it was so fascinating.
He mentioned squirrel meat at the end. So again, I'm just throwing out tidbits that I learned from his series. But, you can't really shoot a squirrel if you're going to eat it because they're so small. Right. The bullet would rips off all the meat. So the way the pioneers used to do it, apparently, is they would shoot at the tree that the squirrel was on and sort of like shock the squirrel to death, and it would fall out of the tree, and then you can eat it.
Wait, Tracy, can I ask you, it's a question that's sort of non-politically correct.
Dear.
Is it true that Germans can't pronounce the word squirrel?
Yes. Okay.
I've heard this before.
My personal experience, when I was a kid, I used to ask my uncle to say squirrel all the time just for laughs. And the way he says it is squirrel. And he struggles with it.
I just want an excuse to see if this was confirmed or denied.
Okay, now that we're talking about squirrels, shall we leave it there?
Let's leave it there.
All right, this has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Follow our guest, Stephen Rinella. He's at Stephen Rinella. Follow our producers, Carmen Rodriguez at Carmen Armendash.
Disney characters just give you the warm and fuzzies. I don't know what it is.
No, they do. They're timeless. They've been around for so long.
Who are your favorite characters?
Oh, I love Minnie. My daughter, Eliza, was so happy when we'd go to the parks and she'd see Minnie.
Classic.
Who's your favorite?
My favorite? Ariel.
Oh,
I feel like I always, she was curious. She finds her voice.
Yeah.
This is Disney. But so is this.
This is the way.
And this.
And
And even this.
I love a little chaos.
In other words, Disney contains multitudes. The company controls some of the most valuable IP and distribution channels in entertainment history and rakes in more than $90 billion a year. Exterior, daytime, Los Angeles. Enter Dana Walden, co-chair of Disney Entertainment and our guide to the Magic Kingdom.
Our stories have appealed to kids for 100 years. The pull of a Disney story is tremendous.
She spent 26 years at Fox, where she took the network from fourth to first with hit shows like Glee and Empire. And she's widely seen as one of Hollywood's savviest executives with a powerful web of talent relationships. But even veterans like Walden are facing challenges. As revenues from traditional TV and movie theaters decline, studios are battling for market share in the growing business of streaming. On top of all that, political challenges have put Disney and its subsidiaries like ABC in the spotlight.
At what point did you realize this was a problem? When they pulled the show off the air?
The stakes are high for Disney and for Walden, who's one of a few candidates with a shot at succeeding longtime CEO Bob Iger. That would certainly be a fairy tale ending. But first, she needs to help keep this iconic brand from turning into a pumpkin.
Is the golden age of entertainment behind us, or is the best still yet to come? You grew up in LA.
I did.
What drew you to Hollywood?
Well, it's actually funny. I grew up about 4 miles from here. Mm-hmm. My mom was in musical theater. She was a performer, and we watched a lot of TV together as a family. And then I remember when I was 12, my parents switched out the TV in the living room and got a new one. And I somehow convinced my mother to let me put the old one in my room. I didn't come out for about 5 years.
You landed a PR job at 20th Century Fox.
I did.
1992.
Mm-hmm. Notwithstanding that I came in on the PR side, I really had a passion for storytelling and creativity. I oversaw different businesses, but my heart was really always with our television studios. Chris Carter on The X-Files, Jim Brooks on The Simpsons. They really taught me how to understand storytelling and production, and it led to a 26-year career at Fox.
So Netflix kicks off the streaming boom. It takes Disney 6 years to get into streaming, launches Disney Plus in 2019, buys Fox to try to catch up. That's when you enter the scene. Mm-hmm. Did you feel like you were starting from behind?
I didn't really. At the time, I thought, what an amazing opportunity to join a company which is the gold standard in storytelling. Bob was so interested in acquiring those Fox assets because we had many, many seasons of the types of shows that built the foundation of Netflix subscriber base. And Disney Plus launched with, I think, 10 million subscribers in the first 24 hours.
What makes you think consumers are going to pay for this on top of everything else they're already paying for?
Disney, Pixar, Marvel, Star Wars, National Geographic.
So we did not feel by any stretch that we were behind.
Walden joined Disney as co-chair of the entertainment division, focusing on TV shows, while Alan Bergman oversees feature films. But entertainment is only one piece of the Disney empire. There's also experiences, parks and cruises, and sports, ESPN. And all of Disney's pieces work together. Popular IP from entertainment gets translated into experiences and products, forming the Disney flywheel, a uniquely powerful system for generating revenue across the company.
So you oversee now one of the largest creative portfolios in the world, between Hulu and Disney Plus and FX and ABC. How do you see all these pieces fitting together inside the Disney universe?
We have such a vast array of stories. And when we think about our distribution ecosystem, we think about it as an integrated television business or an integrated entertainment business, which leads to the question of our linear channels. Live is really a specialty of linear and of broadcast television. And Dancing with the Stars is up something incredible, like 60%. Mm-hmm. And I think that's a combination of we're simulcasting it across our streaming services and ABC. Younger subscribers are watching it on Disney Plus. We're serving fans wherever they want to watch our shows.
Overseeing such a broad array of shows requires a certain skill at managing talent, hence the montage of famous faces. Walden has helped bring some of the biggest stars on Earth into the Disneyverse. Enter megastar.
Hi. How are you? Nice to see you.
Bringing the Kardashians to Hulu was an early coup for Walden's Disney tenure. Their refreshed reality series, The Kardashians, premiered on Hulu in 2020 and quickly became one of the streamer's biggest hits.
Obviously, you had a long and super successful run at NBC Universal. What does being inside Disney make possible that wasn't before?
You get one free crazy VIP Disney experience for every cast member for free a year. That's pretty amazing. But it's just a great place to be. It's super supportive.
You were looking for a new home for the show,
Yes.
and Disney and Dana Walden came knocking.
It was the next evolution of us, maybe elevating our show, giving it a different look, being able to continue what we were doing, but having a different experience.
What is Kris Jenner like in a negotiation?
I think I'm tough, but I think I'm firm, I'm direct. I think I know what we want by now. Sometimes I get a giggle when an offer comes in and I'm able to, double what just came in at us and, kind of say, see, I still might have it, Mom still might have it.
Kim Kardashian is also making her move into scripted series, starring in Hulu's All's Fair, a new legal drama from prolific showrunner Ryan Murphy.
We'll make you full partner and a multi-millionaire within 2 years.
The show hasn't exactly been a critical darling, but it had a global press tour and premiered to decent ratings.
Ryan Murphy came up with this concept. We were brainstorming of a show to do, and he knew about my law school journey and thought that it would be the best idea to come up with like an all-female cast of family law attorneys. I know Ryan wanted to make sure that I felt comfortable, but a little outside of my normal self. So he really worked hard to write a character that he knew that I could play. I've just been that personality type where I want to figure it out. I really do enjoy growing and learning. When I stop is like when life will get a little boring. I love a little chaos.
Murphy previously worked with Walden at Fox, then landed a big deal making shows for Netflix, before Walden brought him into the Disney fold.
You and Dana Walden go back to the Nip Tuck days.
Mhm.
What's your relationship like with her?
In the case of like All's Fair, she read every script. She gave me a lot of notes, which I love. I love a note. Well, I really don't. But she did give me a lot of input. I did like 7 different cuts of that pilot for her. Because her thing with talent is don't give up. It can always be better.
What's your approach to talent, especially when you have to say no?
Well, saying no is very hard. These are people who I not only respect, but I care about. In a lot of cases, a fast no is the second best thing to a yes, because it enables great partners to move on and find the thing that is going to be explosive and can be a big hit.
Speaking of hits and misses, cue the pensive music, because Disney's financials have had some of both lately. Revenue from movies and linear TV has been down. And while Disney's streaming business turned a profit for the first time in 2024, it's still well behind Netflix.
Some of the critics would say that Disney Entertainment is in a tough spot. How do you see it?
It depends on, what moment in time. We are growing all of those important metrics. I can't speak to whether expectations keep being set beyond where we're delivering, but the growth is there.
The competition is fierce. Between Netflix and Apple and Amazon and YouTube, Netflix is arguably the one to chase. How are you different from Netflix?
Well, it's very clear Netflix has done an extraordinary job, and they really have developed into a utility, right? They, in many situations, that is the place you go when you don't know what you want to watch, but you're going to watch TV.
Would you say there's a difference in terms of quality versus quantity as well?
Oh, no question. No question. We've never been in the quantity. We're not trying to create a fire hose of content. We're trying to curate.
That said, Netflix shares are up 80 times. Since the start of the streaming boom, Disney shares have about doubled. And Netflix's market cap is about twice the size of Disney now. What's your message to investors?
Both services can coexist, and I think we keep making quarterly gains, both in terms of revenue, NOI, in terms of subscribers and engagements. Virtually impossible to start from scratch, and it's also really difficult to do it without that IP.
Hard cut to interior, hospital. Well, a hospital set, anyway. While traditional TV networks have struggled lately, they're also home to some enduring hits, like ABC's Grey's Anatomy.
So tell me your symptoms.
The long-running drama is now in its 22nd season.
Here's a Grey's elevator, very famous. Elevators are very famous on Grey's.
A lot of stuff happens in the elevator.
A lot of stuff happens on the elevator.
I mean, if I went down, would I want you to be the one
No,
here?
you wouldn't. No. But I know a lot of doctors.
Okay.
I know who to call. I don't know where the bodies are.
We're looking for the bodies.
Look.
Oh my God. Well, I am sufficiently horrified. I have to tell you that Grey's night was the best night when I started watching Grey's.
Mm-hmm. Still Thursday.
It's still Thursday.
Thursday. I think we've been at every time slot.
What's your take on this moment in time in Hollywood?
There's so much content out there, whether it's television shows or TikTok or whatever it is. So it's a lot harder to grab an audience, to hold an audience. And I think that's part of the success of Grey's, is that we did have such a head start and we had such a built-in audience that we've been able to sustain even through all the noise and all the content out there.
Disney TV is also leaning into more global stories, like FX's Shogun, in hopes of pulling in more international audiences. The show was FX's biggest hit ever. Hiroyuki Sanada starred and produced, helping the show stay
global and localized content. What does that mean? You know, what markets are on the table? What's off the table?
Disney Plus is currently in over 150 countries. We are not producing local originals in all of them. We are picking key countries in each of the regions and developing original content there.
Squid Game and The Crown are major hits. Like, Netflix does seem to be way ahead in this area. Can you catch up?
Well, I think you can. I think you just named two shows. We had a massive hit in Korea with a show called Moving.
나에게는 비밀이 있다.
That signed up, millions of subscribers. So absolutely, the value of a hit continues to be very meaningful.
You do have 3 separate apps between Hulu and Disney Plus and ESPN. Is a Disney Super app coming?
Yeah, you know what? We're on the path to delivering that experience all in one place and making sure that Disney Plus is a place where the environment feels like it is personalized and specific to you. And that is the direction we're moving, because we think ultimately it's easier. It reduces the friction.
So this is where the magic happens.
Yeah. Welcome to TV animation, where they do such great work working on so many shows. It's really where the magic starts for our youngest fans.
You've spent your life on studio lots. Does it ever get old?
Never. You're passing a stage where some iconic film was shot, and it's just delightful. You're reminded of an industry that is just served for many, many years to just entertain people.
I grew up on Disney, so much Disney. My kids often go to YouTube first. How do you change that?
Well, are they going to YouTube and engaging with Disney content? Because I will say we have
sometimes
a number of channels up on YouTube. We want to be where our fans are, and that means third-party platforms like TikTok, Instagram, obviously YouTube.
Things like Bluey, things like Coco Melon, that's not Disney IP. Does that matter?
No, I think parents enjoy it, kids love it, but the attributes of a Disney story, beloved characters.
What? It wasn't me!
The music, it fits in with our IP. Every story doesn't have to be based specifically on our IP.
But all of these stories and characters could take on a different meaning as technology brings new challenges and opportunities to the entertainment business.
I've been wanting to talk about AI. Obviously, this is like the next big disruption. This is a company that has prided itself on storytelling for 100 years. And now a computer is getting scary good at doing a lot of things.
In terms of our premium stories and how we think about AI, either bending the cost curve or helping us to be faster, more efficient, we are approaching all of that together with the actors, the writers, directors who are our partners and have very strong feelings about what is a uniquely human story and how to protect the contributors in that process.
Bob talked about being excited about the potential for AI-generated content on Disney+, user-generated videos that people could also watch. Is it still Disney magic if it's AI created?
Disney magic is storytelling. It doesn't have to be any one form. So I think it is the fundamentals of a story are Disney. The technology has evolved rapidly throughout the history of the company.
Technology isn't the only pressure weighing on Disney and its channels like ABC. In September, late-night host Jimmy Kimmel came under fire from the Trump administration over remarks about Charlie Kirk's assassination. Walden and Bob Iger decided to suspend Kimmel, then, a few days later, to reinstate him.
Anyway, as I was saying before I was interrupted.
The episode raised concerns about the industry's ability to stand up for free speech, and many of Hollywood's biggest names spoke out against Kimmel's suspension.
Let's talk about Kimmel. What happened? And what were the conversations between you and Bob and Jimmy?
We were thinking about only one thing as we made that decision very close to his show going back up on that Wednesday. And that was, the situation was extremely heated. We wanted to take the temperature down. We didn't think that was going to be possible that night. So we hit pause to have conversations with Jimmy. We wanted to resolve the situation in a certain way to protect our employees, to think about our audience.
Did President Trump call you or Bob or vice versa? Did you get any pressure from the White House?
He did not. We did not hear from them.
There are reports that cancellations of Disney Plus and Hulu spiked after the incident. How do you balance free speech and creative freedom in a polarized climate?
Well, I think those reports were highly exaggerated. You saw the number of subscribers that we reported during our earnings. We had a very strong quarter. I think that this issue is firmly in our past.
For Walden, handling the Kimmel crisis might have been good practice for what could be her next role.
Disney has clearly struggled with its succession planning in the past.
Disney has considered a co-CEO structure to replace Bob Iger.
What's the succession plan? What progress has been made on a successor? Will it be someone inside or outside? Can you share any?
It'll be someone great.
The biggest story in Hollywood now is who's going to be the next CEO of Disney. And, you know, there are pundits and analysts all over TV and podcasts talking about who's in the lead, and you're one of the leading candidates. So they're often talking about you. They're often pitting you against your colleagues. What's it been like for you on the inside?
Well, being pit against my colleagues, I don't appreciate because we have incredible relationships. We are a very tight organization, but I have enormous faith in where this company is going. There is a world-class team at this company who is navigating the path into the future.
What is the future of Disney? The company is so big, you might as well ask, what's the future of entertainment? It's a tricky question.
What's your hope for Grace?
Whatever happens, happens. I've long ago stopped trying to predict or hope what happens.
I think the business has gotten harder, and I think that there are less opportunities now. and there are less slots, we have been very traumatized by the pandemic, and I think by the strikes, and I think by the political climate, and I sort of feel that everybody is unifying in a really beautiful way and trying to make products that uplift and unite.
You have been at the center of so many reinventions. Obviously TV, streaming, now there's AI. What do you think it's going to take to lead a 100-year-old company into the next century?
Well, I think it's a lot of the things we're doing right now. Understanding the consumer, being able to personalize experiences, building out our technology product, creating features, again, that are unique to this IP that will delight people the same way they are delighted when they go to our parks.
Is the golden age of entertainment behind us, or is the best still yet to come?
Oh, I don't think it's behind us at all. I think even in a world of AI, more premium are the best stories and the best live experiences. I think we're going to continue doing that, and it's going to mean something to future generations, and especially to parents who want to pass down that experience to their own kids.
So the best is yet.
This Santa rally, is that all we're going to get?
Well, maybe we'll get a bit more. I mean, I think this time of year people will reflect on like their 2026 outlook and more, or the following year outlook, and more often than not, that would be positive. And I think that's like where we're seeing things at the moment. Obviously, we're happy to debate all of this, but would suggest we're looking at resilient growth backdrop. Clearly, job creation is slowing, but not falling off a cliff. Resilient growth. We've got, I would suggest, fading inflationary pressures. Of course, again, you could debate that in the short term with tariff noise, but it's given the cover. The jobs market modest weakness and the more benign inflationary outlook is giving cover for the Federal Reserve to cut interest rates. That has something of a Goldilocks flavour to it, and that leaves us like feeling positive about equities in 2026.
Is the Fed going to have to be that dovish if you're so positive about growth?
Well, no, quite. It doesn't have to be that dovish. You would sort of suggest a commitment to sort of pausing on rates could unsettle markets, but if the features that are encouraging the Federal Reserve to cut only modestly is because growth is both resilient and maybe inflation isn't so fast in falling, I think the markets can deal with that. It has sort of dealt with that in the past. We are in a stop-start sort of cutting cycle, and the markets have moved well despite the periods of sort of pausing on those cuts. And that's because growth has been like okay.
Okay, I love talk of Goldilocks, Ben. This is excellent. It's Tuesday the 23rd of December, and it's not seasonal, but it's positive, and we like to be positive this time of year. So what's the biggest risk to the Goldilocks scenario then? Is it growth disappoints? Is it inflation's actually stickier than expected? Or what could go wrong with the sort of positive outlook? Because we speak to a lot of people who are quite positive about next year.
Well, I mean, I guess I'll be more concerned about inflation. For those who are sort of more concerned about the jobs side, because the trend in job creation is slow to sort of quite little, is that the next step would be sort of negative job creation. The profits to the amount of people who are employed is at like pretty healthy levels. So it doesn't look to us as though like meaningful job cuts are coming. So I guess it would be the inflationary concerns. The noise around tariffs can put sort of pressure under sort of goods price inflation. Also, I'm sort of minded about the prospect of like excessive stimulus coming through. If this sort of super Supreme Court prevents tariffs from being employed, I think that's that's sort of quite stimulative with all the combined with the one big beautiful bill. All of that is a very large budget deficit, not much of an offset. That could be inflation. Whilst the market might take some enthusiasm in the short term from tariffs like being removed, actually I worry that the bond market might take some fright from that because it could have could be too stimulative and a bit more inflation coming through. Not our base case, hence why we're positive too, and we want to be at this time of year, but certainly a concern for us.
In Europe as well, but some gains in the Asia session already, although it has to be said you've got
Pacific benchmark up about 0.2%, but here you can see pretty mixed.
One of the worst performance globally. If you compare it to emerging markets, you compare it to commodities, you compare it to multiple indices, it hasn't really performed exceptionally well. So unless you were really long this small basket of Tech 7, you wouldn't have done very well. I mean, even against the euro, it has made 7% only in 2016. Our model portfolio has made 31% year to date. So we're quite happy with our model portfolio, to be honest.
But doesn't the fact that some Mag 7 names have actually underperformed the S&P this year show?
Daybreak Europe, I'm all. The data came late, but Christmas came early for the bulls in this equity market. We have MSCI World Index at an all-time high this morning as we head into Christmas. The U.S. Treasury yield, the 10-year yield, basically flat, steady. But something very interesting happened on the 10-year yesterday. Right when we got that GDP print out from the United States, we saw these yields rocket higher, about 5 basis points. That has come down to basically where we were. So some mixed signals for what that GDP reading actually means for the markets. We'll get into that a little bit later. And gold, obviously the sort of shining star of the week. We broke through 4,500 a little bit earlier. We're down just a bit this morning, still up a little bit, but still under that 4,500 level. And Brent crude steadying after some of those headlines that we saw early in the week out of Venezuela. Let's see how the Asian markets, however, are faring with Winnie Su in Taipei. Winnie?
Yeah, so we are seeing some modest gains here in the Asian markets as well. So we've got an MSCI Asia up about 0.2%, rising for a fourth day, but it's taking us back to that highest level in about 6 weeks. And overall, technology shares are still back in the driver's seat right now, and we have that center rally here going on in Asia as well. However, overall trading volume has been quite thin because we have some of our key markets closing earlier today ahead of that Christmas holiday tomorrow, including markets in Hong Kong, Singapore, and Australia. However, one key asset that we're really focusing on today is the Korea won, as it has actually strengthening about 2% so far today, especially after authorities coming in and warned that excessive weakness in currency is not desirable, and that the FX market will soon see that strong determination from the government. So that has really supported the won that has really been struggling and headed towards that 1,500 level that we are closely watching in terms of the key psychological level that was breached back in the global financial crisis. And that's a very interesting timing, as it really came after how the authorities in Japan stepped in with similar verbal intervention yesterday. Now, we also flip the board and take a look at the overall picture for Asian stocks this year, because taking a step back, it has really been a spectacular year for our region. In fact, up about 25% so far this year, beating gains in Europe and the US, which is quite rare actually. And a lot of factors have really been playing into play, including those including, the deep-seek moments back in February and US-China tensions easing, and that global tailwind from the AI boom. Not to mention you've got a weaker dollar and also diversification away from US assets. So that has really been helping that outperformance of Asian stocks, and we're likely going to see how these themes continue to play towards 2026.
Well, Winnie Su, thank you so much in Taipei for that roundup of Asian markets going into Christmas Day. The United States has accused China of engaging in unfair trade practices related to chips, but says it will hold off on imposing new tariffs until at least mid-2027. Let's bring in Bloomberg's China economy and government editor, Alan Wong. Alan, what do we know about this investigation into Chinese chips, and how much sort of faith do we have in the Trump timelines in terms of imposing tariffs or not imposing tariffs?
Yeah, Oliver, that was the result of a nearly year-long investigation into China's chip policy. And it's worth noting upfront that these are the kind of chips that we put in legacy electronics and not the kind of cutting-edge semiconductors that have been dominating headlines in the last handful of years. So the finding from the U.S. investigation is that China has used aggressive and sweeping non-market policies to support its domestic chip sector in order to dominate it and make other countries reliant on it. And the findings will enable the U.S. to impose tariffs on those chips, but importantly, the Trump administration has held back on that. And there is a timeline that they've given, which is 18 months, when they'll have to make a determination of what measure they will take. And the tariff rates haven't been announced yet, so this amounts to an option in case they need to escalate the trade tensions with China. So this is key because it shows that while the U.S. is not happy with the industrial policies of China, it is not right now imposing any measures in response because Trump has agreed to a trade truce with China and is planning to meet with Chinese President Xi Jinping in the coming months, many times. So this announcement sends a clear signal that Trump still intends to keep relations on a stable path and while maintaining some options going forward if the trade talks breaks down at any point in the next year. So when that happens, the impact will be dependent on just how high the tariff rates are and on what devices specifically that the U.S. will impose on China's exports. So one thing to keep in mind is that the legacy chips that go into electronics like fridges or cars and medical devices, they will raise the input prices for U.S. companies. So any measures that the Trump administration takes at the end of this 18-month period will also need to take that into consideration.
Well, Bloomberg's Alan Wong, thank you so much for joining us from Hong Kong for some important context on that story. Now let's get to that U.S. Economic growth story. The economic data, once again, leaving investors split on what it all means for monetary policy. On the one hand, the U.S. economy expanded in the third quarter at the fastest pace in 2 years, bolstered by a resilient consumer and business spending. On the other hand, there's some skepticism about the reliability of the top-line GDP data. Here to make sense of all of it is MLive currency and rate strategist Ven Ram. Ven, you've done the deep dive here. What do we make of this print out of the United States?
Morning, Oliver. I think that, the misconceptions aside, some of the concerns are warranted, but I think on the whole, you've got to take the data for what it is, which is one of stellar growth. I mean, consumer spending is booming and exports are on the rise as well. So this economy is well underpinned by demand. So I think that resilience in the U.S. economy will continue. Let's keep in mind that, the Federal Reserve is forecasting growth to come in at 2.3% in 2026. That is fully half a percentage point higher than what they were expecting in September. So they're fully cognizant of the AI boosting productivity scenario and they're on board with it. Now, the question is, Oliver, this raises tension within the Fed because, on the one hand, you've got an economy that's growing so well, and you've got core PCE that's still hovering around 2.8% on average for this year. So should the Fed be cutting rates when the economy is this resilient, running this hot, and your core PCE inflation is nowhere near 2%? And that's the tension for the markets as we look forward to 2026.
Yeah, absolutely. I mean, you got a hot American economy. Inflation is a big question mark. And, of course, a lot of pressure coming from the White House on the Federal Reserve to move. I want to talk a little bit about the precious metals rally that we've continued to see throughout the week. We saw gold break through 4,500. What is driving this? Is this just sort of a natural hedge to some of the risks we're seeing? How do you interpret what we've been seeing in the precious metals market?
I think that this is more than just a story of hedge, Oliver, because, if you see what has happened, silver is leading gold on the way up in the latest leg of rally, and that is unusual. It's a bit like the tail wagging the dog. Silver is going up and up and up because of the sticky supply scenario that we are seeing in the markets, particularly in Shanghai and elsewhere. And therefore, silver is bid and gold is just riding on its coattails. And the market has got $5,000 an ounce in its crosshairs. So to an extent, this is going to become a self-fulfilling prophecy for the market. So it is easy to see the next leg higher in gold, albeit investors should be wary of corrections. The one we saw in October when it sold off 10% within the space of 3 days.
It's easy to see the leg higher. Is it easier to see the leg higher or lower for interest rates going into next year? What are your forecasts looking at central banks into 2026?
Well, I think that, the markets are underpricing how far the Bank of Japan should be going with the interest rates. Because if you look at the BOJ's own projection of interest rates, they expect inflation to come in at 1.8% next year. That is way lower than what realized inflation is, which is around 3%. So even taking their 1.8% projection at face value, and the economic growth forecast that they are forecasting, which is above trend, that posits a neutral rate of around 150. And we are at least 3 rate hikes away from that. So the question is, the Bank of Japan should be aggressively raising rates. The question is whether they are willing to do that.
Well, Vin Ram, cross-asset strategist for Bloomberg Markets Live, thank you so much for your time this morning in the context of putting around some of that GDP figure out of the United States and what to expect from central banks in the year ahead. For the day ahead, today we're watching the U.S. markets, which will be closing early today, as well as European markets. So 1 p.m., I believe, is the time for when the U.S. market will close. We're looking also for U.S. mortgage applications, as well as U.S. jobless claims, all trying to fill out that data picture from the United States after that exceedingly hot GDP print that we got yesterday. And you can get a roundup of the top stories you need to know going into your day. Today's edition of Daybreak, we're focused squarely on the precious metal rally, those H-1B visas that Trump basically was saying you need to be charging companies $100,000. That was upheld by a judge, and BP getting closer to selling its stake in Castrol. We'll have more on all those stories throughout the hour this morning. Terminal subscribers can go to DAYB Go to watch all of those stories and many more. Coming up, onto geopolitics, Libya declares 3 days of mourning after its military chief of staff is killed in a plane crash in Turkey. We'll have details on that story next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London, and these are the stories that set your agenda. Blowout GDP in the USA. American growth crushes estimates in the third quarter, coming in at 4.3%, a full percentage point above average estimates. The Santa rally marches on. The S&P hits a record. Gold breaks through 4,500 for the first time ever. Markets on both sides of the pond close early today, and the U.S. accuses China of unfair trade practices in semiconductors, but says it will hold off on imposing additional chip tariffs for now. Good morning. Happy Christmas Eve. Here is the picture for futures this morning across Europe and the United States. Euro Stoxx futures about flat, we'll say, down ever so slightly after a positive session yesterday. Same story here for the FTSE 100 futures. S&P down 0.1 of 1 percentage point, and NASDAQ similarly down a little bit after, again, a positive session in the U.S. yesterday and a couple of positive sessions from Friday of last week. Taking the picture across asset, let's take a look at what we've got. The data came late, but Christmas came early for the bulls in this equity market. We have MSCI World Index at an all-time high this morning as we head into Christmas. The U.S. Treasury yield, the 10-year yield, basically flat, steady, but something very interesting happened on the 10-year yesterday. Right when we got that GDP print out from the United States, we saw these yields rocket higher, about 5 basis points. That has come down to basically where we were. So some mixed signals for what that GDP reading actually means for the markets. We'll get into that a little bit later. And gold, obviously the sort of shining star of the week. We broke through 4,500 a little bit earlier. We're down just a bit this morning, still up a little bit, but still under that 4,500 level. And Brent crude steadying after some of those headlines that we saw early in the week out of Venezuela. Let's see how the Asian markets, however, are faring with Winnie Su in Taipei. Winnie?
Yeah, so we are seeing some modest gains here in the Asian markets as well. So we've got an MSCI Asia up about 0.2%, rising for a fourth day, but it's taking us back to that highest level in about 6 weeks. And overall, technology shares are still back in the driver's seat right now, and we have that center rally here going on in Asia as well. However, overall trading volume has been quite thin because we have some of our key markets closing earlier today ahead of that Christmas holiday tomorrow, including markets in Hong Kong, Singapore, and Australia. However, one key asset that we're really focusing on today is the Korea won, as it has actually strengthening about 2% so far today, especially after authorities coming in and warned that excessive weakness in currency is not desirable, and that the FX market will soon see that strong determination from the government. So that has really supported the won that has really been struggling and headed towards that 1500 level that we are closely watching in terms of the key psychological level that was breached back in the global financial crisis. And that's a very interesting timing, as it really came after how the authorities in Japan stepped in with similar verbal intervention yesterday. Now, we also flip the board and take a look at the overall picture for Asian stocks this year, because taking a step back, it has really been a spectacular year for our region. In fact, up about 25% so far this year, beating gains in Europe and the US, which is quite rare actually. And a lot of factors have really been playing into play, including those including, the DeepSeek moments back in February and US-China tensions easing, and that global tailwind from the AI boom. Not to mention, you've got a weaker dollar and also diversification away from US assets. So that has really been helping that outperformance of Asian stocks, and we're likely going to see how these themes continue to play towards 2026.
Well, Winnie Su, thank you so much in Taipei for that roundup of Asian markets going into Christmas Day. The United States has accused China of engaging in unfair trade practices related to chips, but says it will hold off on imposing new tariffs until at least mid-2027. Let's bring in Bloomberg's China economy and government editor, Alan Wong. Alan, what do we know about this investigation into Chinese chips, and how much sort of faith do we have in the Trump timelines in terms of imposing tariffs or not imposing tariffs?
Yeah, Oliver, that was the result of a nearly year-long investigation into China's chip policy. And it's worth noting upfront that these are the kind of chips that we put in legacy electronics and not the kind of cutting-edge semiconductors that have been dominating headlines in the last handful of years. So the finding from the U.S. investigation is that China has used aggressive and sweeping non-market policies to support its domestic chip sector in order to dominate it and make other countries reliant on it. And the findings will enable the U.S. to impose tariffs on those chips, but importantly, the Trump administration has held back on that. And there's a timeline that they've given, which is 18 months, when they'll have to make a determination of what measure they will take. And the tariff rates haven't been announced yet, so this amounts to an option in case they need to escalate the trade tensions with China. So this is key because it shows that while the U.S. is not happy with the industrial policies of China, it is not right now imposing any measures in response, because Trump has agreed to a trade truce with China and is planning to meet with Chinese President Xi Jinping in the coming months many times. So this announcement sends a clear signal that Trump still intends to keep relations on a stable path, and while maintaining some options going forward if the trade talks breaks down at any point in the next year. So when that happens, the impact will be dependent on just how high the tariff rates are and on what devices specifically that the U.S. will impose on China's exports. So one thing to keep in mind is that the legacy chips that go into electronics like fridges or cars and medical devices, they will raise the input prices for U.S. companies. So any measures that the Trump administration takes at the end of this 18-month period will also need to take that into consideration.
Well, Bloomberg's Alan Wong, thank you so much for joining us from Hong Kong for some important context on that story. Now let's get to that U.S. Economic growth story. The economic data once again leaving investors split on what it all means for monetary policy. On the one hand, the U.S. economy expanded in the third quarter at the fastest pace in 2 years, bolstered by a resilient consumer and business spending. On the other hand, there's some skepticism about the reliability of the top-line GDP data. Here to make sense of all of it is MLive currency and rate strategist Ven Ram. Ven, you've done the deep dive here. What do we make of this print out of the United States?
Morning, Oliver. I think that, the misconceptions aside, some of the concerns are warranted, but I think on the whole, you've got to take the data for what it is, which is one of stellar growth. I mean, consumer spending is booming and exports are on the rise as well. So this economy is well underpinned by demand. So I think that resilience in the U.S. economy will continue. Let's keep in mind that, the Federal Reserve is forecasting growth to come in at 2.3% in 2026. That is fully half a percentage point higher than what they were expecting in September. So they're fully cognizant of the AI boosting productivity scenario, and they're on board with it. Now, the question is, Oliver, this raises tension within the Fed because, on the one hand, you've got an economy that's growing so well, and you've got core PCE that's still hovering around 2.8% on average for this year. So should the Fed be cutting rates when the economy is this resilient, running this hot, and your core PCE inflation is nowhere near 2%? And that's the tension for the markets as we look forward to 2026.
Yeah, absolutely. I mean, you got a hot American economy. Inflation is a big question mark. And, of course, a lot of pressure coming from the White House on the Federal Reserve to move. I want to talk a little bit about the precious metals rally that we've continued to see throughout the week. We saw gold break through 4,500. What is driving this? Is this just sort of a natural hedge to some of the risks we're seeing? How do you interpret what we've been seeing in the precious metals market?
I think that this is more than just a story of hedge, Oliver, because, if you see what has happened, silver is leading gold on the way up in the latest leg of rally, and that is unusual. It's a bit like the tail wagging the dog. Silver is going up and up. And up because of the sticky supply scenario that we are seeing in the markets, particularly in Shanghai and elsewhere. And therefore, silver is bid and gold is just riding on its coattails. And the market has got $5,000 an ounce in its crosshairs. So to an extent, this is going to become a self-fulfilling prophecy for the market. So it is easy to see the next leg higher in gold, albeit investors should be wary of corrections. The one we saw in October when it sold off 10% within the space of 3 days.
It's easy to see the leg higher. Is it easier to see the leg higher or lower for interest rates going into next year? What are your forecasts looking at central banks into 2026?
Well, I think that, the markets are underpricing how far the Bank of Japan should be going with the interest rates. Because if you look at the BOJ's own projection of interest rates, they expect inflation to come in at 1.8% next year. That is way lower than what realized inflation is, which is around 3%. So even taking their 1.8% projection at face value, and the economic growth forecast that they are forecasting, which is above trend, that posits a neutral rate of around 150, and we are at least 3 rate hikes away from that. So the question is, the Bank of Japan should be aggressively raising rates. The question is whether they are willing to do that.
Well, Ven Ram, cross-asset strategist for Bloomberg Markets Live, thank you so much for your time this morning in the context of putting around some of that GDP figure out of the United States and what to expect from central banks in the year ahead. For the day ahead, today we're watching the U.S. markets, which will be closing early today, as well as European markets. So 1 p.m., I believe, is the time for when the U.S. market will close. We're looking also for U.S. mortgage applications, as well as U.S. jobless claims, all trying to fill out that data picture from the United States after that exceedingly hot GDP print that we got yesterday. And you can get a roundup of the top stories you need to know going into your day. Today's edition of Daybreak, we're focused squarely on the precious metal rally, those H-1B visas that Trump basically was saying you need to be charging companies $100,000. That was upheld by a judge, and BP getting closer to selling its stake in Castrol. We'll have more on all those stories throughout the hour this morning. Terminal subscribers can go to DAYB Go to watch all of those stories and many more. Coming up, onto geopolitics, Libya declares 3 days of mourning after its military chief of staff is killed in a plane crash in Turkey. We'll have details on that story next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London, and these are the stories that set your agenda. Blowout GDP in the USA. American growth crushes estimates in the third quarter, coming in at 4.3%, a full percentage point above average estimates. The Santa rally marches on. The S&P hits a record. Gold breaks through 4,500 for the first time ever. Markets on both sides of the pond close early today, and the U.S. accuses China of unfair trade practices in semiconductors, but says it will hold off on imposing additional chip tariffs for now. Good morning. Happy Christmas Eve. Here is the picture for futures this morning across Europe and the United States. Euro Stoxx futures about flat, we'll say, down ever so slightly after a positive session yesterday. Same story here for the FTSE 100 futures. S&P down 0.1 of 1 percentage point, and NASDAQ similarly down a little bit after, again, a positive session in the U.S. yesterday and a couple of positive sessions from Friday of last week. Taking the picture across asset, let's take a look at what we've got. The data came late, but Christmas came early for the bulls in this equity market. We have MSCI World Index at an all-time high this morning as we head into Christmas. The U.S. Treasury yield, the 10-year yield, basically flat, steady, but something very interesting happened on the 10-year yesterday. Right when we got that GDP print out from the United States, we saw these yields rocket higher, about 5 basis points. That has come down to basically where we were. So some mixed signals for what that GDP reading actually means for the markets. We'll get into that a little bit later. And gold, obviously the sort of shining star of the week. We broke through 4,500 a little bit earlier. We're down just a bit this morning, still up a little bit, but still under that 4,500 level. And Brent crude steadying after some of those headlines that we saw early in the week out of Venezuela. Let's see how the Asian markets, however, are faring with Winnie Su in Taipei. Winnie?
Yeah, so we are seeing some modest gains here in the Asian markets as well. So we've got an MSCI Asia up about 0.2%, rising for a fourth day, but it's taking us back to that highest level in about 6 weeks. And overall, technology shares are still back in the driver's seat right now, and we have that Santa rally here going on in Asia as well. However, overall trading volume has been quite thin because we have some of our key markets closing earlier today ahead of that Christmas holiday tomorrow, including markets in Hong Kong, Singapore, and Australia. However, one key asset that we're really focusing on today is the Korea won, as it has actually strengthening about 2% so far today, especially after authorities coming in and warned that excessive weakness in currency is not desirable, and that the FX market will soon see that strong determination from the government. So that has really supported the won that has really been struggling and headed towards that 1,500 level that we are closely watching in terms of the key psychological level that was breached back in the global financial crisis. And that's a very interesting timing, as it really came after how the authorities in Japan stepped in with similar verbal intervention yesterday. Now, we also flip the board and take a look at the overall picture for Asian stocks this year, because taking a step back, it has really been a spectacular year for our region. In fact, up about 25% so far this year, beating gains in Europe and the US, which is quite rare actually. And a lot of factors have really been playing into play, including those including, the DeepSeek moments back in February and US-China tensions easing, and that global tailwind from the AI boom. Not to mention you've got a weaker dollar and also diversification away from US assets. So that has really been helping that outperformance of Asian stocks, and we're likely going to see how these themes continue to play towards 2026.
Well, Winnie Su, thank you so much in Taipei for that roundup of Asian markets going into Christmas Day. The United States has accused China of engaging in unfair trade practices related to chips, but says it will hold off on imposing new tariffs until at least mid-2027. Let's bring in Bloomberg's China economy and government editor, Alan Wong. Alan, what do we know about this investigation into Chinese chips, and how much sort of faith do we have in the Trump timelines in terms of imposing tariffs or not imposing tariffs?
Yeah, Oliver, that was the result of a nearly year-long investigation into China's chip policy. And it's worth noting upfront that these are the kind of chips that we put in legacy electronics and not the kind of cutting-edge semiconductors that have been dominating headlines in the last handful of years. So the finding from the U.S. investigation is that China has used aggressive and sweeping non-market policies to support its domestic chip sector in order to dominate it and make other countries reliant on it. And the findings will enable the U.S. to impose tariffs on those chips, but importantly, the Trump administration has held back on that. And there is a timeline that they've given, which is 18 months, when they'll have to make a determination of what measure they will take. And the tariff rates haven't been announced yet, so this amounts to an option in case they need to escalate the trade tensions with China. So this is key because it shows that while the U.S. is not happy with the industrial policies of China, it is not right now imposing any measures in response because Trump has agreed to a trade truce with China and is planning to meet with Chinese President Xi Jinping in the coming months, many times. So this announcement sends a clear signal that Trump still intends to keep relations on a stable path and while maintaining some options going forward if the trade talks breaks down at any point in the next year. So when that happens, the impact will be dependent on just how high the tariff rates are and on what devices specifically that the U.S. will impose on China's exports. So one thing to keep in mind is that the legacy chips that go into electronics like fridges or cars and medical devices, they will raise the input prices for U.S. companies. So any measures that the Trump administration takes at the end of this 18-month period will also need to take that into consideration.
Well, Bloomberg's Alan Wong, thank you so much for joining us from Hong Kong for some important context on that story. Now let's get to that U.S. Economic growth story. The economic data, once again, leaving investors split on what it all means for monetary policy. On the one hand, the U.S. economy expanded in the third quarter at the fastest pace in 2 years, bolstered by a resilient consumer and business spending. On the other hand, there's some skepticism about the reliability of the top-line GDP data. Here to make sense of all of it is MLive currency and rate strategist Ven Ram. Ven, you've done the deep dive here. What do we make of this print out of the United States?
Morning, Oliver. I think that, the misconceptions aside, some of the concerns are warranted, but I think on the whole, you've got to take the data for what it is, which is one of stellar growth. I mean, consumer spending is booming and exports are on the rise as well. So this economy is well underpinned by demand. So I think that resilience in the U.S. economy will continue. Let's keep in mind that, the Federal Reserve is forecasting growth to come in at 2.3% in 2026. That is fully half a percentage point higher than what they were expecting in September. So they're fully cognizant of the AI boosting productivity scenario and they're on board with it. Now, the question is, Oliver, this raises tension within the Fed because, on the one hand, you've got an economy that's growing so well, and you've got core PCE that's still hovering around 2.8% on average for this year. So should the Fed be cutting rates when the economy is this resilient, running this hot, and your core PCE inflation is nowhere near 2%? And that's the tension for the markets as we look forward to 2026.
Yeah, absolutely. I mean, you got a hot American economy. Inflation is a big question mark. And of course, a lot of pressure coming from the White House on the Federal Reserve to move. I want to talk a little bit about the precious metals rally that we've continued to see throughout the week. We saw gold break through 4,500. What is driving this? Is this just sort of a natural hedge to some of the risks we're seeing? How do you interpret what we've been seeing in the precious metals market?
I think that this is more than just a story of hedge, Oliver, because, if you see what has happened, silver is leading gold on the way up in the latest leg of rally, and that is unusual. It's a bit like the tail wagging the dog. Silver is going up and up and up because of the sticky supply scenario that we are seeing in the markets, particularly in Shanghai and elsewhere. And therefore, silver is bid and gold is just riding on its coattails. And the market has got $5,000 an ounce in its crosshairs. So to an extent, this is going to become a self-fulfilling prophecy for the market. So it is easy to see the next leg higher in gold, albeit investors should be wary of corrections. The one we saw in October when it sold off 10% within the space of 3 days.
It's easy to see the leg higher. Is it easier to see the leg higher or lower for interest rates going into next year? What are your forecasts looking at central banks into 2026?
Well, I think that, the markets are underpricing how far the Bank of Japan should be going with the interest rates. Because if you look at the BOJ's own projection of interest rates, they expect inflation to come in at 1.8% next year. That is way lower than what realized inflation is, which is around 3%. So even taking their 1.8% projection at face value, and the economic growth forecast that they're forecasting, which is above trend, that posits a neutral rate of around 150. And we are at least 3 rate hikes away from that. So the question is, the Bank of Japan should be aggressively raising rates. The question is whether they are willing to do that.
Well, Vin Ram, cross-asset strategist for Bloomberg Markets Live, thank you so much for your time this morning in the context of putting around some of that GDP figure out of the United States and what to expect from central banks in the year ahead. For the day ahead, today we're watching the U.S. markets, which will be closing early today, as well as European markets. So 1 p.m., I believe, is the time for when the U.S. market will close. We're looking also for U.S. mortgage applications, as well as U.S. jobless claims, all trying to fill out that data picture from the United States after that exceedingly hot GDP print that we got yesterday. And you can get a roundup of the top stories you need to know going into your day. Today's edition of Daybreak, we're focused squarely on the precious metal rally, those H-1B visas that Trump basically was saying you need to be charging companies $100,000. That was upheld by a judge, and BP getting closer to selling its stake in Castrol. We'll have more on all those stories throughout the hour this morning. Terminal subscribers can go to DAYB Go to watch all of those stories and many more. Coming up, onto geopolitics, Libya declares 3 days of mourning after its military chief of staff is killed in a plane crash in Turkey. We'll have details on that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Novo Nordisk surged on Tuesday after it won approval to sell a pill version of its blockbuster obesity jab Wegovy in the United States. The CEO of the company spoke to Bloomberg about how the development could shake up the competitive weight loss market.
This is really going to be super exciting for the millions of patients that have been waiting to get their hands on a GLP-1 pill. And for the first time, we are having a pill that has an efficacy of some 17% if you take the pill regularly. And 1 in 3 people are going to actually reduce up to 20% weight loss. I think that data speaks for itself, and we are super excited, of course, to be the first to the market. And we're going to go all in trying to make this a huge success.
Well, moving forward, I mean, beyond just these first few months, after Eli Lilly does have their pill on the market, how do you plan to compete? What is your strategy there? Given my understanding is that there's likely going to be no restrictions when it comes to food, when it comes to drinks around Lilly's version.
Yeah, so as I mentioned, there are no other phase 3 trials of oral GLP-1 that has shown this level of efficacy. This means that for the first time ever, people do not have compromise between either taking an efficacious injection or a convenient pill. For the first time ever, you have the same efficacy of 17% in injection or a pill. You can take it on a daily basis as a pill or a weekly injection. And that, I think, is the key selling points with Wegovy pill. We also have more than 10 years of course, experience with regards to safety data and what have you. That's why it's called the Wegovy pill, which means that this pill is not only going to reduce your weight, it also has protection for your cardiovascular systems. So this is a phenomenal pill, second to none, I would say, and we are very ready to compete with it.
Let's talk about how you're going to sell it. Through what channels will you sell this Wegovy pill? And will all of those channels be available at launch?
The quick answer is yes. We're going all in. We're, of course, going to sell this through our own websites, NovoCare Pharmacy, as well as all of our partners, be it Ro, LifeMD, Costco, Weight Watchers. Everyone that you can imagine is going to start launching this at the same time on the day of the launch. Trump RX, of course, will be coming up soon as well as, of course, the traditional channels that, usually medicine is procured in U.S.
Novo Nordisk CEO there, Mike Duster, speaking with Bloomberg's Katie Greifeld a little bit earlier yesterday. Some other stories making news this morning. A federal judge has ruled that the Trump administration can go ahead with imposing a $100,000 fee on new H-1B visa applications. The decision is a setback for the U.S. tech companies that rely on hiring skilled foreign workers. The judge says the move is lawful, but the U.S. Chamber of Commerce, which sued the bloc to block the proposal, can still appeal. Nearly half a dozen tankers laden with crude have departed from Venezuela's coast despite increased pressure from the United States. Data from maritime intelligence firm Kepler show most of the tankers are headed to Washington, and at least half of them are chartered by Chevron. This comes as the Trump administration intensifies efforts to curb Caracas's oil revenue by targeting sanctioned vessels. Now, Libya's military chief of staff has been killed alongside 7 other people in a plane crash in Turkey. Mohammed Ali Ahmed al-Haddad had been returning to a trip to Tripoli from Ankara when the plane reportedly reported an electrical malfunction shortly after takeoff. For more, let's bring in Bloomberg's managing editor for the Middle East and North Africa, Onur Ant. Onur, what do we know so far about the crash? And give us a little bit of context of why this is so important here for Libya.
Sure. The jet that was carrying the Libyan delegation crashed shortly after its takeoff at about 8 p.m. local time in Ankara. That's the Turkish capital. It did notify the air control that it had an electrical fault and requested an emergency landing. While preparations at the Ankara's Esenboğa airport were underway for that landing, radio contact with the airplane lost, and its wreckage was later found by Turkish authorities in the Haymana district in Ankara. So the entire Libyan delegation, consisting of 5 people, as well as 3 crew members, were all declared dead after the incident. And the head of the Libyan delegation was Libya's military chief of staff, Mohammed Ali Ahmed al-Haddad. He was a respected figure, obviously, back in Tripoli, but also he was a key figure in UN-backed talks aimed at unifying the country, which has been split between 2 rival governments, with one being in the west, in Tripoli, to which al-Haddad belonged, and the other one in the east, in Benghazi.
And what can you tell us about what he was doing in his visit to Turkey, which is increasing in sort of geopolitical importance as we sort of go year to year?
The Libyan delegation was there to discuss military cooperation. The cooperation between the 2 countries has been very strong in the last several years. Turkey has been a strong supporter of the government in Tripoli, and that support has become more pronounced back in 2019 and 20 when that government was under assault by the rival government in Benghazi, and it was pretty much the Turkish support that sort of allowed it to stay in power. Ever since, we know that the Tripoli government has been deploying various Turkish military equipment, including Bayraktar drones, Akıncı and TB2. The latter is very famous, very well known in this part of the region and this part of the world. It's been widely used and successfully used in conflicts and the wars from Ukraine to Nagorno-Karabakh, where Azerbaijan and Armenia fought a war, 44-day war back in 2020. So that military cooperation between the 2 countries was the reason why the Libyan delegation was traveling to Ankara and back to Tripoli yesterday when their jet crashed.
Well, thank you very much to Bloomberg's Onur Ant for that update. And coming up on the show, how the Chinese battery giant CATL is powering through a bumpy road ahead. More on today's Big Take. That's next. And this is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
Welcome back to Bloomberg Daybreak Europe. Let's get to China and its battery giant CATL facing some dips in the road ahead due to government policy and slowing growth. Today's Big Take looks at how its billionaire founder is having to change strategy amid geopolitical challenges. We're joined now by Bloomberg's Asia transport reporter Linda Liu. Linda, take us through a little bit what CATL is looking at to replicate its success at home in an overseas market. You know, how is the battery maker doing that, and what are the bumps that it faces ahead?
One of its big strategic focus is localizing production in Europe. They've built 2 factories already, one in Germany, one in Hungary. They're building a 3rd one with Stellantis in Spain. So you really see they're hoping to having these production capacity in Europe to evade the tariffs that the EU has introduced. You see, for example, the tariffs on Chinese EVs. So hoping that when they're closer to their customers in Europe, such as BMW, Mercedes, or Volkswagen, they can be faster to respond to the customers' demands and come up with hopefully more affordable batteries that can help these automakers churn out more attractive and affordable EV models in Europe. And in the US, they're going through a licensing route in a partnership with Ford, hoping that, you know, despite these barriers that the US has put up that effectively bans a lot of the Chinese industries from accessing the US market, they still can have a little bit of access through a licensing model with Ford shouldering most of the manufacturing in the US market.
So how is CATL managing those challenges? Do you think of CATL as really having a kind of monopoly on this market? And also, at what point are they going to get to sort of full production capacity here in Europe in order to sort of deal with those customer demands from the European side?
Yeah, it's a really good question because despite, you know, CATL being the world's largest EV battery maker, powering 1 in 3 EVs out there on the roads, it's still facing competition from its South Korean and Japanese rivals, which coincidentally will get a leg up, you know, with the US tariffs and also favoritism towards countries, you know, that are not China. So CATL is hoping that by working with US manufacturers in licensing deals, it can overcome that kind of geopolitical barrier. And when you look at Europe, they are hoping to ramp up production, but right now there's still some bumps in the road, like you have said, because the efficiency as well as cost are not at the level they're hoping for as they've seen at factories at home. So that's something they're hoping to iron out. With the Hungary factory that's coming online very soon next year, they're hoping that they can achieve greater efficiencies by learning from the mistakes that they may have made with their factory in Germany.
Well, thanks very much, Linda Liu, for that update on CATL and the plan ahead for that battery giant across the world there. I'd like to get some breaking news now, some M&A in the pharma space. Sanofi to buy Dynavax for $15.50 a share in cash. This is to add to their hepatitis B portfolio and the drugs there, expecting that deal to not have any impact on the full year guidance. That is according to Sanofi, and that the tender offer at the equity value of $2.2 billion. So that is some of the M&A we are watching this morning. Now let's get to some other stories making news. BP is said to be nearing an agreement to sell a majority stake in its Castrol unit to the investment firm Stonepeak Partners. The Wall Street Journal says BP would get about $6 billion for a 65% stake in the lubricants business. Former CEO Murray Auchincloss today told Bloomberg last month that BP is planning to divest $20 billion of assets by the end of 2027 to improve its balance sheet. The move comes as Meg O'Neill prepares to take over at the helm of the oil major in April. The Trump administration has imposed visa sanctions on a former EU commissioner, Thierry Breton, and 4 other people trying to make American tech companies police political speech. In a post on X, Breton responded to that the European law was voted with a broad-based support, writing, quote, "To our American friends, censorship isn't where you think it is." The State Department also targeted activists and nonprofits focused on digital hate speech and countering extremism. Coming up, Russia continues to pummel Ukrainian energy infrastructure as temperatures across the country plummet. More on the state of the U.S.-led peace talks and negotiations. That's next. And this is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London. These are the stories that set your agenda. Blowout GDP in the USA. American growth crushes estimates in the third quarter, coming in at 4.3%, a full percentage point above average estimates. And the Santa rally marches on. The S&P hits a record. Gold breaks through 4,500 for the first time ever. Markets on both sides of the pond close early today. And the United States accuses China of unfair trade practices in semiconductors, but says it will hold off on imposing additional chip tariffs for now. Let's get a look at futures indexes this morning ahead of that early close in the sessions in the United States and in Europe. You can see across the board a bit of red on the screen. I'm tempted to call that fairly flat for the Euro Stoxx 50, down barely 5 basis points. Same story there for the FTSE 100 futures, down about 0.1%. S&P futures down basically the same amount. Same with the Nasdaq. We should say it's been a fairly strong roll for the S&P and the Nasdaq over the last couple of days, so giving ever so slightly more of that back today. When we look at the picture across asset, something a little bit similar. We look at the MSCI World Index that has been hitting a all-time record high. We got that GDP data. It came late, but what came early was a present from Santa Claus for the bulls in this market. You can see the MSCI World Market there at an all-time high. U.S. Treasury yields that are pretty flat today. We should say there was some pretty interesting action in the rates markets after we got that GDP print. The market really trying to figure out what to do with that. We had yields fire up to about 4.2%, and then came right back down. Gold there still trading just below that record past 45. 500, and Brent stabilizing this morning after a little bit of drama earlier in the week. Now, Russia has launched a major attack on Ukraine, killing 3 civilians, including a child. The missile and drone attack hit energy infrastructure in the Odessa region on the Black Sea. It comes as negotiations led by the Trump administration press ahead to end the nearly 4-year-long war. Bloomberg's Jill Desis joins me now. Jill, what do we know about the latest attacks now hitting as Ukraine really enters this winter and we have really below freezing temperatures really across the country?
Yes, that's right, Oliver. Well, look, what we've heard from President Zelensky is essentially that the strike involved 650 drones, 30 missiles. As you mentioned, obviously, a handful of fatalities, including a child, many injuries. These were pretty widespread, taking place across a number of regions of Ukraine, including some of the central areas. And then, as we've discussed, I mean, the idea of power cuts here, that's coming from the energy ministry, the grid operator saying that they've imposed these emergency power cuts. So you're really seeing some pretty widespread damages here. The other thing that I'd point out, I mean, as Zelensky has said, is that this is taking place right in the middle of peace talk negotiations. The Ukrainians were just in Florida, had been traveling back over the weekend after what seemed like fairly promising talks with the United States. But this is obviously, something that implies that, potentially there's some concern about a setback.
Thanks very much, Jill Desis, for your update there, for the sort of important update on Ukraine as we face, what was initially that deadline to end the war, which would be tomorrow, of course, seems fairly out of reach at this point. Russia's recent attacks on energy infrastructure in Odessa region, the Black Sea, come at a time of year when temperatures are around freezing. We should say in Kyiv, for example, today, temperatures will reach a high of -7 degrees Celsius and a low of -9. Maxim Timchenko, the CEO of Ukraine's biggest private energy infrastructure developer, DTEK, told Bloomberg this is going to be the hardest winter yet.
Unfortunately, just in these minutes, we are under massive attacks of Russians, and the major target of today's attack is power station. So, as you know, we been attacked, only power station of the attack more than 6 times since September this year. And I believe that this coming winter will be the hardest winter since full-scale invasion.
Some fairly stark appraisals there from the CEO of DTEK. I'm joined now by Hanna Shelest. She is Director of Security Programs at the Ukrainian Prism, a leading think tank specializing on foreign policy and international security. Hanna, thank you so much for speaking to us this morning. What is a difficult day for Ukraine heading into this winter? How are things on the ground at the moment, just to give us a sort of account of what life is like at the moment before getting into the broader discussion?
After quite a hard week, because only in Odessa we didn't have electricity for 4 days at all. So it means no electricity, no heating, and in some places no water, because all of these dependence in the old town. We still have some neighborhoods where they don't have electricity. That's already day 9. And definitely when you have almost zero outside, that's quite problematic and in winter dark days. But at the same time, now we are talking with you. Luckily, I have electricity this morning. It makes the mood of Christmas Day a little bit better. But to compare, like yesterday, 5 hours, there were no electricity during the day, and that was considered as one of the good days.
Yeah, and I want to talk a little bit more broadly about what has been going on. We've had some serious news out of the EU on Friday, that 90 billion euro loan that was approved to Ukraine. How fundamentally do you think that that changes the dynamic in terms of leverage in these negotiations with Russia? And critically, when do you expect that money to start arriving in Ukraine?
You know, that's very problematic. On the one hand, you have good news because Ukrainian budget would have support the next year. And it was a very difficult decision. We know that there were a lot of negotiations. But at the same time, that is very bad news because originally they've been negotiating, they are giving to Ukraine money from the Russian frozen assets. And that would be really fair because Russia is destroying Ukrainian economy. Russia is destroying Ukrainian critical infrastructure. And this money should go for this. So Russia should pay for the reconstruction, not the European taxpayers. However, because some countries were blackmailed by Russia, plus they've been afraid for some legal consequences, even that there are a lot of legal research now saying that they had a possibility to do this. We are where we are. So as for now, that is European money, and they would be crucial for supporting Ukrainian economy next year.
And thinking about where we are in the peace negotiations, obviously the Trump administration had wanted to end the war, initially in 24 hours and then set the deadline for Christmas. Obviously, that seems like it's out of reach. How do you assess the peace negotiations as we stand now and the status of that 20-point plan and what it contains?
You know, it's very difficult for me to name them peace negotiations. Probably that is just professional defamation, as I've been defending PhD on the end of the conflict. But the issue is that as for now, we have U.S.-Ukraine negotiations. We're talking about possible guarantees for Ukraine in terms of the security, in terms of the reconstruction, and possible concessions from the Ukrainian side. But peace negotiations are between the conflicting parties. And till now, we haven't heard Russian statements regarding the exact points of these proposals, except of one thing, that de facto in the latest statement this week, what I heard, they were just repetition of their demands back April 2022. So they still would like to have the territory that they occupied, plus the territory that they never occupied, but they decided that they would like it. They would like to cut Ukrainian sovereignty. They would like to undermine Ukrainian armed forces, the only real guarantee of the Ukrainian security. So let's see what would be the official response from the Kremlin. And also let's see it by deeds. Yeah, as it said, the deed speaks louder than the words, and you see the deeds. During the negotiations, Russia just intensified the attacks against Ukrainian civilian infrastructure.
And thinking about some of the very difficult compromises that invariably will have to be made on both sides of this negotiation, we heard Zelensky talk about that, I believe it was yesterday. Thinking about this sort of idea of this referendum that Zelensky floated about potentially surrendering effectively the rest of the Donbass, maybe not legally, but sort of de facto. Do you think that that is something that wins more and more popular support within Ukraine if it is accompanied by American security guarantees and a very clear security architecture?
Unfortunately, my answers would be no. First of all, because there is no compromise. Ukraine never demanded anything from the Russian Federation. Compromise, it is when both sides has the certain demands and then receive something. Not satisfied, but at least something. Ukraine is a victim of the illegal aggression that's accepted and confirmed by all international organizations and international court. So let's name it what it is. It is not a compromise. It is the attempt to make Ukraine to surrender, or at least to make some concessions. The second thing is that what does mean U.S. security guarantees? We really would like to have them. But as for now, it's very unstable. It all depends on the political will anyway. Even Article 5 of NATO and what we are receiving, it is the promise of the guarantee similar to Article 5. But Article 5 is just saying that attack on one NATO state means attack to everybody. And in this case, they can use any means, including military, to defend. So can use, cannot use, including military, but doesn't mean that exactly military. That's why it took now these Miami negotiations so long, because they tried to put something real and legally binding, because new president, for example, or this president without the advice, and they can decide not to protect Ukraine. Ukraine already had, don't forget, Budapest Memorandum, when we rejected our third biggest nuclear arsenal in the world. What we received, so-called security assurances. Where are we now? In the full-fledged war.
Well, Hanna Shelest, thank you so much for your time, Director of Security Programs at Ukrainian Prism, joining us there from Odessa, which has power at the moment, but has been suffering great blackouts over the last couple of days and weeks as sort of temperatures descend below freezing. Now, the French National Assembly has approved a stopgap budget law for next year after failing to agree on the full fiscal plan. The so-called special law effectively rolls over the 2025 fiscal plan into the new year, allowing the state to continue to collect taxes and critically to borrow money. For more, let's get to Jean Dalbar. He's the economist over at Bloomberg Economics. So still no full budget. Are we making progress? Where are the sticking points? What can you tell us as we head out of 2025?
So obviously we still have a very fragmented parliament between the Conservative Senate and the left-leaning National Assembly. And on top of that, we have political parties which look unwilling to compromise, and especially the Socialist Party, which is the kingmakers on the budget discussion. And in particular, parties are looking to bring home some major concessions from the government and some major symbolic wins, like higher taxation on wealth for the Socialist Party. And this doesn't help to get a compromise. In practice, however, we understand that a compromise is within reach. 10 billion are missing to reach the 5% of GDP deficit target for 2026. And we understand that this is something that could be reached within the early days of January.
And how surprised are you that we still have a Prime Minister Le Cornu? This is someone who I think at certain points we thought maybe not even lasting a week. Is this someone that's sort of here to stay in the French political establishment? Can he get things done here in France?
I think he can. Obviously, this is a disappointment for him, especially because he was the one really pushing for a new approach in French politics, which is to get political parties together and to compromise. Still, it's difficult for him because with both the center-right and the Socialist Party unwilling to compromise, it's really hard for him to push through its new methodology, its new approach to French politics. However, we think and we expect a compromise to be reached, especially because the Socialists and the center-right, they are unwilling to risk snap elections, and we expect them not to risk a no-confidence vote. So that's really important for Le Cornu. And all in all, I would say that political risk is fading in France, at least the risk of snap elections. And it is particularly true if you look at the spread against Germany, which has tightened to its August 2025 level. So it's a pretty good news from a market perspective.
Yeah, that's right. Jean Dalbar, thank you so much from Bloomberg Economics for his assessment of the fiscal situation in France and, of course, the political situation that will govern it. Coming up, we'll discuss the rapid increase in so-called rocket ship unicorns. Those are startups founded since 2020 that are already worth over $1 billion. We'll also take a closer look at the prospects for European tech in 2026 when we speak to Christoph Klink. He's a partner at Antler. It's a venture capital firm. That's next, and this is Bloomberg. Well, as year-end approaches, research suggests that London has helped fuel the rise in so-called rocket ship startups in 2025. Those are companies that are founded since 2020 and are already valued at more than $1 billion. Venture capital firm Antler says the city is home to 5 of 7 tech startups that achieve unicorn status in the second half of this year alone. We're joined now by Christoph Klink. He's a partner at Antler. Before we get into your forecast for going into 2026, you've done a lot of research and looked at what the year behind us looked like. What did it look like as we're closing out the year? Tech startups in 2025, what do we get?
Good morning, all. Thank you for having me. Pleasure. I think we looked indeed at kind of the emergence of a new breed of companies that scale very, very fast. And we asked ourselves, what does it actually take to get to unicorn?
ओए गाइस, ये नेचुरल गैस में यहाँ पर प्रॉफिट बुक कर लेना, यहाँ पर फिर से एक सेलिंग का प्लान करते हैं। बाकी क्रूड ऑयल तो देखो अब साइडवेज हो गया है, चांसेस हैं कि किसी एक साइड पे ब्रेकआउट या ब्रेकडाउन करेगा ना ऊपर। इसमें प्रॉब्लम क्या आ गई ना, ये रेजिस्टेंस तो है यहाँ पर, साथ में ये लेवल अब सपोर्ट की तरह काम करने लग गया है। तो ये अभी ना ऊपर जा पा रहा है ना नीचे जा पा रहा है, जाएगा भी नहीं। अब ये किसी ना किसी एक साइड पे इसी रेंज पे रहना चाहिए, या फिर ब्रेकआउट या ब्रेकडाउन करता है तभी शायद मूव करेगा। टिल देन इट इज साइडवेज। रुके हुए हो तो एसएल स्टिक रखना, छोटा सा एसएल रखा है मैंने 18 पॉइंट का मॉर्निंग से। आता है नीचे तो भी बड़ा टारगेट नहीं है, क्योंकि ये यहाँ पर मैंने कहा सपोर्ट है। अगर ये ब्रेक हो गया तब थोड़ा सा एक्सपेक्ट कर सकते हो कि प्राइस थोड़ा और नीचे आ जाएगा, अदरवाइज दिस इज अ साइडवेज मोमेंटम। आज वैसे भी यूएस मार्केट थोड़ा पहले क्लोज जाएगा, क्रिसमस ईव है इसलिए। ठीक है, बाकी नेचुरल गैस में एक्सटेंडेड सपोर्ट एरिया से बाई किया हुआ है, तो ये एरिया रहेगा टारगेट जोन का, यहाँ पर बुक कर लेना। अच्छा मोमेंटम आया है काफ़ी देर के बाद, यहाँ से एक वापस सेल करेंगे, वापस फिर नीचे आएगा तो अब लोअर एंड से वापस बाई करेंगे। ठीक है, दैट विल बी अ रेजिस्टेंस जोन अगेन। ठीक है, यहाँ पर बुक कर लेना, ऊपर एरिया से फिर से सेलिंग के लिए देखते हैं। ओके, ये कैंडल कहाँ क्लोज हो रही है इस पर डिपेंड करेगा। कि अब की बार नीचे आएगा तो फिर लोअर एंड से बाई करेंगे, डिपेंड करता है ये कैंडल कहाँ क्लोज हो रही है उस पर भी। अगर ये कैंडल प्रीवियस कैंडल के ऊपर क्लोज नहीं होती है तो बेस्ट है, फिर टारगेट बड़ा रहेगा सेलिंग में, नहीं तो फिर नीचे वाले लेवल पे शायद ही आएगा, फिर यही लेवल से दोबारा बाई करना पड़ जाएगा। तो वो देखते हैं, अभी 30 मिनट है क्लोजिंग होने में। ठीक है, वॉल्यूम पूरा ड्राई हो गया है, ईयर एंड है उस वजह से भी कह सकते हैं। गोल्ड भी साइडवेज है, वहाँ भी कुछ नहीं हो रहा। बाकी 30 मिनट में न्यूयॉर्क सेशन ओपन होने वाला है, थोड़ा सा उसका ध्यान रखना. 6:30 न्यूयॉर्क सेशन ओपनिंग.
Looking at the S&P 500 reaching an all-time high. What we see in sharp contrast to any sort of fears around risk, the VIX at the lowest level that we've had throughout the year. This is the one-year chart. It really tells the story of what we had in sort of terror in the markets at around in April, around Liberation Day. You saw the VIX spike up, and ever since, the VIX has been sort of grinding lower and lower, while stocks have continued to move higher and higher as we close out the year at a record in the United States. That was driven in part because of that GDP print we got from the United States, the strongest level in 2 years. It broke down to basically personal consumption and net exports. You can see that in this chart here. Personal consumption, the yellow, picking up the lion's share of that GDP print, 2.4%, let's call it, and the rest of it down to net exports in the contribution. And then we've got to talk about gold. This has been an absolutely breathtaking rally for gold throughout the year. Gold, this is the trend line for gold since 1975. And you can see there the trend line sort of moving sort of progressively up. But what we see there in those sort of turquoise lines are the standard deviations. The only other time we've broken out not one but two standard deviations was back in 1980, back in the great deal of panic and fear in the markets around hyperinflation, Paul Volcker, and the sort of oil crisis. We are not in a moment of crisis now, but we have gold really taking off, breaking through 4,500 a little bit earlier today. We're now just below that as we close the session today. That's it for opening trade. Is up next. This is Bloomberg.
Live from Paul Allen. A strong economy, the chance for lower interest rates next year, that's really an ideal scenario as they go into year end to keep the rally going. Plus, we've got this promise that there could easily be a couple of jumbo IPOs when we get into the first quarter of next year. We've still got OpenAI and SpaceX both moving towards what could be very significant new issues at very high multiples, and that's helping to keep people in a very good mood about US equities.
And how about the tech story? Can we see that rally continuing to roll on into 2026?
Well, that's very much related to the AI theme and towards these potential huge IPOs and the valuations which are currently being implied from the way that these companies are doing their refunding in the private market. These numbers are so incredible. That's helping to fuel even more demand for the existing tech stocks, because by comparison, even though the multiples still look pretty good at the moment, they're not as extreme as some of the numbers being suggested for people like OpenAI. So relative basis, they don't look so bad. So that's helping to keep everything going from that point of view. So yes, there's no particular reason, given those conditions, given the economic growth as well, and the hands-off approach from the US administration, all of that coming together looks pretty good for tech stocks.
And how about the picture for gold? Because it did briefly break through that $4,500 level, as I mentioned a moment ago. We're now back below that. Does this rally still have legs, or is the peak in?
Well, you've got a lovely situation here for precious metals, where on the one side the US dollar is weaker, which is always good for the metals space. You've got a prospect of lower interest rates in the United States. Those two together are exactly what you need as a precious metals investor. Plus, you've got the uncertainty around things like Venezuela, the US, the friction there between US administration and what they're doing with Venezuela. That's pretty worrying. People would want to hedge by using gold. Plus, Ukraine, Russia, still unresolved. No truce there going in that direction. So all of these things together give you reasons to use gold as a hedge against geopolitics. Plus, you've got dollar and the rate situation moving in your favor as well. It's, again, a very good scenario for people that like the precious metals space.
All right, Bloomberg MLive strategist Mark Cranfield there. Just got some breaking news for you about BP. Wall Street Journal is reporting that BP is nearing the sale of a majority stake in its Castrol lubricants business. This is according to people familiar with the matter. That sale would be to the investment firm Stonepeak. It would value the entire division at $10 billion. That includes debt as well. So the details as we know them so far. Under that deal, BP would be set to receive about $6 billion in proceeds from the sale of a 65% stake of that business to Stonepeak. So we'll get you more details on that as we get them. That reporting from the Wall Street Journal. Well, let's get a little bit more on markets now with Polka Mishra, partner at Javelin Wealth Management. Polka, as we head into the final trading days of the year, we're seeing that rally on the S&P and other markets as well, just continuing to roll on. Do you see this rally extending into the new year, and what's your price target for the S&P next year?
Yes, Paul. We don't particularly put price targets as such. We're very long-term investors, but we expect the momentum to roll through into 2026. We don't expect it to be very different from how 2025 went. There's a lot more upside in the equities space, as we just spoke about it, gold, etc. Everything should be fine, at least for the first half of the year. We do expect the year to remain volatile, as was 2025, because there's so much news, geopolitics, so many events to happen, and then we have the US midterms, which will induce some more volatility in the market. So we're fairly positive, at least till the first half of the year 2026.
Well, as Mark was outlining there's a couple of giant IPOs coming as well. Still a fair bit of enthusiasm about the AI trade also. But where do you stand on the is AI a bubble, is it not debate?
So I think it was 2 days back we were talking to one of the experts who said it's a bubble that you can't afford to be out of. So we think there's still leg in the rally. There is a lot of investment that is going in. It's not without risks. So it's a question of where you invest. Next year is going to be a bit harder to make your selections because the space is becoming a bit more dispersed with more players coming in. So whether it is US, whether it is China, whether it is chip makers. So it depends on your risk appetite, what you want to select, but it's very hard to sit out this space right now. So we remain bullish. We like still the large tech companies simply because they've got such big balance sheets that they can absorb the time that is needed for returns to come through. We also think that infrastructure plays are a much better value at this point. Power infrastructure is still a bottleneck, so you can look at that. Mark talked about some IPOs in US, but we are also seeing IPOs coming in Hong Kong. So there's a lot more development in China. We heard about the chip development. I think it was more threads yesterday. There's a lot more advancement there. So we continue to be bullish in the sector, cautiously bullish.
Yeah, so as you mentioned there, you do have an eye to the longer term. So with that in mind, is the AI infrastructure your favoured long-term allocation, or are there other sectors of the market that are unappreciated at the moment that you're looking at?
Within tech, of course, AI infrastructure is what we like. We like the chip manufacturing space as well, the whole semiconductor supply chain. But beyond that, I think apart from that, we do more geographic allocations rather than sector allocations. So it's more things like emerging markets, Asia, as opposed to sectors in these markets. China, of course, is more of an alpha play. India, we take it as a beta play.
Well, I want to talk to you a little bit more about your Asia allocations when we come back a bit later. But just playing into the broader theme in the rally that we're seeing, also helping underpin this is, of course, the expectation that we get a couple more rate cuts from the Fed next year. But then you look at something like the very strong third quarter GDP data that we just got, bearing in mind inflation still sticky in the US. Does this look like an economy that needs the support of rate cuts right now?
In all honesty, we did not think the economy needed the last rate cut as well. U.S. economy has been resilient. It's continued to be strong. The concern has been around the labor market. Now, we talked, Scott Bessent was mentioning that should U.S. base inflation rate be higher than the 2%, and that's coming into question now. We fundamentally don't think the economy needs the rate cuts, barring what needs to be done in the labor market. Now, the question around the labor market is a bit more complicated. Do the old tools work in today's world where job losses have started to happen because of AI productivity? So is it the Fed's job now, or something else needs to be done to address the weakening or softening labor market? But we are factoring 2 rate cuts more because it's not what probably should happen, but what we think will happen. We heard Donald Trump talking about selecting a Fed chair who will do rate cuts. So there's a question mark around how much pressure there will be on Fed. So we're factoring in those rate cuts because of that. And that actually flows into the biggest risk that we are concerned about, especially in the U.S., is if inflation picks up again. It's kind of reminding you of the Nixon scenario where you get pressured into cutting rates and then it's hard to control inflation after that.
Obviously, it has implications for the US dollar as well, and there's some conflicting opinions here. I mean, we have a chart on the Bloomberg terminal that suggests, the technicals suggest there could be some upside ahead for the US dollar, but a lot of the guests we speak to expect we're going to see some downside potentially into next year as well. So where do you stand on dollar outlook?
So for us, it's the same as the rest of your guests. We do expect dollar weakening to continue, gradual dollar weakening to continue. If you look at the other central banks, the rate cut cycle is over for most of them. A lot of them are looking to tighten the rates, whether it is going to be UK, Australia, maybe New Zealand. And Japan is already tightening. So we think dollar weakness will continue, and which is good for the Asian economies because there's less impact on the Asian currencies. Dollar strengthening changes a lot next year. If that happens, it's going to impact Asia a lot more than the U.S.
All right, Polka Mishra, partner at Javelin Wealth Management, is sticking around. We can talk a little bit about how those US dollar calls feature in terms of expectations for Asia and Asia emerging markets as well.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
Welcome back. You're watching Insight. The US is holding off on new Chinese chip tariffs until at least mid-2027. Now, that's despite accusing Beijing of engaging in unfair trade practices in the semiconductor sector. Let's bring in our China correspondent, Min Lo in Hong Kong. So, Min, tell us more about this investigation into Chinese chips. What does the US mean by unfair trade practices?
Yeah, this has been a long time in the making. This probe was started in the last few weeks of the former President Joe Biden's administration. It was a probe into legacy chips produced by China. So these are chips that are not necessarily used in AI, but they're used in many different industries, from medical devices to airplanes to autos to telecommunications. And the U.S. Trade Representative Office says that they have found that China has aggressively and sweepingly used non-market policies to create foreign dependence on its products in a way that was disadvantageous for U.S. commerce. And its decision is to impose no tariffs for the next 18 months, but starting from June of 2027, they will impose tariffs, and the rates will be announced at least a month before then. So this is a clear signal that President Trump is trying to stabilize relations with China and at least maintain that trade truce that was reached when the two presidents met in South Korea in October, but still leaving himself that opening 1.5 years down to have a bargaining chip when the time comes for U.S. and China to renegotiate the extension of this trade truce.
And how has China responded to this?
Oh, no surprise that China is not happy about that. We have the Chinese embassy in Washington saying that they are opposed to what it calls the abuse of tariffs, and that China will take all necessary measures to protect its legitimate rights and interests. But given that the U.S. is not imposing tariffs immediately, it is probably unlikely that China will retaliate in a significant way in the near term. But meanwhile, of course, the U.S. yesterday had announced a ban on drones as well, on foreign drones and drone parts. And China has responded to that, hitting back and calling on the U.S. to withdraw that particular new rule, and saying that, again, China will reserve the right to take actions to protect or safeguard the rights of Chinese companies, and is accusing the U.S. of bullying Chinese companies.
All right, Bloomberg's China correspondent Min Min Lo there. Let's get back now to Polka Mishra, who has stayed with us, partner at Javelin Wealth Management. Polka, I just want to pick up on what Min Min was saying there. There seems to be this uneasy détente between the US and China on trade. The US still accusing China of unfair trade practices, but no retaliation for now. How do you see the relationship between these two evolving next year?
Paul, this relationship has remained volatile for a while, and we don't see that changing. I think there's a little more practicality that's come in after the first round of tariffs and escalations. I think the U.S. administration has also recognized that China is not going to back down as easily, and both are extremely big trade partners. They have huge dependencies on each other. So there'll be elements of posturing and newsworthy items that will come through, but slowly we're seeing more and more both of them trying to figure out how they can work together while managing the politics on the side.
Now, we were talking a few minutes ago about how your expectation going forward is for dollar weakness, and going along with that, we're seeing some strength in the Chinese yuan at the moment. No panic on markets due to this, though. I'm wondering, what's your allocation to China at the moment, and considering the currency pair, what are you looking at here?
So, yes, we are allocated to China. With regards to the currency first, Paul, I think the fixings have been done in order to avoid any sort of large carry trade building. It is to prevent the traders from hoarding US dollars. So, and if you look at the numbers, it's around a 2.6% differential, and I think yuan strengthened around 3% last year. So I think that's going to continue to be managed. If rate cuts happen in US as they are anticipated next year, we'll see lesser strengthening in yuan, so it'll be a bit range bound next year. From our allocation in China perspective, that's why currency is not as big a consideration for us. On the equities side, we overall like the broad China market per se. We're concerned about the domestic situation. So the sectors, of course, tech, advanced industrials. We still think allocations to EV, despite price pressure, is logical. For very long-term investors who have the patient capital, I think having some allocation to the consumer space for that big upside that can come through in later, probably not next year, later next year or the year after, that's a pocket that is really undervalued right now for the right reasons, but with the effort that the Chinese government is looking to potent in driving consumption that can benefit in slightly later future.
Yeah, that's an interesting call, the consumer space, because, as you rightly point out, it's very beaten up right now because the prospects for consumers so closely tied to the property market, which has been circling the drain for so long now. Does your optimism about consumer discretionary translate at all about optimism that this property crisis eventually gets sorted out?
No, unfortunately, we don't see an end to that. We haven't seen any clear effort being made to resolve that, and whatever efforts have been made are limited, and they've not had any significant impact. On the consumer side, though, we've seen some genuine effort coming from the administration, whether it is funding the state governments, subsidies, etc. So that's where we feel that there is value to unlock. If you look at it, the savings rates of Chinese consumers is very, very high. So there is potential to unlock. And in the meeting, I think earlier this year, they finally emphasized on driving consumption as the priority for next year. The reason why we've gone back into China is that in the last year and a half, what we've seen is that the policy making has been more deliberate, and we've seen follow through on those policies. So when the government says that, okay, now driving consumption has become a priority, we expect concrete steps to be taken on that, and that's where the unlocking of that large Chinese consumer can come through, and the savings can come into the market and propel the economy further. But valuations are still attractive either ways.
Well, one of the other big markets that you like in Asia is India as well, but it's seen billions in foreign capital outflows accelerating in the final quarter of the year. Is a good buying opportunity, though, considering the growth story longer term?
Yes, we think so. We like the fundamental story of India. So when you're doing your portfolio allocation, you have to have different stories there. So Japan and Korea for us are the reform turnaround stories. China is a recovery story as well as a AI play. And India is the long-term fundamental, strong fiscal positioning, steady policy making. It's lost out on the rally this year because the rally was a little more driven by AI space, where, of course, India does not have the leadership. It's got some of its own problems, but where it is in its development cycle, it has a role to play in the portfolio. So we've allocated separately both to India, China, and we have Japan as well in our portfolios, Paul.
Well, it's been a very calm year for Indian markets, and that's us being polite. What needs to happen to put a catalyst under equities?
One, of course, from an investor allocation perspective, especially foreign money coming in, there needs to be a resolution to the tariff situation with the U.S. There were instances where we figured that there will be some resolution, but it's not happened yet. And for foreign investors, that's a key taking point, and that's why you've seen a lot more outflows. India is still part of that emerging market allocation or Asia allocation in portfolios, so that money goes out from India and goes to China. So that's number one. From a more fundamental perspective, the growth is still driven by government spending. We are still not seeing private investments coming through. So those reforms need to come through for that growth story to develop.
Okay. All right, Polka Mishra, we're out of time, unfortunately. Thanks for joining us. Polka is partner at Javelin Wealth Management. Now, we've got some live pictures for you out of India. In fact, you're seeing Sriharikota, where we are expecting the Indian Space Research Organisation, ISRO, to launch the AST Space Mobile Satellite to low Earth orbit. We're waiting on that launch. We'll bring you the pictures when we get them. This is Bloomberg. Welcome back. You're watching Insight. Ford Motor recently announced that it's dialing back its electric vehicle ambitions, but it's not stepping away from the energy transition. Instead, the automaker is betting big on a new business line, producing batteries for energy storage. Now, the move leverages Ford's partnership with China's CATL, aiming to build larger-scale batteries designed for stationary storage. So, we'd be thinking power grids and data centers here. And this is part of a broader trend in North America where battery makers are shifting focus away from EVs and towards applications that keep critical infrastructure running. Focusing on CATL, its technology powered 1 in 3 cars sold this year. This is according to data from South Korea-based SNE Research. But as growth slows in China, CATL is now looking abroad to boost its business. That, however, could face some big roadblocks. Bloomberg's Asia transport reporter Linda Liu joins us now for more on today's Big Take. So, Linda, tell us more about CATL's plans here and what's at stake.
So CATL is really pushing into the European market. It's built 2 factories in Germany and Hungary, and now it's building the 3rd one in Spain, and that's in partnership with Stellantis. So you can see that they're investing heavily into localizing production in Europe, where it's going to be a big market for EVs. But similarly, it's facing an uneven demand for electric cars because the continent has really scaled back its goal to phase out combustion engine vehicles in the near future. And you're also seeing the support for EV purchase incentives kind of being pulled back. So demand is one factor. The other challenge is also the lower efficiencies and higher costs of producing batteries in Europe. That's led to some customers in Europe actually asking CATL to still supply them with batteries that's made in China. So CATL really has a balancing act on its hands.
Yeah, what is CATL's approach to Europe at the moment, considering the obvious risks that you just described with localizing production there?
Yes, so much investments have gone into these factories in Europe. In fact, CATL did a blockbuster share sale this year, raising some $5 billion to really fund this expansion. And really, with so much investments on the line, it's hard to tell the time that's going to take to pay off these initial capital outlays. Because, as we've said, demand is uneven and the production ramp-up is going to take some time as CATL needs to iron out these production issues that it's experiencing in Europe compared to its home market, where it's really kind of perfected battery production through its decades of experience. So that's something we're going to keep a close watch on, how CATL can really overcome these maybe efficiency and cost challenges for Europe and eventually kind of secure the orders that's going to help it gain a foothold in the European markets.
All right, Bloomberg's Asia transport reporter Linda Liu there in Hong Kong. Now, we spoke to CATL earlier, and the company told Bloomberg that it was making overseas expansions its top priority amid intense domestic competition. Its chief manufacturing officer, Ni Jun, spoke with Stephen Engel at the World Economic Forum in Tianjin earlier this year.
Irrational competition, I will call. Everyone, the industry-wide and the government knew this is a problem, this is unhealthy, this will destroy the industry. So there's a lot of a sentiment to come up with a regulation, a policy to prohibit this kind of price war. Mm-hmm. And as a result, that also forced everybody to dig in. Can you further improve your internal efficiency and so maintain reasonable business margin to survive, to continue innovate? So as for that part, I expect they will.
How are you doing that? How are you improving your efficiencies?
We are trying to do everything, improve the production utilization.
How is AI employed?
AI has been used. Actually, CATL has been embracing the AI revolution maybe 7-8 years ago. At that time, it already started from simple repetitive task and manual work. They try to use AI to capture, to do more efficient work. And now we not only using AI to screen the material, because of different material, different chemistry, and also different design, and also during the stage of manufacturing, and also after the sales. So AI has been utilized to improve, make sure the process is stable, is under control.
Over the next 5 to 10 years, what would your ideal next generation super battery factory look like?
Well, I would say in the next 5 years, ideally, let's take on all the trade barrier, all the consideration. Ideally, it should be green, number one, because we want to save our planet. The factory, we actually already do extensive improvement. We reduce our energy consumption, reduce any of the emission, and recirculate any of the waste material will be recirculated into our production. That is the number one. Number two, it should be smart so that any human labor-intensive, dangerous task should be taken care by machines, by robots, by computers. So that's what we are saying. Also should be reconfigurable, because when you put up production, this is a capital-intensive facility. Yeah. When you put that production line, you don't want to see, after a year, the product, the end product, our customers' vehicle don't sell well. They say, we would like to switch that to a different vehicle. Right. Can you quickly, flexibly adjust, adapt to the new product? So that's our effort. We try to make it as user-friendly as possible.
How do you avoid the pitfalls of overcapacity that has affected the solar industry right now? Mm-hmm. And a lot of people in the industry are fearing that maybe there's going to be a battery overcapacity in the coming years. How do you feel about that?
Well, we don't look at that. We believe when the global community going to green, sustainable world, and there's a research, the demand is drastically increasing. The key is a high-quality battery. Of course, you can. If you don't put a high standard, you can put a cheap battery. That capacity maybe is plentiful, but the consumer and our basically world-class OEMs in car industry, in energy company, they demand a high-quality, safe, and a long-life battery. For that, there's a shortage. Otherwise, we will not go to many parts of the world to make those high-quality batteries.
Would you say going overseas now because of the high
demand?
That's well, right. There's obviously, I wouldn't say the market is saturated in China yet, but there's a price war, obviously, which is brutal. Mm-hmm. Would you say, though, that your number one priority is kind of figuring out the international expansion?
That's right.
The best, I guess, algorithm for making it work. Mm-hmm. Is that your number one priority?
Yes.
That's CATL's Chief Manufacturing Officer Ni Jun speaking exclusively with Bloomberg's Stephen Engel back in June. So will 2026 be the year that the electric vehicle officially takes over our driveways? With automakers dropping prices, new battery tech hitting the mainstream, and a massive expansion of charging infrastructure, the industry is bracing for a tipping point. Let's get some more insights from our next guests. Bill Russo is founder and CEO at consulting and investment advisory firm Automobility, and Yun Mei is EV and lithium-ion battery analyst at China Great Wall Securities. Bill and Yun Mei, thank you so much for joining us today. And Bill, I'd like just to start with you to give us an overall sense of how you see the outlook for EV sales globally in 2026, particularly as we see some of the incentives starting to get scaled back.
Yes, thank you for having me. China is a very different. We see a very divergent paths here between China and the rest of the world. China is focusing on shifting from really a policy-led startup period to more of a market-led scaling period, and that's happened over time by making the electric vehicle affordable, de-risking consumer purchase consideration by making an even more affordable value proposition. And they've done that by scaling the critical technologies. EVs are, after all, battery powered. They're filled with electronics, and leveraging the supply chain that China has to scale those technologies has been its competitive advantage. Consumers now don't need to be convinced to buy an EV. More than 50% of the purchases of vehicles this year, passenger vehicles in China, are electric vehicles. There's no real concern over range or infrastructure. There's lots of investment that has been made in building infrastructure for charging electric vehicles. So it's moved into a more normalization period. And yes, it's a very hyper-competitive market, and it's a race to scale, and companies have to compete on price. The rest of the world is in a very different place, where consumers are still faced with EVs that are less affordable, and therefore the growth rates are much lower. But China is focusing on going global in a big way in order to recover the growth that they need to have in order to grow profitably.
Yeah, the affordability question is an interesting one, Bill. The price war in China, how has that reshaped expectations for affordability in the rest of the world? And do you see prices coming down in other markets?
Well, first of all, I think it's a race to scale in China, and that means you have to be able to survive the ability to scale the critical technologies. You either have to be able to build them yourself, as BYD does, or you need to access through supply chain partnerships companies like CATL, who have the ability to build large numbers of mostly lithium-ion battery configurations, which are the affordable alternative. And you have to be willing to sacrifice in a market like China, which has not grown over an 8-year period in the aggregate. The way that the EVs have scaled is at the expense of the combustion engine vehicles. And there's only a handful of companies that are able to do that and still make money. And that's going to be the consolidation criteria, your ability to scale the key technologies needed to differentiate your product from an affordability standpoint. And that's why China's ahead in the race. It has the ability to do that. And the rest of the world, lacking China, really does not have the equivalent of that supply chain.
Yun Mei, I want to bring you in here. Bill's talking there about the race to scale in China. I'm wondering, when you look at the EV landscape in China, what are you seeing in terms of the intensity of the competition? And do you anticipate any more consolidation?
Of course, we would like to see more consolidation, and at the same time, we also expect to see a K-shaped market in the coming 2026. As we all know, the financial incentives from the government for the EV will be not that much for the next year, and also that AI centers are fighting for electricity with EV. And nowadays we can heard news like the automakers, they are worried that the battery companies, they prefer to provide the battery, the LFP battery to the ESS much more than the power battery, because at this stage the ESS is more profitable. So next year I think it's a very different year for China's market. Unlike past 3 years when EV is still a big fancy things for Chinese people, and back then the penetration rate is under 50%, but nowadays the penetration rate is above 50%. So there's no reason for the government to continue their massive financial incentives project for that part. So just like you mentioned that the consolidation part might be some traditional factories will be bigger because they can keep their profitable ability, like the gross margin rate around 15%. And for the startups, which if they still could not make money in 2026, I think it's very hard for them. And I agree with that conclusion. The consolidation trend is continuing.
And Yun Mei, I know you also can see Tesla as being one of those companies responsible for helping fuel all this price competition in China. How do you see Tesla remaining competitive in the Chinese market?
I think nowadays there's huge advantages for Tesla this year. We can see slowly the market share for Tesla is increasing in China market for mainly 2 reasons. The first reason is that it creates some special model like Model YL, which is suitable for Chinese big family. It's bigger, but it's still Model Y, a very professional and traditional model in China. China. And so we comes for the second reason, that the safety reason. Though it's the intelligent driving is very popular in China, but nowadays the safety concern, so many accidents happens. Last year is a tragedy, so nowadays the consumers pay so much attention to the safety part, and that's why CATL got its popularity, because when consumer they want to buy a car nowadays, they are not like they were like 3 years ago. Nowadays the consumers will ask the sales, what is the battery in that car? So CATL is the best choice, and EVE and Goshen, and also the other famous brand. If the battery comes from Noel, the clients may feel very worried about that. So this is another reason that Tesla is getting better in China.
Bill, I want to get your view on Tesla as well, and how you see its strategy evolving in some of its key markets, particularly around pricing. And when might we see a compact EV, both becoming more widely available and affordable, not just from Tesla, but from some of its competitors as well?
Well, Tesla's performance in China, obviously they're faced with a much more hyper-competitive market here, right? They have a lot more competition here than they have anywhere else. And therefore, they have to keep up at the speed at which Chinese companies are able to, scale their supply chains, which is one of the reasons why they're here. They are working with CATL in using their LFP batteries for their more affordable product configurations. And it is a race to affordability. Tesla also has a technology value proposition. They're the pioneer in this space, and they're claiming a lead in self-driving technologies, although Chinese companies are very fast in their ability to test, validate, and deploy these technologies. Actually, one of the challenges that Tesla is facing is they don't have this entry-level price point covered, which gives exposure in the market to more affordable alternatives than Tesla. Tesla's price in China is above $30,000 US equivalent. There are Chinese brands that can sell at 1/3 that price, including companies like BYD. Xiaomi's very popular models are right on top of Tesla on price and are selling at a higher rate now. Xiaomi is one of the top-selling brands now in China. So I think Tesla's faced with a lot of competition, and I think Tesla's challenge is not only cost, but also speed. They've not launched a new model. Yes, they've refreshed and they've stretched the wheelbase on the Model Y, but they haven't launched a new model in China in 5 years. So I think that's going to be their biggest challenge. As Chinese companies go global, they're going to take very competitive products at very competitive prices and challenge Tesla directly in most of their core markets, perhaps outside of the United States.
Bill, you mentioned Xiaomi there, and it's an interesting story in terms of the EV context, because what is it telling us about trends around convergence and transport to consumer electronics and software as well?
It says in China, where virtually every person is a smart device user, more than 1 billion people use smart devices in China. The ability to integrate a car that has the intelligent connectivity features that a ubiquitously connected market expects in a technology product. In fact, if you're going to climb above the commodity hardware, you need to differentiate your product as an EV in technology. And the most obvious way to do that is with a user interface that's software defined, that allows a consumer to be connected during their mobility lifestyle. And Chinese brands really are very good at that. And that's how they're getting the margin. The companies like Xiaomi, shown here, are delivering a product that rivals a smartphone with its richness in software features that really complements the connected lifestyle that they have. And they are able to compete at a much higher price point because they have a technology value proposition. If you're going to compete at a higher margin, at a higher price point, you need to have a technology point of differentiation. And Xiaomi has that.
Ewan May, we've just got a couple of minutes left, but I'd like to get your analysis of where we stand in terms of battery and lithium-ion battery as well. We were talking a little bit earlier about CATL. I mean, it's pursuing construction of factories in Europe, also battery swap technology. What's your opinion of some of these strategies that CATL is pursuing here?
I think it's very clear that CATL valued the most profitable market in the world, like in Europe. The German factory went very well. The gross margin there is around 30%, much higher than its gross margin in China. So nowadays, not only the energy storage part needed the battery, also the European automakers, they needed the power battery. Even though the EU, they changed their 2035 target recently, I think they will keep the transformation part, and they still need power batteries with reliable and massive production, and I think CATL can be their good partners.
What are the main roadblocks that CATL is going to face in their global ambitions? Is perhaps US tariffs one of them?
Of course, the tariff is a huge problem, but luckily we see Ford, it's the second time Ford tried to work with CATL, and hopefully this time the problem will be solved. And nowadays it's very unstable to say what the president will decide to do next for the American part. We're waiting for more good news, actually, and we will try, because it's good news that Ford tried to negotiate with CATL years ago, so we already have a master plan. And today, the ESS plan will be based on the premier plan, so it will be
Yeah, we're out of time, unfortunately, but Yu Mei of China Great Wall Securities and Bill Russo of Automobility, thank you both for joining us today. We have more ahead. This is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast? Iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
Yes, I think that 2026 is the time that we're going to see very different paths. It won't be the one that we have seen in the past 3 years.
The House is up for grabs, the whole thing. I think there's going to be a lot of chaos and commotion around new candidates, current candidates. That's going to create some short-term kind of angst in the market. So I suspect, again, that we're going to see the market pull back in the first half of the year. And that's going to lead me to want to be more cautious.
The amplitude is getting greater and greater, which suggests that if we do have a correction, that correction might be potentially larger than we might expect. So I would not
be complacent about volatility going into 2026?
Equities, especially the Asian markets, including China tech, is our most and I would say most attractive and highest conviction call.
Well, I remain quite positive still on the Chinese equities because they are actually the least exposed to the U.S. AI tech, and they are having very different drivers for the equity market.
You might want to look beyond AI as a structural theme. There is the financial themes as well. With deregulation, we don't talk about it enough, but we do think that it's going to be quite critical.
AI has stalled out in the last couple of days. So I think you all have to have in a portfolio different ideas. And so I am a believer that the financials, they've had a great year, but I think it's only getting started.
Welcome back. You're still watching Insight, and those were some of our guests sharing their investment outlook for 2026. Well, let's take a look at how we're doing in the final days of 2025. We've already closed here in Australia. The ASX having an early session, back again on Monday now. The rest of the major markets are having a very quiet Christmas Eve. The Nikkei looking pretty flat at the moment, as is the Kospi. We've got the Indian rupee still floating just below that 90 rupee to the dollar level. Gold, once again, the story of the hour, though. It did briefly cross the $4,500 an ounce level, now just hovering below that. Silver has had an absolutely phenomenal year, better by well over 100% over year to date. Right now, $72.29 an ounce. And some of the action that we've seen here today also been helped along by a very strong third quarter GDP print out of the US, handily beating expectations. And President Trump is crediting his tariff policy for those better than expected US GDP numbers for the third quarter. In a Truth Social post, he said the US economy, in his own words, will only get better. Now, when Donald Trump rolled out global tariffs back in April, economists braced for the worst. Since then, a lot has happened, but the sky has yet to fall. So were the experts wrong, or is it just too early to tell? Our team at Bloomberg Intelligence takes a closer look.
Credit where credit's due, President Trump made a big bet that the US had a magnetic appeal, and that would enable him to get a better deal from US trade partners and companies that want to do business in the United States. On the evidence of the last few months, that bet is playing out pretty nicely. Economists don't agree on much. One thing they do agree on is that free trade is good and that tariffs are bad. For a moment, Trump escalated US tariffs on China all the way to 125%. If you plugged the US tariffs into a model of the global economy, what it said was that there was going to be a really significant drag on growth, and there was also going to be a significant upward impulse to prices. But when we look at what's happened to inflation over the summer, it's not come down, but it's not come up either. Why is that? It's because US importers and foreign exporters saw the Trump tariffs coming, and they rushed to front load shipping to the United States before the tariffs could come into force. One thing that's happened is that we've gone from a lot of unexpected bad news concentrated on a single day to a series of country-by-country deals. They're something of a Swiss cheese of exemptions and carve-outs. The trade war is a drag, but it's not the only thing which is happening. We've got tax cuts with Trump's one big beautiful bill, and we've got a bonfire of regulations which is stoking the animal spirits of US businesses. We've also got the artificial intelligence boom and a huge amount of investment going into data centers. Tariffs are having an effect. China's exports to the United States are way down relative to the historical trend. So, who pays for the cost of tariffs? Despite his well-known love of gold, the president is not an alchemist. He can't make something from nothing. That money has to come from somewhere. All of the evidence so far suggests that in the end, the bulk of it is going to come from US businesses and US households.
And if you want to watch the full version of that report from Bloomberg Originals, you can go to their YouTube channel. It's also available on the terminal and on Bloomberg.com. Well, tech and commodities are fueling a Santa Claus rally as the trading year winds down. Stock futures, though, have started to go quiet. Let's bring in senior Asia equities reporter Abhishek Vishnoi. So, Abhishek, why is everything rallying, and what propelled gold above $4,500 an ounce, and what's that going to mean for the dollar and stocks?
Yeah, I mean, it's a bit of a seasonal cheer into the year end that's helping, assets across the board. Mostly commodities today. Gold has rallied, like I said, above $4,500. We've seen platinum hitting a new record. That optimism is also going in the direction of what it means for the dollar, which means a weaker dollar, and therefore some of the equity markets enjoyed a pretty nice first half of current session. The gains have sort of petering out right now, and that's largely because there has been a little bit of FX intervention in some markets, and that sort of signaling might be positive for the short term, but for the longer term it isn't, and flows become fragile. So we are seeing a little bit of profit taking on that trigger in some of those markets, and that's why US futures have also trickled down a little bit. But there is a lot of optimism because markets had shrugged off the weak GDP print that had come in from the US, and US has is planning to hold off on any sort of chip tariff on China, so that's also a bit of positive that we are seeing in today's session.
So we've seen a bit of currency intervention from some Asian central banks, including Japan and Korea. What's this implying for risk assets?
Well, it's a short-term support right now, but as you can see in the equity markets, it becomes a signaling mechanism for the medium to long term as well, and therefore we are seeing some positions being paired, some concerns about policy tightening risk, and how it may play out in this in terms of equities, especially. There might be divergence between local-oriented stocks, let's say like banks, versus exporters. So all in all, it works out in the short term, but flows become fickle when intervention happens too fast, too soon, or a lot of time. So it all depends on how investors sort of perceive this in terms of credibility or credible action from central banks. So far, it looks like they have not made up their mind in terms of whether this is credible enough and well needed, and therefore we are seeing a little bit of profit taking happening in some of those markets.
All right, senior Asia equities reporter Abhishek Vishnoi there. Well, let's get some more market insights now with Ekaterina Bigos, CIO of Asia ex-Japan Core Investment at AXA Investment Managers. Ekaterina, thanks so much for joining us today. And I just would like to start, if we can, with your view on what the next moves are going to be for the Fed in 2026, because we've got a few competing forces here as usual. Really strong GDP numbers, a question mark over jobs, sticky inflation, and also lingering questions over Fed independence. So when's the next live meeting, or could we be kept waiting a while?
Well, I think it's fair to say we're starting 2026 with, I would say, easier financial conditions. And if you look at the last meeting, Jerome Powell certainly has signaled that they're somewhere around the high end of the range of neutral. I guess neutral is when the economy is not too hot, not too cold. So again, that signal acted in some way as a fairly dovish or constructive view to say that we're on a path to have that dovish bias, so we'll act based on the data, but it hasn't acted too hawkishly. So I think, as you said earlier, we have to look at the data. So ultimately, the move will be very much aligned, or at least considering what is happening with the job market, what is happening with growth, and certainly what is with inflation. We're coming in 2026 with a fairly resilient, as you say, growth trajectory. Inflation that actually surprised on the downside, away from kind of the potential volatility or impact from tariffs. I think Fed seems or deems the inflation to be transitory, and I think when you look at the job market, I think this is where the biggest concern is. The data has been quite conflicting of where the job market is in the U.S., and it's fair to say that the Fed is certainly going to pay a lot more attention of what's happening in that space and support the job market if it needs to be.
Well, there is a little bit of consensus from the market on this. There is an expectation we'll get 2 cuts in 2026. There is also an expectation we're going to see a weaker US dollar as well. So with that in mind, how appealing does emerging Asia look to you at the moment?
Well, I think that for the emerging Asia, obviously a weaker dollar certainly will be positive. But I think and the Fed obviously being dovish or dovish right gives the central banks in Asia probably a little bit more room. But I would say there are internal dynamics within Asia that certainly needs to be taken into account how much they can move right in the monetary policy, everywhere from India, Korea. There are obviously home dynamics that restrict that maneuvering. So Fed doesn't matter so much now in 2026. I think it matters in 2025. 26 is going to be a lot more about home dynamics. And then when it comes to drivers of growth, certainly the AI cycle has supported, I would say, if you call them North Asia, so if you look at Taiwan, Korea, Japan as well, has supported certainly the growth trajectory. But if you take away the AI, it hasn't been a strong recovery in growth. The consumption has been a little bit more subdued, and certainly a lot of focus will be rewiring back and getting that consumer back to support the growth in 2025. So certainly a realignment of the growth drivers will be critical for Asian economies in 2026.
Yeah, in terms of the AI story around North Asia, I mean, the Kospi's just had an absolutely banner year and really being driven by those 2 big tech names, Samsung and SK Hynix. Do you see this trend continuing into 2026, or do you smell a little bit of a whiff of bubble risk around AI?
Look, and we stay constructive on AI. Obviously, the AI is a theme that is going to stay with us. I mean, just the question that I would ask is, like, can you imagine from here onwards the world without AI? AI is everywhere in some degree. Again, it hasn't. The biggest question for investor is not whatever the AI is saying. The question is, how do companies that deploy significant amount of capital into the AI are looking to monetize, and how they're monetizing that capex expenditure that they put in place. And I think that's where the amount of volatility and uncertainty is going to be in 2026, understanding, calibrating that trajectory of monetization. And with regards to the deployment of capital into that capital expansion and driving the AI story, it's going to stay, I would say, present, again, potentially with some adjustments. So certainly the story of AI is here to stay. Whatever we're going to see a re-rating of the same magnitude, the valuations are fairly stretched in companies that you mentioned. So again, we need to pay attention to a combination of a structural driver of growth, which is AI, and certainly where the valuations stand for some of those companies.
In terms of AI, what are you looking at in terms of China allocation, where the story heads there in the coming year?
For China, obviously, with the DeepSeek, China is driving its own narrative around the AI. And obviously, the DeepSeek is an open source model. The different market participants in China have adopted the model a lot more aggressively than I would say what is done in the US. So the pace of that adoption is faster because, again, it's an open-end model. And I would say, by and large, it's still very much going to stay a China story when it comes to China AI development. And the ramifications for China is certainly their own companies that are going to benefit from adopting AI, increasing productivity, but also their own supply chain, which China increasingly is leaning on, creating that self-sufficiency when it comes to that technological advancement.
Do you see AI potentially replacing property as a driver of China's economy?
That is not, I mean, property was a significant driver of GDP growth for China. We've done actually analysis and we look at the broader kind of tech over the last couple of years. Again, AI is not just the entire tech, but again, it's hard to break down now and separate them. It only contributed about 0.6% of GDP. So again, it's still not a significant driver of growth. It's creating a lot of excitement. It's creating a lot of potential. But don't forget that the equity markets in China has been very, again, the rally has been very narrow. The growth drivers are still very much are the ones that have been historically. So China has leaned a lot more this year on the exports, which is a bigger contributor to growth. They are increasingly still leaning on investment. They're moving away from low-end investment to a lot of, I would say, advanced manufacturing type of investment, tech innovation. So certainly they're shifting the gear, but they're still leaning on the same drivers of growth they've done historically. The key for China, of course, is as we go into 2026, is that they need to drive a larger part of the economic growth from inward demand. So again, China consuming more of what it produces is going to be critical for 2026, but also beyond. So again, a structural shift away from kind of being the engine of production and manufacturing to consuming a lot more what they're producing.
I'm wondering if you can give us your sense of some of the currency movements we've seen as well, because we were talking a moment ago about dollar weakness as being a theme heading into next year, but you can't just make that as a blanket statement, because we're also seeing yen weakness. We're seeing weakness in the Korean won as well, and just today, we've had a joint text message from the Bank of Korea and the Ministry of Finance moving to support the won, and we're seeing some dramatic moves in that currency now. So what's your outlook for some of these Asian currencies that are looking a little on the weak side, and what's fair value for the yen and the won?
Look, I think it's one point that, again, I'm not a FX strategist to break it down, but I'll just give you a little bit of insight into what are the dynamics that are happening in Japan and has led to, I would say, decoupling of the actions of BOJ to what the currency should have done, right? And again, it's been a big surprise on Friday when the BOJ has increased rates. We actually have seen a yen weakening. And some of the narratives around it is that a large part of the investors, whatever that's institutional or retail in Japan, they're still leaning to global for deployment of capital. You look at pension funds, they're still buying a lot of the foreign bonds, particularly U.S. bonds. And if you look at the retail, a large portion of retail investors are still investing globally rather than investing onshore at home. Then there's, of course, the foreign investors have allocated into Japan, but they've hedged the currency risk, and which acts as a carry. So again, they have different confluent factors that has led to that weakness. But I think if you look in 2026, what is important for Japan as well is to shift a little bit, have a strategic rise and desire for, let's say, some of that flow to stay back home. Again, create a little bit more security around the growth drivers, not coming just out of the engine of exports, but also being a lot more home drivers. So nourishing some of the driving forces of growth that are home built, that the investors stay a lot more home than abroad. Again, that's a part that is going to drive some of the strength of the currency. And certainly the monetary policy will have an element of it as well. And again, the view is that Bank of Japan will move in 2026. Again, the view diverges to the timing and when, accounting for still kind of fragile growth, if I might say, for Japan that need to account for.
Well, Katerina, as the year winds down, we are seeing pretty much in everything rally. Equities higher, precious metals higher, even oil after having a rough year catching a bid. But when you look at risks in the market, is there anything that worries you, and are there any pockets of overvaluation?
Look, I think for us, and I take a slightly different angle in terms of the risks. We know kind of the macroeconomic things. Everybody's looking at policy. Everybody's looking at inflation and so on and so forth. But in terms of, I would say, if I had to give a helicopter view in terms of what the risks for the key markets that we discussed, I would say for the U.S., the biggest opportunity and the biggest risk is reindustrialization of U.S. What does it mean? U.S. is aiming to produce a lot more than it consumes. So steadily becoming a lot bigger force in manufacturing will be a key opportunity for U.S. over longer term and certainly in 2026. And we've seen already emergence of that reindustrialization through the AI CapEx cycle expenditure, right? So, and I think this is key to observe as we look in 2026. So certainly failure for U.S. to take a lot more of that manufacturing home certainly will be a risk. In Japan, I talked about, again, a strategic rise of Japan and increasing strategic autonomy. again, the sensitivities around energy sufficiency for Japan and creating a much more domestic economy. And when it comes to Europe, we need to look at places like addressing competitiveness. So again, Europe has a lot of opportunity, but we'll have to look at some of the kind of the risks as well.
All right, Katerina Bigos of AXA Investment Managers, thanks so much for joining us today. Still to come, Wall Street giant Jane Street said to have hired lobbyists as regulators in India close in on a high-stakes investigation. This is Bloomberg.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
All right, Bloomberg has learned Jane Street is hiring lobbyists for the first time in 20 years. Sources say top executives have also been meeting with lawmakers to explain their business. Bloomberg Asia Equities editor CJ Chakraborty joins us now. So, CJ, why the lobbyists? Why the sudden need?
Well, at this point of time, Paul, it seems that Jane Street is actively talking to lawmakers across Washington to make them familiar with what the company does, what it trades in, how it has been raking in record trading revenue throughout the past 2 years now, and also talk about the ongoing probe in India. They want to familiarize U.S. lawmakers about what has taken place in India following the local regulators' bombshell order back in July, interim order back in July, which raised allegations of market manipulation against the U.S. proprietary trading firm. And that has largely been the objective of many of these meetings.
So tell us more about how that probe in India is progressing, what it's about, and how hiring U.S. lobbyists could potentially help.
Well, Paul, Bloomberg, through his reporting, has learned that that probe is broadly edging closer to wrapping up, with the regulator also investigating an additional strategy that was not part of its interim order back in July that they feel could be manipulative. The strategy is popularly known among traders as a short straddle, which involves the selling of put and call options at the same strike price of an index. And there, the regulators allege that Jane Street's activities in the cash market particularly were so large and having such a big impact on the prices that they manipulated, allegedly, the index to close in its favor and therefore reaping rewards through a strategy.
All right, Bloomberg Asia Equities editor CJ Chakraborty there. Thanks for joining us. Let's take a look at how Asia benchmarks are tracking. We've already got Australia closed, heading off early for the Christmas break. Elsewhere, it's pretty quiet, really. The MSCI Asia Pacific better by 1/5%, but the Nikkei pretty much flat right now, as is the Kospi, as you might expect on Christmas Eve. A lot of the action, though, we're seeing is happening in the currency space, particularly the Korean won. Some of the biggest moves we've seen for quite some time. The won strengthening after authorities said excessive weakness in the currency isn't desirable, and foreign exchange markets will soon see the government's strong determination. And adding weight to that, the message came via joint text message from the Ministry of Finance and the Bank of Korea. All right, still to come. Vietnam's Communist Party preparing for a major leadership decision in a move that could reshape the country's political structure and its reform agenda. That story up next. This is Bloomberg. Welcome back. You're watching Insights. Here are some of the stories we're watching. Nearly half a dozen tankers laden with crude have departed from Venezuela's coast despite increased pressure from the US. Data from maritime intelligence firm Kepler shows that most of the tankers are heading to Washington, and at least half of them are chartered by Chevron. Now, this comes as the Trump administration intensifies efforts to curb Venezuela's oil revenue by targeting sanctioned vessels. The US Supreme Court has refused to let President Trump deploy National Guard troops in Chicago. A majority of judges ruled that the administration failed to identify a source of authority that would allow the military to execute the laws. The move is a setback to Trump's drive to use the military in cities across the country, including New Orleans, where authorities have just deployed 350 troops. Myanmar's ruling military junta is pressing ahead with elections this Sunday. It's first since seizing power in a 2021 coup. The army hopes the ballot will restore legitimacy after clawing back some territory from rebels. Observers, though, call the vote a sham, with the military-controlled ballot expected to favour the junta-aligned Union Solidarity and Development Party. Well, Bloomberg has learned Vietnam's Communist Party will nominate General Secretary To Lam to stay in the top job, and that would pave the way for him to push on with a reform program. Vietnam Bureau Chief Francesca Stevens joins us now from Hanoi. So, Francesca, what's happening with the party leadership?
Yeah, that's right, Paul. The big twice-a-decade Communist Party Congress gets underway next month here in Hanoi, which is where the nation's senior leadership will be elected for the next 5 years. And ahead of that, the party's top decision-making body, the Central Committee, has been meeting to decide on the candidates to nominate for it. Now, this is a secret closed-door meeting, but sources told us that the current party chief, To Lam, secured enough backing to get the nomination for the top job. What we also understand is that for the first time in the modern era, party chief will also be put forward for the presidency. Now, this would be a rare and significant move that would concentrate both positions in the hands of one leader and would be a sign of Lam's increasing grip on power. Now, this still needs to secure support at the Congress in January, and for the presidency, this also needs parliamentary approval. But what it shows is that at this stage...
Okay guys, ये natural gas में selling में profit book कर लेना. Buying यहाँ से expected है थोड़ी बहुत. पता नहीं वॉल्यूम आएगा नहीं आएगा बिकॉज यूएस मार्केट थोड़ा जल्दी क्लोज जाएगा 10:30 के अराउंड, ऑलमोस्ट आप कह सकते हो इंडियन मार्केट के आसपास. तो एक बाइंग यहाँ से सेम लेवल से, ठीक है. बाकी सेलिंग में बुक कर लेना. प्रॉफिट अच्छा मूव मिल गया, ऑलमोस्ट 20 पॉइंट इज 18 पॉइंट इज देयर. थोड़ा सा नीचे आता है तो फिर से यहाँ पर एक बाइंग इनिशिएट कर सकते हैं नेचुरल गैस में. परफेक्ट लेवल. बाकी क्रूड ऑयल एज यूजुअल साइडवेज है. पहले ही बताया था रीजन यही है, रेजिस्टेंस बना हुआ है, ब्रेक नहीं हुआ अभी भी, एंड ये नाउ दिस लेवल इज एक्ट लाइक एज सपोर्ट. तो ये रेंज के अंदर फंस गया. नीचे भी आता है तो बहुत ज़्यादा नीचे एक्सपेक्ट नहीं है अब, जब तक ये ब्लू कलर की लाइन के नीचे क्लोज नहीं करता. इसके नीचे क्लोज करता है तब थोड़ा सा बड़ा टारगेट मिलेगा, अदरवाइज या तो इसी रेंज में रहना चाहिए फिर, या एक साइड एसएल हिट करेगा अप साइड या डाउन साइड इस लेवल के बीच में कहीं, तभी मूवमेंट बड़े हो सकते हैं. अदरवाइज इट इज़ साइडवेज इन अ रेंज बिटवीन सपोर्ट एंड रेजिस्टेंस. रुके हुए हो तो क्वांटिटी थोड़ी कम रखना. लेट्स होप कुछ मूव करता है तो आज क्लोजिंग से पहले. बाकी कल तो मार्केट सारे क्लोज हैं, फिर सीधा मंडे को ही मिलेंगे, फ्राइडे को सॉरी. Through guys, don't forget to like the stream. Gold winner sideways here. Happy Christmas to all of you in advance. Happy Christmas 2025 and Happy New Year in advance. नेसेसरी रिस्क मत लेना, ठीक है। मार्केट थोड़ा सा वॉलेटाइल है एज यूजुअल, ईयर एंड पे थोड़ा वॉलेटाइल टू साइडवेज रहता ही है। 5 जनवरी के बाद थोड़ा सा एक्सपेक्ट करेंगे, वॉल्यूम नॉर्मल हो जाना चाहिए। में निकलना है तो निकल भी सकते हो, एग्जिट कर सकते हो पोजीशन को। अगर होल्ड कर रहे हो तो फिर ज़्यादा बड़ा एसएल मत लेना, छोटा सा एसएल रख लो, बिकॉज नीचे भी सपोर्ट है। कोई अगर बाई करके बैठा हुआ है वो भी अपना एसएल बना के रख लो, क्योंकि जब तक रेंज है प्राइस कहीं नहीं जाने वाला। अभी यूएस मार्केट ओपन होगा 8 बजे, फिर देखते हैं। डेटा भी आ गया ऑलरेडी अनएम्प्लॉयमेंट क्लेम्स का। अब सीधा बाय द वे इन्वेंट्री ऐसे आज शेड्यूल थी, आज इन्वेंट्री नहीं आने वाली है, ध्यान रखना। देयर इज नो इन्वेंट्री शेड्यूल फॉर टुडे। आज जो इन्वेंट्री थी वो अब सीधा मंडे को शिफ्ट हो गई है, 29 को। नेचुरल गैस और क्रूड ऑयल की एक साथ ही आएगी इन्वेंट्री इस वीक की। जो वीक चल रहा है इसकी इन्वेंट्री नेक्स्ट वीक मंडे को आएगी, और नेक्स्ट वीक की भी 31 को है इन्वेंट्री। बाकी 1 जनवरी को क्या बैंक हॉलीडे होता है ना? फर्स्ट जनवरी को भी मार्केट हॉलीडे ही है। तो आप कह लो नेक्स्ट वीक ऑलमोस्ट सारी छुट्टी ही छुट्टियां। 25 कल मार्केट हॉलीडे, 6 को मार्केट ओपन होगा, 27 28 सैटरडे संडे, 29 30 को मार्केट ओपन होगा, 31 को। फर्स्ट को अगेन हॉलीडे। वैसे फर्स्ट को इंडियन मार्केट तो ओपन रहेगा, बट फॉरेक्स में शायद वॉल्यूम ना रहे। वैसे एक रेजिस्टेंस था शायद, वो कल क्लोजिंग होते होते ब्रेकआउट कर दिया था मार्केट ने काफ़ी देर के बाद, 11 साढ़े 11 बजे के आसपास। यूएस मार्केट भी जल्दी क्लोज जाएगा आज, 8 बजे ओपन होगा इंडियन टाइम के अकॉर्डिंग। आई थिंक 10:30 पे क्लोज हो जाना चाहिए।
This is Tom Keene, inviting you to join me for the Bloomberg Surveillance Podcast. It's about making you smarter each and every business day. We bring you a recap of what happened overnight in Europe and Asia, the day's economic data, and complete coverage of the U.S. market open. We cover stocks, bonds, commodities, currencies, even crypto, all the information you need to excel. Bloomberg Surveillance also brings you the analysis behind the headlines. We do that with lengthy conversations with our expert guests, the smartest names in economics, finance, investment, and international relations. We do all this live each and every weekday, then bring you the best analysis in our daily podcast. Search for Bloomberg Surveillance on YouTube, Apple, Spotify, or anywhere else you listen. On the East Coast, listen at lunch, and on the West Coast when you wake up. That's the Bloomberg Surveillance Podcast with me, Tom Keene, along with Paul Sweeney and Lisa Mateo. Subscribe today wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm Karen Moscow. We begin with breaking economic news crossing the Bloomberg. Applications for U.S. unemployment benefits fell last week, highlighting the seasonal swings in the data at this time of year. Initial claims decreased by 10,000 to 214,000 in the week that ended December 20th. Continuing claims, a proxy for the number of people receiving benefits, rose to 1.92 million in the previous week. We got reaction with Stephanie Roth, chief economist at Wolfe Research.
The data looks solid. It's telling us the labor market remains fairly well contained. The layoffs are pretty minimal. There was a bounce back in continuing claims. We have to remember that there was volatility around the Thanksgiving holiday. The trend, it seems like, in continuing claims is it's actually starting to tick down over the past couple of weeks, which is a positive sign. Continuing claims are important to watch to gauge to what extent people who are currently unemployed are finding jobs, the job finding rate.
And that's Stephanie Roth at Wolfe Research. Futures remain little changed following this report, and the 10-year Treasury yield is at 4.16%. Sources tell Bloomberg Russia will seek key changes to the latest U.S. peace plan to end its war in Ukraine. They include more restrictions on Kyiv's military. The sources say Moscow regards the 20-point plan worked out between Ukraine and the U.S. as a starting point for further negotiations, as it lacks provisions important for Russia and fails to answer many questions. Russian President Vladimir Putin has not yet commented on the latest proposals for ending Europe's worst conflict since World War II. Meanwhile, Ukrainian President Volodymyr Zelensky is telling reporters that he would be willing to withdraw troops from the country's eastern industrial heartland if Russia also pulls back and the area becomes a demilitarized free economic zone monitored by international forces. The proposal, which would address one of the major obstacles to ending Russia's war, must also be put to a referendum. A federal judge said the Trump administration can move ahead with a $100,000 fee on new H-1B visa applications, providing a setback for U.S. technology companies that rely on hiring skilled foreign workers. Bloomberg's Jonathan Tamari tells us this may not be the final word.
It's obviously a big win for the president and his push to really curtail immigration, legal immigration and illegal immigration both. But the U.S. Chamber of Commerce still has a chance to appeal this. There are still lawsuits coming from some state attorneys general who say that this is going to affect services for healthcare, for education. So this fight is not over yet, but it's certainly a significant win for the president for now, and going to be a significant burden on these tech companies. You're going to see these H-1B visas go from a few $1,000s a piece to $100,000 a piece. And we'll see if they're willing to pay that to keep bringing in, high-skilled workers from overseas.
And that's Bloomberg's Jonathan Tamari. Meanwhile, President Trump has been handed a rare defeat in the Supreme Court. In a 6-3 decision, the justices refused to allow the president to deploy the National Guard in Chicago to assist with immigration enforcement. The Justice Department's rollout of its Jeffrey Epstein files has come with plenty of stops and starts that are fueling frustrations in Washington and beyond. Bloomberg's Laura Davison has more from the nation's capital.
Originally, the law said that all documents were supposed to be released by Friday. The Justice Department came out and said it wasn't going to meet that deadline. It released some on Friday, some over the weekend. There were some yesterday, but there's still thousands of more documents yet to come.
And that's Bloomberg's Laura Davison, who reports the Justice Department says it has a team of more than 200 attorneys reviewing the files as it tries to comply with the law. More documents are expected as we head into the holidays. In Southern California, torrential rain taking aim, causing potentially life-threatening flash flooding, especially in areas wildfires devastated earlier this year. In Altadena, some business owners who had been through flooding before are preparing for the worst, and here's one business owner there.
The mud does all the damage. Last time that we flooded out, we were 3 months digging out of the mud.
And California officials are urging holiday travelers to avoid the roads on Christmas Eve as well as Christmas Day. The rip-roaring rally in precious metals continues. Gold trading at an all-time high above $4,500 an ounce on escalating tensions in Venezuela and expectations for more Fed rate cuts. Mike McGlone is a senior commodities strategist at Bloomberg Intelligence.
History shows when you get this stretched and this much of a rally, you're supposed to be very careful adding to longs. A good example is the last time we got this stretch versus a 60-month moving average in silver was 1979 on the way up to 50. It ended 1979 at 32, and this year's low was 28.
And that's Bloomberg Intelligence senior commodities strategist Mike McGlone. And right now, COMEX gold is at $4,503 an ounce. Intel shares falling after a report said that NVIDIA halted a test to use Intel's production process to make advanced chips. Sanofi agreed to buy Dynavax Technologies for about $2.2 billion as it seeks to expand a vaccine business currently anchored by its flu shot franchise. BP agreed to sell a majority stake in its Castrol Lubricants division to U.S. investment firm Stonepeak Partners. And a Christmas Eve Powerball drawing could add new meaning to holiday cheer. Tonight's $1.7 billion prize comes after months without a jackpot winner. And again, futures are little change this morning. 10-year Treasury yield at 4.16%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Hello and welcome. This is the Michelle Hussein Show. I'm Michelle Hussein. I speak with people like Elon Musk.
I think I've done enough.
And Shonda Rhimes. That's so cute. This will be a place where every weekend you can count on one essential conversation to help make sense of the world. So please join me, listen and subscribe to the Michelle Hussein Show from Bloomberg Weekend, wherever you get your podcasts.
You certainly ask interesting questions.
I'm Barry Ritholtz, inviting you to join me for the Masters in Business podcast. Every week, we bring you fascinating conversations with the people who shape markets, investing, and business. CEOs, fund managers, billionaires, Nobel laureates, traders, analysts, economists, everybody that affects what's going on in the market. Whether you own stocks, bonds, real estate, commodities, crypto, you really need to hear these conversations. Sometimes it's behaviorists like Dick Thaler or Bob Schiller. Sometimes it's fund managers like Peter Lynch, Bill Miller, Ray Dalio. Sometimes it's authors, Michael Lewis, author of The Big Short and Moneyball. Regardless of the conversation, these are the folks that move markets each week. That's the Masters in Business podcast with me, Barry Ritholtz. Listen on Apple, Spotify, or wherever you get your podcasts.
Normally a slow news day. How big a deal is this then for BP and for Stonepeak?
Yeah, good morning. It's the centerpiece of BP's $20 billion divestment program. The company announced in February a strategic reset to move away from its failed low carbon bets and back to oil and gas. And part of that was divesting $20 billion of assets to improve the balance sheet and reverse years of underperformance in which the gap between BP and its competitors has widened.
And so does that mean that this Castrol sale, does it mean that BP can streamline its portfolio? Because this has been the area of focus from a particular activist investor who's had a huge amount of impact at BP.
Yeah, this does make some headway in BP's portfolio. Castrol, even though it has been in BP's portfolio this century since it acquired it 25 years ago, the asset was not as fully integrated as other parts of the business. And what that means is BP, while it's a massive oil and gas producer, it is also a major commodities trader, and Castrol was never really integrated into the trading business like BP's refineries and upstream assets and pipelines, which its traders can use to optimize, and so Castrol never really played in that way. So it allows BP to kind of to focus on parts of the business where it can optimize its trading advantages.
So that's why this might be the right asset sale, Mitchell. What about other asset sales? This has been an ongoing program of selling assets to get back to basics, I suppose, for this oil business. What are we expecting in 2026 on that front?
Yeah, your questions are as good as anybody's, because the new chairman just last week announced abruptly that CEO Murray Auchincloss, who announced the strategic reset in February, will be departing the oil major, and Meg O'Neill, Woodside Energy's CEO, will be coming in as CEO to replace him. We don't know what Meg O'Neill wants to do. We do know that the chairman wants BP to perform better. He wants a simpler, leaner BP that accelerates this oil and gas strategy. But how exactly BP gets there remains to be seen, and Meg O'Neill will have to answer those questions in the coming months. She takes over on April 1st.
OK, Mitchell, thank you very much. Thanks for the briefing. A lot to come then from BP in 2026, no doubt. Bloomberg's Mitchell Furman on the oil narrative this morning. Let's turn to news coming out of the pharmaceuticals sector. Shares of Sanofi on the move this morning. The firm agreed to buy Dynavax Technologies for about $2.2 billion in a bid to expand its vaccine portfolio. The stock is down by 0.3% right now. We're joined now by Bloomberg's health reporter Ashley Furlong. Ashley, good morning. Is it surprising that this business, that Sanofi is doing this deal for a vaccine developer right now? Talk us through the logic.
It's really interesting. So obviously at the moment we're seeing vaccine sales globally are down. In the US, we're seeing a very specific scenario play out. We have a health secretary, Robert F. Kennedy, that is almost systematically undermining many of the tenets of vaccines and sort of bringing in questions around vaccine safety. Many of those questions are targeted at childhood immunizations. So this deal that we've seen Sanofi do is mainly on adult immunizations. So potentially there's less of a tension there, but it's definitely a really interesting time to be doing a vaccines deal when globally, and Sanofi itself has said that vaccine sales are not doing as well as hoped.
Yes, so that's really interesting on the vaccine side of things, and why make this bet on vaccines at this point. Elsewhere in the Sanofi business then, Ashley, the company has said that the US FDA has also rejected its drug for multiple sclerosis. What does that kind of setback mean for this French pharmaceutical business?
It's a significant setback, but as we've seen, the shares haven't actually reacted that much to this, and that's really because it's almost been priced in already. We saw, just earlier this month, the FDA said it was going to delay its decision on this multiple sclerosis drug, and already analysts had sort of anticipated that this might have been a negative reaction. but it's significant for a company that's really trying to replace its top-selling drug, Dupixent. And this was supposed to be sort of part of that picture of replacing it. And now it looks like that $1.7 billion in annual revenue that we was sort of hoped for this drug is really, under question. And there's questions around whether, it'll be able to get any of that revenue in the coming years.
Ashley, thanks so much. Thanks for the update. Have a good break. Bloomberg's health reporter Ashley Furlan with the latest there on Sanofi. Let's widen the lens a little bit. Stocks and commodities hitting records, geopolitical tension and data from the United States showing the economy expanded at its fastest pace in 2 years. All of that's very much in the background for all asset classes right now. Let's turn to what this means for credit markets. Josh Farber is with us, head of European credit strategy at BNP Paribas Credit 360. Josh, nice to speak to you. Thank you for coming to speak to us on the 24th of December, no less. So we've got a host of themes in play right now. Stocks are doing really well. Metals, commodities doing really well. What kind of optimism do credit markets go into 2026 with? What does the outlook look like to you?
Well, we're bullish on credit, and we think that while most assets price that bullishness, not all of them do. And we want to look to buy the assets that have not kept up with the rally. And the place we start is high yield single B in Europe.
OK, so high yield single B in Europe. Why the high yield? Why not investment grade? What is it about the high yield space that you think is sort of worth the risk and paying you the reward you need?
Yeah, that's a great question. So the first point is that the risk to the downside from lower growth, we think, has gone away. We think that the path is towards a warmer European economy led by German fiscal. And high yield is particularly exposed to increasing growth. And the other point is that high yield is cheap. High yield is cheap, especially single B, because it was unfairly tainted by the private credit defaults in the U.S.
That's interesting. And so tell me more about the link between the German fiscal push and what that means for this particular part of the credit space. Because, in Germany, they're loading up on defence spending. They're also doing infrastructure investments. Is it in both areas that you'd expect this to play out well for credit? Or is it just more the mood music around the government spending more and the sort of multiplier effects into the German economy?
First of all, it's the point of the aggregate growth picture is stronger. And in high yield, what you really care about is, do you get your money back? It's hard to have defaults when the economy is growing faster. The second point is that having a glut of bunds, which we're not really used to in Europe, means that the assets which compete for bunds in fixed income, like high yield, there's relatively fewer of them around. And the scarcity point, we think people will flee rates and go into credit.
OK, so where does that leave the European government bond markets? We've spent a lot of this year talking about stress in France in particular, and some corporates in France can borrow more cheaply than the sovereign, for example, now. But where does this leave the European government bond markets in relation to your preference for high yield in Europe?
So we think that the point is that there's enough government bond supply to keep rates steep and relatively high in euros, and that is kind of a sweet spot for credit, where it's enough yield to attract investors in, but it's not so volatile to scare investors away.
And the sovereign side, or is that left to others to decide whether you take exposure to the sovereign side?
Yeah, listen, I am the credit guy. I would say the main point is that we are quite comfortable on how the European system is positioned as respect to credit, and so this convergence trend that we see. If we have more of Bund, we have less of everything else. And that's quite healthy from a credit perspective, because then you don't have to think about sovereign risk in the way you did 10 or 15 years ago.
Yeah. Credit markets have been enjoying quite a lot of issuance from hyperscalers recently, Josh. Is that something that we're going to be watching play out even more in 2026?
That is the key thing to watch. So in cash, while we want to buy single B, as our main asset of choice, the thing we want to sell is the long end of IG in euros. I mean, both euros and dollars, but especially in euros. We are not used to the level of duration, the level of supply that we're going to see from these high-quality hyperscalers. And so that's basically the pincer movement of the compression trade, is that on the one hand, high-risk assets are undersupplied and low-risk assets are very heavily supplied. And we think that something like 10% of the total hyperscaler debt issuance is going to come to euros. But 10% of the American market, when the dollar market is 3 times the size of the euro market, and about 2.5 times the duration, it's really a very big deal from our perspective.
Okay, so not very attractive then, the debt issued by some of these big hyperscalers, whether in dollars or in euros, not paying you enough for the not attractive enough. Is that the verdict?
It's not the issuers themselves. It's more the duration bucket of the existing bonds will need to reprice from every company that issues at the long end in order to compete with the supply that's coming.
Okay, yeah, so that's what it does to the rest of the market. I mean, we've been talking to a lot of people about whether stocks are overvalued in the hyperscaler space, for example. And one of the things they tell us to watch is debt levels. They say it's very different to the late 90s right now because these are not very indebted companies. Your caution around these hyperscalers, then, it's not to do with being worried about debt sustainability. It's more about whether you're getting enough reward for taking on the debt.
Yeah, it's a very different fundamental position. We think that part of the reason why the debt is coming is because they can afford to do it. But the point from the investor perspective is the technical around the supply and demand. There is so much supply that it will reprice the market.
Yeah, I mean, are there areas that you do worry about too fast a growth rate of debt for some of these businesses on the AI build out, on the data center build out? Are there any alarm bells going off right now, or no?
No, we don't have alarm bells. I mean, obviously, you need to look at the credits case by case. But on the whole, we think that credit is still in a fairly sweet spot where there is enough supply in dollars maybe to cure the bond scarcity, but not so much as to drown us.
We talked at the beginning of this programme about some M&A stories, BP selling one asset, Sanofi buying another asset. And if M&A really comes back as a big theme in 2026, well, it's arguably here already, and investment bankers have been telling us it was coming for a while. Private equity pleased with maybe what they're seeing there as well. If we see much more M&A, is that going to mean a lot more credit issuance? Is this something that's going to play into your space?
Yeah, that plays into our forecast, but it is largely a dollar story. So the animal spirits are much stronger in the U.S. In Europe, we say it's a little bit more like a plant. The pace of M&A that we expect in Europe is materially slower, and that reflects just a different economy and a different sector mix.
Okay, so the M&A story really will just be stateside, do you think, the step up in M&A? Because a lot of private equity names in Europe have been waiting for a long time for M&A to kick in so that they can try and get some of their money back.
We think that it is a substantially U.S. story, yes.
All right, Josh, thank you very much. Thank you for joining us. Josh Farber, Head of European Credit Strategy at BNP Paribas Credit 360. Coming up on the programme, President Trump has reignited tensions over Greenland this week as he appointed his first ever, or the first ever, US envoy to Greenland. We will discuss with Roberta Haar, Professor of Foreign Policy at Maastricht University. That's next. This is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
Welcome back. This is The Pulse. Now the conversations that matter and the insights you need live from London. President Volodymyr Zelensky says Ukraine and the United States remain split primarily on territorial issues in talks on a peace plan to end Russia's war. Weeks of US brokered talks have produced a 20-point peace plan that could become the basis for ending Europe's worst conflict since World War II. The Ukrainian leader emphasized that the draft largely reflects the joint Ukrainian-American position and some points still need to be finalized. Meanwhile, Russia continues to target Ukraine's power supply with missiles and drones at a time of year when temperatures are around freezing. Maxim Timchenko is the CEO of Ukraine's biggest private energy infrastructure developer, DTEK, and he told Bloomberg this is going to be the hardest winter yet.
Unfortunately, just in these minutes, we are under massive attacks of Russians, and the major target of today's attack is power station. So, as you know, we been attacked only power station of the attack more than 6 times since September this year. And I believe that this coming winter will be the hardest winter since full-scale invasion.
Meanwhile, the Trump administration has imposed visa sanctions on former EU Commissioner Thierry Breton and 4 other people for trying to make American tech companies police political speech. In a post on X, Breton responded that the European law was voted in with broad-based support, writing, quote, "To our American friends, censorship isn't where you think it is." The State Department also targeted activists and non-profits focused on digital hate speech and countering extremism. Let's discuss the broad defense and diplomatic tensions between Washington and Brussels then with Roberta Haar, Professor of Foreign Policy at Maastricht University. Professor Haar, very nice to have you with us. Thank you so much for joining us. Let's start with the broad state of affairs transatlantically. We recently heard from the United States codifying their security strategy under this new national security document. I wonder where that leaves the state of relationships across the Atlantic.
Thank you very much for having me this morning. Yes, at the moment, relations have been very bumpy. Certainly, the document that just came out really would push, as you mentioned before, the far right or those that are aligning most with the MAGA ideas within Europe. And this would seem to support the idea that also with J.D. Vance, that this whole digital governance is a problem, that as you said, Breton is really thinking about all the EU's foreign policy positions there. Okay. Sorry, I'm getting rather nervous again.
That's okay. Roberta, well, let me ask you a question on that subject, because that might help us to focus the conversation a little more. I mean, how do you think that Europe should respond? So the United States has now placed sanctions on people like Thierry Breton. They would argue they're tackling hate speech, but the US government suggests that they've been targeting free speech. How should Europe try to respond to that sanctioning of those kinds of individuals?
Well, I think that although they have been trying this flattering ploy and sort of responding to Trump's pay-to-play foreign policy, I think that the Europeans should be more in line with what Breton is trying to do, that they should firmly resist U.S. pressure to safeguard. They should try to safeguard their regulatory autonomy, especially when it comes to strategic technologies. I recently wrote a policy brief with Professor Sophie van Hoenecker, and we also said that they should have clear internal positions. They should resist attempts to dilute or reinterpret their digital regulations, like the Digital Markets Act, the Digital Service Act, the AI Act. They should try to uphold the credibility as a global regulatory leader. I think that they should resist trying to trade away their digital standards in negotiations concerning trade, tariffs, certainly their security cooperation. I think they should try to shield their EU decision-making from their coercive bargaining tactics coming out of the Trump administration.
And Roberta, why do you think that Europe appears so constrained when it comes to dealing with President Trump? I mean, clearly, with the United States providing the security backdrop over decades, that has become too comfortable a position, perhaps, for Europe. Certainly, that would be the view of the Americans. And so maybe that limits Europe's ability to push back against the Trump administration.
Well, Europe definitely has a history of fragmentation, a history of thinking of sovereignty mindsets. They also have many vulnerabilities. But I do think they need to intensify their indigenous military and technological capabilities, and they are doing that. I mean, I'm sure you have discussed already that the London-based IISS, the International Institute for Strategic Studies, has talked about the threat from Russia coming as early as 2027. And it could take as much as $1 trillion to bring up their non-nuclear capabilities to on a level that the U.S. is currently providing. They are doing that, but I think that this fragmentation in procurement and they should have more joint procurement. They should have less weapon systems compared to they have in the past. These are all things that they need to do to restructure their European defense procurement and posture.
Yes. With all that said, then, I mean, another example of a flare-up in tensions might be around Greenland, and we talked about this a little bit yesterday, and the story sort of lingers. How should Europe respond on this kind of front? President Trump appointing somebody to be almost like an ambassador to Greenland and making clear that there's still an intention to try and make that American.
Well, certainly Trump has this pay-to-play foreign policy that I talked about, which unfortunately is sort of based on more of a overseas pressure. Lots of corruption seems to be involved in that. Sort of survival of the fittest, and Greenland, I guess, would fall into that. Natalie Tochi has written a recent foreign policy article that is sort of part of a goal to have Europe as sort of a neo-colonial outlook on how to deal with Europe, that sort of there be the winners in the survival of the fittest. So he likes his tough guys. Europe, and this would be sort of the replaced by the alpha males of the world. Sort of that's what he's looking at.
Yes, and part of that, perhaps, that analysis, Roberta, does that include the relationship with Russia, which has been truly reshaped, I suppose, under this Trump presidency?
Well, I think that Trump actually has this fondness for Russia, or a idea that he wants to deal in a transactional way or an investment way with Russia since his first administration. In an article that I wrote in 2021, certainly that is consistent with his view for even before he became president, that he had this very positive view towards Putin and towards Russia, and now he's talking about all the investment possibilities with Russia. So certainly he likes tough guys. In a recent interview that Trump did with Politico, he also called European leaders weak, but he was very positive about Erdogan of Turkey. So he called him a tough cookie. So I think another way that Europe can respond to Trump is sort of not letting him bully them, but to do what Mark Carney did, or what Erdogan does, or what even Susie Wiles talked about in her recent interview. Stand up to him, or be more not so flattering, but more resilient and more tough.
Okay. Roberta, thank you very much. Thank you for joining us today. Roberta Haar, Professor of Foreign Policy at Maastricht University. Coming up on the programme, a busy year in the courts for President Trump as his administration loses a case at the Supreme Court, but has another ruling upheld by a federal judge. All of that just yesterday. We break down all of this with a law professor shortly. This is Bloomberg.
Thanks to AI, Samsung's photo editor is much more powerful.
Generative Edit lets user reimagine surroundings, lighting, texture, and even the perspective.
The best idea comes when we think from the user point of view, not from the engineers.
Our goal was to create a powerful AI tool that lets users express their creativity safely and effortlessly.
It's always exciting.
Good morning. Welcome back to The Pulse. I'm Anna Edwards in for Francine Lacroix in London this morning. These are your top stories. The Santa rally marches on. The S&P hits a record and gold breaks through 4,500 a troy ounce for the first time. Markets on both sides of the pond close early today. Blowout GDP in the USA. American growth crushes estimates in the third quarter with its fastest reading in 2 years. And a setback, perhaps, for big tech and skilled foreign workers. A federal judge said the Trump administration can move ahead with a $100,000 fee on applications for new H-1B visas. Welcome back to the programme. So it has been a busy year for President Donald Trump when it comes to setting policy and expanding the limits of presidential power, certainly of testing them, with his tariff announcements, in particular, sending shockwaves around the world. Bloomberg Economics chief economist Tom Orlick looks at the White House trade policy and what it means for inflation and the US consumer.
Credit where credit's due, President Trump made a big bet that the US had a magnetic appeal, and that would enable him to get a better deal from US trade partners and companies that want to do business in the United States. On the evidence of the last few months, that bet is playing out pretty nicely. Economists don't agree on much. One thing they do agree on is that free trade is good and that tariffs are bad. For a moment, Trump escalated US tariffs on China all the way to 125%. If you plugged the US tariffs into a model of the global economy, what it said was that there was going to be a really significant drag on growth, and there was also going to be a significant upward impulse to prices. But when we look at what's happened to inflation over the summer, it's not come down, but it's not come up either. Why is that? It's because US importers and foreign exporters saw the Trump tariffs coming, and they rushed to front load shipping to the United States before the tariffs could come into force. One thing that's happened is that we've gone from a lot of unexpected bad news concentrated on a single day to a series of country-by-country deals. They're something of a Swiss cheese of exemptions and carve-outs. The trade war is a drag, but it's not the only thing which is happening. We've got tax cuts with Trump's one big beautiful bill, and we've got a bonfire of regulations which is stoking the animal spirits of US businesses. We've also got the artificial intelligence boom and a huge amount of investment going into data centers. Tariffs are having an effect. China's exports to the United States are way down relative to the historical trend. So, who pays for the cost of tariffs? Despite his well-known love of gold, the president is not an alchemist. He can't make something from nothing. That money has to come from somewhere. All of the evidence so far suggests that in the end, the bulk of it is going to come from US businesses and US households.
That was Bloomberg's Tom Orlick reporting there on White House trade policy and the impact it has and has not had on the US economy. Let's pivot from the economic side of things to the legal side. A federal judge has ruled that the Trump administration can go ahead with imposing a $100,000 fee on new H-1B visa applications. The decision is a setback for US tech companies, perhaps, that rely on hiring skilled foreign workers. The judge said the move was lawful, but the US Chamber of Commerce, which sued to block the proposal, can now appeal. Meanwhile, the US Supreme Court has refused to let President Trump deploy National Guard troops in Chicago. A majority of judges ruled that the administration failed to identify a source of authority that would allow the military to execute the laws. The move is a setback for Trump's drive to use the military in cities across the country. Let's put all of this together as the year comes to a close and assess the relationship between the executive and the legal system in the United States. We're joined now to discuss the Supreme Court in particular by Ilaria Di Gioia, who is with us to talk about the legal side, law professor at Birmingham City University. Really good to have you with us, Ilaria. Thank you very much for your time today. So we just went through a couple of stories that illustrate how, in some cases, President Trump is is winning out and the executive is getting its way in what it wants, and in other ways, the law and the legal system is pushing back against him. How would you evaluate 2025, Ilaria, and the relationship that we've seen between the legal system and the executive?
2025 has been a very interesting year for a law professor to watch, and I think for everyone. As we know, if we put it on a frame, the Supreme Court is a conservative court. President Trump has appointed 3 of its members. So actually what we expected was the Supreme Court to be increasingly favoring President Trump. This has been evident in many cases. You just mentioned the tariffs case. Well, the case was discussed in November. The hearing was in November in the Supreme Court. We don't know yet the outcome of the case, but we know that President Trump is pushing the judges to rule in his favor, and he's doing this through social media. He's doing this sort of psychological pressure on the judges that are his nominees. This is, in fact, one of the main characteristics of the American system, of the American judicial system. The judges are nominated by the president. So it's somehow politicized. It's a court that is very explicitly politicized, and it is a court that is ideological. So conservatives, judges uphold their conservative ideology.
Okay, and so in the main, this year, Ilaria, have we seen the Supreme Court act in support of President Trump more than we might have done under previous Supreme Courts when they were not, they didn't represent quite so many of President Trump's appointments?
Well, if we put everything on the scale, we can see that the trend already started during the Biden presidency. Many of the decisions during the Biden presidencies were taken by the same justices. So the trend is actually going back to first Trump presidency, and is sort of slowly increasing. But I wouldn't say that this is something completely new or unexpected. This is just a consequence of the first Trump presidency, of the nomination of 3 justices. And as I said, we already saw the trend under Biden, and this expansion of executive power that you mentioned, that that is very, very evident, started already under the Biden presidency.
Yes. Give us a sense of how much, OK, so under President Biden and President Trump, how much of a step up we're seeing in this use of unilateral executive action?
Well, think about this. There is a theory, it's called the executive unitary theory, that says that the president should have all the power over the executive. What does it mean over the executive? It means over administrative agencies, and it means that the power that Congress delegates to president, it's power that the president can hold unilaterally. Now, what we have seen recently, not only in the court, but in fact, is the Congress slowly delegating more authority to the president. And this is what happened, for example, when it comes to tariff. So President Trump is arguing that the Congress is giving him the power to impose tariff. And this is, as I said, a slowly process that has happened because, for one main reason, it's not only because of the court, it's because Congress is giving up its competencies to the president. The polarization that we have in Congress, the gridlock, this increasing difficulty in coming to a decision means that the president has the upper hand. And this delegation of power has been approved by Congress and is now under review in the Supreme Court. So the Supreme Court
have to decide. Yes, Ilaria, is it your expectation then that the Supreme Court will agree with that view, President Trump's view, and support President Trump in what he's trying to do on these IEEPA tariffs, International Emergency Economic Powers tariffs? Is it your view that that will happen? Or we saw quite a lot of reporting that suggested the early commentary coming from the Supreme Court would push against the president.
Indeed, during the hearing, the justices were pushing against the president and were pushing against the federal representative for Trump. His nominees were pushing against him. But this doesn't mean anything because the decisions will have to be made on paper. It will take time for the decision to arise. And there have been, of course, amicus briefs pushing against this decision. But the fact remains that the court is a conservative court. And if we don't see a decision in favor of Trump, we will see a decision maybe of those neutral decisions of the Supreme Court abstaining from deciding. This is also another option. So I don't see the Supreme Court to be completely in favor of Trump being able to impose tariffs because it's a very narrow legal issue that they will have to decide on. It's quite problematic, but I see the Supreme Court using his very interesting legal weapons to make a decision that will be controversial. Yes.
Okay, Ilaria, so I hadn't realised that they could abstain, so that's interesting as well. Just briefly, when do we expect to hear? Some had expected that we might get a decision this week, but looking less likely, I suppose.
The case is not a normal case. It's one of those expedited decisions. So usually cases are decided in June of the year, but I would expect this case to be decided a bit earlier, perhaps January or February, because it will need an expedited decision.
Ilaria, thank you so much for joining us. Ilaria De Joya, law professor at Birmingham City University, with that useful briefing on the legal system and the executive in the United States. Thank you so much for your time. 9:42 on the 24th of December. We are watching oil prices a little bit firmer this morning. Nearly half a dozen tankers laden with crude have departed from Venezuela's coast despite increased pressure from the United States. Data from maritime intelligence firm Kepler shows this. Most of the tankers are headed to Washington, and at least half of them are chartered by Chevron. This comes as the Trump administration intensifies efforts to curb Caracas's oil revenue by targeting sanctioned vessels. The Venezuelan democracy activist and Nobel laureate Maria Corina Machado told Bloomberg in October the U.S. pressure on Caracas should force President Maduro to begin a transfer of power.
I believe that the increase in pressure and the escalation that's taking place is the only way to force Maduro to understand that it's time to go. And those that still support him, which are very few at this moment, the top brass of the military, financial enablers, front men that are making huge, obscene fortunes with the hunger of our people, better understand that, time is running out. And I believe that this escalation is the last opportunity for those that still support Maduro to understand that they need to put, aside, take all support away from him and Maduro himself to understand that this is the last chance to truly facilitate a peaceful and orderly transition, which is what we want.
In other global news, Libya's military chief of staff has been killed alongside 7 other people in a plane crash in Turkey. Mohammed Ali Ahmed al-Haddad had been returning to Tripoli from Ankara when the plane reported an electrical malfunction shortly after takeoff. For more, let's bring in Bloomberg's managing editor for Middle East and North Africa, Ona And. Ona, thanks so much for joining us. What do we know so far about this crash?
The jet carrying the Libyan delegation crashed shortly after its takeoff at about 8 p.m. local time in Ankara. That's the Turkish capital, Anna. The plane had notified the air control that it was suffering from an electrical fault and asked for an emergency landing back in Istanbul, where it had taken off from. And preparations were underway for that landing when radio contact with the plane was lost. Its wreckage was later found in the Haymana district in the Turkish capital, with all on board. A total of 8 people, including crew members, were killed. The Libyan military delegation was headed by Mohammed Ali Ahmed al-Haddad, as I said. He was the military chief of staff of the government in western in western Libya, in Tripoli. He was a well-respected figure back in Tripoli and a key figure in UN-backed talks aimed at unifying the two rival governments in Libya, where there are two administrations, one in the western city of Tripoli and the other one in the east in Benghazi.
Yes, with all of that backdrop in mind, Ona, why was the delegation visiting Turkey?
He was in Ankara for defense talks. His government, his administration in Tripoli has been backed by the Turkish government, and that backing was most pronounced about 5-6 years ago when a predecessor to the current administration in Tripoli was under assault by forces in the east of the country, and the Turkish backing has pretty much sort of saved that administration from collapsing. Since then, we know that the government in the west that Al-Haddad belonged to has been operating Turkish military equipment, including Bayraktar drones such as Akıncı and TB2. And TB2 is very well known in this region. They have been used successfully and widely in conflicts from Libya all the way to the war in Ukraine and in Nagorno-Karabakh, where Azerbaijan and Armenia had fought a war, a 44-day war back in 2020. So that defense cooperation was the main item that the delegation had come to Ankara to discuss before they tried to fly back to Tripoli before their jet crashed.
Ona, thank you. Thanks for the update. Bloomberg's Ona Ant. Coming up on the programme, the French National Assembly has approved a stopgap budget law for next year. We will bring you the latest next. This is Bloomberg.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
The conversations that matter and the insights you need. This is The Pulse. I'm Anna Edwards in London. The French National Assembly has approved a stopgap budget law for next year after failing to agree on the full fiscal plan. The so-called loi spéciale, or special law, effectively rolls over 2025 fiscal plans into the new year, allowing the state to continue to collect taxes and borrow money. For more, let's get to Jean Dabar, who is economist at Bloomberg Economics and joins us now to talk about the French economy. Jean, thank you for your time this morning. So we still don't have a full budget for 2026, but are we making progress towards a full budget? Where are the sticking points now?
Well, actually, the political situation remains particularly complex. Parliament is deeply fragmented between the Conservative Senate and the left-leaning National Assembly. On top of that, political parties are unwilling to compromise and are looking to bring home some major concessions from the government, like, for example, higher taxation on wealth for the Socialist Party. However, on the budget itself, we think that a compromise is within reach. Some 10 billion euros of tax hikes or expenditure cuts are missing to reach the 5% deficit target for 2026, which I guess is quite doable in the first weeks of 2026. And as a matter of fact, I mean, the political risk premium in the market is fading. If you look at the 10-year spread over Germany, it's now back to its August level, which is, I guess, quite a good sign for the budget negotiations.
Yes, indeed, the spread in focus. Your analysis talks about how France can raise the money that it needs, perhaps saving billions by borrowing short-term debt. We've seen a lot of governments putting the focus on the short-term debt raising as opposed to the long end of the curve. What's the story behind this analysis?
Sure. I mean, just to take a step back, France needs to find more than 100 billion euros of savings over 4 years just to reach its European commitment of bringing the deficit back to 3% of GDP in 2029. To do that, major spending cuts and notably a new pension reform, as well as tax increases, will remain crucial to keep the deficit under control. But in this context, we can look at other ways to save money. And that's why we looked at the impact of issuing shorter bonds to reduce interest payments. And in our analysis, this will help. I mean, this would bring some help to reduce interest payments over time. It would be, the gains would be bigger if the ECB were to be a bit more dovish, of course, but still, that's something helpful. However, it would come at a high cost. It would notably increase the rollover risk. And that's something which leads us to say that it will be ultimately a trade-off for politics between risk and saving money.
Yes, the rollover risk could throw up issues into the future. Jean, thank you very much. Jean Delbal from Bloomberg Economics. Thanks for your perspective. Now, 9:52 here in London. The economic data, once again, leaving investors split on what it all means for monetary policy. On one hand, the United States, the US economy expanded in the third quarter at the fastest pace in 2 years, bolstered by resilient consumer and business spending. On the other hand, there's a lot of scepticism about the reliability of the top-line GDP data. Here to make sense of it all, Markets Live currency and rate strategist Ven Ram. You've done some digging then into the print, and this is really interesting, Ven, because this was a blowout number on GDP out of the United States. I haven't seen any sort of deep dives yet that reveal any scepticism. So what have you uncovered?
Morning, Anna. I think that, what the broad perspective is that, look, the economy, you could quibble about the actual growth number, but the big perspective, the big picture perspective is that the economy is growing, seems to be firing on more cylinders. And that's the big takeaway. I mean, you've got 4.3% growth, even assuming it's about 3.5–4% thereabouts. I think that the US economy is doing pretty well. And the Fed expects, the Fed has boosted its own estimate of how much the economy will grow next year to 2.3%. That's well above trend growth. So here is an economy that is doing pretty well. And if you juxtapose that with core PCE that is holding around 2.8% on average this year, it raises a very disturbing question. Should the Fed be cutting interest rates at all in this kind of scenario? Which part of the economy needs addressing with rate cuts? And if your inflation isn't at target yet, why are you rushing to cut rates? That's the big question for the markets to wrestle with next year.
OK. And another question will be whether we need to continue to focus on metals, precious metals in particular. Can the rally continue in precious metals?
It does look like it's going to continue. It's certainly got the momentum, and central banks still seem to be buying gold. Silver is leading gold higher in this particular leg of the cycle, and if that supply narrative of supply squeeze continues, I think that silver will continue to lead gold higher, and markets have caught on to this prophecy that it's going to go to $5,000 an ounce, and so everyone's gold going there is in everyone's crosshairs. And to an extent, this is a bit of a self-fulfilling prophecy for the markets. Everyone in the markets expects that level to be crossed, and therefore it does look like we may get to that level. But the question is, what is the risk reward beyond that? Gold can't keep rising. It's risen 70% this year. That's the second best annual performance since 1979. But the irony is that if you had bought at the peak in 1979, it took you years and years before you broke even. So I think that, investors need to pay some caution to how much they are paying to acquire gold.
OK. Yes, maybe keep that fact in mind if thinking about whether this is the right time to get into this trade. Looking at central banks in 2026 then, Ven, I mean, are we looking at a full range of hawks, doves, neutral, everything in the mix in terms of central banking?
Well, I think that, at least a few of the central banks are going to be hawkish. In fact, the Reserve Bank of Australia and Reserve Bank of New Zealand are already showing inclination that they are going to pivot hawkish. You've got the ECB that's going to be much more neutral because, inflation is a target. It's probably the clearest read on which central bank is going to stay put. Switzerland also is averse to negative rates, so I think they may stay put. But in Canada and the US, I think interest rates actually need to go higher. In Canada, the markets are pricing some chance of a rate hike. But in the US, as you know, Anna, people are thinking and the markets are thinking that the interest rates are going to come down because of what Trump wants. But we'll see how that goes. But it's going to be a very interesting 2026 for the rates market for sure.
Yeah. Yeah, absolutely. Complex for all the usual reasons, and then with a sprinkling of politics as well. Thank you very much, Ven, for your contribution this morning, and indeed throughout the year. Markets Live currency and rate strategist Ven Ram with the latest on some of the central bank thinking as we head into 2026. A quick word on the markets then. We're really quite flat on European equities. Not many of the European markets are actually open. We are open in London, open in Paris, open in Amsterdam, in fact. But Germany is closed, Switzerland's closed, and many of the other Eastern European markets and Northern European markets closed. US futures pointing a touch lower, but it is Christmas Eve. Have a good holiday, everybody. This is Bloomberg.
Right, welcome back. Let's talk about cars. So you're looking at the ultra-luxury sedan out of Huawei, and I guess in terms of just relevance, right, it's become the top-selling car above 100,000 US dollars in China. It's beating out brands like Porsche, Mercedes-Benz. It's billed as a rival to a Rolls-Royce or even a Bentley, and it comes with features such as auto parking, crystal buttons, if ever you think you needed to complete your life with something like that. Joining us here in set to talk about the car, the prospects, what people are saying about this, and could this actually have a longer road ahead, no pun intended, or pun intended. Linda Liu is here with us, our Asia transport reporter. Can I just ask you to begin with, how do you pronounce the name of this sedan? So I can say S800, but how do you pronounce the other one?
Yes, so I think it's pronounced Huawei Maestro.
Maestro, okay.
Which is a play on the word maestro.
Yes,
Italian.
with an X.
Yes, with an X.
Yeah, okay.
Yes.
Okay, how much does it go for?
So it starts from 700,000 yuan in China.
Okay.
Yep.
And clearly it's doing well. Talk to us about demand.
It's doing very well. I think not a lot of people expected it to kind of run out of the gate. It was only launched half a year ago, and now is already outselling the Porsche Panamera as well as the BMW 7 Series. Essentially, it's topped the sales chart for luxury sedans that's priced at 100,000 US dollars and above. And that's something that no other Chinese brand has done before. For mass market brands like BYD and Tesla, you see them really driving this transition to EVs. But the luxury segment was where the legacy brands still had a lot of power.
Yeah, okay, so we're looking at, we mentioned that Rolls-Royce, Porsche, even the Maybach, for example, it's still quite a bit in terms of the price, though, from the... how is this being marketed as an ultra-luxury car? And talk to us about the target market of this car, because you go from a Panamera to this specific sedan to a Maybach. Those are almost completely different sets of buyers, if you will.
Yeah, that is true.
Yeah.
I would say the Panamera may be a little bit more sporty, whereas the Maybach is more for business executives.
Okay.
So I think the Maestro probably targets itself to similar market segment as the Maybach. So business executives in China, and especially people who are wanting to try new things, but still enjoy those touches of luxury. So you get the top of the line Huawei technology in this car, the most advanced driving assistance technology. You have auto parking. The doors will open themselves, and the windows will tint when you just wave your hands inside. So it is really kind of futuristic technology that's been added to a car that still has a lot of the conventional premium touches you still would see in a Rolls-Royce.
Yeah, and there's also a door handle.
Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London, and these are the stories that set your agenda. Blowout GDP in the USA. American growth crushes estimates in the third quarter, coming in at 4.3%, a full percentage point above average estimates. The Santa rally marches on. The S&P hits a record. Gold breaks through 4,500 for the first time ever. Markets on both sides of the pond close early today, and the U.S. accuses China of unfair trade practices in semiconductors, but says it will hold off on imposing additional chip tariffs for now. Good morning. Happy Christmas Eve. Here is the picture for futures this morning across Europe and the United States. Euro Stoxx futures about flat, we'll say, down ever so slightly after a positive session yesterday. Same story here for the FTSE 100 futures. S&P down 0.1 of 1 percentage point, and NASDAQ similarly down a little bit after, again, a positive session in the U.S. yesterday and a couple of positive sessions from Friday of last week. Taking the picture across asset, let's take a look at what we've got. The data came late, but Christmas came early for the bulls in this equity market. We have MSCI World Index at an all-time high this morning as we head into Christmas. The U.S. Treasury yield, the 10-year yield, basically flat, steady. But something very interesting happened on the 10-year yesterday. Right when we got that GDP print out from the United States, we saw these yields rocket higher, about 5 basis points. That has come down to basically where we were. So some mixed signals for what that GDP reading actually means for the markets. We'll get into that a little bit later. And gold, obviously the sort of shining star of the week. We broke through 4,500 a little bit earlier. We're down just a bit this morning, still up a little bit, but still under that 4,500 level. And Brent crude steadying after some of those headlines that we saw early in the week out of Venezuela. Let's see how the Asian markets, however, are faring with Winnie Su in Taipei. Winnie?
Yeah, so we are seeing some modest gains here in the Asian markets as well. So we've got an MSCI Asia up about 0.2%, rising for a fourth day, but it's taking us back to that highest level in about 6 weeks. And overall, technology shares are still back in the driver's seat right now, and we have that center rally here going on in Asia as well. However, overall trading volume has been quite thin because we have some of our key markets closing earlier today ahead of that Christmas holiday tomorrow, including markets in Hong Kong, Singapore, and Australia. However, one key asset that we're really focusing on today is the Korea won, as it has actually strengthening about 2% so far today, especially after authorities coming in and warned that excessive weakness in currency is not desirable, and that the FX market will soon see that strong determination from the government. So that has really supported the won that has really been struggling and headed towards that 1,500 level that we are closely watching in terms of the key psychological level that was breached back in the global financial crisis. And that's a very interesting timing, as it really came after how the authorities in Japan stepped in with similar verbal intervention yesterday. Now, we also flip the board and take a look at the overall picture for Asian stocks this year, because taking a step back, it has really been a spectacular year for our region. In fact, up about 25% so far this year, beating gains in Europe and the US, which is quite rare actually. And a lot of factors have really been playing into play, including those including, the DeepSeek moments back in February and US-China tensions easing, and that global tailwind from the AI boom. Not to mention you've got a weaker dollar and also diversification away from US assets. So that has really been helping that outperformance of Asian stocks, and we're likely going to see how these themes continue to play towards 2026.
Well, Winnie Su, thank you so much in Taipei for that roundup of Asian markets going into Christmas Day. The United States has accused China of engaging in unfair trade practices related to chips, but says it will hold off on imposing new tariffs until at least mid-2027. Let's bring in Bloomberg's China economy and government editor, Alan Wong. Alan, what do we know about this investigation into Chinese chips, and how much sort of faith do we have in the Trump timelines in terms of imposing tariffs or not imposing tariffs?
Yeah, Oliver, that was the result of a nearly year-long investigation into China's chip policy. And it's worth noting up front that these are the kind of chips that we put in legacy electronics and not the kind of cutting-edge semiconductors that have been dominating headlines in the last handful of years. So the finding from the U.S. investigation is that China has used aggressive and sweeping non-market policies to support its domestic chip sector in order to dominate it and make other countries reliant on it. And the findings will enable the U.S. to impose tariffs on those chips, but importantly, the Trump administration has held back on that. And there is a timeline that they've given, which is 18 months, when they'll have to make a determination of what measure they will take. And the tariff rates haven't been announced yet, so this amounts to an option in case they need to escalate the trade tensions with China. So this is key because it shows that while the U.S. is not happy with the industrial policies of China, it is not right now imposing any measures in response, because Trump has agreed to a trade truce with China and is planning to meet with Chinese President Xi Jinping in the coming months, many times. So this announcement sends a clear signal that Trump still intends to keep relations on a stable path, and while maintaining some options going forward if the trade talks breaks down at any point in the next year. So when that happens, the impact will be dependent on just how high the tariff rates are and on what devices specifically that the U.S. will impose on China's exports. So one thing to keep in mind is that the legacy chips that go into electronics like fridges or cars and medical devices, they will raise the input prices for U.S. companies. So any measures that the Trump administration takes at the end of this 18-month period will also need to take that into consideration.
Well, Bloomberg's Alan Wong, thank you so much for joining us from Hong Kong for some important context on that story. Now let's get to that U.S. Economic growth story. The economic data, once again, leaving investors split on what it all means for monetary policy. On the one hand, the U.S. economy expanded in the third quarter at the fastest pace in 2 years, bolstered by a resilient consumer and business spending. On the other hand, there's some skepticism about the reliability of the top-line GDP data. Here to make sense of all of it is MLive currency and rate strategist Ven Ram. Ven, you've done the deep dive here. What do we make of this print out of the United States?
Morning, Oliver. I think that, the misconceptions aside, some of the concerns are warranted, but I think on the whole, you've got to take the data for what it is, which is one of stellar growth. I mean, consumer spending is booming and exports are on the rise as well. So this economy is well underpinned by demand. So I think that resilience in the U.S. economy will continue. Let's keep in mind that, the Federal Reserve is forecasting growth to come in at 2.3% in 2026. That is fully half a percentage point higher than what they were expecting in September. So they're fully cognizant of the AI boosting productivity scenario, and they're on board with it. Now, the question is, Oliver, this raises tension within the Fed because, on the one hand, you've got an economy that's growing so well, and you've got core PCE that's still hovering around 2.8% on average for this year. So should the Fed be cutting rates when the economy is this resilient, running this hot, and your core PCE inflation is nowhere near 2%? And that's the tension for the markets as we look forward to 2026.
Yeah, absolutely. I mean, you got a hot American economy. Inflation is a big question mark. And, of course, a lot of pressure coming from the White House on the Federal Reserve to move. I want to talk a little bit about the precious metals rally that we've continued to see throughout the week. We saw gold break through 4,500. What is driving this? Is this just sort of a natural hedge to some of the risks we're seeing? How do you interpret what we've been seeing in the precious metals market?
I think that this is more than just a story of hedge, Oliver, because, if you see what has happened, silver is leading gold on the way up in the latest leg of rally, and that is unusual. It's a bit like the tail wagging the dog. And silver is going up and up and up because of the sticky supply scenario that we are seeing in the markets, particularly in Shanghai and elsewhere. And therefore, silver is bid and gold is just riding on its coattails. And the market has got $5,000 an ounce in its crosshairs. So to an extent, this is going to become a self-fulfilling prophecy for the market. So it is easy to see the next leg higher in gold, albeit investors should be wary of corrections. The one we saw in October when it sold off 10% within the space of 3 days.
It's easy to see the leg higher. Is it easier to see the leg higher or lower for interest rates going into next year? What are your forecasts looking at central banks into 2026?
Well, I think that, the markets are underpricing how far the Bank of Japan should be going with the interest rates. Because if you look at the BOJ's own projection of interest rates, they expect inflation to come in at 1.8% next year. That is way lower than what realized inflation is, which is around 3%. So even taking their 1.8% projection at face value, and the economic growth forecast that they're forecasting, which is above trend, that posits a neutral rate of around 150. And we are at least 3 rate hikes away from that. So the question is, the Bank of Japan should be aggressively raising rates. The question is whether they are willing to do that.
Well, Ven Ram, cross-asset strategist for Bloomberg Markets Live, thank you so much for your time this morning in the context and putting around some of that GDP figure out of the United States and what to expect from central banks in the year ahead. For the day ahead, today we're watching the U.S. markets, which will be closing early today, as well as European markets. So 1 p.m., I believe, is the time for when the U.S. market will close. We're looking also for U.S. mortgage applications, as well as U.S. jobless claims, all trying to fill out that data picture from the United States after that exceedingly hot GDP print that we got yesterday. And you can get a roundup of the top stories you need to know going into your day. Today's edition of Daybreak, we're focused squarely on the precious metal rally, those H-1B visas that Trump basically was saying you need to be charging companies $100,000. That was upheld by a judge, and BP getting closer to selling its stake in Castrol. We'll have more on all those stories throughout the hour this morning. Terminal subscribers can go to DAYB Go to watch all of those stories and many more. Coming up, onto geopolitics, Libya declares 3 days of mourning after its military chief of staff is killed in a plane crash in Turkey. We'll have details on that story next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London, and these are the stories that set your agenda. Blowout GDP in the USA. American growth crushes estimates in the third quarter, coming in at 4.3%, a full percentage point above average estimates. The Santa rally marches on. The S&P hits a record. Gold breaks through 4,500 for the first time ever. Markets on both sides of the pond close early today, and the U.S. accuses China of unfair trade practices in semiconductors, but says it will hold off on imposing additional chip tariffs for now. Good morning. Happy Christmas Eve. Here is the picture for futures this morning across Europe and the United States. Euro stocks futures about flat, we'll say, down ever so slightly after a positive session yesterday. Same story here for the FTSE 100 futures. S&P down 0.1 of 1 percentage point, and NASDAQ similarly down a little bit after, again, a positive session in the U.S. yesterday and a couple of positive sessions from Friday of last week. Taking the picture across asset, let's take a look at what we've got. The data came late, but Christmas came early for the bulls in this equity market. We have MSCI World Index at an all-time high this morning as we head into Christmas. The U.S. Treasury yield, the 10-year yield, basically flat, steady, but something very interesting happened on the 10-year yesterday. Right when we got that GDP print out from the United States, we saw these yields rocket higher, about 5 basis points. That has come down to basically where we were. So some mixed signals for what that GDP reading actually means for the markets. We'll get into that a little bit later. And gold, obviously the sort of shining star of the week. We broke through 4,500 a little bit earlier. We're down just a bit this morning, still up a little bit, but still under that 4,500 level. And Brent crude steadying after some of those headlines that we saw early in the week out of Venezuela. Let's see how the Asian markets, however, are faring with Winnie Su in Taipei. Winnie?
Yeah, so we are seeing some modest gains here in the Asian markets as well. So we've got an MSCI Asia up about 0.2%, rising for a fourth day, but it's taking us back to that highest level in about 6 weeks. And overall, technology shares are still back in the driver's seat right now, and we have that Santa rally here going on in Asia as well. However, overall trading volume has been quite thin because we have some of our key markets closing earlier today ahead of that Christmas holiday tomorrow, including markets in Hong Kong, Singapore, and Australia. However, one key asset that we're really focusing on today is the Korea won, as it has actually strengthening about 2% so far today, especially after authorities coming in and warned that excessive weakness in currency is not desirable, and that the FX market will soon see that strong determination from the government. So that has really supported the won that has really been struggling and headed towards that 1,500 level that we are closely watching in terms of the key psychological level that was breached back in the global financial crisis. And that's a very interesting timing, as it really came after how the authorities in Japan stepped in with similar verbal intervention yesterday. Now, we also flip the board and take a look at the overall picture for Asian stocks this year, because taking a step back, it has really been a spectacular year for our region. In fact, up about 25% so far this year, beating gains in Europe and the U.S., which is quite rare, actually. And a lot of factors have really been playing into play, including those including, the DeepSeek moments back in February and U.S.-China tensions easing, and that global tailwind from the AI boom. Not to mention, you've got a weaker dollar and also diversification away from U.S. assets. So that has really been helping that outperformance of Asian stocks, and will likely likely going to see how these themes continue to play towards 2026.
Well, Winnie Su, thank you so much in Taipei for that roundup of Asian markets going into Christmas Day. The United States has accused China of engaging in unfair trade practices related to chips, but says it will hold off on imposing new tariffs until at least mid-2027. Let's bring in Bloomberg's China economy and government editor, Alan Wong. Alan, what do we know about this investigation into Chinese chips, and how much sort of faith do we have in the Trump timelines in terms of imposing tariffs or not imposing tariffs?
Yeah, Oliver, that was the result of a nearly year-long investigation into China's chip policy. And it's worth noting upfront that these are the kind of chips that we put in legacy electronics and not the kind of cutting-edge semiconductors that have been dominating headlines in the last handful of years. So the finding from the U.S. investigation is that China has used aggressive and sweeping non-market policies to support its domestic chip sector in order to dominate it and make other countries reliant on it. And the findings will enable the U.S. to impose tariffs on those chips, but importantly, the Trump administration has held back on that. And there is a timeline that they've given, which is 18 months, when they'll have to make a determination of what measure they will take. And the tariff rates haven't been announced yet, so this amounts to an option in case they need to escalate the trade tensions with China. So this is key because it shows that while the U.S. is not happy